Welcome back. Well, you've got about, 11 minutes to go for the pre-open session. GIFT Nifty will come up on your screen. And I think it's still got about 200 points on it. So that is going to be absolutely incredible if you are going to get a 200-point gap up once again. You know, I've been using this phrase FII stomping back into the market in a big way. You know, even without US doing well, even as US was selling off, I mean, this started, the story of FIs coming back is about 1.5 weeks old. And US has only started to do well last night. I mean, reversed some of that bad sentiment and looking up. So this is not US related. This is not global related. This is very much with regards to what foreigners want to do with regards to their positioning in India. They've got very, very light. Devin Chokshi is with us. Devin, good to have you on the program. Thanks very much for joining us. Sorry to come to you a little late today. I just wanted to sort of run through a few stocks quickly. IndusInd Bank, first up or down, huge volumes last 5-6 days. Net, last 4 days, stock still up about 15%. There was that EY story on the microfinance portfolio. What do you make of it?
Good morning, Prashant. Well, I think the overall, the bad news is already out. And I think that's probably, factored into the stock price. So not fully surprised about the move in the stock price, maybe led by some amount of short covering as well. However, to get the larger confidence into the business, I think one would like to see how various level of inquiries which are unfolding after a while, I think from the main episode. I think one needs to get a bit more clear handle on that subject. After which I think one could possibly look at the company afresh from investment point of view. Currently, in my understanding, among the corporate banks, the private sector banks, the larger ones are relatively holding the ground much better. They are probably having the larger growth program in place, likes of ICICI, likes of HDFC. I think having a larger growth rate in the AUM as well in mid to higher double digits. And that too, I will believe that we're coming with good amount of need. So we believe that the companies which are better off, at this point of time should be preferred in the portfolio vis-a-vis buying into uncertainties in IndusInd Bank at this point of time.
Okay, so buy into the uncertainty perhaps. Devin, hi, good morning. I wonder if you've looked at Wari Industries, whether this is a company that's been on your radar. The numbers, at least in the fourth quarter, look very, very good.
Yes, absolutely. So, good morning. I think this company definitely deserves to be seen and seen with a greater amount of details. I think they are systematically moving forward in the entire ecogen system of the solar power manufacturing, particularly, and going forward into the other segment of renewables as well. But more importantly, getting purely into the backward integration with the technology into producing the high yield solar wafers, which goes into the panels. So from that particular point of view, if you look at this company, it looks, relatively much stable. Not too sure about the valuation at which the stock is quoting currently, because that remains slightly on the premium side or expensive side, as I always say that. But otherwise, the program looks quite interesting from the point of view of achieving the higher growth, at least for next 2 to 3 years. We are seeing a good clarity, visibility in the business.
And just because we're talking about it, as a comparable between something like a Premier Energies and Wari, because both are playing in that renewables energy space, which one would you prefer?
So Wari we have studied. So at least at this point of time, the bias is clearly for Wari. I think premium energies we have not studied enough. So honestly, I think we would not give any preference at this point of time to premium energy vis-a-vis Wari.
Any thoughts on two other numbers, Havells, if you've taken a look at it, and AU Small Finance Bank, Devin?
I haven't looked at in detail, Prashant. I think no cursory of the numbers have already happened. And Havells in particular look, relatively more stable and interesting from now on as well. On one count, we are having the early summers. We are having a good amount of white goods industry business, getting started for most of the companies. Have already started actually, in fact, February itself this year. And we are seeing the softening of the commodity prices, which is helping them on the margin front. So certainly both these factors are working good. maybe June ended quarter for the current financial year should show a reasonably good jump in the performance for likes of Havels in the FMEG space.
Okay. All right. Got that. Devin, just hold your thoughts. We're, of course, discussing markets and stocks and everything that's relevant from our perspective, but also taking note of what is the biggest national story and a very, very unfortunate one at that. I am, of course, referring to the terror strike at Pahalgam yesterday that left many, many innocent tourists dead and injured. Our colleague Arunima is actually coming to us live from Srinagar now with the latest. Arunima, thank you for joining in. So I think there was a Bandh call today, but exactly what is happening on ground?
So I'm coming to you live from the police control room here in Srinagar, where the bodies of those who died in yesterday's dastardly attack has just been brought in. The post-mortem process will have to be carried out, and the family members, at least one family member from the families of the deceased. And as I'm speaking to you, more ambulances are coming in with full police protection. These are ambulances which are wheeling in the coffins from the Maharaja Hari Singh Hospital. And along with them, these vehicles, if you see, these vehicles carry the survivors. These vehicles have the wives of some of those who died, the widows of some of those who died. These family members have had a horrendous last 24 hours. But this is a legal formality that has to be completed. They will have to identify the mortal remains of their loved ones, post which they will be given the opportunity of speaking to the Home Minister perhaps, because there is a wreath laying that is being planned, and then they will be allowed to take the bodies home. That's the Deputy Commissioner who's just coming. So as I'm speaking to you, more and more ambulances along with police security are being brought into the police control room.
All right, Arunima, we'll keep coming back to you for regular updates, but a tragic story and absolutely horrific to really take note of. Thank you very much for getting us that report this morning from Kashmir. Well, I think what we're going to do is we're going to take a quick commercial break here. We'll come back and we'll get you some technical trades with Mitesh and Sudarshan, who are going to be with us in just a bit. 3 minutes to the pre-open.
Welcome back. Rounding up to almost 9 a.m., 2 minutes to go before we get the pre-open rates. Let's bring in our technical experts to figure out what ideas for trade you can perhaps look at today. That's the implied open. Again, we are getting set for a big pop, 200 points on the upside. We have both Sudarshan and Mitesh joining in now. Gentlemen, good morning to both of you. Mitesh, let me open with you. It's been a dream run for the bulls last 6 days. What's the advice for today?
Morning, Suri. I think would maintain targets of 24,500 and then 24,750. And yes, it's been a very good run, and that also brings in slight worry that the fresh entries will happen with a not so favorable risk reward equation, and we are also getting overbought. My sense is that as we get closer to 24,500, traders should book about 40-50% of their position, trail their stop losses tightly, and try to ride as much as possible. What can also happen is that with this gap up, I think if you get an intraday decline of about 70-80 points, I think that's where fresh traders could look to enter with a 100-point kind of a stop. So the bias is on the upside. It's just that you have to be slightly tactical depending upon whether you're carrying long positions or whether you want to enter a fresh.
Gentlemen, morning. Mitesh and Sudarshan. Sudarshan, what about you? How would you look at things? I mean, 200-point gap up once again.
Yeah, good morning. See, we've been capturing these gap ups consistently. I think this uptrend has given us 1,000+ point rally in this session where we talk. So today, again, the gap up is a golden opportunity not to buy, but to sell and take your profits. Risks also increase. You made a very valid point that Indian markets were going up when the US was coming down. So we have already played catch up in advance. Now, this is a good time. There's a gap up, cash in, step aside. The markets, we all know, come down, they stabilize, they correct always. That will be the opportunity to re-enter. So I'm not suggesting re-entering on an intraday dip. Just step out and watch the market. Take your profits today.
Okay, that's the call on the markets. And I think on a day like today, the end will be more important than the start because the gift would be suggesting a 200-point gap up. Mitesh, you go first. Individual stocks, what's on your radar?
Good morning, Nathan. I have once again, I think like many days in the last few weeks, it's all buy list. A buy on HUL with a stop at 23.74. Look for 24.50 as the target area. ABB is a buy with a stop at a stop below 5615 for targets of 58.25. A buy on IRADA with a stop at 174 for targets of 186. And ICICI Bank is a buy. Keep a stop below 1397. Look for targets in excess of 1450.
Okay, all right. And Sudarshan, what about you?
Well, I have a mixed list, and that's after many, many days of having all buys. I have Glenmark as an intraday short, sell with a stop above 1410. The second sector, which is worth selling into, is Wipro. I mean, I was talking about the sector, obviously. Wipro is the company. Sell Wipro with a stop above 238 and two defensive buying opportunities. Tata Consumer is a buy with a stop under 1120, and United Spirits is a buying opportunity with a stop under 1530. I would be very cautious and careful today.
Okay, all right. Got that point taken. Thank you very much, Sudarshan and Mitesh, for those ideas at this point in time. But I think the pre-open has started, so maybe we can just, for a quick bit, look at what the start is. I think 170 on the GIFT Nifty is what I'm seeing as first rates which are coming through. We should be able to pull that up. Rupees opened slightly weaker compared to the dollar. The dollar has moved up about 1% last night, back to the index. The dollar index is back to near 100 level, and the rupees come off. I mean, as if so many other currencies against the dollar as well. But equities, I think it's going to be another strong start once again. Surabhi.
Okay, all right. Just getting ready for the market open. Right now, it's looking pretty good and green. Let's put the spotlight on the consumer durable space now. Havells, of course, reported a good performance yesterday in the fourth quarter, led by the wire and cable segment. The performance of Lloyd was also pretty good. And also, of course, you remember that story that our sister channel Awaaz had done yesterday, talking about how the import of compressor and compressor components might become a little easier because of perhaps easing BIS norms. To talk about this and more, we have with us Praveen Sahai, Vice President, Institutional Research at PL Capital. Praveen, great to have you with us. Let's actually take that first story, that latter story rather, this whole import of AC compressors, because the industry has been talking about how this is a big crisis going into the peak summer months. And now we understand that maybe some relief on the BIS norms could be on the cards. Otherwise, when we've spoken to companies like Blue Star, etc., they've been talking about robust demand. What's your sense on the space?
Yeah, thank you. Thank you for inviting. So definitely on the compressor side, the news of some relaxation in the BIS of lower than 2 tons compressor is definitely the positive for near term at least. Because we are in the past, we had seen there is a compressor issue, the price, raw material prices increase. That's another challenge for the industry. That's definitely a positive. But simultaneously, as the Havells has reported their numbers yesterday, and we had seen a very good 40% of a growth in the Lloyd portfolio. However, April month has been quite a muted because of a delay in the summer. What we are hearing, what the management has also indicated about, and also the primary sales of the fourth quarter has been very strong. for all the companies. That also giving some indication of some risk to the primary sale for the Q1. Having said that, April yet to get over, and the May also need to. So how the summer is going to play out the way forward, all depends on the growth on that actually. So far, it's quite a muted degrowth in the south. We had what we get to know in terms of the volume. So now it's a cautious stance on the RSE right now.
You know, on Havells specifically, in your early April note, I think you had done a downward revision in your target price on Havells. Just take us through your sort of thesis on that particular stock, because like we've been discussing, fourth quarter is phenomenal. Wire and cables doing well. Even Lloyd's, which has been their pain point for so long, even that's turned in a good performance.
Yeah, so for Havells, the quarter has been very strong, and that's two things, as you had also highlighted, that's driven their numbers is one, the cable, 21% of a growth, and the Lloyd, 40% of a growth. As well as there some, the margin improvement or the flat YOY we had seen because of operational efficiency and a good growth in these major two segments. So the way forward, because see, the point is whether this Lloyd portfolio to continue at a 6% of a EBIT margin or the positive EBIT margin, the way forward, it all depends on the how the summer is going to play out for them or the industry. So what my sense is the bit cautious stance on the margin profile of the Lloyd for the way forward, I believe. And second thing on the cable business, because the cable 21% of a growth, they had already management highlighted that's around, this growth is a 50-50 value and the volume mix. And in the past quarter, we had already seen that the copper aluminum prices were quite firm, which led to the realization improvement. Even after a 21% of a growth, we had seen contribution margin of the cable has contracted for a YOY and sequentially. It's because of a product mix. So there also there is a cautious stance on the margin profile for the cable business for them as well. So that's why, and right now the valuation is also not quite lucrative for them. Currently trading at 59 times 26 and 49 times 27. So definitely we have a cautious view on the Havells.
Okay, all right. Hi, Praveen. Good morning. Good to see you. And Nigel on this side. I think another point is the switch gears business, which is their margin accretive business. Out there, growth was only around 6%. So I guess that explains why the stock actually is opening up with a mild negative tick. It's had a good run in the past few trading sessions. And also sustainability of these sort of numbers is something that the street is questioning. But Praveen, you have a preference for other names, right? Stocks like KEI as well as Polycab, they got hit hard when we had the news that other big conglomerates are eyeing the wires and cable space. You believe that they are providing good buying opportunities?
See, that's especially for the cable companies, KEI or a Polycab, their valuation has a derated, and that's the major reason is the two major conglomerate is entering here. And if I look at KEI, which has still maintaining their guidance of a 20% of growth in the top line with a slight improvement in the margin, currently trading at around 26-27 times FY 27 earnings. Definitely it's looking better placed in the risk reward scenario at this juncture right now, when the stocks has from the last few days done very well in the consumer durable space. A run up, from the bottom, it's around 17-18% already run up. The peer set, whether it's a REC player or even the diversified players. So KEI is looking still quite lucrative, looking at the return risk reward scenario.
By the way, Praveen, just a shot in the dark, really, good morning. Do you have any thoughts on this entire solar space? The US has imposed high tariffs on Chinese-owned solar cell makers out of Southeast Asia. Overnight.
Definitely, that's an opportunity for us, but we don't have any coverage right now on the solar side of the businesses. But definitely, Havells also has invested in the solar business, looking at an opportunity, or the names like Avari or a Premium, which has a higher exposure to the US, definitely is going to get the benefit, but we don't have any coverage on that and the firm view right now.
Okay, massive moves last night. I was just looking at some of these moves, but these are all, I mean, US solar companies. Praveen, thank you very much for joining us. First Solar, 10%. A company called Sonova Energy, 27%. Solar Edge, 8%. So these are, tariffs moving markets and sectors in a very large way. We'll, of course, try and have one of these companies join us. Maybe both of them join us for a discussion on what this means. How much do we actually export? My sense is there's enough demand here locally for this to be all of the capacity which is coming up to be sold into the Indian market. Exports into the US, we'll have to sort of ask both of them, and we'll try and do it as the day goes by. Sudarshan is with us with his 9-10 calls, and Mitesh will be with us as well. Sudarshan, what do you have?
Tata Consumers is a buy with a stop under 1120.
Mitesh, what about you?
I'll go to buy on HUL. Look for targets of around 2450 to begin.
Okay, all right, got it. Prashant, I was looking at the actual duty that they're putting on these solar guys out of 3,521%. I don't even know the math. How do you get to a duty to stop imports? What, 3,521%? But I think it's enough to get people very excited. Whether we really can capitalize on that export opportunity, absolutely take your point.
So China is the leader. I mean, capacity, solar cells, solar modules. I mean, the capacity is 100x, 200x. We're just setting up capacities here in India. I remember the chat with the BCG analyst who said that module capacity is still quite a bit. I think the cell capacity is coming on stream.
And these guys are focusing on getting backward integrated. So I guess that's what will hold them in good stead, because the modules guys could have a lot of pressure, but the ones that are backward integrated could stand to gain.
Even backward from the cells, wafers, and I think all of that is happening now in terms of value chain backwardation. Well, let's focus on two names now, Tata Communication and HCL Tech. Reema is here to shine the spotlight on these two once again. Reema, over to you.
Hi. So HCL Tech in pre-opening is suggesting a very strong start because the company deal wins were ahead of street expectations. And two, the guidance at 2 to 5% was pretty okay, in line with street expectations. They widened the gap to 2 to 5%, indicating a 300 basis point range, but that is to account for the uncertainty. And so far, the company said that on business, they haven't seen any impact, though they are cautious on discretionary spends and they're likely to remain subdued. Q4 was largely in line with expectations. Revenues dropped 0.8% quarter on quarter. EBITDA margins too declined to 17.9%. Now, Tata Communications, well, margins were missed, compared lower than what the street was anticipating at 18.7% versus 20.4%. But, in pre-open, I can see the stock is higher. Maybe the street is going with the bottom line performance. Profits have come in at 1,040 crore versus 236 crore quarter on quarter. There's a very sharp jump in the profitability. But that, you need to remember, is on account of certain exceptionals. One, they sold their stake in a subsidiary, so that helped them by 311 crore. They sold their land parcel in Chennai, so that also added to the bottom line. Performance was in line with expectations.
Okay, all right. Got that, Reema. Both those stocks on our radar. By the way, HCL Tech is taking the entire tech pack higher. 5% up on HCL Tech, and everything in IT is up and about in this 200-point pop that we're getting on the Nifty right now. So that's the leader on the Nifty tally this morning. Let's quickly revisit numbers that came in from M&M Finance as well. Abhishek.
Well, loan growth has slowed down over there, and you are seeing elevated provisions, which actually dented the earnings momentum for them. So disbursal growth is weak at just 1.5% YOY and a decline of 5.7% sequentially. AUM growth of 17.4% YOY is perhaps one of the weakest growth that you are seeing in last 10 quarters. Net interest margin is at 15-quarter low of 6.5% versus 6.6%. Cost to income ratio is at 8-quarter high, and you are seeing elevated provisions, which has meant that the ROA is at 4-quarter low of 1.7%. Now, their housing finance subsidiary reported the highest loss ever, quarterly loss at about 152 crores, and their loan book in the housing finance subsidiary is at 5-quarter low of 6,894 crores, which may not augur well with investors in trade today. Back to you.
All right, 40 seconds to go for market open. Abhishek, thank you very much for that. And I think we should put up the Nifty and the Nifty Bank and look at how we've closed in the pre-open. So 190, so 200 points. I mean, 24,360. The next Lakshman Rekha, if I can call it that, is basically the 61.8% retracement of the entire fall that we've seen from the highs in late September, October. 27th of September is where we made that high. The high was 26,277, and the low which was made was on the 7th of April, which was 21,743. 61.8% retracement. Its entire move down is 24,545. So that's the level to take out. And then, of course, I mean, you look at all-time highs after that. We'll see if there's enough in the tank for the market to sustain after a super gap up. 0.6% in the Nifty, 0.4% in the Nifty Bank. Small cap index is up 0.6%. And it's all green, largely all green. Advanced decline right out of the gates, super strong, 1,000 up, about 250 lower. 24,300 is there on the board for now. Mid and small caps did very well yesterday, much better than Nifty and the Bank Nifty. And I think that perhaps is another theme, right? I mean, is the worst over for small and mid caps? People are starting to ask that question, and we'll focus on that as well as we go along. That's the heat map. A bulk of it all in the green, a few names in the red. Surbi.
Okay, I'm looking at IT stocks because that recovery move continues thanks to HCL Tech's commentary. HCL Tech, remember, is guiding for 2 to 5% growth in FY26. The reason that band is very high is because it all depends on discretionary spends. If they're bad, 2%. If they pick up, then 5%. That's the Nifty winner. Stock is taking the sector up with it. Tech Mahindra, 3%, Infosys, 2%, Wipro, 1.5%, TCS, 1%. So IT is a big leader. Beyond IT, IndusInd Bank is recovering with that clarification that the bank issued yesterday, 2% up. There is no forensic audit. It's only an EY sort of assisted internal review of the MFI business. Geo Financial, SBI, these are some of the other names. Axis Bank on the financial side that are doing pretty okay. Some recovery on a Hero Motor today. Remember yesterday, Bajaj and Hero were both hit hard because of the Jefferies note. Bajaj is still down, 0.7% lower on Bajaj Auto, but Hero Motor is having a better morning. What's not working is Kotak Mahindra Bank. There's a bit of a profit taking over there. Cipla, Grasim, these are some of the other stocks. But otherwise, it's fine. It's a full green screen. No problems whatsoever. Eternal continues to have a great run. Eternal this month in April is up 20%, Zomato. And that continues with today's move, 1% higher.
Okay, all right. The stock of the morning is Cyan DLM. We just had the management on the channel. They said that the last quarter had a one-off positive impact on the margins. And for the coming year, they are guiding for 10 to around 12% margins. And the US business could be better placed with regard to an opportunity on the China Plus One theme. So that stock is up close to around 9%. Bari Entries, that's the stock of the morning, up close to around 6%. Big move is what we're seeing. And it's having a positive impact on other solar module as well as cell makers. You have Premier that's up close to around 2%. You have Insulation Energy, that's another smaller name in there. That one as well is up close to around 3% or thereabouts. Pull up a couple of other notable movers. You have Geo Financial Services, the new entry into the Nifty. That's up 1.5%, and it's moving on rather large volumes. So good going on that name as well. The first tick, just one observation, on the Nifty, the first tick was a gain of around 200 points, but that quickly got sold into you. So by the end of today, you'll want to see the 24,350 mark get conquered on a closing basis, and you'll want the Nifty Bank to get past the 59,000 odd mark. As we mentioned earlier today, the sector of the morning is the IT pack. You have HCL Tech that did quite well in terms of in comparison to street expectations. The Nasdaq saw a relief rally, and we had more rational thoughts coming in from President Trump. So that explains why. That's the sector of the morning. The tech pack up and about in today's trading session. Just one more name. J&K Bank is down close to around 6.5%. I think yesterday that stock had seen a big run. Today it's come in for some profit taking.
I just want to point out Havells, guys, before we move on. A little uncanny, 3.5% down. The numbers look good. Most of the brokerage notes that I'm looking at, Morgan Stanley overweight, target price 1942, Nomura buy 1873. JP Morgan is neutral, but even their target is about 1700. Stock selling off quite a bit.
I'll give you a couple of reasons. One is their switchgear business, which is the highest margin business. Out there, the growth is only 6%. Point number one. Point number two is the stock trades at around 60 times on a forward basis. That's FY26. That's 30% above its historical 10-year average. Both these 2 points coming in from a Jefferies note. So that could explain the stock is seeing some profit taking.
All right. That's Havells. Well, 140 higher on the Nifty, which means, I think from the high point, we've lost about 60 odd points. But this is very, very initial first few minutes, which is coming up on our screens for now. 24,300. The biggest volume-led gainer this morning is Vari. It's got about 500,000 shares, I think, but it's the number one volume-led move. 1.5 million, beg your pardon, 2750. HCL and Coforge are the other two names. Coforge is up about 3%. AU Bank will speak with them in a bit, 4% higher. Tech Mahindra, Chola Finance, Keynes, Cyan, DLM, and so on and so forth. And then volumes start to taper off. But it's a strong start in terms of volume-led gains as well. Raj Ratan Wires, right? We had the management with us yesterday. It ended up 20% yesterday by 3:30. It's up another 7% this morning, 415 or so. From a low of about 260, stocks at about 420 in about, 6-7 trading sessions now. So these are very big moves which are coming through. Vetri Subramaniam is with us, Chief Investment Officer at UTI Asset Management Company. Vetri, good morning. Good to have you with us here. Thanks very much for your time.
Good morning.
Is it all clear, Vetri? And we are again, markets are snapping back. Stocks are snapping back 20, 30, 40% very quickly. And you're right back to where valuations were. And valuations were a problem, right? When we were talking about it a month ago, 2 months ago, etc. What's your sense, Vetri?
Sure. I think one round of the panic to whatever developments were happening on the tariff front and the worries about, how long the uncertainty might persist. One round of panic, I think, related to the market has played out. My sense is that the longer term ramifications are still, sort of unclear. The good news from an Indian perspective, really, so to speak, is that we know that, our exports to GDP in terms of the first order impact, in terms of the export of goods, is only 2% of GDP, right? So there's only a limited extent to which the US, tariff war has a direct impact on India. But obviously, we have to worry about second order impacts. And good to remember that second order impacts can both be opportunities as well as challenges because, people are not able to export into certain geographies, will they try to dump elsewhere, so on and so forth. And at the same time, if tariffs are higher on certain other countries, it could be an opportunity for Indian companies. But I think really all that's happened is that we've gone more into a holding pattern right now. It's very hard for me or for anybody to claim that they have complete certainty about what's going to play out. And I worry that it's really that uncertainty which will continue to weigh down on the market at this point of time.
Okay. So uncertainties and lack of clarity, that continues. Vetri, good morning. Great to have you on. But, what I think a lot of people are pleasantly surprised with is the momentum that the market has found on the upside. And that's thanks to the flows, right? Every day we measure those numbers, count those numbers. 2,000 crores, 3,000 crores coming in from the FPIs. Let's talk about financials because they're directly benefiting from this return of the FPIs. And you've been very, very positive on financials, even when they weren't doing anything in the market. But how much of the good news is in the price? Do you expect a bigger growth kicker ahead? The numbers are looking pristine, no problems there. But what next?
Sure, Surbhi. The only point I will make, Surbhi, is that for 30 years, I've been seeing daily numbers of FPI and DII being reported, and I stopped looking at it 30 years ago because I figured that for long-term investment, who's buying and who's selling is really the most useless piece of information you can look at. So that's not what really drives my thought process. And again, in terms of FPI buying and financials, that's not the way I would look at it. I think what we need to keep in mind is that we had a monetary environment along with a fiscal environment, which was very tight, very conservative for the last 2 years. I think particularly on the monetary side, the interbank liquidity being negative meant that credit creation was being held back. You also had, maybe rightly so, the RBI making multiple interventions, raising risk weights, trying to sort of caution the banks from growing credit. And I think all of that contributed to a sort of managed slowdown of credit growth in the economy. You look at the year ended March 31st, credit growth in the economy is just about 11%, which is pretty much most likely 150 basis points higher than where nominal GDP growth is. That's a very weak pro-growth impulse from credit. I think one of the changes that I'm seeing in the last 2 months is really that RBI is now waking up to the fact that perhaps there is a need to put a little bit of growth impetus back in the economy. They are doing it through administrative measures. You've seen that even on the sort of LCR ratio changes that they recently announced. They're allowing interbank liquidity to go positive. And I think we are perhaps now in an environment where credit growth can actually become supportive of economic growth. What do I mean by that? If you've got economic growth running in terms of nominal terms at 10% or thereabouts, you could actually be in an environment where credit could be running at 13 or 14% for the system as a whole. Also because it would then sort of support growth within the economy. And to the extent that we are facing, external headwinds, I think one of the levers available to us to support the domestic economy is credit growth, and the banks are in good shape. We know that company balance sheets are in good shape. Households, little bit of stress, but I do hope that the household balance sheets would have seen some healing because of this fabulous rise in gold prices. The Indian households are over-indexed on gold, but it's certainly healing their balance sheets.
So, Vetri, just to follow up on that, you're saying 13 to 14% credit growth system-wide. I'm not sure if that happens this year itself or not. In terms of multiple expansion, in the heydays, we've seen banks trade at 4-5 times price to book, NBFCs trade at 8-9 times price to book. Let's talk about the larger banks. I think most of them are still around 2.5% to 2.8 times PB. What is the valuation expansion in this leg of the financial run that you would anticipate?
So, my thought process is that a year ago, even when we spoke about this, I was talking about the fact that valuations were very, very comfortable. In fact, they were perhaps even cheap because, people were looking at the adverse news flow. And, my sentiment at that point was they are cheap because you're looking at the adverse news flow, not at what is possible. I think we are now in a phase where perhaps the market and, at least as investors, we should be looking at the fact that I think there is a scope for credit growth to surprise on the upside over the next 2 to 3 years. And I think as a result of that, you can get a combination of both earnings compounding and some improvement in valuations. Those numbers that you talked about in terms of price to book that we've seen for specific financial institutions in the past are not a benchmark. That's certainly not the number that I would be working with in my head. But is there scope for margin expansion? There certainly is. And I would also argue that, in this kind of environment, many of the banks, not all of them, many of the financial companies will be able to grow without diluting because at their current level of ROA, they can easily sustain 13-14% credit growth without seeing any rundown in their capital adequacy ratios. So it's a sweet spot for them where they don't need to raise equity money to actually, deliver balance sheet growth. And therefore, it's very self-sustaining in terms of the outcomes that you can experience as an investor.
Hi, Vetri. Good morning. Good to see you. When I recall in Feb as well, we had a chat, right? At that point of time, you said BFSI, that's your sector that you like. It's going through a bit of a knock, but you said that that's one of the top sectors. And the other one you mentioned, I think, was the power stocks. Post the pullback, you said that maybe some of them look interesting. Are both those two still, we've already discussed banking. What about the power stocks?
I think power is a little bit more tricky because at the end of the day, it is a utility business and therefore you've got to be cautious about what you're willing to pay for it. And I just think there are many moving parts over there in terms of everything that's happening, particularly in terms of the new energy and the solar piece. But I think in India, increasingly, we will find that a lot of our requirements in terms of powering the grid for growth over the next decade will come from traditional fuel sources. And I think there are a bunch of, local companies which are well placed. Also, you will have, interestingly, I think some opportunities in the transmission side, because the more complex the grid gets in terms of the sources of power, actually, it's the transmission companies which also start to benefit from that. So I think power is something I'd stay reasonably positive and constructive. But remember, it's eventually a utility. Returns are regulated, and there is a scope for policy intervention in multiple manners.
Vetri, just thinking ahead a little bit, do you think, right now we're in a bit of coming off very beaten down levels and there is generally a bit of a risk on, but with regards to India, all commentary, etc., seems to suggest that we are first in line for a deal. But even then, there is wide acknowledgement that it will take time. I mean, it's going to be many months away, right, for a final comprehensive deal. Do you think, as we get closer to the 4th of July, I think 4th or 6th of July, which is a 90-day cutoff, 90-day pause, say after another 20 days, if there's nothing which is moving forward, once again we will enter that period of uncertainty, and people will start to question what happens, etc., etc.?
Without doubt, Prashant. But I think we need to step back for a moment. Forget the uncertainty that perhaps people who are trying to day trade the markets are facing, or even we are obviously dealing with very uncertain events. But think about what's happening to the economy. You've got businesses going on hold because they really don't know how their supply chains are going to behave. They don't know how long they will be able to hold their price line. They don't know in which geography and where they should be making investments to build their new factories. And if they take those decisions, they don't know whether they have the certainty of policy. So really, I think the bigger concern is, markets can keep repricing things instantaneously. But I think the bigger damage which is happening to decisions being made by businesses, by industries, and eventually some of that flow through to consumer. And that is what would trouble me, because, when I look at the Nifty consensus earnings growth of 13-14% for FY26, that is not a low bar. It doesn't sound like a high number, but in an environment of uncertainty where everybody is going to be cautious about building that next new factory, consumers are going to be worried about, hey, what's the outlook for my industry? What's the outlook for my income? Should I be buying a car? Should I be buying a house? Should I be putting money down on something? There is a scope for things to slow down. And it's that earnings concern that I think I would worry about a little bit more. And the simple way in which the market tends to deal with earnings uncertainty is pushing the multiple down for earnings. So I would still in that sense say that, don't go by, okay, the market sorted because it's up today. Don't go by everything is busted because market is down today. We are in an environment of uncertainty, and you need to build that into your investment strategy.
You preempted my next question, Vetri. I'm so glad you brought up that point. So, X of the US issues, let's leave that behind. I mean, assuming for a second that we get a deal and it doesn't all, go to hell, so to speak. Earnings is one worry. Is there anything else that's a risk to this market's bull run resuming?
I don't think about the market in terms of is it a bull run or is it a bear run. I think to me, the bigger issue is what's the kind of outlook we have for growth. I think the great thing for India at this point of time is macro stability is fantastic. But, in terms of being to accelerate to a 7.5% growth, I don't see that visibility as yet, because I think we are still in a very difficult global environment, though our macro platform is stable. What we could benefit from, but that's only the capital side of the equation, is once the dust settles, I think the outlook for capital flows into EMs and into India would improve. And I don't mean FPI money. I mean even eventually FDI money, which I think is really very, very important to the country's long-term growth trajectory.
All right, Vetri, great perspective as always. Thank you very much for joining in. So optimism, but laced with a bit of caution, and that never hurts, right? Thank you so much for joining us this morning. Well, we were just talking about the banking sector, which has become sort of a consensus buy trade in the market. Vetri is also saying that maybe credit growth can surprise on the upside. Let's actually put the spotlight, because a lot has changed in the last 3 months since we had a change of guard at the Reserve Bank of India. The Nifty Bank is at record highs. Ritu is here to tell us what all has fueled this rally from a regulatory perspective.
Well, a spate of positive developments for the banking system that could explain the rally we're seeing in banking stocks. But at the heart of it is a regulatory environment that is turning more supportive under RBI Governor Sanjay Malhotra. RBI has deferred tighter project finance norms, and they've even provided banks additional time to comply with these new LCR requirements. And to the street, that is signaling a clear pro-growth stance. Adding to the momentum, systemic liquidity has also flipped into surplus after a 4-month deficit, with the RBI injecting more than 15.5 lakh crores in the system in the recent months through OMOs, VRRs and forex swaps. Now, while the recent 50 basis point rate cut may weigh on bank NIMs, it is aimed at boosting credit growth and demand, and CRISIL expects credit growth to rise by up to 200 basis points this fiscal, helped by these tailwinds. The strong show by banks like HDFC and ICICI Bank in their fourth quarter has also helped helped boost sentiments. Now, on the regulatory front, these latest LCR relaxations are a big positive because compared to earlier draft norms, the final rules are more lenient and they are expected to improve the aggregate LCR of banks by 600 basis points, freeing up almost 3 lakh crores of lendable resources and potentially lifting the overall credit growth by up to 1.5%, according to ICRA estimates. RBI also recently lowered the risk weight on bank lending to NBFCs and MFIs. That could free up an estimated 40,000 crores of capital. Now, co-lending norms, they've also been expanded to include all sectors and all regulated entities, and even priority sector lending norms have been revised, enhancing the loan limits and broadening the scope for renewable and housing credit. So put together, it is a powerful combination of ample liquidity, regulatory easing, and strong earnings that is fueling this banking rally. But that said, not all concerns are off the table. Deposit and credit growth momentum remains a key watch point, and there are still some lingering risks around asset quality issues in unsecured loans and microfinance segment.
Okay, Ritu, thanks very much for recapping everything that's happened. That has given definitely a lot of regulatory comfort to banks and bank stocks. To talk about this and the way forward, we have with us Mr. Dinesh Khara, former chairman at State Bank of India. We also have with us Sanjeev Chadda, former MD and CEO at Bank of Baroda. Gentlemen, thank you very much for joining in. Mr. Khara, let me start with you. So it's been a very swift change in, well, the stance changed a little later, but a swift change in the regulatory backdrop, where a lot of the macroprudential, tightness that we saw in the last 15 months, that has been pulled back, whether it's unsecured retail credit, whether it's sort of risk weights, or look at the latest, which is the LCR guidelines, right? There's been enough comfort. The implementation is also 1 year away now. What do you make of Mr. Malhotra's first 3 months in office?
Well, I think the way I read this situation is that the industry was always reaching out to RBI and was making a very appeal, significant appeal in terms of ensuring that the liquidity should not become a challenge. Particularly, I'm talking in the context of LCR, and I'm glad that the guidelines which have come in, it's actually a middle path. If at all you look at it as compared to what it was, and now what it will be from the 1st of April 26, it's more like a middle path. And I think that is a very clear reflection that RBI has probably given due credence to the submission made by the industry and the industry body, and have also tried to figure out that how should they balance the risk also, which are inherent in this. So I think I would say that it has always been a collaborative approach. But I think as a regulator, they are very mindful in terms of the situations which are obtaining. And based upon that, whatever elbow room is available, I would say that they are willing to accommodate the banking system. Very mindful of the fact that growth is the need of the hour. And unless and until the banking sector is given the required support, growth may not really happen. And that is perhaps the reason why RBI has also taken a stance which is supportive of the banking requirements.
Mr. Khara, so the RBI usually errs on the side of caution, right? So just your thoughts, you mentioned the LCR norms, just your thoughts on the pullback in the tightness or the regulatory tightness around unsecured lending, right? Like I said, that some of the risk weights that were increased for NBFCs, they've been now rolled back. On the unsecured bit, do you think this was the right time to ease up norms a little bit? And what would you expect in terms of pickup of unsecured credit?
No, I think the way I read it is that, by virtue of tightening the unsecured credit, it was actually had started impacting on the growth path. So naturally here also, RBI was required to find a middle path. And that is one of the reasons why I think they have left the micromanagement as far as the risk is concerned for the unsecured credit at the level of the board of banks. But overall, they have given some elbow room, which is actually addressing this particular aspect. And the other aspect, which I must mention, it's not merely the RWA which has been reduced, but also to really support the whole ecosystem, the co-lending requirements which have been relaxed now, that actually makes the availability of credit at the ground much easier, because today NBFCs can do co-lending with themselves. the other co-lending, the other NBFC players. NBFCs can do co-lending with the banks, and even banks can do also do the co-lending. So I think among themselves, actually, they have broadened the whole base. I would say that the reduction in the RW was essentially just one step, but essentially the direction is very clear, that how can we make the credit available on ground without much of cost. So that is what the intention seems to be, and that is the reason why the RWs have been relaxed a bit, and also the co-lending environment has been created. Very positive co-lending environment has been created. But nevertheless, managing the risk is something which is the role of the management of the banks. And for that matter, the board of the banks have got a greater responsibility. And I think I expect that the board will take the appropriate call depending upon the area where they're operating, the products which they're offering, and how they should.
Absolutely. Very good points, Mr. Khara, and good to see you. Good morning, Prashant here. Mr. Chadha, welcome to the program as well. With the caveat that stock markets generally love to jump to conclusions that, this is a big shift from an earlier stance, and mostly they'd like to believe that things are getting better. I mean, markets are optimistic creatures at the core. Can we say, in the context of what we've seen from the RBI under the governor over the last 3 months, that there is a shift to kind of focus towards growth in a big way? I mean, just for example, take the case of this LCR, right? The runoff at 100%, banks were arguing, was punitive. But the very sharp reduction which we've seen, perhaps on the other end of the spectrum now, what do you say as an indication? Can we say it's very, very growth focused now? Mr. Chadha, you want to come in?
Yeah. So I think probably we need to look at it in a broader perspective in terms of what guides central bank in their policy at what point in time. I think central banks generally would want to be counter-cyclical, right? If there's stress building up in any area, they would want to mitigate the stress rather than accentuate the stress. So we know that there was tightness in liquidity. We know deposit growth was slowing down. And therefore, if the draft guidelines of the LCR had come into effect, that would have been pro-cyclical rather than counter-cyclical. So one can argue that this is pretty much broadly in line with the mandate of a central bank, right? That's one. Number two, the specific context of the Indian economy. We know that unlike, say, the US, the Indian economy is completely dependent upon banks in terms of providing credit for growth. And therefore, if the emphasis was on growth, there was no case, again, for tightening liquidity and making things difficult for the banks. In fact, in that case, the growth agenda could not have been met. Third, I think that particularly when it comes to the LCR, rate cuts already were there. And therefore, now if you want that the rate cut should be transmitted, it was important that liquidity should be eased. Banks should not be looking over their shoulders in terms of what is going to be happening in 6 or 8 months' time. So I think while you are right in terms of the fact that there may be some signals to read, but these the changes that are there are perfectly understandable and justifiable in terms of the mandate of a central bank to ensure that there is growth, to make sure that there is counter-cyclicality in policy, and also make sure that the rate cuts actually get transmitted in a broader sense.
Mr. Chadha, sir, same question to you. What sort of a growth kicker will all this translate into? Because like Mr. Khara said, there's the relaxation in LCR norms. There is the rollback of risk weights for NBFCs, relaxation on unsecured credit, boosting co-lending in a big way. So what is the growth kicker, system-wide credit offtake, say in FY26 and maybe FY27, when the benefits of all these measures really pour in?
So I think Mr. Khara is absolutely right. Ultimately, credit policy, like politics, as I say, is the art of the possible. There are some areas where challenges do remain, right? So we have been looking at the corporate credit growth, the investment cycle. Now, those are things that you cannot switch off again at the press of a button. But there are things which are within the ambit of the central bank. And as Mr. Khara rightly pointed out, when it comes to unsecured loans, they have become an increasingly large part of lending, both for NBFCs and also for banks. Given the fact that other avenues of growth are not there, possibly this is something that you must do while making sure that the prudential requirements are not really put aside. And I think that is completely demonstrated by the fact that when it comes to the runoff factor, the runoff factor when it comes to digital deposits has been increased by 2.5%. But I think the stance of the RBI would seem to suggest that they are fully cognizant of prudential requirements, but they will make sure that banks get sufficient time to adjust so that any policy action of the RBI is non-disruptive as far as growth is concerned.
Okay. All right, gentlemen, thank you very much for that perspective. Well, it's definitely showing up in the market excitement, and hopefully it will show up in terms of growth numbers in bank earnings as well in the quarters ahead. Thank you so much for joining in.
One last
Prashant, absolutely.
question. Mr. Khara, what else should we expect, sir? Let's look into the future quickly, if you can tell us.
No, I think what I would say is that the way
on the regulatory side, sir, in terms of all the relaxations we've seen, is there anything on the agenda in terms of something where discussions were taking place over the next few months? What should we expect?
No, I think more or less they have already adjusted, already taken care of. Liquidity is one of the concern areas. And of course, there was what was being talked about was that if at all there could be some kind of a relaxation for the CRR, maybe in the days to come, to ensure that there is a durable liquidity in the system, perhaps that could be one thing which we can look at, we can look for.
Okay, so we'll look forward to that if it were to happen. But I mean, the indication and signals, if one wants to read, clearly seems to be that the central bank, of course, I mean, absolutely prudent and have taken care of risks in the system, etc., but also an eye on growth. Thank you very much, Mr. Khara, Mr. Chadha, for joining us. Good conversation and good perspective from both of you on what's happening in terms of all these regulatory relaxations and much easier liquidity now, even compared to where we were at the beginning of the year. We'll take a quick commercial break here. We have Kunal Vora of BNP Paribas joining us. Expectations from the FMCG space, quarter se quarter tak. So that's coming up.
Welcome back. Well, quick check on the market before we proceed. And the market's just fine, 170 points up on the Nifty. And today it's not the Bank Nifty. The Bank Nifty's taken a breather. It's done the heavy lifting for so many days. It is IT, and IT. Look at HCL Tech, 7%. Tech Mahindra, Infosys, Wipro, big move on all of these stocks. That's IT. What about FMCG? Will this engine start firing up for the bulls as well? What does Q4 have in store? It is time for our special segment, Quarter Se Quarter Tak. And yes, you guessed it, we're putting the spotlight on the FMCG space in this season. Over to Mangalam for the key expectations.
Well, for the FMCG sector in terms of the fourth quarter, I'll have to use the old ad tagline, same, yet different. Why do I say that? Because it's going to be a quarter of muted staples volume growth with good rural growth. However, urban outlook is improving post the budget and raw material prices remain volatile, but they are higher in the fourth quarter. They have come off as well. Case in point, palm oil itself. There is strong competition across categories, but leaders are making a comeback in a few categories as well. Discretionary like jewelry, beauty and personal care, quick service restaurants, value retail are likely to outperform. And that's something that we saw in the fourth quarter updates that have come so far as well. Jewelry names like Titan and Kalyan Jewelers have, been top of the pops. Trent too, despite growing at a lot slower rate than its own past performance, was among the top quartile with a 28% growth in the fourth quarter. Nykaa continues to outperform the sector, and this time around, we will see some revival in revenue growth coming in from names like V-Mart as well as D-Mart. Jubilant Foodworks continues to do well. The staples, however, continue to drum in their own beats, which are soft and muted. Dabur said its India business will decline in mid-single digits, 150 to 175 basis points margin dip expected as well. Marico, on the other hand, saw a sequential uptick in underlying volume growth, which is a positive, but margins are key to track there. And Godrej Consumer as well, with underlying volume growth expected to be in mid-single digits after a weak third quarter itself. What are we expecting from numbers this time around? We have Tata Consumer reporting, then in the very near future, we have HUL and Nestle reporting as well. Well, if you look at it, from what we saw in the third quarter, not much is expected to change, but a notable underperformance from names like Asian Paints, where revenues are likely to decline 1 to 2%, EBITDA are likely to decline 2 to 6% as well. We're expecting margin compression for both Britannia as well as Tata Consumer. HUL, on the other hand, likely to report low single-digit revenue and EBITDA growth with absolutely flat volumes. So what's different this time around? Well, the expectations of a better FY26 are a lot more due to the projection of a normal monsoon, impact on consumption led by tax cuts and government stops, improving urban demand outlook as well. A lot of acquisitions made by companies in the recent past could start scaling up too. And in terms of valuations, the sector's never been cheap, but this time around, after a spate of underperformance, traded multiples are near 5-year average for most of the companies, and that may give some solace to those looking to invest in the sector at the ebb of a cycle. In fact, very recently, we saw a couple of brokerage upgrades coming by on the sector as well. So if you look at the valuations, compare that to 5-year average, we will see some bit of moderation coming in, maybe the street looking at the cycle to move. What will set this quarter apart from the previous few is that the management commentary may be a lot more optimistic than earlier, which is why weak results may not be as punished as earlier. Therefore, like I said, same, yet different.
I forgot whose tagline that is, Mangalam. My God, I think I'm getting old. Which ad was this?
That's a quiz for all the viewers. Google and find out.
Okay, I'm completely intrigued and I'm going to definitely look this up right after the show. Thank you so much for that. Let's take the discussion forward. We have a sector specialist also joining in. Kunal Vora, Head of Equity Research at BNP Paribas, is with us now. Kunal, everyone's waiting for a revival in these FMCG stocks. Now, as Mangalam told us, the numbers are not showing that up. If anything, we might see a decline now at the EBITDA level for many of these companies, Tata Consumer being an exception. What's your overall stance on the sector?
Yeah, our view on this sector has been negative. FY25 will be another year in which we will not see anything meaningful in terms of revenue growth or EBITDA growth for the year. FY25 will be a year of low single-digit revenue growth. EBITDA could be flat for our coverage. Now, on a very, very low base, FY26 will be a better year. I mean, there has been no growth in FY25, so things will recover in the next few quarters. Rural indicators are looking positive. Government spending, government has done more for affluent consumption compared to mass consumption. So I don't really see that as a trigger. But inflation has started moderating. Raw material cost, agro commodities have been elevated, but that's something which is now stabilizing. So in FY26, we expect the growth rates to come back to more normalized levels, about 7-8%. That's the growth rate which this sector has seen over the last decade. But if you look at, say, 3 to 5 year CAGR, the sector has been a fairly weak one. And besides just the fact that the growth has been weak, we see a higher disruption risk in this sector compared to what we've historically seen. And in that context, we find the valuations to be fairly rich. So our view on the sector remains negative. In fact, from India strategy perspective, this is a key underperform rated sector for us.
Key underperform rated sector. Okay, though you're expecting for the FMCG, the staples basket, growth should pick up to 7-8% this year, right? Which will be great. I mean, we haven't even seen that kind of number in such a long time. So discretionary consumption is relatively what the market is obviously more optimistic on. I don't know if you cover those companies as well, say the likes of a Eternal or a Nykaa. They represent a different format of consumption. What would your expectation be here in terms of earnings? Will the earnings continue to surprise on the upside?
Yeah, so we have certain discretionary names under coverage. In fact, we also have a basket of 50 stocks which cater to the affluent India. And we believe that affluent India is the story to be in when it comes to consumption. Like you've seen various factors driving it, job creation, rising access to credit, strength in asset prices. All of that really helps the affluent consumption. And some of the names which you did mention, along with like what we cover, like some names in jewelry, QSR, food delivery, all of that really caters to the like primarily to the top 10-15% affluent households. Where we see the issue is much more in case of the mass consumption, which is where the staples fit in. And we don't really see anything major changing there. It's been a weak growth, like consistent underperformance compared to nominal GDP growth rate. And that's something which we don't think will change. Now, growth of 7-8%, I mean, yeah, it's a recovery compared to what we are seeing, but nothing really exciting. When stocks are trading at 50 to 52 times FY27 P multiples, we don't really find the like 7-8% growth or flattish EBITDA margins to be very exciting.
Kunal, are you allowed to share your top picks on air with us? Please do if you can.
Yeah, we like in the discretionary space, we like Titan. In case of consumer staples, we do like ITC. And we do like HUL purely because of valuations. The stock is now trading at 1 standard deviation below its historical averages. But growth rate, we continue to believe will be fairly muted for this sector.
All right, Kunal, we'll leave it there and speak again soon. Thank you very much as we continue to track this hopeful recovery, as far as staples and FMCG stocks are concerned on the back of, I guess one of the things, of course, is more money in the hands of the consumer. Well, more money in the hands of the consumer hopefully also means, better credit revival. So let's go back to the banking financial services space and let's talk to the management of AU Small Finance Bank. The reported numbers, stocks higher, 20% year-on-year growth, 6% quarter-on-quarter growth, healthy growth in the secured portfolio, including mortgages. And there is a lot to talk about here. Sanjay Agarwal is founder and managing director, CEO at AU Small Finance Bank. Sanjay, good morning. Good to have you with us here. Prashant, this side.
Yeah, Prashant. Good morning.
Good to see you.
Good morning. How are you?
All well. Thank you.
Yeah.
So, the question is about, we were looking ahead, right? We just had a discussion at 9:30 with Mr. Dinesh Khara and Mr. Chadda on all of the regulatory relaxations with regards to liquidity we've seen from the beginning of the year, and things seem to be much better. But let's talk about your business. We've seen healthy growth. What can we expect in terms of growth for FY26, Sanjay? And also give us a sense on asset quality. Do you expect some challenges to persist, at least in the first half of 26? Go on.
Yeah, Prashant. So again, thank you for this opportunity. So let's go back, last year when we all started 24-25, we never felt that, we'll go with this tough year, the challenging year. So in my opinion, we were not prepared, because we all forecasted 7% GDP. We all thought that there will be enough liquidity, inflation will be under control and all those things. But somehow, last year remained very tough in all sense. Our GDP never performed, broken momentum, I would say consistent liquidity issues. So I think from last 2 months, things have changed dramatically, in my opinion. And I would give credit to the regulator and, of course, the government itself that the focus on growth is back. But I think we need to also figure out that we are just forecasting a GDP of lesser than 6.5 for this current financial year also, right? And we are just starting this year. So to build anything from here and give you guidance that how much growth can happen and how this year would not be right at this moment, in my opinion. We need to wait actually how it's actually pan out. But I personally believe that this time we are well prepared, because, I'm a cricketer. I know that if pitch is, if you don't able to estimate the picture, then you can't able to perform.
No, that point is taken, Sanjay. That point is taken. That last year we started on a high note. The economy itself, policymakers, everyone were on a jubilant note, and therefore not prepared for what followed. But now we are prepared for the worst because of whatever Trump has done, and therefore perhaps we'll do better. But let us just do the little bit of math that Prashant was asking you. Are we going to see an improvement in margins? Everybody's margins fell in FY25 because liquidity was tight and interest rates are getting cut. this year, because of liquidity, does 5.8 go towards 5.96? How do margins go?
No, so there I would say that still very early time. There is a narrative from the regulator that they will put liquidity and all those things, but the real action has to happen, right? So for me, the real interest rate correction or a margin expansion maybe in Q3, Q4, but I know that it will be in next financial year. That's for sure. But this year, I want to take a very guarded approach that let's not build anything from this initial initiatives. Let's see, go more deep in the year. Build your organization or a bank around these challenges. So I would say that ideally I would love to say you that there can be a margin expansion, but I also see the reality, so that holds me back.
Would you need to,
jump to the
Sanjay,
all good time, right?
Got it. Sanjay, one of the things that analysts have been we've spoken with, have said, is that on margins, you will need to offer higher rates as compared to other lenders to attract deposits, and that may keep margins under some pressure. Is that a reasonable point of view?
Of course, and it's true in our case, Prashant, because we are a small finance bank. We are still not that in big league. Once we go to the market, our team gets a lot of questions around our SFB platform and all those things. So we need to price even by basis of 25 bips, and in our whole maths of ROA, 25 bips is a huge amount, right? So that's why I'm saying you that, these are the initial time, just happened in last 2 months. So let's go more deeper and let's see how the whole liquidity actually reality happens, on the ground, because liquidity in the bank at the bank platform or at a platform of consumer is different, right? So let's see how the liquidity is at the consumer end and how he able to build their deposits with bank and all those things. So need to see this in maybe couple of quarters. Then we will able to say this that what is the margin expansions, how we can pan out our whole year.
Yeah, get that, Sanjay. We don't have too much time, so if I can rush some more questions.
Yeah.
What Prashant and I are trying to ask you is, does it go to 5.7 or 5.6 and then rise in the second half? If you can give us some direction.
Honestly, Lata, difficult. Whenever we have gone in this kind of uncertain time, it's difficult. Something happened in next 1 month. Who will actually figure out that, how the real things happen? Because if you ask me in April, there is a softening of interest rates, in wholesale deposits. But if you ask me on the retail side, it is never happened at all as of now. So
all right. Let's shift gear to asset quality question, which we couldn't attend to at all. Can you just take us through whether you saw any improvement in MFI? When do you see it improving? You've taken a huge credit cost, almost 2.5%. I think you're providing 100%. Correct? So give me some idea of the actual behavior on the ground in terms of collections and asset quality and your reasonable expectation for next year.
So Lata, last year, there were two challenges, both on the margins and of course the credit cost, right? But I strongly believe that this year our credit cost will help us more to build our ROA. So I expect a reduction in credit cost this year, and I'm saying because we are well prepared. We know that how our retail asset, which is the book of us, is around 0.90 kind of credit cost, which may go down to 0.8 this year. Commercial banking is largely around 0.4. It may go down to 0.3. Microfinance, already I have seen the improvement in the Q4. So I believe that we have a credit cost of around 7.7 last year. This year, we expect to be around 4%, right? So I think overall, I would say the credit card, of course, we are actually going in a course correction, and we'll do a lot of things so that our credit cost gets capped somewhere in 10% in the range there. So overall, I strongly believe that this year, this financial year, 25-26, the credit cost should be in the range of 0.9 versus 1.3, which we had last year.
So MFI stresses, we've seen the worst, Sanjay?
Yeah, that's my sense. And Prashant, again, I will say that we are well prepared. We know that how the GDP will have, what GDP will we have this year, how the whole momentum will be built. We know that there will be heat wave in the 2 quarters, then there will be momentum building the second half, all those things. So this time we are well prepared, and once you are well prepared, you can manage lot many things.
The sense I'm getting, Sanjay, from you is you are well prepared for slower growth. Last year we got slower growth. This year also, what you said, right?
Honestly,
Forecasts are for sub 6.5%. Is that the way to read this overall? Yeah.
No, Prashant, I don't want to go with a prejudiced mind that everything has become good. There is a push for growth. I want to actually wait and watch the entire spectrum. Play the ball when it's been delivered, right? So that's sense. We can actually in this last year also, Prashant, we have grown our deposit by 27%, loan asset by 20%. So in that tough time also we have grown so well, right? So, but the idea is to not to commit yourself in your team that we need to do this, irrespective of the condition, right? So the idea is to really be more balanced in your approach and play a inning, with the environment.
No, sure, absolutely. No, I understand that for your teams, maybe you don't want to put undue stress and put a number to to their head. Yes. But from a shareholder perspective, sort of rough ranges help to map the year ahead. So let's talk FY26.
We committed that if India grow by whatever nominal GDP will grow by at least 2 times to that, right?
Okay. So 2 times of nominal GDP. So we should expect growth in double digits. Just on the MFI part, you said the worst is behind. Our team is just seeking a clarification specifically on Karnataka. Your issues in Karnataka that you are facing, are you past the worst there as well?
Yeah, so I would say March has given up hope, because in March month, the OD recovery there is around 98%, right? Which was around 95 in the January month. And I'm not seeing many noises from that market now. So, and that is only a 10% of our book. So even that, we have counted that book in our current year planning, right? So I don't think Karnataka would play a spoil sport for us this year.
All right, got that point, Mr. Agrawal. Thank you very much for joining in and giving us a perspective on the business. That's AU Small Finance Bank. The stock is doing really well, 5.5%. You can't say that for the overall Bank Nifty, however. There's some red on the screen now and some selling that's crept in the last 20 odd minutes or so. Let's pull up the Bank Nifty. It's down about 0.4%. Market has also cooled off because of the profit taking that we're seeing in bank stocks. Maybe it's just that tactical profit taking, given the very sharp rally over the last couple of days. Good time to bring in Mitesh then. Mitesh, actually, let's start right there on Bank Nifty. If anyone's got open, long positions, what do you make of it? Where do the supports come in?
Yeah. So I think the Bank Nifty, I think first signs of, profit booking are there on the half-hourly chart. But again, this will not really worry me a lot. There is, there was always a chance of some pullback with the kind of rally which we have had. Good idea would be to take some profits off the table and then wait for an entry point closer to about 55,000 levels. I think 55,100 is my zone where I would want to buy the Bank Nifty again. So stay long, but I think stay on the positive side of the trade. But tactically, I think taking some profits off 50% off is not a bad idea, and add on a decline.
You were saying in the morning, right? I mean, so 200 higher, and if you get a 80, 100-point pullback, and that perhaps is the time, that's the place to kind of go long, which is where we are now, right, Amitesh?
That's for the Nifty, Prashant, right? So I think, yes, I think I would be comfortable buying into Nifty. Keep a stop below 24,140, which is about 105 points lower from here. And long positions can be slowly accumulated on the Nifty. Okay, your stocks, Mitesh? So I have a buy on Alchem Labs with a stop at about 50.40. The target of around 52.30 can possibly be looked at. The other stock which I like is from the IT pack. I think that's one sector which is reversing a bit. Disclaimer, we have some call options positions of invested interest over here. And that's Tech Mahindra, which I would recommend buying with a stop below 14.05 and look for target in excess of 1,500. Okay. The broader, thanks very much, Mitesh, for that. The broader US market recovery may or may not have an impact on the broader Indian market, but one sector which certainly pays attention
is the IT services index. The Nifty IT index is up 3%. Of course, it's also the worst performing index this year so far, worst performing large index, 3% plus, 35,075 is where we are at. We take a quick commercial break here. We turn our focus to commodities with Manish on the other side. Stay tuned.
Welcome back. Well, we've spoken enough about equities. Let's also put the spotlight on commodities, because guess what? After shining to 3,500, gold prices finally have taken a breather. Let's talk to Manisha. Manisha, what's the latest?
Oh, well, yes. 3,500, done, dusted, been there, done that, and we've seen some profit taking. Well, the interesting point is that after hitting $3,500 an ounce, there was a bout of profit taking correction on the lower side. So prices did hit that record highs, with the various global banks and brokerages have been talking about. And they've also been saying that 3,500 would come in by April and it would peak out by May, is what we've been hearing. But 1.2% of a decline in the overnight markets is what we've seen in gold. Interestingly, even as gold made that all-time high yesterday, it closed much lower at $3,380 an ounce. So that tells you on charts, while we've seen that spike, we haven't closed there, and that has led to some more profit taking happen in the Asian markets right now. Also, gold is showing some exhaustion now, finally, after gaining $850 an ounce in this year alone since 1st of January. We started this year with $2,650 and we've done $3,500 on the higher side. So that's almost $900 plus kind of a rally that we've seen in the intraday market there. These are the Indian gold prices then. Well, we've seen an all-time high of 99,400 already there. Add 3% GST to that, and that's exactly what we've been talking about in the last 24 hours on the kind of run-up that we've seen in Indian markets, and a lakh rupees per 10 grams. It has been a reality. But for India as well, we're trading at around 96,000 right now. So it's nearly 3,000 rupees off in the Indian markets from those all-time highs. What's leading to this decline? Well, one is the dollar index, which has come off its oversold zones. It's trading above 99 right now, and that has led to some profit taking. The equity markets in India globally have seen some stability coming in. That has been the reason. And then the couple of statements coming in from US, one from the US Treasury SECI saying that they expect de-escalation in US-China trade conflict has led to the decline. And the other has been US President backing away from those statements that he earlier made on threats about firing perhaps Fed Chair Powell. So that has led to some easing in markets as well. The other thing worth watching is that COMEX inventories had hit an all-time highs. They have seen a 2 million ounce decline since early April, now stands at 43 million ounces. The other thing is the IMF statement that came in yesterday about the global GDP, US GDP being downward revision. That also is something that the street will watch out for. In the longer term, that will support gold. But in the near term, everything really seems to be impacting the prices right now. Long term, and let's talk about that now, and that is still bullish. If you look at the global ETF holdings, they are at September 2023 highs. Indian ETF holdings have been at the highest level as well. The US gold ETF holdings are at an all-time highs also. Also, the global central bank buying has just about continued for the month of March as well. And then now there are statements from China that they will now invest in internationalizing the Shanghai Gold Exchange, also the warehouses for global delivery. This is clearly coming in competition of the LME and the LBMA. So this would be an interesting development to watch out for. My last plate shows you on what is the gold outlook from here on now. With 3,500 done, and we are up 30% in this year. In last 12 months, we are up by 45 or 46%. The banks do believe that near term, there could be some correction coming in. There are various banks now saying that with 3,500 done, 3,200, even $3,000 an ounce, a correction until then is a possibility. But then come by the end of or the second half of 2025, there are higher targets coming in. Deutsche Bank, for one, believes 2,900 would be back by the end of this year. And then you also have Goldman Sachs talking about 3,700 by the end of this year. ANZ talks about 3,600. So slightly higher levels from there. But when you look at 2026, many of these banks and brokerages are still talking about 3,800, 4,000, 4,500 by the end of next year. So, well, yes, near-term exhaustion and correction, but longer-term still bullish.
Okay, all right. Manisha, thank you very much for that. So, yeah, those gold price targets are still very lofty. By the way, Prashant, just checking the market, it's come off very, very swiftly. The Nifty is up barely 23 points right now. But I think we have the Home Minister speaking on the Kashmir situation. We have visuals actually coming in. The Home Minister is indeed in the valley, and he's paying his homage to the victims, to those who, of course, have passed away in the very, very unfortunate and horrific attack. So visuals there coming in from Kashmir. But with that, maybe technology, because that's the only part of the market that seems to be holding up right now.
No, absolutely. And 3% on the IT index at this point. Rima is here with a quick roundup of what's leading to this excitement, small bit of excitement. Rima, over to you.
Well, it's the rub-off from NASDAQ overnight, but I just want to quickly recap how the quarter has been for the large cap IT companies now that all the four of them have reported their numbers. Well, on the whole, Q4 has been a soft quarter. Revenue for all the four IT company, large cap companies declined on a quarter-on-quarter basis. The steepest decline seen was for Infosys with a drop of about 3.5%. The commentary from the companies were also fairly cautious. They said clients are in a wait-and-watch approach. There are delays in starts of new projects. Discretionary spending is likely to remain subdued, and the companies fear stress, particularly in the automotive vertical, which falls under manufacturing, and then the retail CPG vertical. That said, cost optimization deals are very much on track. The silver lining in Q4 with the very strong deal wins across the board. Look at the numbers. For HCL Tech, deal wins were up 40% on a sequential basis, nearing $3 billion. TCS's order book swelled by 20% quarter-on-quarter to $12.2 billion. Infosys' large deal wins were up 6%, while for Wipro, TCV, that's total contract value of deal wins, was nearly $4 billion. Again, a jump of 14% quarter-on-quarter. So even though Q4 got impacted on account of the macro uncertainty, the deal wins continue to remain very robust. Now, the FY26 guidance. Well, Wipro's Q1 guidance, which is the near-term guidance for the next 3 months till the June quarter, was a howler, -3.5% to -1.5%. But if you strip that out, for the full year, the guidance is not as bad as what the street was fearing. Infy is talking about 0 to 3% growth, HCL Tech 2 to 5%, and TCS is saying, at least for their major markets, which is stripping out, India, the BSNL deal, FY26 should be better than FY25, and margin guidance has remained unchanged both for HCL Tech and Infosys. And when you round up FY25, well, it's been a very low growth year. For Wipro, it's the second consecutive year of a top-line decline, but even for the others, like in HCL Tech, Infy and TCS, we are looking at just about a 4 to 5% kind of a top-line growth. In FY26, by all accounts, and the FY26 guidance is again going to be a very low growth year for the, at least, IT companies, large cap IT companies. Back to you.
All right. Thanks very much. You're a useful roundup there. And as far as IT is concerned, Rima, thank you very much. We'll take a quick commercial break here. On the other side, my colleague Lata will be in conversation with Anil Rai Gupta of Havells as they discuss the fourth quarter numbers and the outlook for 26. Stay tuned.
Welcome back. We continue with our earnings analysis. Havells' Q4 results were a beat on, I think, almost all parameters. Revenue of Lloyd and of the cables business was way above expectation. Margins, I think, are a beat practically across all categories. To discuss the numbers further, we are joined by Anil Rai Gupta, Chairman and Managing Director at Havells India. Mr. Gupta, thank you very much for spending time for us. Do appreciate it. If you can start by telling us how's demand? I mean, what went so good for Lloyd's as well as for the cables business?
I think as far as cables business is concerned, we do see some uptick in demand, also because of the fact that the new capacity at Tumkur has already come up, and which augurs well for the underground cable business. The wires business continues to be strong, but there is a little bit of a concern on the volume growth. Value growth has been good. As far as Lloyd is concerned, it is coming out after a very strong summer last year. So there was anticipation of a very strong summer in this quarter as well. So I would say part of it is also not necessarily completely secondary sales, but also more primary sales. In fact, in the month of March, I would say that it could have been even better had the secondary sales come out much better. But we are seeing a delayed summer, and let's see how the first quarter pans out.
Well, in a way, we are thankful for the delayed summer, if it indeed is. But Mr. Gupta, just let me complete a digression. There is a lot of talk about this lower BIS standards for some categories of compressors. Is that going to make a big difference for you? Any positive difference for Havells?
I think we are well sorted as far as supply chain is concerned. And we do believe that for the next 1 or 2 years, 3 years, we are well sorted for our supply chain, especially for compressors. I think the government also sees that there will be a time required for the entire supply chain to get set up in India. And I think between the government and the companies, there is a good understanding of how they want to promote the manufacturing in India.
Okay. Well, let me come to the cables bit as well. You sounded very confident. Can you give us an idea, because you may have some idea of how demand is panning out? And then there is the big challenge, perhaps. Some giants are entering the cables business, the Birla Group, Adani Group. If you have to, look out further a year or two into the area, is this going to become a very tough business?
Well, I think, first of all, if we take out the noise of the quarter-on-quarter, because this depends a lot on the fluctuation in the raw material prices also. But structurally, we are very hopeful of the cables and wires business. One, the residential demand over a period of time will continue to grow. Secondly, the capex cycle and the infrastructure cycle in India for the next few years will remain strong, and hence we are hopeful that the demand will be strong. Thirdly, what is happening is also the global markets are also opening up for cables and wires business, which augurs well for additional capacities to come up. I would say, you talked about the newer competition coming in. This industry is a very large part of the electrical industry, and I think it is still has fairly a good share of the unorganized and the non-branded sector. So newer brands, better quality brands, hopefully, should actually consolidate market shares from the unorganized sector. So overall, I think it might not be a bad thing for the industry.
Okay. No, it's just that the competition that's coming are people who have allied products. If you come with cement and with paints, you're somehow approaching the builder or the building industry in a consolidated fashion. Will that pose a challenge?
Well, I think, all companies have their own strengths, and this is also a very positive strength for Havells, that within the electrical sector, we have a composite product range for the consumer. I think, companies will have their own strengths, but also, the distribution channel will take its own time to develop. And I think that's something which is a sort of a moat which companies in the incumbents have already created, and will take its own time.
No, I take your point. Brand loyalty is a moat in its own right. But if you can both zoom in and zoom out and tell us about how demand was. Your electrical, for consumer durables basically. Electrical consumer durables has grown 10%, but Lloyd's has grown 40%. More broadly, if you can tell us rural, urban, premium, not so premium, how is demand looking?
I think this was one quarter where we actually saw growth coming back in the rural and semi-urban sector as well. The urban had been doing better in the first half of the year. The rural was impacted. It's coming back. Maybe some impact of the budget changes as well as the RBI relaxations. Hopefully that should augur well for the coming times. I think if we see overall, there is a movement more towards the premium, and maybe that is also a strategy of the company. But that is there we see a movement more towards the premium products as well. You know, if you take fans, it is more towards energy saving products. If you take switchgear segment, it is more towards automation and electronics. So there is a movement towards premium segment overall. And, you know, it's not just in the metro towns. In fact, we see that movement in the rural areas as well as the semi-urban areas.
Okay, that's good. That will be good for margins, I assume. Speaking of margins, what we get from economists and you know, those who are looking at all the tariff and such things is that there will be a disinflation in Asia, in commodities in particular. In the light of that, how are you seeing your margins? Are they likely to better this already decent performance this year?
Well, again, I think there is so much of fluctuation and there's so much of talk about, you know, this whole thing, how things will pan out. I don't think anybody has a full view of this. And this is how, you know, companies like us will have to just play as it comes along. And, you know, a deflationary trend in terms of commodities is always beneficial. Again, as I said, if you take the noise out of the quarter, but at least for a longer period of time, it augurs well for both for the consumer as well as for the company.
Okay. Just to go back to your demand reply, you said that you're seeing rural come back, rural and semi-urban. How is urban? There were a lot of FMCG companies who were shocked by urban stagnation, but that was FMCG. How is it with you?
I think overall we are seeing a good traction in the urban segment as well. This also is reflective of the overall residential growth, residential construction growth, which is happening in India, which actually, you know, because the prices of real estate have gone up so much, I'm just a little bit skeptical about the future. But at least right now, it is showing decent traction.
Okay. Well, just finally, you know, you all swallowed Lloyd's quite some time back and now it's, you know, throwing money for you. What will your next big, you know, project be?
I think there are too many projects within our various businesses and we'll continue to invest. As you've seen last year, we've invested about 750 crores in the capex. This year also, in the next couple of years, we're looking at another 2,000 crores overall, plus an investment of in the renewable space of 600 crores. So there is enough that we have to focus on for growth coming in various businesses. So I think, you know, Lloyd itself is a growth engine for Havells and those investments will continue in Lloyd as well.
Okay. Okay. So largely organic, you think? We shouldn't be expecting inorganic moves, is it?
We do believe that there is enough opportunity in organic to grow.
Okay. We'll leave it at that, Mr. Gupta. It was a pleasure speaking with you. All the very best for the year ahead and thank you very much for spending time for us.
Thank you.
Okay, so that's Havells. It's a little bit in the red today, but just remember over the last 2 weeks, that stock rose from less than 1,500 to almost 1,700 rupees. So perhaps a little bit of buy the rumor and sell the news is happening at this point in time. The market itself is perhaps giving back a little of its gains in the banking space again, where there was a lot of buying, but otherwise still holding up quite brightly in the green. Wrap up on Bazaar on that note. Chartbusters coming.
HCL Tech is the top Nifty gainer, up nearly 7%. The stock also pulls the rest of the IT sector higher after a largely in-line fourth quarter. The company's full-year revenue guidance of 2 to 5% constant currency growth is higher than that given by peer companies. The order wins as well, buoying the stock up.
Sign TLM climbs close to 7% as the margins beat estimates in a good quarter. The management tells CNBC-TV18 the order book is likely to grow after the second quarter of next fiscal. They also clarify that in the past quarter, they got a one-time benefit which amounted to 250 basis points gain on the margin parameter.
Waaree Energies too surges on the back of its fourth quarter results. Revenues are higher by 36% from a year ago, while margins expanded by over 800 basis points, the stock surging 8.5%.
Havells slips close to around 3%, even as the quarter four numbers beat estimates. The commentary suggests that inflationary pressures are weighing on sentiment. The management also says that the cables and wire segment is experiencing volume growth challenges.
Chola Investment climbs after brokerage house UBS upgrades the stock to buy, raises the target to 1950 rupees a share, citing levers which can result in compounded AUM growth of over 25%.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me is Mangalam. Well, Mangalam, the markets are holding in the green, but it appears some kind of nervousness is creeping in. If you look at the Nifty as well, we've come off the top, and the Nifty Bank, which has led the way, that's come in for profit taking, which means the tech index is taking center stage today.
Take that point, and with the kind of run that the Nifty Bank has seen, it is very well allowed a rest day. And that's exactly what's taking place. A bunch of, uncertainties that we're wading through in the very near future. What happens basically with the US overnight. More importantly, tomorrow is the expiry of April series as well. So those are a couple of things we'll be watching out for. But a couple of things, Nigel, really stood out for me. The way Rohit Sharma played in the previous MI versus CSK game. Today is another MI game. And the way the IT sector is coming back as well. You would want the IT sector to come back because it is a fair chunk on the index. Rohit Sharma struggling with form a bit, and thereafter has made a comeback. Can the IT index do what Rohit Sharma has done? And Rohit Sharma's form in the past has been fairly sticky. Bad form sticks, good form also sticks. This is good form for the IT sector. Does it stick or not?
Well, that's right. I saw him in person a couple of days ago. He looked far happier as well. So those runs under your belt always bode well for you. Well, let's get in a technical check, though. We have Chandan Tapadia from Motilal Oswal Financial Services who joins us on the show. Hi, Chandan. Good morning and good to see you win. I hope you as well are scoring quite well. The runs under the belt, Chandan, but that would be more the gully cricket. How are you feeling about the Nifty? What would you advise? Take some money off the table. We've had such a good run. Or do you believe that this dip is a good buying opportunity?
Good morning, Nigel and Mangalam. Thanks for having me. And what a fantastic discussion about IPL and the Rohit Sharma. And I think when market corrects, it's good to talk about the cricket anomaly and understand that safeguard of the wicket is very important. And the good part is the Bank Nifty and Nifty was in form in last couple of days. We have seen a massive rally of 2,500 points in Nifty index and 6,000 points in Bank Nifty. After that, some sort of rest is required in the market. But the good part is we will continue to be with buy on decline stance. However, on daily chart, the index is forming a bearish engulfing kind of pattern or a bearish candle, which indicates some profit booking could be there. But I believe this will be the retracement of the rally of last 8 to 9 trading session. So as of now, I'll look for a decline which can take it towards 54,750. But that 54,750 could provide a buying zone. If someone has bought already, then some profit booking can be done to with the view that again declines could be bought and wait for some more profit booking. And talking about Nifty index, I believe 24,000 could act as a major support. So if you are already holding the position, then can do the trailing stop loss at 24,000. And finally, we have target of 24,444 in the Nifty index. So now talking about the stock specific, I believe, again, this will be the time where you need to align the selective sector and change the sector rotation. Earlier, we were quite bullish on the consumption in your sector, including BFSI. Most of the banking and financial names were doing well. But now we'll positive on Godrej CP as a first trade. Somehow the consumption theme and defensive bit has to be there in the system. Godrej CP has given a consolidation breakout of last 7-8 days. On the weekly chart, it has been forming the rounding bottom. So with support of 1235, one can buy for an upside target towards 1320. Second trading idea is the buy on LKM. So positive price pattern has been making higher tops, higher bottom from last 10 days. So with support of 5,050, one can look for an upside target towards 53.50 in the LKM.
All right, we take that point, Chandan. Alchem and Godrej Consumer, even though Godrej Consumer is doing well, just keep an eye out on the entire pharmaceutical pack as well. Chandan's spoken about Alchem. Just look at Sun Pharma. That's moved to the high point of trade. We're seeing some traction in names like Alembic Pharma, Glenmark Pharma, as well as Zydus Life as well. All these stocks making highs of today's trading session, which is reflected in the pharmaceutical index itself, which is up and above. But let's get you some ideas for profit coming in from our colleagues at Money Control Pro. Bharat Jinani today joins in with the stock.
With Royal Orchid Hotels Limited, the demand momentum continues to remain strong, with both corporate and leisure demand on a strong footing. The company is almost doubling its room inventory via the revenue share lease model, which would lead to significant revenue acceleration. Apart from this, the company is also adding inventory via the traditional management contract model. Apart from this, significant inventory renovations carried post-COVID-19 is expected to support the pricing growth. The industry upcycle is expected to sustain over the next few years. Demand is expected to remain strong, growing by 11% CAGR. The supply, while it is picking up, is expected to grow by 8% CAGR, trailing the demand. This is beneficial for hotel operators like Royal Orchid Hotels Limited. The company has a strong balance sheet with debt to equity of 0.4 times. Apart from this, significant cash flow generation would ensure that the company is able to meet the capex requirements via the internal accruals. The company has industry-leading return ratios in excess of 20%. At the current market price, stock is trading at an EV by EBITDA of 12.5 times FY26 projections. These stock valuations are attractive since they are at the lower end of the historical trading range, as well as amongst lowest in the listed peer space. Hence, we recommend investors to add the stock number.
All right, that's about Royal Orchid Hotels, the hospitality sector doing fairly well. We had the management join us last week as well. So good going on that one. Meanwhile, Intellect Design Arena from the broader markets is one of the stocks which has moved to the high point of trade. So IT, mid-cap IT doing a lot better as well. So just keep an eye out on all of that. In fact, there are a bunch of stocks that we will talk about after this short break. So stay tuned. Welcome back. We were talking about a bunch of stocks which are doing well. Just keep an eye out on Rajratan Wire. Good numbers coming in, a new foray. We had the management join us yesterday as well, speak about the growth plans for the company, exports increasing from current levels as well. All of that is reflected in another follow-up day for Rajratan Wires, up 14% today, taking this week's gain. Mind you, this is just this week, almost 3 trading sessions to 43%. So a big move is what we're seeing. The stock, although has seen a big correction from its highs, trying to make a bit of a recovery.
Well, that's right. You know, Mangalam, some of these stocks, they went to less than half, you know, when the markets corrected. But actually, not just for the company, but I think for the markets on the whole, when good numbers or good commentary is being appreciated, that's a positive sign. You know, when you get into that phase when sometimes the market ignores any kind of good news as well, it makes you very uncomfortable. So actually, not for the company, but I'm saying for the market, the breadth of the market itself, which shows there is interest out there.
Totally, which is what, you know, when we were talking about the FMCG sector as well, is what is likely to play out. Results, they're not going to be good. Everyone knows that. But this time around, maybe the reaction to the results and management commentary would be a lot different than what we've seen earlier itself. And speaking about results and good performance, Waaree Energies is one of them. A big mover on the back of strong numbers coming in. Vivek joins in with more. The stock up nearly 8.5%. In fact, why just Waaree? We have a bunch of result reactions. And as you can see on your screen, there is Upasna, Abhishek and Vivek as well. Let's go to Vivek first. Vivek.
Well, today it's the power sector that's doing very well. So we'll start off with Waaree first. So first, you know, let's have a look at the numbers themselves. Q4 was expected to be strong. very strong, in line with what the street was anticipating, especially as far as the solar value chain is concerned. Revenues this particular quarter higher by 36% above the 4,000 crore mark. Along with that, EBITDA very strong this time around, strong execution, strong realization as well, higher by more than doubled in fact at 923 crore. Margins at 23%, 1,000 basis points jump, and profitability higher by 34%. Now the order book on a sequential basis has moderated slightly. Order book now stands at 25 gigawatt, which indicates that the revenue potential of close to 47,000 crore. At the end of the previous quarter, it was at 50,000 crore. But what is it that the street really likes? The street really likes the fact that the company has given an EBITDA guidance for FY26 of over 5,500 crore. So what does this mean? This means that the company can potentially double its EBITDA as far as FY26 is concerned. The other important part, remember, is that yesterday there was the development where the USA has gone ahead and put significant dumping duty on other Southeast Asian countries, including names like Cambodia, Vietnam, etc. So this makes the exports of Wari to the US markets a lot more competitive, and analysts believe that this can also spur volumes going forward. On the back of that, last couple of days, Wari has been in focus. Today, earnings plus this particular development keeping the stock quite buoyant.
Okay, all right. Thanks a lot for that, Viv. Let's focus on another company that's reacting to its numbers, Cyient DLM. The company also reported a good quarter. Earlier today, we were joined by the management of the company. Upasana joins us to tell us the key highlights. Upasana?
Well, company has reported a good quarter this time around. Revenue, EBITDA and PAT was largely in line with the street estimates, while margin stood much above the street estimates. Now, coming to the numbers first, revenue saw a growth of about 18% on a one-year basis. EBITDA saw an uptick of as high as 51%, and margins also increased by 290 basis points at 13.4. Well, this increase in the margins was mainly driven due to change in the product mix of the company, one-off impact due to Altac acquisition, and even operational efficiency. Now, PAT saw an uptick of 37%, and order book continues its downward trajectory around 1,900 crore with a downtick of 12% on a one-year basis and 11% sequentially. Now, management joined us today morning, and the commentary remains quite upbeat. Management says that the 200 basis point impact on margins was due to one-off this quarter, and it expects a double-digit margin of around 10 to 12% going forward. Q1 FY26 is likely to be soft is what the management has indicated, but overall it remains positive on the outlook for FY26. It also says that the order book will reverse its downward trajectory and see an upward trajectory Q2 FY26 onwards. And lastly, on the revenue mix, the management has indicated that the revenue mix will remain stable going forward, with A&D, that is aerospace and defense, will increase at least by 5% its overall share, and a segment like industrial will rise going forward. So all in all, we are seeing good set of results and good commentary coming from Cyient DLM.
Right, Cyient DLM up around 5%, was up a lot more earlier in today's trading session, but the street is pricing itself for the one-off that was reported in the number as well. Good numbers nevertheless. M&M Finance, on the other hand, is trading with cuts after reporting subdued growth in the fourth quarter. The stock currently at the low point of trade, down 4%. Abhishek joins in to tell us more. Abhishek, what went wrong this time?
Well, Q4 FY25 has been weak for M&M Finance with respect to loan growth that's actually slowed down for them, as well as the fact that elevated provisions have dented the earnings momentum. So disbursal growth is weak at just 1.5% YOY and a decline of more than 5% on a sequential basis. So AM growth is the lowest that they have seen last 10 quarters, coming in at 17.4% YOY. The net interest margin also got impacted. It's at 15-quarter low of 6.5% versus 6.6% in the previous quarter. Their operating efficiency has deteriorated, and that is why you are seeing cost-to-income ratio being the highest in last 8 quarters, coming in at 44.2% versus 41.8% in the previous quarter. Provisions were elevated this time around, and hence you are seeing a dent in the ROA or return on asset. So return on asset is at 4-quarter low of 1.7% versus 2.8% in the previous quarter. The housing finance subsidiary also, gave a bad performance. They reported the highest ever quarterly loss that they have in any quarter. It has come in at 152 crore of net loss in Q4 FY25. Now, housing finance, the subsidiary also saw its loan book shrink, and the loan book is one of the lowest that you are seeing in last 5 quarters in absolute value. So the loan book is right now at 6,894 crore when compared to a little more than 7,000 crore in the previous quarter. Back to you.
All right, Abhishek, thanks for that. Well, let's move on and let's turn our attention to the ferrous space. Now, on the back of the imposition of 12% safeguard duty on steel imports, my colleague Abhimanyu Sharma caught up with the Steel Secretary, Sandeep Pondrik, to understand the rationale and also what it means for MSMEs. He also said that, the industry is pretty well placed as now. Let's hear out what the Steel Secretary had to say.
So, as you know, that government has to take a balanced view of the economy. Now, there are various sectors. Steel, as you know, is mostly used as a raw material and not as an end product. So, government has to ensure that the prices of end products also don't rise too much. But at the same time, since India is growing and the consumption of steel is growing a lot, we need to augment our steel capacity. And to ensure that, we have to ensure that steel industry in the country has remunerative prices. We also have to keep in mind that about 45% of the steel capacity in the country belongs to secondary steel sector, which are all small units. So it's not that only big players are producing steel. So taking all of that into account, there was a quasi-judicial process conducted by DGTR. DGTR has recommended 12% provisionally, and government has accepted that for a period of 200 days. And then in the meanwhile, DGTR will finalize its findings and give its recommendations. Then government will take appropriate decision again. As far as MSMEs are concerned, the steel players or steel industry has already offered that they will give steel to MSMEs for export and for other purpose also if they come into certain criteria at export parity prices. So we are trying to also ensure that MSMEs are not impacted by this any price rise.
While FTA review is a continuous process and the Ministry of Commerce and Industry is already undergoing that with several countries, and we understand the Steel Ministry has also given its set of recommendations. We also understand several DGTR probes are also underway with respect to complaints against several countries. What measures can we look at with respect to preventing dumping from several countries which have excess capacities, and also their supply has increased in the recent times due to lack of demand in the developed Western countries?
So basically, apart from safeguard duty, certain investigations are being undertaken by DGTR for dumping. So there are some applications have been filed with DGTR for anti-dumping investigations. DGTR has finalized, concluded its hearings in some cases. They will give its recommendations, he will give its recommendations, and government will take decision. We are also trying to ensure that whatever steel is imported, it adheres to BIS standards. So that's because we do not want that substandard steel or low quality steel is imported into the country at low cost, which will harm the domestic industry. So we are trying to bring most of the steel grades into BIS standards. So that only quality steel, even if it is imported, only quality steel comes. So there are various measures which the government is taking to ensure that domestic steel industry is not harmed by low-cost dumping of steel.
Well, on the same lines, we also spoke to Mr. Amarindu Prakash, who's the chairman of SAIL, and asked him if the safeguard duty relief was enough. He also discussed his outlook for the company in FY26. Let's hear out what he had to tell me.
It is a deliberated step in compliance with WTO norms. The industry has been looking for this for quite a long time, but the government has taken a step in the right direction. But I must say that this is a preliminary investigation result, and a provisional duty has been imposed. As the data is analyzed more critically and deeply, the government will be coming up with its final recommendations. So we have to wait for those numbers. We have announced a capex plan, which is going to take the capacity from 20 million ton to 35 million ton in next 5 years' time. The annual volume growth, we are targeting about 8% for the financial year 26. During the year FY25, we started FY25 at below 30,000 level. and FY25 end numbers are also below that. So that is under control as far as a tough year for the steel industry goes. Going forward, our total capex outlay is going to be upward of 1 lakh crore. However, with the kind of profitability and cash flows and monetization plans that we have, we hope to not exceed a number of debt equity ratio of 1.1 to 1.2 max.
All right, while we were speaking about steel and import duties, etc., there was news. This is coming in from Bloomberg, so obviously it's from agencies, not necessarily verified and confirmed by CNBC-TV18, but it's definitely having an impact on stock prices. The fact that the Indian government has mulled scrapping import duties on motorbikes more than 750cc, and in that, Harley-Davidson is the one where they're actually considering zero tariff on Harley-Davidson bike. Hero MotoCorp obviously not moving too much, in fact, moving on the other side, which is positive because they already have a tie-up with Harley. So if they, are the authorized sellers for this bike in India or not is what, the street is pricing in right now with the stock price move. Remember, there's not verified information coming in from Bloomberg. But on the other hand, what it's seen as is a negative for other competitors, most notably Eicher Motors. So just look at the Eicher Motors intraday chart and you would see that as soon as this flash hit the screen, that stock saw a sharp knockdown, almost 2.5% lower. And now what remains to be seen is what happens to the third player, which is Bajaj Auto, which has a tie-up with Triumph. And everyone's looking at the higher-end bikes itself. Harley-Davidson coming to India at zero duty, over 750cc. But bikes, not my strength. Nigel, what do you make of it?
Well, that's right. So for Hero MotoCorp, it's a positive, as you said, because they have a tie-up with Harley. But I'll tell you what, for Eicher or for Bajaj, I don't think they'll be impacted. I'll tell you why, because the flash is mentioning 750cc.
Neither of them make it.
Neither of them make, the 750cc more than that. So as of now, I don't think they should be impacted. My hope is that the Royal Enfield comes up with a bigger bike. But as of now, the biggest bike that they have is a 650cc, which is the Interceptor.
Right.
So, so it's positive for Hero MotoCorp. But I think initially, we did see a cut on the Royal Enfield, which is Eicher Motors. And from the lows, actually, it's seen a bit of a bounce. So just keep an eye out on that. It's for 750cc plus. As of my knowledge, as of now, both those two, either Bajaj or Eicher, they don't make 750cc plus. So I think that's why we're seeing some bit of recovery on Eicher Motors as well from the low point of the day.
So that is an important technical specification that has come in, but a 1000cc bike, if that comes in, Nigel, you'd be a buyer, right?
I'll definitely be a buyer. I've said it in the past as well. We had the Machismo coming in from the Royal Enfield. I had that. The initial few bikes of the Interceptor, which is a 650cc. I'm a buyer on that. And if they come with a bigger one, boom.
All right, good. I can only say that any of those bikes that you buy, I'll just sit behind and take a round around. But I don't know how to ride bikes. But have you, as you look at it, there has been a bigger spike on Hero MotoCorp and some amelioration from lows on names like Eicher Motors and Bajaj as well. Earlier, there was some fear, but now understanding that maybe these bikes won't get as impacted because it's a more than 750cc news that has come in, and these companies do not perform or sell that as of now. The impact could be limited. But as we slip into a short break, let's give you some good news. That's India's news leader, business news leader, is now just a click away. That's the CNBC-TV18 all-new app, which gives you instant access to breaking news, in-depth articles, financial world updates, all of them at your fingertips. All you got to do is download the app from either the Apple Store or the Google Play Store, or you can just scan that QR code, which is there for you on the screen. Welcome back. You're watching us here on Chartbusters. There was tragic news that came in yesterday. At least 26 civilians, including 2 foreigners, were killed in a terror attack in Pahalgam in Jammu and Kashmir last evening. The Pakistan-based Resistance Front has claimed responsibility for this attack, which was the deadliest in this region in the last 6 years, at least since the 2019 Pulwama attacks. Following these attacks, Prime Minister Modi has cut short his visit to Saudi Arabia to return to India. Home Minister Amit Shah also headed to Srinagar straight, to take stock of the situation and paid respect to those who lost their lives in the attacks. And sources also tell CNBC-TV18 that the Cabinet Committee on Security is likely to meet at 11 a.m. shortly from now to decide on the course of action following these attacks. CNN News 18's Ishan Wani joins in with more.
CNN News 18 has reached Baisaran after trekking for several kilometers through muddy patches and tough terrain. We are right now at the spot where this yesterday carnage took place, and you will see here the deployment is massive, and the NIA teams have arrived here to carry out further investigation to this case. Because a high-profile attack wherein 26 tourists were killed very brutally, and images from this place were very shocking. And their NIA team have arrived, they are investigating, and police is accompanying them. Now we are also told that there will be a Home Minister who will be arriving at the scene and getting a first-hand account of how the situation looks like. But this is how the scene looks like. And now CNN News 18 team has reached here. We'll be bringing you minute-to-minute coverage from the ground in Baisaran, where this ghastly attack took place.
Okay, well, and in order to ease potential travel roadblocks following the attack, the Union Civil Aviation Minister yesterday spoke to Union Home Minister Mr. Amit Shah about arranging more flights from Srinagar to Delhi and Mumbai. The ministry has arranged 4 new flights, 2 each to Delhi and Mumbai from Srinagar, and will monitor fares to ensure that they don't spike. The ministry is also monitoring the situation and based on demand will be in touch with the airlines to do more. Okay, well, on that note, though, we'll wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.
Good morning. It's time for Trading Hour. You're watching us live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Fatakia. With me, as always, is Vivek Iyer. Vivek, good morning. After 6 days of gains, the Nifty is taking a bit of a breather today, and it's the banking stocks that led the index higher and now are leading the breather as well. The Nifty Bank now has cooled off after hitting record highs, after in fact crossing the mark of 56,000 in opening trade. So it's the Nifty Bank that's leading the Nifty lower, 400 points down now on the Nifty Bank, almost 800 points off the highs of the day. The Nifty 2 now swinging between gains and losses has come off almost 200 points from the highs of the day, around about that 24,350 mark, which has continued to prove to be a bit of a barrier in today's trading session. The broader markets too, they were the ones that were outperforming over the last few trading sessions, even after the Nifty Bank continued to move. The mid-cap index too has hit the low point of the day, 120 points lower there as well, and the small cap index no different there as well, 130 points lower there as well, almost 0.8%. But of course, there is plenty of stock-specific activity though. There are earnings reactions. There are earnings reactions that are expected in today's session. HCL Tech, of course, leading the pack. IT is the outlier. Still, the IT index is up 4% higher, led by HCL Tech, almost 8% now, extending its gains even after the benchmark index has cooled off. So good going for HCL Tech, and that has had a rub-off on all of the other IT names as well. The mid-cap IT names in particular, be it the likes of Coforge, Emphasis, KPIT Tech, all of them seeing gains of anywhere between 4 to 5%, and Tech Mahindra and LTI Mindtree, which reports results today, is also trading with gains of around 4%, Vivek.
Good morning, Harmaz. Well, par for the course, right? After the kind of 6-day rally that we've seen, it was expected that we'll see a little bit of profit booking at higher levels, which have emerged. The BFSI space, that was continuously hitting record highs, now cooling off. Like you mentioned, stocks on the radar, we have to start off with the IT pack, HCL Tech. Above peer growth guidance is what the company has given. On the back of that, have a look at most of the IT stocks. In fact, even as we speak, names like Infosys, HCL Tech itself is at the day's highest point. All of them have recovered quite sharply. Well, the rally, especially as far as some of the pharma names today is continuing. Have a look at Lupin. There's an important drug launch that analysts on the street are now starting to pencil in that will contribute to the earnings from FY26 onwards. So JM Fin shares that the likely launch of generic tolvaptan is likely to have an outsized contribution to FY26 earnings, and the back of that, Lupin doing very well. Along with that, if you could pull up the intraday chart of Eris Life Sciences. Now again, this is a very interesting development. One of the international companies, Novo Nordisk, that had a large diabetes portfolio in India, has now decided to pull out one of the key products there. Eris, that recently bought the diabetes portfolio from Biocon, is expected to benefit from the increased opportunity size. Well, since morning, Hormaz, we've been discussing solar value chain players, names like Waaree, a very good set of numbers, also benefiting from something that you highlighted yesterday, tariffs coming in as far as some of the Southeast Asian peers are concerned. Waaree today up 7%. And earnings reaction, Havells, demand commentary muted, M&M Financial, credit cost guidance up, something that the street clearly doesn't like. Back of that M&M Fin at the day's lowest point.
So extremes on both ends in terms of earnings reactions, and Waaree on the positive side, and of course a not so positive reaction from both Havells and from M&M Finance. Mind you, Havells numbers were good, but still the street not taking it well for Havells. By the way, Hutco too, as you just saw on the bottom of your screen, at the lowest point of the day, as is Crompton. Stocks down 3.5% there as well. So there are gainers as well as losers on both sides of the spectrum. By the way, also just before we move on to the IT names, pull up Niva Bupa. That is also the top gainer on the Nifty 500 in today's session. That stock's up 9%, and that's also because of Motilal Oswal initiating coverage today. A 100 rupee price target is what they've given with a buy recommendation. It's the first 100 rupee price target for Niva Bupa. But of course, the tech stocks being the outlier in today's session, and we have had the 4 major Indian tech companies reporting their results now, with HCL Tech coming out with numbers last evening. Rima is here with a report card of how these IT companies have fared in the fourth quarter. Rima.
Well, it's the rubber from NASDAQ overnight, but I just want to quickly recap how the quarter has been for the large cap IT companies now that all the four of them have reported their numbers. Well, on the whole, Q4 has been a soft quarter. Revenue for all the four IT company, large cap companies declined on a quarter-on-quarter basis. The steepest decline seen was for Infosys with a drop of about 3.5%. The commentary from the companies were also fairly cautious. They said clients are in a wait-and-watch approach. There are delays in starts of new projects. Discretionary spending is likely to remain subdued, and the companies fear stress, particularly in the automotive vertical, which falls under manufacturing, and then the retail CPG vertical. That said, cost optimization deals are very much on track. The silver lining in Q4 with the very strong deal wins across the board. Look at the numbers. For HCL Tech, deal wins were up 40% on a sequential basis, nearing $3 billion. TCS's order book swelled by 20% quarter-on-quarter to $12.2 billion. Infosys' large deal wins were up 6%, while for Wipro, TCV, that's total contract value of deal wins, was nearly $4 billion. Again, a jump of 14% quarter-on-quarter. So even though Q4 got impacted on account of the macro uncertainty, the deal wins continue to remain very robust. Now, the FY26 guidance. Well, Wipro's Q1 guidance, which is the near-term guidance for the next 3 months till the June quarter, was a howler, -3.5% to -1.5%. But if you strip that out, for the full year, the guidance is not as bad as what the street was fearing. Infy is talking about 0 to 3% growth, HCL Tech 2 to 5%, and TCS is saying, at least for their major markets, which is stripping out, India, the BSNL deal, FY26 should be better than FY25, and margin guidance has remained unchanged both for HCL Tech and Infosys. And when you round up FY25, well, it's been a very low growth year. For Wipro, it's the second consecutive year of a top-line decline, but even for the others, like in HCL Tech, Infy and TCS, we are looking at just about a 4 to 5% kind of a top-line growth. In FY26, by all accounts, and the FY26 guidance is again going to be a very low growth year for the, at least, IT companies, large cap IT companies. Back to you.
Thank you so much, Rima, for joining in and giving us a sense of how exactly Q4 so far has panned out for the IT pack. Despite the muted guidance, today the stocks are seeing quite a bit of a bounce back. But it's an excellent time to get in Chakri Lokapriya from LGT Wealth India to discuss market fundamentals, its top sectoral picks. Chakri, thank you so much for joining us. Been a while since we saw you. First up, give us your sense as far as the IT pack is concerned. FY26 guidance, not so strong, but are most of the negatives now priced in?
Good morning. Thanks for having me. Yes, if you look at IT as a sector, if it's down about 20% from its February highs, from December for the last 3 months, stocks down about 25%. Now they're trading at, if you take Wipro, probably 17 times, HCL Tech slightly higher, and they kind of reflect the subdued environment, that is the uncertainty as it relates to discretionary spends. So, how much lower can these stocks go? Not really that much, because it's largely collateral damage related to the tariff uncertainty spilling over to discretionary spend. So I think it's time to start, maybe an HCL Tech, maybe a little bit of Infosys to start buying now.
Chakri, good morning. Thank you for joining in. Since we are on the subject of tariffs, and you mentioned that another sector that's bearing the brunt of it is pharma, and it's almost hanging in the balance here, right? Donald Trump saying that there will be tariffs at never seen before levels, but then how much do you trust his word? Because history has been evident that he said a lot of things and then pulled back on them. What do you do in an uncertain environment like that in a sector like pharma? Because a majority of their revenue do come from the US market.
Good question. If you look at it and taking into account the uncertainty surrounding the situation, the tariff that India imports on US pharmaceuticals into India is about 10%. Roughly, depending on the product and all that. And if you impose that same number on India's exports into the US, that's on the US exports bit alone. So that's for 10%. That would translate to maybe 5-7%, depending on the company, whether it's Reddy, Sun, depending on their exposure. So the stocks have corrected. I think at worst they can go down under 5-7%. That is the export-facing ones. So if there is a 10% imposition. So that's another way to look at it.
Chakri, in view of the tariffs, right, that have been imposed on quite a lot of India's neighbors, names, like China, like Vietnam, how do you see, select Indian sectors benefit? You have a view on textiles. Would you be positive there? Which are the names that you'd like to get into? Also, any view as far as, some of the manufacturing names that do export to the US market, names like Wari, names like Premier. Do you have an opinion there? Do you own any of these stocks?
The good thing is about if you look at a country like Vietnam or China, who also export textiles, and the tariffs on them is far higher, 45% for Vietnam, some 150 odd, 45% for China. Whereas in the case of India, if you take the current tariffs, on top of that you add the 10%, which is the 90-day pause, and then let's say there's some more, that will take it to roughly about anywhere about 28-30% tariffs. Now, if that happens, still Indian exports out to the US textile will be far more attractive versus from Vietnam or from China. So from that way, some incremental business could come in. So more volumes, slightly lower margin would kind of offset the whole thing. Now, as I say, now talking about Wari and all those companies, there are two things which are happening. One, there is a defocus of green energy in the US, so which means lower subsidies in the US for those companies, and therefore the price points will move higher, margins will move lower. Companies like solar are already trading at probably 60, 70 times, so they probably have done their bit, so I'd wait and watch.
Wait and watch in this case. But Chakri, a sector that has been in focus over the last few days have been banks, and out of nowhere, the Nifty bank until almost last month was making lows, but now it's at record high levels. With all of these measures taken by the Reserve Bank of India, the liquidity measures announced, in fact, the results delivered by the heavyweights like HDFC Bank and ICICI Bank on the improving side. What about banks? Have they run their course now with the kind of up move that you've seen over the last few days? Or do you feel that banks could be a potential safe haven considering its domestic focused business and amidst all of this tariff drama?
Yeah, absolutely right. In fact, banks can and will be, I think, a safe haven. One, they're very strong, clean balance sheets across the board, majority of the companies, whether it's private or public. Second, provisions, etc., have been taken care of, NPAs are low. Third, valuations are very intact. SBI is still trading at one-time book, and Axis and ICICI also trading very decent numbers. Now, they've run up in the last 1 week or so. Some of the stocks are up a good 10, 15, 20%. So there's a round of profit booking, but clearly valuations are pretty much on their side and still be buyers in financial services.
Chakri, your buyers in the BFSI space, you've mentioned SBI continues to trade at slightly muted valuation. Now let's come to the NBFC pack, right? First rate beneficiaries as far as, or the first line of beneficiaries as far as rate cuts are concerned. Within the NBFC pack, which are the names that you like? Would you prefer vehicle financiers? Would you prefer the MFI space? Or would you prefer the home financiers?
NBFCs clearly benefit, as you mentioned, because of both the RBI rate cut as well as the liquidity measures. So one will boost the volumes, the RBI rate cut. Second, the liquidity measures will also improve the margins of the business going forward. India has gone through a slowing down patch, and NBFCs are also going down, and now they will pick up. The power financiers, Power Finance, RDC, extremely strong companies, very low NPAs, valuation still under a book, roughly, and very strong growth ahead. So those are ones. On the other hand, there's companies like Shriram Finance. These companies, again, financings, commercial financing and other such areas now will start picking up with the economy beginning to turn.
Chakri, a lot of measures have been taken with regards to the steel sector as well. The safeguard duty that was imposed yesterday on steel imports for a 200-day period. But what about metals as a whole? Ferrous, non-ferrous, which side are you on? And do you believe that metals remains that perennial tactical play that it has been, especially considering that there are a lot of moving parts to the sector, be it the dollar, be it China? Or do you see that, okay, there is now some investment potential with all the tariff tensions that are going on, so that can be taken a bet on?
I think it's still a tactical play because valuations are still reasonable, whether it's Tata Steel, Jindal Steel, name it, they're all very reasonable valuations, but they're a global sector, there is tariff. Even in the worst case scenario, there is no pricing power for the Indian, whether it's ferrous or non-ferrous companies. To an extent, Hindalco, they have US operations as well, probably better situated. But with the current uncertain slowdown that we're seeing, or rather uncertainty, there is no real catalyst for the metal stocks to move on.
Right. Chakri, you've spoken about metals. Let's also talk about the other commodity play, which is cement. We've seen quite a lot of consolidation in the space. We also understand that as far as South Indian cement companies are concerned, there have been a few attempts at price hikes in the last couple of months, which have managed to hold out. Cement, which are the names that you like? Do you like any of the names? And the second set of stocks that I want to discuss with you is the capital goods space. Falling oil prices, does that bode a little weak as far as L&T's order book is concerned, or would you continue to play domestic-facing themes, maybe like an ABB or a Cummins?
If you look at the cement companies, you have the two big boys, which is Ultratech and Ambuja. And, they are now leaders, not just in volume, but also in acquiring market share, as well as acquiring companies out there. So against this environment, pricing growth has hardly been there in the last 2-3 years. And therefore, volume growth, on the other hand, is expected to improve a little bit as, the whole interest rate cuts happen and the economy starts to revive. Second, in terms of pricing power, they're trying, but I doubt there would be anything meaningful. So against that, I think it's Ultratech and Ambuja is the easier way to play, and maybe a JK Cement and a Dalmia Bharat in the broader markets.
One final question from my end, Chakri. The capital market plays as well. They've been the ones that have been the highlight of the street over the last year and a half, be it BSE or be it CDSL. How would you play this theme? Would you play it through these names, be it the BSEs and the CDSLs, or would you play it through the asset managers like the HDFCs, the Nuamas and the likes?
The asset managers are probably slightly easier to play. There is margin pressure, yes. Stocks have kind of reacted to that, but the incremental volumes will probably continue to happen. But the CDSLs and the BSEs, they have various other things like regulations and pricing issues, so I'd rather stay away from that.
Thank you so much, Chakri, for joining us. Hope to see you more often, for giving us your view on a whole host of sectors as well. Moving on, we'll now slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Welcome back to Trading Hour. Well, the Nifty IT index is the one that's outperforming. It's building on to gains. LTI Mindtree reports its results later today, and the stock now at the day's highest points up over 5%. But we'll shift focus to the commodity space. Manisha joins in, and today she's focusing on crude oil.
Well, yes, that is because in the overnight markets, we've seen the crude oil prices gain up by 2%. And in the Asian markets, yet again, it's a percentage point on the higher side. So the gains have just about continued. And that $68 a barrel on your screens is, by the way, a near 3-week highs on the markets there. Well, the crude oil prices are up by 4% on a weekly basis. But when you look at month on month, we're down 7% down. And for this year as well, we're down by 11%. The crude oil prices in 2023 and 24 were also on the negative side as the year closed. And this year is no different because until now we are trading in the negative here right now. Well, one of the reasons really is in the sense of increase in crude oil prices overnight and in the near short term, where we have seen 4% of gains on week. One is US imposing newer sanctions on Iran amid nuclear talks. There have been various companies and individuals who are now facing more sanctions when it comes to crude exports and crude trading as well. So that is what is adding premium to the prices. The second point is about the US crude inventories, which have seen a sharp decline of around 4.5 million barrels. This is the largest decline in crude prices in a week since the month of November. Apart from that, it also has been about US expressing optimism right now about trades between US and China. US also stepping slightly back when it comes to independence of the US Fed. So that also has led to some gains coming back into the market, even as IMF has downgraded its GDP expectations from the global markets for China and for US as well. But the markets do believe that at these lower prices, you could be looking at demand continuing flattish, if not improving. And that has in turn also been supportive. The markets right now will watch out for the US new home sales data that comes in today. And of course, any more moves coming in from the dollar index for further reactions.
From being on a slippery slope to trying to regain its boil yet again. Manisha, thanks a lot for that. Now $68 now is Brent, had almost fallen to levels of 60 in the middle of the month amidst all of these tariff dramas. By the way, flashes on your screen, Aurobindo Pharma's arm has received the US FDA approval for the dasatinib tablet. The stock doing well for itself as of now, 1% higher. The market too has seen a bit of a recovery from the lows. The Nifty is back above the 24,200 mark. And we take a short break. We'll tell you exactly what the chart's doing on the index and some trading ideas with Desh Thakkar on the other side. Stay tuned. Welcome back. So choppy moves seen on the benchmark indices currently, and just as we went into the break, we spoke of Aurobindo Pharma, the US FDA approval for the dasatinib tablet that it has received, and the market size of that tablet is close to $2 billion. and that shows on the stock price as well. A sharp spike from the lows, 1% higher now on Aurobindo Pharma. But the other one that's an earnings reaction is AU Small Finance Bank, and we caught up with the management and they believe that things have turned dramatically in the last 2 months. Now the management also said that the issues that they were facing in Karnataka are subsiding. Listen into what they had to say.
From last 2 months, things have changed dramatically in my opinion, and I would give credit to the regulator and of course the government itself that the focus on growth is back. This year, our credit cost will help us more to build our ROA. So I expect a reduction in credit cost this year, and I'm saying because we are well prepared. So I would say March has given us hope because in March month, the OD recovery there is around 98%, right, which was around 95 in the January month. And I'm not seeing many noises from that market now. So currently planning, right? So I don't think Karnataka would play a spoil sport for us this year.
Well, AU Small Finance in focus after the company reported its results yesterday. Stock doing very well, almost 6% higher. But one stock that's not doing too well in the session today is Havells. The stock is in focus after reporting its Q4 numbers. Upasna is here with more details, and stock down 3%, Upasna.
Certainly, Vivek, but company has reported good set of numbers. It's a beat across the board. Q4 stood above the poll estimates, and this growth was mainly led by companies Cables and Wire and Lloyd. Now, higher copper prices and robust REC demand in this harsh summer has supported the growth overall for the company, and company has indicated that it is targeting 13 to 14% of margin going forward. Now coming to the numbers first, revenue saw an uptick of 20% on a YoY basis, which was mainly led by Cable and Wire segment, which saw growth of 21%, and margins in this segment remained stable at 12%. Lloyd revenue growth stood as high as 40% due to robust REC demand. Now coming to EBITDA margins of the company, they saw a downtick of about 10 basis points, which stood at 11.6%, much above our poll estimate of 10.4%. PAT saw an uptick of 11% on a YoY basis. Now, management joined us earlier this morning and the commentary remains quite upbeat. Management says that the cable segment is witnessing a demand uptick, but when it comes to the wire segment of the company, it is experiencing challenges in terms of the volume growth pickup. There are no concerns regarding the supply chain, especially in compressor front, and the management feels that in terms of recent entry of Ultratech and Adani entering the cables and wire space, it thinks this will add newer brands and will consolidate market share from unorganized to organized. So it is a positive move is what the management believes. Now demand trends indicate that there is more to movement towards premiumization products is what the management has indicated, and it has also said that Q4 saw a growth coming back to rural and semi-urban areas, which is a key trigger for the company, which is a positive trigger. So overall, all in all, good set of results and a good commentary from the management.
We'll also listen into what the management of Havells had to say after their results.
I would say, we are, you talked about the newer competition coming in. This industry is a very large part of the electrical industry, and I think it is still has fairly a good share of the unorganized and the non-branded sector. So newer brands, better quality brands, hopefully, should actually consolidate market shares from the unorganized sector. So overall, I think it might not be a bad thing for the industry.
There's a management there of Havells. By the way, some flashes on your screen as well. The DGCA has issued an advisory and they're saying that there is an unexpected demand of tourists who are seeking to return home from Jammu and Kashmir, and they've asked airlines to increase the number of flights as well from Srinagar. And there are visuals also that are coming in of Home Minister Amit Shah, who is at the site of the terror attack that took place yesterday at Pahalgam that killed at least 26 civilians, including 2 foreign nationals. And Home Minister Amit Shah is at the attack site right now, as is the team of the NIA. The DGCA has appealed to airlines to increase the number of flights to Srinagar so that there could be a safe passage for those tourists back to their destinations. So these are live visuals that are coming in from Pahalgam. Home Minister Amit Shah is at the site of the attack, and as is the team of the National Investigative Agency, or the NIA. Moving on then to some more earnings reactions, and Waaree Energies, the stock was up and about in yesterday's session as well. It's continuing from where it left off yesterday, but yesterday was a different trigger. Today is a different trigger, Vivek.
Well, absolutely, Hormaz. But the positive sentiment continues. That's what we'll keep an eye out on. Waaree Energies, yesterday something that you highlighted, where you mentioned that, there had been significant tariffs that had been put by the USA on solar cells, modules and panels that were being exported by other Southeast Asian countries. Exports tariffs or duties as high as 3,500% were being put on certain countries. But yesterday evening, the company went and delivered its Q4 FY25 results. The results, along expected lines, given the large order book that the company was sitting on, was very strong. Revenues higher by 36.5%, about the 4,000 crore mark. EBITDA more than doubling on a year-on-year basis at a little over 920 crore. EBITDA margins very strong, almost 1,000 basis points jump as far as EBITDA margins are concerned. And when you talk about the profitability, higher by over 34% post the interest payments on the loans. Now, when you're talking about the order book on a sequential basis has moderated. At the end of Q3, it was at 50,000 crore. Now the order book stands still strong at 25 gigawatt at close to 47,000 crore. What is the company guided for? Well, the company has given a quantitative guidance as far as FY26 EBITDA is concerned at 5,500 crore being the lower end of the base, indicating that the company actually expects the EBITDA to double on a year-on-year basis. So quite strong, especially when you're talking about Waaree. But moving on, another stock that's reacting to the earnings release is Cyient DLM. The company also reported a good quarter. Earlier today, we were joined by the management of the company. Upasana brings in key highlights from that conversation.
Well, certainly, Vivek. Overall, the company has reported a good quarter. Revenue, EBITDA, PAT largely in line with the street estimates, while the margin stood much above the street estimates. Now, coming to the numbers first, revenue saw an uptick of 18%, EBITDA saw an uptick of 51% on a YoY basis, and margins saw an uptick of 290 basis points at 13.4. This increase in margins was mainly driven due to company's change in product mix, one-off impact and operational efficiency. Now, order book remained around 1,900 crore, which continues its downward trajectory, down about 12% on a YoY basis and 11% sequentially, and PAT saw an uptick of just about 37% on a YoY basis. Now, we the management joined us earlier this morning to talk about the demand trends and outlook for FY26, in which management said that 200 basis point impact seen on the margin is due to the one-off this quarter, and it expects double-digit margin of around 10 to 12% going forward. Q1 FY26 is likely to be a soft quarter, but overall retains positive outlook for FY26. Management has also highlighted that order book will reverse its downward trajectory and see an upward trajectory Q2 FY26 onwards. And in terms of revenue mix, it is likely to remain stable going forward. It says that the A&D, that is aerospace and defense segment, will see a decline of 5% at least, while the industrial segment will see an increase going forward, is what the management has indicated. So overall, strong commentary from Cyient DLM, supported by good results.
Good results, strong commentary. So good going for Cyient DLM as well, off the highs of the day, but still holding on to gains of around 4%. By the way, Mitesh Thakkar now joins in for a quick chart check as well. Mitesh, good morning. Thank you for joining in again. Now we're back around that 24,350 mark, where there has been some resistance on the Nifty. Would you wait for a dip back towards 24,150, 24,000 before you re-enter? Or do you see this range-bound action continuing?
Good afternoon. So I think there is, first support coming in around 24,100 and then 24,000. I think we are unlikely to breach significantly below 24,000. So the way traders can approach, if somebody wants to get into fresh long positions, is to buy about 40% around 24,100 and keep powder dry, add more around 24,000 and keep a stop below 23,900. My sense is that we will not eventually just cross this 24,300, but head towards 24,500, 550 zones, and maybe even higher. But looking at the rally which has happened almost in the last about 8-9 sessions, very likely that a couple of days could be spent consolidating, and you can see some supply high levels, though the directional bias is on the upside. Therefore, the idea is to use any kind of these consolidation, and if they give any intraday dips, to buy into or to take fresh long positions.
Mitesh, individual calls, any you have at this hour?
IT is doing well, Vivek. Good morning. So OFSS is on my radar. That's a buy, keep a star below 8,400 for targets around 8,700 or thereabouts, maybe slightly higher. And the other one which I like is the Page Industries. That's another stock which is doing very well today. Mr. Buy can stop below levels of 45,600 for targets around 47.
I'll quickly sneak in a question on the Nifty Bank as well. Mitesh is seeing some bit of profit booking today, but would you see some more downside before you enter again, or these are good enough levels to buy the dip now?
So on the Nifty Bank, I think there would be slightly more kind of a decline could happen. I think I'm looking at possibly a retest of 55,000. I mean, let's not forget that the rally started from around 49,800, 900 levels to about 56,000. So giving up 1,000 points should be perfectly natural. Around 55,000 is where, a couple of moving averages on the hourly and 2 hourly charts merge. So I think that should be the first area where I would attempt a long position.
Thank you so much, Mitesh, for joining us, giving us your on the markets, Nifty, Bank Nifty, your individual stock calls. We'll get you once again to get a quick check on the market. It's been a bit of a correction in today's trading session. Well, it's now time for a short break. We put the spotlight on banking stocks as well as Tata Consumer when we return. Welcome back to Trading Hour. Well, notwithstanding the kind of profit booking that we're seeing today, remember the banking index is now perched pretty at a record high. This is following a sharp rally over the past month. Ritu joins in to tell us what has fueled the rally as far as the banking stocks are concerned. Over to you, Ritu.
Well, a spate of positive developments for the banking system that could explain the rally we're seeing in banking stocks, but at the heart of it is a regulatory environment that is turning more supportive under RBI Governor Sanjay Malhotra. RBI has deferred tighter project finance norms, and they've even provided banks additional time to comply with these new LCR requirements, and to the street that is signaling a clear pro-growth stance. Adding to the momentum, systemic liquidity has also flipped into surplus after a 4-month deficit, with the RBI injecting more than 15.5 lakh crores in the system in the recent months through OMOs, VRRs and forex swaps. Now, while the recent 50 basis point rate cut may weigh on bank NIMs, it is aimed at boosting credit growth and demand, and CRISIL expects credit growth to rise by up to 200 basis points this fiscal, helped by these tailwinds. The strong show by banks like HDFC and ICICI Bank in their fourth quarter has also helped boost sentiments. Now, on the regulatory front, these latest LCR relaxations are a big positive because compared to earlier draft norms, the final rules are more lenient and they are expected to improve the aggregate LCR of banks by 600 basis points, freeing up almost 3 lakh crores of lendable resources and potentially lifting the overall credit growth by up to 1.5%, according to ICRA estimates. RBI also recently lowered the risk weight on bank lending to NBFCs and MFIs. That could free up an estimated 40,000 crores of capital. Now, co-lending norms, they've also been expanded to include all sectors and all regulated entities, and even priority sector lending norms have been revised, enhancing the loan limits and broadening the scope for renewable and housing credit. So put together, it is a powerful combination of ample liquidity, regulatory easing, and strong earnings that is fueling this banking rally. But that said, not all concerns are off the table. Deposit and credit growth momentum remains a key watch point, and there are still some lingering risks around asset quality issues in unsecured loans and microfinance segment.
Ritu, thanks a lot for that. And earlier in the day, we spoke to banking veterans Dinesh Khara and Sanjeev Chadha on the recent actions taken by the central bank and how they have impacted the larger industry.
The industry was always reaching out to RBI and was making a very appeal, significant appeal in terms of ensuring that the liquidity should not become a challenge. Particularly, I'm talking in the context of LCR, and I'm glad that the guidelines which have come in, it's actually a middle path. If at all you look at it as compared to what it was, and now what it will be from the 1st of April 26, it's more like a middle path. I would say that it has always been a collaborative approach, but I think as a regulator, they are very mindful in terms of the situations which are obtaining, and based upon that, whatever elbow room is available, I would say that they are willing to accommodate the banking system. Very mindful of the fact that growth is the need of the hour, and unless and until the banking sector is given the required support, growth may not really happen.
I think that particularly when it comes to the LCR, rate cuts already were there. And therefore, now if you want that the rate cuts should be transmitted, it was important that liquidity should be eased. Banks should not be looking over their shoulders in terms of what is going to be happening in 6 or 8 months' time. So I think while you are right in terms of the fact that there may be some signals to read, but the changes that are there are perfectly understandable and justifiable in terms of the mandate of a central bank to ensure that there is growth, to make sure that there is counter-cyclicality in policy, and also make sure that the rate cuts actually get transmitted in a broader sense. When it comes to the runoff factor when it comes to digital deposits has been increased by 2.5%. But I think the stance of the RBI would seem to suggest that they are fully cognizant of prudential requirements, but they will make sure that banks get sufficient time to adjust so that any policy action of the RBI is non-disruptive as far as growth is concerned.
Well, some very interesting comments as far as the entire BFSI space is concerned. But moving on, remember, Tata Consumer will report its Q4 numbers today. Mangalam joins in to tell us what is it the street is anticipating from Tata Consumer this time around.
Well, good revenue growth is what the street is anticipating this time around, and that's baked in the way the stock has performed this month so far as well. Among the better performing FMCG stocks, which is up 12% this month, not particularly cheap at 55 times, but then again, you're reporting a 16.5% revenue growth as the street is expecting. That should be in the price. A large part of that would of course be led by price hikes that the company has taken, particularly in the tea and salt portfolio, and the other part of revenue growth would be led by inorganic growth scaling up as well from Capital Foods and Organic India as well. Price hikes in tea would actually lag the inflation that we've seen, and which is what will impact their margins too. So the EBITDA is likely to fall by 5% despite a 16.5% jump in their revenues, which implies that the margins would come off by 300 basis points at around 13% versus 16%. The net profit would, on an exceptional base, see a rise of 41%. So the absolute number of 305 crores is more important to look at rather than the relative number itself. What are the expectations in India? Beverage business likely to see a 10 to 11% growth led by 5 to 7% price hikes in tea. Foods likely to see 11 to 12% growth led by hikes in salt portfolio. Capital Foods and Organic India, basically, which is the Fab India Organic Food and Ching's portfolio, likely to do about 350 to 400 crores in terms of revenues this time around. Nourishco will be something that, according to me, will make or break this quarter's results. 8 to 10% revenue growth is expected there. It is a summer strong portfolio. How that portfolio does for the company going forward would set the tone for what Tata Consumer looks like in the next 1 year or so as well.
All eyes on Tata Consumers numbers, mostly likely to be reported after market hours in today's trading session. Of course, there are a lot of other broader market names too that will be reporting results, be it the likes of LTA, Mindtree, Bajaj Housing Finance, Canfin Homes, Dalmia Bharat. So plenty of earnings to watch out for in the second half of the day and of course towards later in the evening as well. Take a short break. More on the markets on the other side. Stay tuned. Welcome back. It's a sharp reversal from the lows for our own markets as well now. 24,250 is where the Nifty is back on. And the Asian markets too are doing well for themselves, especially considering the handover that we received from Wall Street overnight. The Hang Seng is up 2.5%. The Taiwanese index is up 4.5%. And of course, the comments came in from the US Treasury Secretary expecting de-escalation in the trade tensions with China. The Nikkei too is trading with gains of around 2%. The Kospi is up 1.5% in South Korea. So it is green across the screen in the Asia Pacific, barring the Shanghai Composite, and that index is trading absolutely at the flat line. So no moves in the Shanghai Composite, but the rest of the Asian screen is seeing very healthy gains. But the market moves that were witnessed since last night have been on the back of several comments, as I just mentioned, from the US. First, from Treasury Secretary Scott Bessent, who said that he expects a de-escalation in the trade war with China in the very near future. CNBC's Iman Javers gets us the latest on Scott Bessent's comments.
What the Treasury Secretary said was no one thinks the current status quo is sustainable at 145 and 125% in terms of the relationship with tariffs with China. He says, so I would posit that over the very near future there will be de-escalation, and I think that that should give the world, the markets, a sigh of relief. He also goes on to say, I do say China is going to be a slog in terms of the negotiations because that engagement started. I would not yet. But I think, again, I think neither side thinks the status quo is sustainable, but I've said quite a bit. So what Bessent is saying here is that neither the United States nor the Chinese side thinks that the trade relationship is sustainable between the two countries. And he also says here that he views this ultimately as an embargo between the two countries, that it's ultimately going to have to lead to some kind of negotiation. And he talks about the idea of rebalancing the two nations' trade relationship together. He says they have stifled the consumer economy and favored manufacturing. We want to increase manufacturing. The identity of that would be less consumption. And if somehow I could see a Ray Dalio essay on this, like a big, beautiful rebalancing. If we walk out the door of negotiations and sign something in 2 or 3 years that looked like that, I would think that it's a huge win. And then the trade practices, the goal of that is not that hard a break. We want to stay engaged, but it's going to be more fair. So that's a summary, again, from a person who was in the room of exactly what the Treasury Secretary told that audience at the JP Morgan event yesterday.
Following Scott Bessent's comments, US President Donald Trump said he won't play hardball with China on trade and that US tariffs on China will nowhere be near the 145% his administration had previously discussed. Let's listen in.
145% is very high, and it won't be that high. It's not going to be that high. It got up to that. We were talking about fentanyl, where, you know, various elements built it up to 145. No, it won't be anywhere near that high. It'll come down substantially, but it won't be zero. It used to be zero. We were just destroyed. China was taking us for a ride, and just not going to have. It's not going to happen. We're going to be very good to China. Have a great relationship with President Xi, but they would make billions and billions and billions of dollars a year, and they would build their military out of the United States and what they made. So that won't happen. But they're going to do very well, and I think they're going to be happy. And I think we're going to live together very happily and ideally work together.
Well, Trump also spoke of the Fed chief. When he was asked if he planned to fire Jerome Powell, this is what Trump said.
None whatsoever. Never did. The press runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not. But it would be good timing. It could have taken place earlier. But no, I have no intention to fire him.
Taking a step back is Donald Trump, and that's showing up on the Dow futures as well now, currently up 500 points after a 1,000-point rally overnight. Let's also listen into what former RBI Governor Raghuram Rajan had to say on the Fed's independence and its impact on the markets.
Don't think both what the Fed chairman said and what Mr. Trump said today suggest that the Fed is in any danger of having to cave to presidential power. So that seems like good news both for financial markets and for the United States. I think on the issue of what will the Fed do, I think Chair Powell made it very clear that it was really focused on its dual mandate, which is growth and inflation. Yes, if growth tanks, it will come to the rescue. That's part of its mandate. And yes, if inflation really goes up, it will keep rates, at the appropriate level. The key question is what happens if both happen at the same time? Growth tanks, and at the same time, inflation is persistent. And there the chair said, look, it really depends on which is more important, where we are further away from the target at that point, and we will focus on that. Here's an independent authority doing what they need to do on monetary policy. And if the economy slows down considerably, well, there's a finger he can point to at the Fed and say, well, they're partly responsible. I think if he, in a sense, takes responsibility for the Fed, which I think is going to be very, very hard, even if he does manage to find a way to fire Chairman Powell, which I think, again, is off the cards. But if that did happen, I think it would be a problem for the presidency because you own the entire economy at that point. There's no one to blame.
Well, some very interesting commentary from Raghuram Rajan as well. But we'll now slip into a short break. Up next, we'll give you all the updates on the tragic incident in Pahalgam.
Welcome back. Now, in the tragic incident at Pahalgam, at least 26 civilians, including 2 foreigners, were killed in a terror attack in Pahalgam in Jammu and Kashmir last evening. The Pakistan-based Resistance Front has claimed responsibility for the attack, which was the deadliest in the region since the 2019 attacks in Pulwama. Now, following the attacks, Prime Minister Modi cut short his visit to Saudi Arabia and returned to India this morning. Home Minister Amit Shah has just moments ago, as you saw visuals, has reached the site of the attack in Pahalgam and has spoken to army commanders and the Jammu and Kashmir DGP. And after visiting Srinagar to take stock of the situation and paying respects to those who lost their lives in the attacks. Sources also tell CNBC-TV18 that the Cabinet Committee on Security is likely to meet today to decide on the course of action following the attacks.
Visuals of Amit Shah also at the attack site in Pahalgam. At least 26 civilians, including 2 foreigners, were killed in a terror attack in Pahalgam in Jammu and Kashmir last evening. The Pakistani-based Resistance Front, remember, has claimed responsibility for this dastardly attack. Well, in order to ease potential travel roadblocks following the attack, Union Civil Aviation Minister Ram Mohan Naidu yesterday spoke to Union Home Minister Amit Shah about arranging more flights from Srinagar to Delhi as well as Mumbai today. The ministry has arranged 4 new flights, 2 each to Delhi and Mumbai from Srinagar, and will monitor fares to ensure they don't spike. The ministry is also monitoring the situation and, based on demand, will be in touch with airlines to do more. The DGCA has issued an advisory asking airlines to increase the number of flights from Srinagar. According to the DGCA, there has been an unexpected demand from tourists seeking to return to their homes.
And with that, it's a wrap on this edition of Trading Hour. We leave you with the Nifty 50 points higher. Halftime report takes the action forward. From Vivek and me, it's goodbye for now.
Stocks give up their early gains as investors remain wary of US President Donald Trump's flip-flop on China tariffs and Fed Jerome Powell. IT, autos and realty gain, but consumer durables, energy and financials drag.
HCL Technologies climbs despite a soft and mostly in-line quarter on the back of strong deal wins and an all-time high order pipeline. Expectations of easing tariff tensions also fuel a rally in IT stocks. HCL Tech is the top Nifty gainer today.
EU Small Finance Bank CEO Sanjay Agrawal says collections against microloans in Karnataka have improved to 98% in March from 95% in January, giving hope that the worst of the microfinance stress is behind the company.
Havells chairman Anil Rai Gupta says demand in rural and semi-urban areas is coming back. Premiumization is a trend witnessed not just in urban areas, but rural areas too.
Electric two-wheeler maker Ather Energy is all set to launch its IPO, the first main board issue this fiscal, on April 28th. The offer comprises a fresh issue of about 2,600 crore rupees and an offer for sale by the promoters and early investors.
You're watching us here on Halftime Report. It's halfway through the trading session. I'm Mangla Malu. With me, Surabhi Upadhyay. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. It's an interesting day of trade. Why do I say that? Because we're at 24,200 on the Nifty. No real problems. Consolidating near, highs that we've seen in 2025 so far itself. But after a big solid run, the Nifty Bank has allowed a day of rest. It's down about 0.2%. And after a lot of days of rest, it's the IT pack which has said that I'll take the mantle from you and I'll move forward. The IT index actually has done extremely well this week so far, telling you that maybe, just maybe, the worst would have been in the price, because we got numbers from Infosys that after the stock moved higher, we got numbers from HCL Tech, nothing really to write home about in the numbers, but the street believes that, well, perhaps that's in the price.
Absolutely, and I think IT stocks swing like small caps or micro caps these days. You have one day of major up move like the one that we're witnessing today, and then you have other major declining days. I think today's swing in IT could also have to do with the fact that overall there's risk on in global markets, and that's thanks to the first headline that we told you about, that Mr. Donald Trump now seems to be making up his mind that he doesn't want to fire Jerome Powell and that he's willing to de-escalate, make some sort of a trade deal with China. So that's why overall there's a risk on in global markets. US markets did well. US futures are holding up really well. And, that would spell perhaps better times for IT companies, particularly the large ones that have exposure to the US.
Just to add to that, we pointed this out on Monday when the Nifty Bank hit a fresh record high, that the Nifty Bank has hit a fresh record high. So that's 0% distance from, a record high. IT index is still about 23% away from the record high. So the Nifty Bank's outperformance versus the IT index is close to around 25, 26 odd percent. So there's a fair amount of gap that the IT index needs to fill. And if that were to happen, then who's to say that the Nifty won't go and hit the record high, which it's about 5-6% away from right now?
Absolutely. IT is actually, taking the top honors. By the way, the rest of the market is not too bad either. The mid-cap market is still slightly outperforming the Nifty. In the earlier part of the morning, mid-caps had also sold off, but now we're seeing some momentum come back, very, very, specific to individual stocks. Though today's advanced decline ratio is negative. After many days, you still have more declining stocks than advancing stocks right now. So that's the shape of the market. But since those are the crisscross lines, so still the red is towering over the green. But since we're talking about IT and that's the big sector in focus today, let's go across to Rima. She has a report card with her of all the large IT companies that have reported Q4 performance so far. Rima?
Well, it's the rubber from NASDAQ overnight, but I just want to quickly recap how the quarter has been for the large cap IT companies now that all the four of them have reported their numbers. Well, on the whole, Q4 has been a soft quarter. Revenue for all the four IT company, large cap companies declined on a quarter-on-quarter basis. The steepest decline seen was for Infosys with a drop of about 3.5%. The commentary from the companies were also fairly cautious. They said clients are in a wait-and-watch approach. There are delays in starts of new projects. Discretionary spending is likely to remain subdued, and the companies fear stress, particularly in the automotive vertical, which falls under manufacturing, and then the retail CPG vertical. That said, cost optimization deals are very much on track. The silver lining in Q4 with the very strong deal wins across the board. Look at the numbers. For HCL Tech, deal wins were up 40% on a sequential basis, nearing $3 billion. TCS's order book swelled by 20% quarter-on-quarter to $12.2 billion. Infosys' large deal wins were up 6%, while for Wipro, TCV, that's total contract value of deal wins, was nearly $4 billion. Again, a jump of 14% quarter-on-quarter. So even though Q4 got impacted on account of the macro uncertainty. The deal wins continue to remain very robust. Now, the FY26 guidance. Well, Wipro's Q1 guidance, which is the near-term guidance for the next 3 months till the June quarter, was a howler, -3.5% to -1.5%. But if you strip that out, for the full year, the guidance is not as bad as what the street was fearing. Infy is talking about 0 to 3% growth, HCL Tech 2 to 5%, and TCS is saying, at least for their major markets, which is stripping out, India, the BSNL deal, FY26 should be better than FY25, and margin guidance has remained unchanged, both for HCL Tech and Infosys. And when you round up FY25, well, it's been a very low growth year. For Wipro, it's the second consecutive year of a top-line decline, but even for the others, like in HCL Tech, Infy and TCS, we are looking at just about a 4 to 5% kind of a top-line growth. In FY26, by all accounts, and the FY26 guidance is again going to be a very low growth year for the, at least, IT companies, large-cap IT companies. Back to you.
All right, Rima, thanks a lot for that. That's about the IT pack. But while we've spoken about the IT pack, don't lose sight of the way the pharma stocks are moving today. In fact, the pharmaceutical stocks also doing extremely well. Pull up something like Dr. Reddy's and Sun Pharma from the frontline names and the broader market names. We have Alchem Lab, which has moved higher. Aurobindo Pharma, suddenly over the last, 2 minutes or so, has seen a further up move. This after the big drug approval that the company has gotten as well. So the pharmaceutical stocks are picking pace, and we're also seeing some traction in names like Nykaa. Remember, Nykaa has been, gaining ever since the company reported their fourth quarter update, which was much better than all the other consumer stocks in, this quarter and the last few quarters as well. The beauty and personal care business has been doing well. So as a result of which, Nykaa, again, very close to its 52-week high, at least for this year. And we're seeing some traction on Nykaa too. But stocks which are doing extremely well, AU Small Finance Bank, shares are rallying on the back of their fourth quarter earnings. We caught up with the management. CEO Sanjay Agarwal joined in, and he said that collections against microloans in Karnataka actually improved to 98% in March from 95% in January. This gives hope that the worst of the microfinance stress may perhaps be behind. Remember, all of last year, all these small financiers were actually worried about the microfinance stress, and now any hope of that being behind, the worst being behind, has the street excited. This stock higher as well. This is our special Insight Edge segment. That's AU Small Finance Bank.
From last 2 months, things have changed dramatically, in my opinion, and I would give credit to the regulator and, of course, the government itself, that the focus on growth is back. This year, our credit cost will help us more to build our ROA. So I expect a reduction in credit cost this year, and I'm saying because we are well prepared. So I would say March has given us hope, because in March month, the OD recovery there is around 98%, right, which was around 95 in the January month. And I'm not seeing many noises from that market now. So, and that is only a 10% of our book. So even we have counted that book in our current year planning, right? So I don't think Karnataka would play a spoil sport for us this year.
All right, that's the word from AU Small Finance Bank. We have to take a quick break on that note. On the other side, we'll get you more on the markets, and we'll put the spotlight on a couple of stocks: Aurobindo Pharma, Havells, and Cyient DLM. Welcome back. Here with us on Halftime Report. Let's put the spotlight on a couple of those stocks like we promised. Aurobindo Pharma is in focus. The company has received US FDA approval for a drug which is used in the treatment of certain types of leukemia. Vinny is here with more details. Stocks up 2.5%. Seems important for the company, Vinny?
Absolutely. It's an important drug when you look at it, a good market size as well. Now, firstly, this is Eugia Pharma, wholly owned subsidiary of Aurobindo Pharma, which has received this final approval for this drug that is called dasatinib. And this is a generic drug for BMS, which already had this drug going on. So they were the main innovators. Now, obviously, there are a lot of generic players who have come into this drug as well. This product launch for Aurobindo Pharma is expected in Q1 FY26. Estimated market size is $1.8 billion. And this is as of Feb 2025. So last 12 months data, this is what is indicated, $1.8 billion. Now, like I was saying, there are other players who have already come into it, right? In the month of March, we had seen Zydus receive a final approval for the same drug as well. Tentative approvals have come in for a lot of other players as well, whether you look at Dr. Reddy's, Biocon, and globally also there are players who have received approval. So yes, there is a lot of competition that has increased, but analysts had, highlighted that the sales expected from this drug for Zydus was around $10 million per quarter. So, still a big amount of sales that come in, and similar level we could expect from Aurobindo Pharma as well. So still a good positioning that they could have in this drug. Important treatment drug as well coming in front on the point of view from leukemia, cancer treatments. So that is important for the company there.
All right, we take that point, and that's reflecting in the way, the stocks moved as well. Havells is the other stock which is on our radar after their fourth quarter numbers did come by. While the Lloyd's business did well, the stock's still lower in today's trading session. Why is that? Upasana joins in to tell us more. Upasana.
Well, certainly the stock is seeing a bit of a profit booking despite good results. Now, if we talk about the Q4 numbers, they stood above our poll estimates, and this growth was mainly led by companies Cable and Wire and Lloyd Business. Now, higher copper prices and robust RAC demand has supported growth this time around. Company has also indicated that it is targeting 13 to 14% margin going forward. Now, let us come to the numbers first. The revenue saw an uptick of 20%, which was supported by 21% growth in cables and wire segment, and margins in this segment also remain stable at 12%. Lloyd, the revenue grew by nearly about 40% on a one-year basis due to robust RAC demand. Now, coming to the margins of the company, overall they stood at 11.6%, which is much above the poll estimate of nearly about 10.4%. PAT saw an uptick of 11%, stood around 517 crore. Now, the management joined us earlier this morning to talk about the demand trends and outlook for FY26, in which management has said that the cable segment is witnessing a demand uptick, but wire segment is experiencing challenges on the volume growth front. There are no concerns regarding the supply chain, especially for compressors, is what they've indicated. And they think with the entry of Ultratech and Adani and the new entrants entering the space, the competition intensity remains quite positive for the players. It thinks that the newer brand entry will consolidate market share from unorganized to organized, and demand trends are also indicating more premiumization. Q4 saw strong growth coming back to rural and semi-urban area is what the management has emphasized. So overall, good set of numbers and even robust commentary. Let's listen into what management has to say.
I would say, we are, you talked about the newer competition coming in. This industry is a very large part of the electrical industry, and I think it is still has fairly a good share of the unorganized and the non-branded sector. So newer brands, better quality brands, hopefully should actually consolidate market shares from the unorganized sector. So overall, I think it might not be a bad thing for the industry. I think this was one quarter where we actually saw growth coming back in the rural and semi-urban sector as well. The urban had been doing better in the first half of the year. The rural was impacted. It's coming back. Maybe some impact of the budget changes as well as the RBI relaxations. Hopefully that should augur well for the coming times. I think if we see overall, there is a movement more towards the premium, and maybe that is also a strategy of the company. But that is there we see a movement more towards the premium products as well. If you take fans, it is more towards energy saving products. If you take switchgear segment, it is more towards automation and electronics. So there is a movement towards premium segment overall.
Okay, that's Havells there, the comment coming in from the management. Let's stay with earnings. Cyient DLM is holding up almost 4% after reacting to numbers. It seems to have been another good quarter for this company as well. We also caught up with the management today to discuss growth prospects from here on. Upasana is back with some of the key highlights from that conversation. Upasana.
Well, certainly company has reported a good set of numbers. Overall, it was a good quarter for the company. Revenue, EBITDA, PAT stood above street estimates, while margins stood much above the street estimates. Now, coming to the numbers, the revenue saw an uptick of 18% on a YoY basis. EBITDA margin saw an uptick of 51%, and EBITDA margin saw an uptick of 290 basis points at 13.4%. PAT saw an uptick of 37%, and order book, which was seeing a downtick since past 7 quarters, stood nearly around 1900 crore with a downtick of 12% on a YoY basis and 11% sequentially. Now, this when it comes to the margins of the company, this expansion in margins was mainly driven due to change in the product mix, one-off impact of Altac acquisition, and also operational efficiencies, what the company has indicated. Now, management joined us earlier this morning, and management says that the 200 basis impact on margins is mainly due to one-off this quarter, and it expects double-digit margin, that is around 10 to 14% going forward. And it has also highlighted that Q1 FY26 is likely to be soft, but overall maintains a positive outlook for FY26. Coming to the order book now, it says that the order book will see upward trajectory Q2 FY26 onwards, and in terms of revenue mix of the company is likely to remain stable going forward. And it is also indicated that the A&D segment, that is aerospace and defense segment, will drop the overall mix by at least 5%, while industrial segment will see an uptick going forward. So overall, strong set of numbers and upbeat management commentary from Cyient DLM.
All right, thanks a lot for that, Upasana. That's about Cyient DLM. The stock's doing extremely well. Another couple of stocks which are doing well, we have Sona, BLW Precision, we have IIFL Finance, which has picked pace as well, and Macrotech Developers ahead of numbers in the next couple of days. That stock too has moved higher. But let's move focus away from the stock markets and address the tragic incident that took place last evening. At least 26 civilians, including 2 foreigners, were killed in a terror attack in Pahalgam in Jammu and Kashmir last evening. The Pakistan-based Resistance Front has claimed responsibility for this attack, which was the deadliest that we've seen in the region since the 2019 Pulwama attacks. Following the attacks, Prime Minister Narendra Modi cut short his visit to Saudi Arabia to return to India. Home Minister Amit Shah too reached the attack site in Pahalgam and spoke to the army officers, the top army commanders, and the J&K DGP after visiting Srinagar to take stock of the situation and paying respect to those who lost their lives in the attacks. Sources also tell CNBC-TV18 that the Cabinet Committee on Security is likely to meet today to decide on the course of action following the attacks. That's not all. We also have with us CNN News 18's Ishan Vani reporting live from the attacking site. Ishan.
CNN News 18 has managed to reach Baisaran Valley. It might look beautiful to you, but this is the scene of that carnage which unfolded yesterday here. And massive firing was witnessed in this valley. Though there is a massive deployment in these mountains behind me, but just now the Union Home Minister has instructed security forces to carry on massive operations around this place. You will still see a large presence of security forces behind me. We are among the first few channels to reach here by foot after trekking for several hours, and the Home Minister has just left behind us in a helicopter. We have been told that best possible treatment and care will be done to them who are injured right now, and the government has also announced compensation. But look at the situation here. Must have been really deadly yesterday when the things unfolded. You can also notice somebody's slippers, shoes and belongings are still lying around, and this is the scene where the NIA and the forces are also investigating now to what really transpired yesterday. Ishan Vani from Baisaran for CNN News 18.
Okay, an eerie sort of silence today at that same spot, which otherwise, as Ishan said, looks so absolutely scenic and beautiful. In order to ease potential travel roadblocks following this attack, Union Civil Aviation Minister Ram Mohan Naidu yesterday spoke with Union Home Minister Amit Shah about arranging more flights from Srinagar to Delhi and Mumbai today. The ministry has arranged 4 new flights, 2 each to Delhi and Mumbai from Srinagar, and will monitor fares to ensure they don't spike. The ministry is also monitoring the situation and based on demand will be in touch with airlines to do more. DGCA has issued an advisory asking airlines to increase the number of flights from Srinagar. According to the DGCA, there's an unexpected demand from tourists seeking to return to their homes. Right, wishing and praying for safety for everyone around in the area. Well, we'll take a break on that note, come back on the other side. Pratish Mehta of Yes Securities joins in with some trading strategies.
Welcome back. You're watching us here on Halftime Report. Perfect time to get you up to speed with what's taking place in the F&O end of things. The market's consolidating with a tug of war between the Nifty Bank as well as the Nifty IT, something that we've been speaking about all through the day so far. So if you look at it, the Nifty up around 0.2%, and that's because the Nifty Bank is down 0.8%. The Nifty IT index has actually done a lot better with an up move of 4.5%, continues to do even well. If you look at the broader markets as well, the mid-cap as well as the small-cap indices, for most part of the day, we had the mid-cap index which was underperforming. Now it's begun to outperform. The small-cap index still struggling a little as compared to the other frontline indices, and that's witnessed in the advanced decline ratio as well. Yes, we had about 2 stocks, declining for every stock which was advancing, but swiftly those lines have seemed to come closer. Still, about 1,500 stocks which are in the red for about 1,000 stocks which are in the green itself. All of this, follows the India VIX rising by about 4% as well ahead of April series expiry tomorrow. The Nifty IT, what it's done is, with the kind of move that it's seen, it's crossed past the 20-day moving average as well of 34,989. Consistently holding above that. So near-term moving averages on the Nifty IT taken care of. The April series expiry that takes place tomorrow has a couple of levels that we need to keep an eye out on. On the way up, 24,300 call has seen a fair amount of writing, as has the 24,300 call. Both of them have a 24,350 call. Both of them have a premium of almost 35-40 rupees, telling you that levels upwards of 24,350 to 24,400 could see some sort of supply, issues coming in or resistance in the market, so long as the Nifty bank continues to consolidate. If the Nifty bank pulls higher, then these writers will have to go for cover. And at the same time, we are seeing strong support at around the 24,100 mark. And that's largely because of the put writing that we've seen at 24,200. And also the 200-day moving average comes in at 2451, which is an important technical support too. The one stock that I'm watching out for 1 day ahead of expiry may re-enter F&O ban after exiting it just last evening is Hindustan Copper. So we'll watch out for that one. Short point of the Nifty, 24,100 to 24,350 is the broad range. If the Nifty bank outperforms, then all bets are off on the short side. Perhaps those shorts will cover their positions.
Okay, all right. So that's the F&O setup for the time being. We've got Pritesh Mehta, Executive Vice President at Yes Securities, joining in with some thoughts. Pritesh, good to have you on the show. So it's a slightly calmer, slightly quiet day. There's some correction on the Nifty bank and banking stocks. What would your trades be now?
Good afternoon. I think we want this sort of days after the kind of rally that we have seen last couple of weeks. So in fact, we've done quite well as far as the headline index is concerned. Bank Nifty financials outperform. But see, we are talking about 5 gap-up starts on the Nifty in last 9 trading sessions. So I think a bit of some normalcy needs to return. And this is what we are, which are observing on the screen. As far as Bank Nifty is concerned, Bank Nifty is now witnessing the disparity at an extreme peak. So difference between price and the average is at a very high level. So in this scenario, we could see some sort of price or time correction coming in Bank Nifty. And for Nifty 24,300, 24,400 zone, that is very crucial, because if you look at the historical action between September 2024 peak and March 2025 low, this is the zone where Nifty has spent most amount of time. It won't be easy for Nifty to go about. So I think we could see a bit of consolidation taking place. It is going to be a classic stock-specific market now.
All right, individual stocks. What are you looking at, Pritesh?
Yeah, so we have created one customized insurance index that is doing extremely well. It has reversed and now moving higher. We have witnessed follow-through moves. So one stock that we like from this space is ICICI GI. The stock is witnessing a base breakout. We are witnessing a bullish turtle breakout also. So buy for a target of 2100. Stop loss will be 1800. The second that we like is from the PSU banking space. Now PSU banking space bank index has given a breakout of a 45-degree downward trend line on point of the chart. And now we are witnessing follow-through moves. So buy Baroda, Bank of Baroda for a target of 280, and stop loss will be 239.
Okay, all right, Pritesh, got that. Thank you very much for joining in. Thank you for the updates over there. We'll take a quick break, come back on the other side, more on the markets, and we're putting the spotlight now on Wari Energies and Vardhaman's Special Steels. Welcome back. Here with us on Halftime Report. Now, the banking index, of course, hit its record high yesterday, and it's seen a pretty sharp surge over the last couple of weeks. Bank stocks have been rallying. Ritu is here to tell us what is fueling this rally from a regulatory perspective.
Well, a spate of positive developments for the banking system that could explain the rally we're seeing in banking stocks. But at the heart of it is a regulatory environment that is turning more supportive under RBI Governor Sanjay Malhotra. RBI has deferred tighter project finance norms, and they've even provided banks additional time to comply with these new LCR requirements, and to the street that is signaling a clear pro-growth stance. Adding to the momentum, systemic liquidity has also flipped into surplus after a 4-month deficit, with the RBI injecting more than 15.5 lakh crores in the system in the recent months through OMOs, VRRs and forex swaps. Now, while the recent 50 basis point rate cut may weigh on bank NIMs, it is aimed at boosting credit growth and demand, and CRISIL expects credit growth to rise by up to 200 basis points this fiscal, helped by these tailwinds. The strong show by banks like HDFC and ICICI Bank in their fourth quarter has also helped boost sentiments. Now, on the regulatory front, these latest LCR relaxations are a big positive because compared to earlier draft norms, the final rules are more lenient, and they are expected to improve the aggregate LCR of banks by 600 basis points, freeing up almost 3 lakh crores of lendable resources and potentially lifting the overall credit growth by up to 1.5%, according to ICRA estimates. RBI also recently lowered the risk weight on bank lending to NBFCs and MFIs. That could free up an estimated 40,000 crores of capital. Now, co-lending norms, they've also been expanded to include all sectors and all regulated entities, and even priority sector lending norms have been revised, enhancing the loan limits and broadening the scope for renewable and housing credit. So put together, it is a powerful combination of ample liquidity, regulatory easing, and strong earnings that is fueling this banking rally. But that said, not all concerns are off the table. Deposit and credit growth momentum remains a key watch point, and there are still some lingering risks around asset quality issues in unsecured loans and microfinance segment.
All right, Ritu, thanks a lot for that. In fact, earlier we spoke with banking veterans Dinesh Khara and Sanjeev Chadda on the recent actions taken by the RBI and how they can impact the larger industry. Hear out.
The industry was always reaching out to RBI and was making a very appeal, significant appeal in terms of ensuring that the liquidity should not become a challenge. Particularly, I'm talking in the context of LCR, and I'm glad that the guidelines which have come in, it's actually a middle path. If at all you look at it as compared to what it was, and now what it will be from the 1st of April 26, it's more like a middle path. I would say that it has always been a collaborative approach, but I think as a regulator, they are very mindful in terms of the situations which are obtaining, and based upon that, whatever elbow room is available, I would say that they are willing to accommodate the banking system. Very mindful of the fact that growth is the need of the hour, and unless and until the banking sector is given the required support, growth may not really happen.
I think particularly when it comes to the LCR, rate cuts already were there. And therefore, now if you want that the rate cuts should be transmitted, it was important that liquidity should be eased. Banks should not be looking over their shoulders in terms of what is going to be happening in 6 or 8 months' time. So I think while you are right in terms of the fact that there may be some signals to read, but these the changes that are there are perfectly understandable and justifiable in terms of the mandate of a central bank to ensure that there is growth, to make sure that there is counter-cyclicality in policy, and also make sure that the rate cuts actually get transmitted in a broader sense. When it comes to the runoff factor when it comes to digital deposits has been increased by 2.5%. But I think the stance of the RBI would seem to suggest that they are fully cognizant of prudential requirements, but they will make sure that banks get sufficient time to adjust so that any policy action of the RBI is non-disruptive as far as growth is concerned.
All right, that's Mr. Sanjeev Chadda, former CMD at Bank of Baroda, weighing in on all the changes that the RBI has announced of late. Let's move on. Waaree Energies is in the spotlight, and for the right reasons. Stock's been rallying almost 13% after reporting a strong set of numbers for the fourth quarter. So what has worked for Waaree? Is it just the numbers? Is it the fact that there are tariffs on a lot of the other Asian renewable energy equipment makers? Let's ask Vivek. Vivek, over to you.
Well, that's right. So the 13% up move today that you're seeing is on top of the close to 7% up move that the stock saw yesterday. So, hefty gains coming in for Waaree Energy in the last couple of trading sessions. First, let's have a look at the numbers that came in post-market hours yesterday. When you're talking about the revenue, strong execution, almost 36.5% higher, about the 4,000 crore mark, EBITDA higher by more than doubling on a year-on-year basis. Margins, almost 900 basis points improvement, profit after tax. If you see, almost 34% improvement on a year-on-year basis. As far as the order book is concerned, slight moderation on a sequential basis, 25 gigawatts. So order book now stands at 47,000 crore, versus the little over 50,000 crores that the company had at the end of Q3. Now, almost a 50-50 split in terms of domestic versus export is where the order book currently stands at. What is it that the street likes? Well, the street likes the fact that the company has given a very strong EBITDA guidance for FY26. Over 5,500 crores is what the company is currently targeting, implying that there could be a doubling of EBITDA. Along with that, when you're talking about the kind of guidance that the company has given as far as ingots and wafers capacity addition is concerned, they're expecting a 6 gigawatt facility to be ready by FY27. Modules current capacity at 15 gigawatt. They are expecting 4.8 gigawatt to be added in the next couple of financial years. You also mentioned about the tariffs. Now, tariffs, remember, it's a derivative impact. USA has spoken about duties up to the range of 3,400% when it comes to certain countries. From as low as 7% to as high as 3,500% is what the US is looking to target. Southeast Asian countries, so look at Vietnam, Cambodia, a lot of these places that the US believes China has been using as a proxy to go ahead and supply solar cells, modules, ingots, as well as wafers. Waaree, as well as Premier Energies, two large Indian companies that do supply, solar cell value chain components to the USA stand to benefit in case the rates to come down or they become a lot more competitive. Volumes go up as they become a lot more competitive as far as the US market is concerned.
Right, Vivek, thanks a lot for that. We're talking about, stocks reacting to good numbers coming in. Vardhaman Specialties is the other one, which is zooming today. The company reported a subdued set of numbers, but the reason why the stock is moving higher is because of the capex announcement that they've made. Nigel joins in with more. Nigel.
Well, that's right. Vardhaman Steel, they reported their numbers. And in fact, the numbers were nothing too great to look into. So on the revenue front, there was a bit of a degrowth. It was down by close to around 3%. The EBITDA number as well came down from around 57 crores to sub 40 crores. And margins did see a compression from around 13% to around 9%. So no great shakes out there. Even if you're looking at the unit economics, the total volume number, well, that was mildly higher by close to 3%. You need to note in the past quarter, they had a bit of a shutdown as well, but still 3% volume growth is what they delivered. On the EBITDA per ton, from around 10,000 rupees, it came down to around 7,000 rupees or thereabouts. So out there as well, there were some pressure signs. But the reason that the street is excited is because they have announced this big capex. They have announced a greenfield steel plant that they're looking to set up in Punjab. And they're saying the total capacity will be of around 500,000 tons of billet capacity. They're going to give a few more details. The total capital expenditure they're looking at is around 2,000 crores. And they say it's going to be a mix, of debt, internal accruals, as well as some equity. Now, the street will be speculating how do they do this. Remember, the Japanese company, Aichi, they have close to around 11% stake in Vardhaman Specialty Steel. So will they be part of it? Well, we'll have to wait by for that. The commissioning of this plant, they're talking about by 2030 or thereabouts. So numbers not too great, but the street is excited about prospects of this greenfield steel project that they're talking about. Back to you.
All right, Nigel, thanks very much for that. Excited for sure, 20% locked up in circuit there. We'll take a quick break on that note. On the other side, we'll put the spotlight on our special offering, Quarter Se Quarter Tak. Mangalam is going to bring us expectations from the FMCG sector.
for investing.
Welcome back. As promised, it's time for a special offering, quarter se quarter tak. And as promised, Mangalam has now moved over to the wall to tell us about whether the FMCG space can offer any bright sparks. Mangalam, we've been waiting for those sparks for many quarters. Is it going to be any different?
Alas, this time not perhaps in the numbers, but the reactions may be a little different. And which is why, to summarize the expectations from the FMCG sector this time around, I'll use the old ad tagline. Same, yet different. Why so? Because it's going to be a quarter of muted staples volume growth, good rural recovery, urban outlook improving post-budget but still not out of the woods. Raw material prices, they remain volatile. Palm is off highs, but remember, year on year it's still high. There is strong competition across categories, ripe for disruption as well. But some leaders are making a bit of a comeback. Discretionary, like jewelry, beauty, personal care, quick service restaurants, value retail, are all doing well. From the updates that we have so far, it's the discretionary that has outperformed. So we have jewelry names like Kalyan Jewellers and Titan, top of the pops, 25-37% growth. Trent too, despite a 28% growth, which is a lot slower than its own past performance, was among the top quartile that it came to growth itself. Nykaa too continues to outperform the sector this time around. We did see some revival in revenue growth from names like V-Mart and D-Mart as well. For D-Mart, a large part of it was led by store expansion, not same-store sales growth. The staples, however, they continue to drum in their own muted beats. Dabur said its India business was actually decline in mid-single digits, and there would be a compression of 150 to 175 basis points in their margins. Marico, on the other hand, saw sequential uptick in underlying volume growth, some reduction in the margin compression, and maybe going forward they would see further improvement out there, as did Godrej Consumer, with its underlying volume growth expected to be mid-single digits after a flattish third quarter itself. What are we expecting from the companies that are reporting their numbers this time around? Not very different from what we saw in the third quarter, apart from the fact that we will see a notable underperformance for Asian Paints, 1 to 2% revenue decline, 2 to 6% EBITDA decline as well. Margin compression is expected for both Britannia as well as Tata Consumer on account of high input prices. HUL likely to report flattish volume growth, low single-digit revenue growth, EBITDA as well around that 1.5 to 2% mark. But what's different, however, is that the expectations of a better FY26 are a lot more. Why is that? Because of projection of a normal monsoon, impact on consumption led by tax cuts and government SOPs, improving urban demand outlook after the weakness that we've seen in urban India, and a lot of acquisitions made by companies in the recent past could see scale up begin as well. In terms of valuations, the sector has never been cheap, but this time around, after a spate of underperformance, multiples are near or below 5-year average for most of the companies. So HUL, 5-year average 52, stock trading at 47, ITC around 2022 itself, Godrej Consumer at 5-year average, Asian Paints, look at the D rating from 60 times, 48 times, and Nestle is trading around 61 times, which is much lower than its 5-year average of 65 as well. And that may give some solace to those looking to invest in the sector at the ebb of the cycle. And I'm not alone. We've seen a few brokerage upgrades coming by as well on their outlook on this sector. What will set this quarter apart from the previous one is that management commentary will be a lot more optimistic than earlier, and as a result of which, weak results may not be as punished in the stock market as earlier. Therefore, same, yet different for the FMCG sector.
What's different is, at least in that table of yours, I didn't see anything above 50 times. Usually for FMCG, and back in the day, 60, 70 was like as good as 5 or 6.
Exactly, which is why it's same, yet different.
Yet different. There's something different about the numbers this time. Thank you so much for that. Well, with that, we do have to slip into another very, very quick break. Come back on the other side, and Manisha Gupta will join in with the latest commodity market action. Today, she'll have Sanjeev Asthana, President of the Solvent Extractors Association of India, with her. Welcome back here with us on Halftime Report. Quick check on the market. It's actually quite okay. The Nifty is now trying to find some momentum again. A little bit of an uptick there, about 60 points higher. Bank Nifty is still underperforming, but it's all about the IT stocks today. And they continue to take leadership position. HCL Tech, for instance, the gain is almost 8% as we speak. So looking good over there. And some of these FMCG stocks that we were just discussing with Mangalam, Lever, Eternal, Nestle, there's a fair amount of buying even in this side of the market. Speaking of FMCG, good time to then take a deviation and move towards commodities. We have Manisha joining in, and as promised, she has Mr. Sanjeev Asthana, President of the Solvent Extractors Association of India, with her today. Manisha.
Well, thank you so much for that, Surbhi. And there's so much to talk about when it comes to FMCG, but I'm going to focus on the edible oil as a sector right now. Mr. Asthana, thank you so much for joining in. And I'll start with the kind of tie-up that you've recently done with the TechnoServe. This is to do with increasing fortification when it comes to edible oil as a sector. What is it about? And I'll begin with that. And what does it mean to you as an industry and an association?
So Manisha, thanks. I think you've picked up a very good subject. India, as you know, is passing through its own challenges on the micronutrient deficiencies, and fortification is one of the key tools that has been used by different sectors. Edible oil in particular, has been doing, fortification with vitamin A and D for long years. TechnoServe is a US-based, organization, not-for-profit, which focuses large parts of their energy on nutrition. They work across the world in different continents, different segments. They run a very unique program called Millers for Nutrition, which essentially partners with millers across the world in different areas. So, for example, in this case, for solvent extractors, it is with all the refiners of edible oils in the country. And the idea being that, they would be able to bring in the best practices on fortification. They would be able to do a lot of, capacity building of the millers in the way the best manufacturing practices ought to be followed. And likewise, the best, the global hygiene practices they would be bringing to the table. And C is a perfect organization for them to partner with in the country to take this forward.
Mr. Asthana, there's just so much that I want to speak to you about. One, of course, is fortification and this tie-up that you have done. The other is the C approaching the government to revive the non-GM soy meal exports to US. I mean, we do understand that there are lots of conversations happening right now. Various sectors also have given their representations to the government, which is in negotiation with US right now. How are you looking at the non-GM meals featuring into this?
Non-GM meals, we've been strongly recommending to the government that when we get onto the negotiating table with the US, earlier India had a fairly good program which was, targeted both at the European markets and occasionally to the US markets as well. US pays a very high amount of premium for the soybean meal, which is non-GM variety. And India is a perfect spot, to fill in that demand. And it helps us also because Indian meal is looking for new homes where we can export. And US can be a perfect candidate for that. So our only recommendation to the government has been that you should explore seriously as to how the Indian non-GM soybean meal can be part of the the FTA that is signed or whatever agreement we arrive at finally with the US, that we should be able to find new homes for Indian soybean meal non-GM variety into the US markets.
Mr. Asthana, my third point of conversation with you is about the edible oil pouches of lower than a liter. I mean, I know this has been a discussion for some time now, and you guys have been talking about it. I remember C writing a letter in this regard as well. What really seems to be the concern right now, and is it anywhere close to getting addressed?
So concerns are twofold. In fact, last 2 days itself, we've been meeting a series of government officials. One that, under certain regulations, it was allowed, for the whole idea being that the consumer is aware of, what grammage they buy for. They're aware of the minimum retail price at which they're buying. But the fact remains, Manisha, that we all know that, in multiple different categories, the consumers in a lot of cases are not aware. So, for example, that when they buy a bottle of oil, they know that this is 1 liter. This is what we consume, and this is how we've been using it always. But it doesn't necessarily work out that way, and this has got reflected in very different ways, especially in the pouches. So the size of the pouch will remain same, but it has almost become like a race to the bottom, where from 910 grams, it continued to sort of go down. Now it's to a level of 850 grams, 810 grams, 750 grams. So our only recommendation to the government is that consumer, not in all cases, is as savvy to be able to determine as to what grammage he is paying for. And maybe perhaps the government should reconsider its order and try to bring certain amount of standardization to the grammage so that the industry players can play by the same rules. And it should benefit ultimately the consumer. So what we are recommending is very pro-consumer. Perhaps when the consumer becomes educated enough and is savvy enough or is extremely aware in terms of what exactly he's paying for, so then we can move on to that. But I don't believe that India is at a stage right now for consumer to be able to determine whether he's paying the same value for 850 grams or he's paying for the same 910 grams or even 780 grams. And I think that is something which is essentially not in favor of consumers, but is also helping unscrupulous elements within the industry to be also exploiting this loophole in some way or the other, and which is not helping the industry overall.
Mr. Asthana, I also want to talk about the prices now, because if you're looking at the palm oil prices now trading at almost at a 6-month lows, at par now, or perhaps a discount coming back versus the soybean and sunflower there. How have been the imports? We do understand Jan, Feb, March perhaps saw 3.5 to 4 lakh tons of palm imports into the country. Do you see this increasing, especially with the prices coming down? What's also your sense as we go into the summers in sense of edible oil imports?
So traditionally, the palm oil imports do tend to increase in the summers, and you're right that the palm oil imports were down. The main reason for that was it was trading almost at a very substantial premium to the soya and sun oil, and which is quite unprecedented. That market has corrected itself. So as we head into the summer season, the demand season picks up. We still have a marriage season in the month of right into the month of May. So my estimation is that not only with the imports of palm increase, I think palm will start buying back its share from soya as Indian soya crush season declines, as the the shipments out of South America continue. I believe that the palm oil imports should start to increase by at least 100 to 150,000 tons a month, and palm will start gaining its share versus both soya and sun.
Mr. Asthana, one final question, and this is on demand consumption growth going forward. We do understand that the PM has been pushing for it, and we've seen in any case the numbers decline. How do you read the overall numbers?
So numbers are, a function. I always believe that, how the consumers ultimately decide. And so while, Prime Minister's exhortation has been there in terms of lesser consumption, I believe that it was more to do with the prices earlier that we had on the inflation side. But as they tend to taper off, my feeling is the demand will sort of come back, and consumers will start responding quite actively, again. In terms of increased consumption. So my sense is that India this year, I'm talking of the full fiscal year, we should see consumption levels rising with the tapered edible oil prices as well. So we should see a substantial uptick in the prices. In the consumption this year.
In the demand, yes, absolutely. Mr. Asthana, I want to thank you on that note because you've answered all of my questions and I've spoken on various issues here. But I appreciate your time here at CNBC TV18. And with that, it's a wrap on Halftime Report. Business Lunch will take all the action ahead.
Stocks give up early gains as investors remain wary of US President Donald Trump's flip-flop on China tariffs and Fed's Jerome Powell decision. IT, autos and realty gain, but consumer durables, energy and financials drag. HCL Technologies climbs despite a soft and mostly in-line quarter on the back of a strong deal win and an all-time high pipeline. Expectations of easing tariff tensions also fuel a rally in IT stocks. AU Small Finance Bank CEO Sanjay Agarwal says collections against microloans in Karnataka improved to 98% in March from 95% in January, giving hope that the worst for microfinance stress may be behind. Havells Chairman Anil Rai Gupta says demand in rural and semi-urban areas is coming back and premiumization is a trend witnessed not just in urban areas but in rural areas too. Electric two-wheeler maker Ather Energy is set to launch its IPO, the first main board issue this fiscal, on April 28th. The offer comprises a fresh issue of about 2,600 crore rupees and an offer for sale by the promoters and early investors. Hello, good afternoon. You're tuned into Business Lunch, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Winnie Motiwala, and thank you so much for tuning in, as always. A look at the markets, right? Opened up on a strong footing. Then we saw the fall coming in. Market dipped and was almost in the red side as well. But then we saw recovery coming back. As of now, the Nifty is recovered from the day's lowest point is what we're seeing. And yes, managing to hold on to almost 3/10 to 4/10% of gain. 24,256 is what the Nifty is trading at. Contributors, look at it clearly on the screen, right? Tech names, IT names, that's the one that is pulling up the markets. Infosys, HCL Tech, TCS, all among the top contributors for the Nifty 50, while drags coming in from the private banking side, HDFC Bank, Kotak, SBI also. So banking is not doing well in today's trading session. So two in terms of IT sector, top sectoral gainer, bank is a top sectoral loser, almost around that, down almost 0.5% in today's trading session, and underperformance coming in from the banking side. IT, 4% gain is what it's holding on to. HCL Tech reported its numbers yesterday, in-line numbers, but still managing to hold on to some bit of a gain on that front. Mid-cap and small-cap, let's look at that. Now, Nifty mid-cap recovered from the day's lowest point as of now. We're seeing a bit of an outperformance versus the benchmark indices. On the other hand, we're seeing Nifty small cap, which is still seeing some bit of an underperformance versus the benchmark indices, just managing to hold on to some bit of a green as of now. So flip-flopping between the red and the green is what we're seeing as of now for the Nifty small cap. But that's how the market setup is looking like. Recovered from the day's lowest point. But the next couple of hours, where it's going to be headed is important to watch out for, and what we're going to be sustaining in today's trading session. But let's move on to the latest update that we have coming in, and on the domestic front. And this is a tragic incident. At least 26 civilians, including 2 foreigners, were killed in a terror attack in Pahalgam in Jammu and Kashmir last evening. Now, the Pakistan-based Resistance Front has claimed responsibility for the attack, which was the deadliest in the region since 2019 Pulwama attacks. Following the attacks, Prime Minister Narendra Modi cut short his visit to Saudi Arabia to return to India, and the Cabinet Committee on Security is set to meet to decide the next course of action. Meanwhile, Home Minister Amit Shah reached Srinagar after the attacks to take stock of the situation and paid respect to those who lost their lives. He also visited the site of the terror attack earlier today. And for more updates, we have Ishan Vani, who's joining in with us to give us the updates from the attack site in Pahalgam.
The visuals behind me might look pleasing to your eyes. There are ice-covered mountains, snow peaks, and the beautiful valley of Baisaran. But it is not usual that we can trek to this place and to report any news story. It is not like any other day, but today there has been a carnage which has unfolded. Yesterday, 26 tourists were killed point blank and their religions were asked, but this beautiful place became a witness to that carnage which unfolded yesterday. And now multiple security agencies behind me are investigating it. We're among the first few channels to reach inside this particular Baisaran Valley and to report to you what the scene must have been like. The visuals might look pleasing to you, but really those who were here yesterday would know that what this name would mean to them forever. People will have memories, and really shocking ones, and also have trauma of seeing their loved ones being shot point blank by terrorists who opened fire at them indiscriminately and killed them. And then it was a hard trek down. Even the best of the best cannot go up very easily in this particular circumstance. But this is Pahalgam, where yesterday a massive carnage took place. 26% losing their lives. One of them is also a local Muslim, but many others are also injured. And from different places and states, these people came to enjoy Kashmir, but they came here to lose their life. There are chappals, shoes, and other stuff that they left behind without picking them up, and in panic they ran away. The investigation agencies are here. The police, the other teams are also deployed in these jungles to trap them down who killed them. But yes, it's going to be a while till the things come to calm, and then we have to see what kind of response does follow from the government. For CNN News 18 in Pahalgam, Ishan Wani, for CNN News 18.
And following the incident, several global leaders reacted to the terror attack and shared their support. US President Donald Trump plans to speak with the Indian Prime Minister Narendra Modi to express his heartfelt condolences. In a post on Truth Social, Trump said that India had the full support of the United States. US Vice President J.D. Vance, who is on the 3-day visit in India with his family, also condemned the attack on social media platform X. Russian President Vladimir Putin addressed President Draupadi Murmu and Prime Minister Narendra Modi through the Russian embassy and expressed grief over the brutal crime and said it had no justification. Italy's Prime Minister also expressed closeness to the families affected and showed support for the government and all the Indian people. And now the aviation regulator has also issued an advisory to the airlines to increase flights from Srinagar to various parts of India following the attack. Madhya is here to give us more details on this one. Madhya, take it over.
Well, you know, it's peak summer and Jammu and Kashmir is a favorite destination among tourists. So naturally, an attack on tourists is going to create panic and people would want to return. So keeping that situation in mind, all airlines, including Indigo, Air India Express, have issued advisories to passengers, and they have also offered to waive off the rescheduling fees if passengers who are waiting in Kashmir and wanting to reschedule their ticket to a later date, or in other parts of the country wanting to travel to Kashmir or Srinagar, the cancellation charges have been waived off, and passengers will receive full refund if their tickets, if they cancel their tickets. Besides that, passengers will also be able to cancel the tickets, as I said, and part of a broader effort to ease disruptions as demand soars. The Director General of Civil Aviation has issued an urgent advisory to all carriers asking them to increase the number of flights out of Srinagar to key destinations across the country. DGCA said there has been an unexpected spike in tourist traffic, mainly now looking to return home. Meanwhile, Aviation Minister K. Ram Mohan Naidu has held an emergency meeting with airline executives. A strong warning was issued against surge pricing, with airlines told to maintain regular fare levels to help ease congestion. 4 special flights have been scheduled from Srinagar, 2 to Delhi and 2 to Mumbai, with additional flights kept on standby. We don't have a number yet on the cancellations, but we're speaking with hotels and tour operators to find out more, and we'll keep getting you regular updates.
Absolutely, Madhya. Thank you so much for that. But this is the latest update that we have coming in, and a lot more flights could be expected coming out of Srinagar as well. That's the call that's been taken so far. Thank you so much for that. But on that note, we're going to step into a very short break. After the break, we'll bring you more updates as US President Donald Trump tones down his trade rhetoric against China and also says he has no plans to get rid of Fed Chairman Jerome Powell. More on the story after the break. Welcome back to Business Lunch on CNBC TV18. Now, Wall Street futures, they have spiked, and this is coming after US President Donald Trump, when he was asked about his plans to fire Chairman Jerome Powell, Fed Chairman Jerome Powell, said that there was no such intention to do so. And although he did say that this would be a good time to lower interest rates, listen in to what more he had to say.
None whatsoever. Never did. The press runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not. But it would be good timing. It could have taken place earlier. But no, I have no intention to fire him.
On that note, let's also listen in to the former RBI Governor Raghuram Rajan and what he has to say on Fed's independence and impact on the markets.
Don't think both what the Fed chairman said and what Mr. Trump said today suggest that the Fed is in any danger of having to cave to presidential power. So that seems like good news both for financial markets and for the United States. I think on the issue of what will the Fed do, I think Chair Powell made it very clear that it was really focused on its dual mandate, which is growth and inflation. Yes, if growth tanks, it will come to the rescue. That's part of its mandate. And yes, if inflation really goes up, it will keep rates at the appropriate level. The key question is what happens if both happen at the same time? Growth tanks and at the same time, inflation is persistent. And there the chair said, look, it really depends on which is more important, where we are further away from the target at that point, and we will focus on that. Here's an independent authority doing what they need to do on monetary policy. And if the economy slows down considerably, well, there's a finger he can point to at the Fed and say, well, they're partly responsible. I think if he, in a sense, takes responsibility for the Fed, which I think is going to be very, very hard, even if he does manage to find a way to fire Chairman Powell, which I think, again, is off the cards. But if that did happen, I think it would be a problem for the presidency because you own the entire economy at that point. There's no one to blame.
And moving on, Treasury Secretary Scott Bessent says that he expects there will be a de-escalation in President Donald Trump's trade war with China in the near future. CNBC's Iman Javers is getting us the latest updates and details on Scott Bessent's comments.
What the Treasury Secretary said was no one thinks the current status quo is sustainable at 145 and 125% in terms of the relationship with tariffs with China. He says, so I would posit that over the very near future, there will be de-escalation. And I think that should give the world, the markets, a sigh of relief. He also goes on to say, I do say China is going to be a slog in terms of the negotiations because that engagement started, I would not yet. But I think, again, neither side thinks the status quo is sustainable, but I've said quite a bit. So what Bessent is saying here is that neither the United States nor the Chinese side thinks that the trade relationship is sustainable between the two countries. And he also says here that he views this ultimately as an embargo between the two countries, that it's ultimately going to have to lead to some kind of negotiation. And he talks about the idea of rebalancing the two nations' trade relationship together. He says they have stifled the consumer economy and favored manufacturing. We want to increase manufacturing. The identity of that would be less consumption. And if somehow I could see a Ray Dalio essay on this like a big, beautiful rebalancing, if we walk out the door of negotiations and sign something in 2 or 3 years that looked like that, I would think that it's a huge win. And then the trade practices, the goal of that is not that hard a break. We want to stay engaged, but it's going to be more fair. So that's a summary, again, from a person who was in the room of exactly what the Treasury Secretary told that audience at the JP Morgan event yesterday.
And following Scott Bessent's comments, US President Donald Trump said that he won't play hardball with China on trade and that US tariff on China will be nowhere near the 145% his administration had previously discussed. Listen in to what more he had to say.
145% is very high. and it won't be that high. It's not going to be that high. It got up to there. We were talking about fentanyl, where, you know, various elements built it up to 145. No, it won't be anywhere near that high.
What level do you think it'll come down to if you haven't?
It'll come down substantially, but it won't be zero. It used to be zero. We were just destroyed. China was taking us for a ride, and just not going to happen. It's not going to happen. We're going to be very good to China, have a great relationship with President Xi, but they would make billions and billions and billions of dollars a year, and they would build their military out of the United States and what they made, so that won't happen. But they're going to do very well, and I think they're going to be happy, and I think we're going to live together very happily and ideally work together.
And moving on, let's talk about Tesla, because Tesla's disappointing run with earnings continued in the first 3 months of 2025. Earnings per shares came in well below what the street expectation was, while the net profit fell over 71% from last year in Jan to March quarter. Meanwhile, Tesla's CFO, Weber Taneja, in the earnings call has said that the company finds India a hard market. He says, and I quote, "We have been working on getting into India. India is a hard market. Any car which we send is subject to 70% tariff plus about a 30% luxury tax, which makes the car more expensive than what it already is." End of quote. And moving on, a Bloomberg report also suggests that India is looking at cutting tariffs on high-end motorcycles like those produced by Harley-Davidson to zero. There is also no certainty on whether this offer will be a part of the final US-India trade pact, something which depends on the tenor of the talks that go on. And moving on, former Indian ambassador to the United States, Meera Shankar, also commented on United States' intention with regards to trade with India. Listen to what she had to say.
It's not looking really, talks about reciprocal trade, but it's not looking at reciprocity in terms of trade. It's looking at pushing unilateral advantage. And that is something that India will have to consider very carefully, because in the process of trying to manage the Trump administration's shift in trade policy, I think India cannot open up sectors which are problematic, like agriculture across the board.
Okay, on that note, we're going to slip into a very short break for now. And after the break, we'll come back. The International Monetary Fund has actually cut the global growth targets following tariffs and trade uncertainties. Details on this after the break, so stay tuned in. Welcome back to Business Lunch on CNBC-TV18. Now, the International Monetary Fund has cut its global growth forecast for 2025 by 30 basis points to 2.8%, and this is due to the uncertainty created by Trump's tariffs. The IMF has downgraded the forecast for most major economies, including United States, China, as well as India. However, it expects India to be relatively stable thanks to the private consumption. Ritu Singh is joining in with us and giving us here right now more details in terms of the IMF outlook, what is there and what are the details. Ritu?
The IMF has downgraded its growth forecast for nearly all countries, citing a sharp escalation in trade tensions, which has triggered unprecedented policy uncertainty. Now, in response, it has presented a range of forecasts under different scenarios. Under the reference forecast, which is based on data up to the 4th of April, global growth is projected to fall steeply to 2.8% this year and 3% next year, marking a cumulative downgrade of 80 basis points from the January update and well below the historical average of 3.7%. The pre-April 2nd forecast pegs global growth at 3.2% for both years, while the post-April 9th model-based forecast aligns with the reference scenario largely. Now, for advanced economies, growth is seen at 1.4% this year, with a steep 90 basis point cut in the US forecast compared to the January update. Emerging markets and developing economies are projected to grow at 3.7% this year, which is also down 50 basis points from the previous estimate. Now, IMF has also cut India's FY26 growth outlook by 30 basis points to 6.2% and for FY27 by 20 basis points to 6.3%. But it says India's outlook is relatively more stable, supported by private consumption, particularly in rural areas, and the downgrade is on account of higher levels of trade tensions and global uncertainty. The IMF has also revised down its projection for global trade growth by 1.5 percentage points this year, with a slight recovery penciled in next year, while global inflation is expected to ease more gradually than earlier estimated. Now, IMF warns that downside risks dominate this outlook, from worsening trade frictions, financial volatility, to rising long-term interest rates, although upside possibilities include AI-led growth engine, next-gen trade agreements, and so on. And the IMF has called for urgent international cooperation to de-escalate trade tensions and safeguard global growth.
Thank you so much for that, Ritu. But moving on, and in an exclusive interview with CNBC, ECB's President Christine Lagarde commented on the initial shocks faced by Europe following the tariff imposition, the inflation trajectory of the EU bloc, and IMF's recent inflation and growth outlook as well. Listen in to what she had to say.
Tariff. Number two, important as well, is the whole defense momentum that is taking up in Europe, and which has led, in particular, Germany to increase significantly its commitment. And number three, and this is really a result of the tariff announcements and subsequent developments, structural reforms, which Europe had been talking about, which had been described in various reports, which Europe is now saying, okay, now it's time, and it's Europe's hour to actually do the things that have to be done. So it obviously has an impact. Some of it positive, some of it negative. I think on the growth front, sure, we've always said that it would be a lose-lose, and we're seeing it. Monetary policy decisions are driven by the economic circumstances that we face. And I think that all central bankers around the world are loyal to their mandate and observing the facts and analyzing the data as well as they can. This is what we've done in Europe. We have inflation coming down seriously. As I said, last reading 2.2%. Our projection for 25 is likely to be 2.1%. Inflation expectations are very anchored around the 2%, including in the medium term, and we have growth which is projected to be 0.98%, depending on whose projections you're looking at. The US is a different situation, and the impact of tariffs will be different on the two economies.
And in some corporate updates, OpenAI executives testify at Alphabet's antitrust trial in Washington, stating that the company would be interested in buying Google's Chrome if antitrust enforcers are successful in forcing the parent Alphabet to sell the popular web browser to restore competition in the search engine market. Remember, Google has not offered Chrome for sale, and Google breaking off Chrome was a remedy proposed by the US Department of Justice last year. However, the company is planning to appeal the same and the said ruling as well. Okay, and with that, we're absolutely out of time on this edition of Business Lunch on CNBC TV18, leaving the markets at 24,247 levels, up almost 0.3% in trade as well. But that's all the time. So thank you so much for tuning in. Up next, you have Midcap Radar to take you through all the market action.
The bulls are adamant that they would make it a magnificent 7 today, as the dip that we saw in the markets has been quickly bought into. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Patakia. With me, as always, is Vivek Iyer. Vivek, good afternoon. And the recovery has been very swift. And of course, there's been some recovery from the lows for the banking stocks as well.
That's right. Good afternoon, Hormaz. Broader end of the markets, there's been quite a sharp recovery. Trading hour, we started at 11. That time, most of the indices were in the red, and we were calling, that it was on par for course, where you would actually see markets going ahead and seeing a bit of a sell-off or a bit of profit booking at higher levels, but there's been a very sharp intraday recovery. We have quite a lot lined up on the show, a very interesting discussion as well on the solar power manufacturing industry and the components over there. So let's start off with the top headlines in today's show. Jittery trade as market is wary of US President Donald Trump's flip-flop on China tariffs and Fed's Jerome Powell. Key indices are off morning lows, have recovered intraday IT, autos and realty gain, but consumer durables, PSUs drag. Mid-caps relatively perform better.
Vari Energies has surged on the back of its fourth quarter results. The revenue is up 36% from a year ago, while margins have also expanded by over 800 basis points.
Niva Bupa Health Insurance gains after Motilal Oswal initiates coverage on the stock with a buy rating and a target of 100 rupees a share, implying an upside of nearly 30% from Tuesday's closing levels.
AU Small Finance Bank CEO Sanjay Agrawal says that collections against microloans in Karnataka improved to 98% in March from 95% in January, giving hope that the worst of the microfinance stress may be behind.
IT is the top sectoral gainer today. HCL Technologies climbs despite a soft and mostly inline quarter on the back of strong deal wins and an all-time high pipeline. Expectations of easing tariff tensions also fuel a rally in IT stocks. Well, as we've been mentioning, there's been significant buying emerging from the lower levels. We did see a sell-off in the morning, but that's been quickly bought into. Have a look at some of the NBFC names. Look at names like LT Finance, that particular stock now trading at the day's highest point, a strong recovery over there. AB Capital, another stock from the NBFC pack, yesterday got an in-composite license. That particular stock up higher by almost 1.5% at the day's highest point. Look at a name like Tata Motors, that particular stock recovering very sharply. Even a name like Sona Comstar or Sonar BLW, that particular stock doing very well in this session. Well, Hormaz has once again gone to the wall. This is our special segment, Mid-Cap Movers. Hormaz will take us through the mid-caps that are moving around in the session.
It's been a while since we had some losers on the screen, and today we do have some on the list, but we'll start off with the gainers nonetheless. As you can see, the dip that came in at around 11 o'clock, as Vivek was highlighting, got very swiftly bought into. And look at the movers here. Latent View around 9% higher among the top movers today. Niva Bupa has cooled off from the highs, but is still holding on to gains of around 6.5%. A positive brokerage initiation coming in on the stock today. Alembic Pharma is doing well for itself, as is Inox Wind, continuing to build on from yesterday's moves. There are a lot of earnings reactions. There are plenty of earnings awaited today, but there are enough and more stocks that are reacting to earnings. Vari has now extended its gains to almost 20%. Vardhaman Special Steel is already in a 20% circuit. AU Small Finance Bank opened lower, but after some positive management commentary is now at the highest point of the day. And Havells too, seeing some bit of recovery from the lows, but still 3% lower despite some strong results. Among the other movers in today's session include the IT names after HCL Tech's results, which has rubbed off particularly strongly on the mid-cap IT names. Look at the Newgens, the Persistence and the Coforges, 5.5% to 7% higher in today's session. Stocks doing well on the back of very strong volumes in today's session include the likes of Eris Life, Motilal Oswal's doing well. M&M Finance is another result reaction, but is down on strong volumes, and SBFC is doing well for itself, past 100 rupees now, 3.5% higher on strong volumes. And lastly, stocks that are bucking the trend today. Blue Star, a high flyer in recent times, seeing some profit booking, as is Voltas, as is Crompton. So these consumer durable names seeing some bit of profit booking today, as is JB Chemicals at the lowest point of the day, 4.5% lower in today's session, Vivek.
Thank you so much, Hormaz, and get back to your suite quickly because we are welcoming Jay Thakkar from ICICI Securities for a technical check on the market. I'm sure you'll pose a couple of questions to him. Jay, good afternoon. Thank you so much for joining us. Well, it does not appear as though the Nifty wants a breather. We saw a brief intraday dip, but once again, we are in the green.
Very good afternoon to you, Vivek, Hormaz. Well, see, I would say that overall the trend has definitely clearly shifted from down to up. Vivek, we have seen 6 straight days of positive close in Nifty, and today, if it closes, then positive again, then it would be 7 straight week. So far, we saw that it was more of BFSI which led the rally. Vivek, and definitely it contributes more than 40-45%, and which helped Nifty to bounce back from 21,750 until say 24,200. But today, what has happened is, with yesterday's reaction from the President Trump. As far as China is concerned, or probably the US Fed chairman is concerned, that has triggered the positive trend in the US markets, which is getting translated to the Asian markets as well. And finally, we saw Nifty breaking out about 24,200 as well, because that was technically a clear resistance out there. Secondly, we had seen a good amount of resistance there. But then Bank Nifty has reacted negatively. So the Bank Nifty IT ratio, which had reached to say 1.6, okay, that was last 3 years higher end of the range. That clearly seems to be indicating that from here on, we would see that kind of short covering coming in the Nifty IT because it's up by 4.5%. And we have maximum shorts out there in Nifty IT in the overall FNO basket, if you see viewing. So I think that now onwards, those stocks which have seen lot much of shorts, we'll see further short covering, which can fuel the Nifty move from 24,200 to say 24,800. So banking has played its role. Now it's other sectors wherein we have seen good amount of shorts will play their role for to make Nifty jump by another say 400 to 500 points from here on. Now the base seems to have shifted to 23,800, 24,000 range, which was earlier 23,500. So base has shifted higher, and I think this sectoral churning will happen, and Nifty will eventually continue moving higher. That's the trend set clearly. Now since IT, as I said, has got a lot amount of shorts, so I have a first recommendation from the IT pack. I mean, definitely Tech Mahindra has got good amount of shorts. So Tech Mahindra at current levels of 1435 can see the levels of 1480, 1500. One can place a stop loss below 1400 and go long on Tech Mahindra. And second, I think that the pharma stocks will also see some short covering. So the second buy recommendation of mine is on Lupin, Vivek. So Lupin is trading around the levels of 2088. It can inch towards the levels of 2200. One can place a stop loss of 2040 and go long on this. And my final pick would be on Ramco Cements, because overall cement pack I think is has had a good amount of long build-up, and Ramco is one of them, which is clearly showing good uptrend. So one can buy at these levels of 977. One can buy on dips as well towards say 960, placing a stop loss below 940 and eventually targeting 1040 to 1080. So cement, because they are long build-up, pharma and IT based on short covering is what I'm expecting in market.
All right, Jay, thank you so much for sparing time and joining us this afternoon with your views on the index and on specific stocks as well. Take a short break. On the other side, we'll be joined by Nikhil Nigania of Bernstein to discuss the US tariffs on Southeast Asian solar imports. Stay tuned, back on the other side.
Welcome back to Mid Cap Radar. Well, two stocks that have been in focus in the last couple of trading sessions have actually been Waaree Energies. Remember, the company also delivered its results, but there's also been a bigger story that's played out in the last couple of days. The other stock that we're discussing is actually Premier Energies. Nikhil, thank you so much for joining us. In the last couple of days, what we've actually done is we've highlighted the fact that there have been significant duties that are proposed to be imposed by the USA on Southeast Asian countries like Cambodia, Vietnam. You've been tracking this sector quite closely for quite some time, and in fact, you've also looked at quite a few global names. First up, what have you made of the likely imposition of the tariffs? In some cases as high as 3,400%. It's almost 35, 36 times tariffs. What does this mean for the US market? What does this mean for Indian exporters like Wari and Premier? Could you quantify and qualify this particular development for us?
Sure, Vivek. Thanks for having me on the show. So see, this development, if you see, it's been in the works for almost a year now. So what happens, US has a demand of solar modules of about 50 gigawatts a year. Right now, on the module manufacturing side, they have finally reached almost sufficient capacity. But till a year back, they did not even have that. On the cell manufacturing side, they still have about 12, 13 gigawatts equivalent of capacity against this big demand that they have. So they are heavily dependent on imports. And from imports, they were importing not from China, but primarily 70-80% of their imports were coming from Vietnam, Malaysia, Thailand, and Cambodia. And in most of these markets, it was usually Chinese companies who had set up base in those regions to export into the US market. Now, due to petitions filed by First Solar and other US-based companies, US government is investigating whether anti-dumping duty needs to be imposed on these geographies. And yesterday, the judgment moved forward, and the duties announced, as you said, were, very large. So on Cambodia, almost 3,400, 3,500% duties, and even on other of these three countries, Vietnam, Thailand, and Malaysia as well. So massive duties coming on them. So who gains from this? So the consequence of this, one is local manufacturing in US will rise substantially. There is already a lot of under construction solar cell and module manufacturing capacity in the US. And in the interim, while that local capacity comes up, markets outside these four countries, which is primarily Indonesia, Turkey, South Korea, and even India, to some extent, gains as they will see rise in export of solar cells into the US market. And to give you a sense of prices, so solar modules in US sell between 25 to 30 cents a watt. Whereas the Chinese modules globally sell at 9 cents a watt. So there is a big price arbitrage in exporting into the US market.
Nikhil, good afternoon. Thank you for joining in. Be that as it may, I have a counter question for you. That this might be beneficial in a way for these Indian companies. They may not have a significant export exposure in general, but the Trump administration itself is not very green energy friendly, be it solar, be it wind. They want to abandon every form of non-conventional energy and go back to conventional. So how does all of this fall into place in the long term? Because this uncertainty, this regulatory uncertainty will continue to persist.
So you're right. So in terms of focus from the US government side, they are more focused on gas turbine, gas-based generation rather than wind. But solar will continue to be a decent part of their incremental generation capacity. It's faster to commission, whereas gas turbines, there's a waiting time of 3 years in the US. So they will have to depend on solar generation. So almost 50 gigawatt a year, we don't see that number coming down a lot. So that demand in the US will be there. But the export opportunity, which is arising due to these events, we think will be a 1 to 2 year opportunity at best, because local supply in US will come in the meantime. So to your question, 50 gigawatt solar, we don't see that coming down in the US.
Got it. So Nikhil, 50 gigawatt is the current opportunity size. Now, currently, what is it that Indian companies like Wari, Premier, some of the other unlisted names too, what is it that they are able to garner? Post imposition of duties, do they become more competitive? And what kind of volume gains can the Indian companies actually go ahead and stand to benefit in case duties come into fruition?
So for a company like Wari, 20% of their business comes from exports and from a revenue standpoint. So we don't see that number of 20% change a lot. But the margins they make on that could be even better than what we envisaged. Due to this lower competition now coming from the Southeast Asian players. And in the overall basket for US, India would be, I think, about 5 to 10% of their imports on the solar side, module plus cell, would be from India.
So in that case, Nikhil, how does this entire Indian landscape shape up now? What do you foresee for companies like Premier and Vari? Is there a preference that you have among the two, and if so, why?
See, near-term earnings for both these players and the space in general will be very strong. In fact, Vari reported today the numbers were even stronger than what we envisaged. And their guidance for FY26 is almost 30% above consensus, not just us. So numbers near-term continue to be super strong for the space. But in the long term, the challenge we see is that this export story dies down in a year or two. And on the domestic market side also, there is a supply glut which comes as many players are setting up solar cell and module capacity, including much larger players like Reliance Industries, who in their annual report guided on 20 gigawatts of solar equipment manufacturing capacity by FY27.
Understood
so
that.
Strong near-term but long-term challenges. Yeah.
Nikhil, so strong near-term earnings is something that you expect the sector will enjoy. You've said that there could be intensified competition coming in as far as domestic manufacturing is concerned. So overall, how would you play this particular sector? We understand that you're quite cautious when it comes to both Vari as well as Premier. Would you change your stance in the near term, especially, Vari has guided for almost doubling, and if you look at the upper end of the guided band, EBITDA, they're looking to more than double as far as FY26 is concerned. Would you turn more positive on both of these names?
See, their earnings, as I said, will be better than what we envisaged for FY26 and maybe FY27 also to some extent. But still a long-term view is intact. I mean, any company I speak to on the renewable front is adding cell module manufacturing capacity. And there is only so much India can absorb of it. So beyond the 2 years, FY26-27 is where I see the challenge for this industry in general and where I see a supply glut. So hence, from a long-term perspective, we continue to be negative. And we believe if one has to play this theme, and if Vari and Premier valuations are correct where they are, there could be other proxies to play. So in our coverage, for example, we do have Renew Power, not listed in India, listed on NASDAQ. But the whole company is available for $2.5 billion, half the price of Premier, despite having more manufacturing capacity than them, despite having massive power generation capacity in renewables. And similarly, another company we don't cover, Tata Power. They have 2x the cell manufacturing capacity of Premier, and the whole company is available at something close to Vari right now.
All right, Nikhil, thank you so much for sparing time and joining us today, and hope to have you more often on this forum. That was Nikhil Nigania of Bernstein on this duty imposition by the US and the prospects for stocks like Premier and Vari. By the way, Vari is now up 18%. Building on to its earnings reaction, Premier Energies too, carrying on from where it left off in yesterday's trade, another 5.5% higher there as well. By the way, the Nifty is now up 100 points, recovering from the lows of the day. Take a short break, more on the markets and specific stocks on the other side. Stay tuned. Welcome back. 120 points higher now on the Nifty, continuing to recover from the lows of the day. What's at the highest point of the day is Persistent Systems, 6% higher now on the stock. Tech Mahindra, too, ahead of its results, is up 4.5% as well. But one earnings reaction is Vardhman Special Steels. That is up in a 20% upper circuit now. And despite reporting a subdued fourth quarter, but announced a 2,000 crore capex plan. Nigel is here to tell us more on that. Nigel.
Well, that's right. Vardhman Special Steel, that stock is up close to 20%. Remember, the stock saw a sharp correction from the recent peak. So there are two pieces of news out here. One is on results, which are not exciting. So let's run you through that. Revenues were a little bit lower. EBITDA number was much lower. It came in sub 40 crores. That compares with a number of close to around 57 crores. Margins came down to single digits and profitability as well took a hit. Even if you look at the unit economics, you had volumes that were up marginally, only around 3%. But the EBITDA per ton came down from around 10,000 rupees per ton all the way to around 7,000 rupees per ton. So the numbers, not exciting. Then why is the stock up 20%? The reason is they announced setting up a greenfield steel plant with a capacity of around 500,000 tons of billet production. And they said the total capex will be to the tune of around 2,000 crores. They said this will be funded by internal accruals, via capex, as well as some equity. Now, the street will be wondering about how they're going to do this, because remember, they have a big Japanese investor there, that has close to around 11% stake in the company. So will they participate in that equity issuance if they look to raise money via equity? Well, that seems to be one factor at play. This capacity, though, they say that will be commissioned in 2029, 2030. So results not very, very exciting. But on the capex, the street likes it very much. Takes the stock up to 20% upper circuit. Back to you.
Thank you so much, Nigel. Vardhman Special Steels locked at the upper circuit today. Well, moving on, AU Small Finance Bank shares rally on the back of their Q4 earnings. We caught up with AU Small Finance Bank CEO Sanjay Agarwal. He says collections against microloans in Karnataka improved to 98% in March from 95% in January, giving hope that the worst of the microfinance stress may be behind. Let's listen in.
From last 2 months, things have changed dramatically, in my opinion, and I would give credit to the regulator and, of course, the government itself, that the focus on growth is back. This year, our credit cost will help us more to build our ROA. So I expect a reduction in credit cost this year, and I'm saying because we are well prepared. So I would say March has given us hope, because in March month, the OD recovery there is around 98%, right, which was around 95 in the January month. And I'm not seeing many noises from that market now. So, and that is only a 10% of our book. So even we have counted that book in our current year planning, right? So I don't think Karnataka would play a spoil sport for us this year.
Well, the recovery playing out in the market is also synonymous with the recovery that we are seeing in the Dow futures. They were at now from 400 points. They have now extended their gains to 600 points now. So extending their gains from where they left off overnight. 600 points higher on the Dow futures. The European markets have also opened higher with very healthy gains. So all around, it bodes well for the Nifty, poised for a 7th straight day of gains. Right now 24,300 is where the index currently stands at, nearing the highest point of the day, that resistance point of around 24,350. Tomorrow also, of course, is going to be the expiry. So there are a lot of factors that you will have to keep an eye out for. Among some of the stocks that are moving, we highlighted mid-cap IT, but on the losing side, there are stocks like Muthoot Finance that have given up some gains today, 3.5% lower on that stock. Ola Electric also is down 3%. Havells continues to languish near the lowest point of the day as well, so 3% lower on Havells as well. We keep an eye out on all of these names. But with that, we call time on this edition of Midcap Radar. From Vivek, me and the team that put this show together, thank you so much for watching. Your stocks on the other side.
Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala, and thank you so much for tuning in. A good afternoon surely shaping up for the markets as well, because that recovery is what we're seeing coming in the market off the day's lowest point as of now. Look at it, 24,291, so almost coming back towards those 22,300 mark. Interesting to watch out for in the next hour and a half, where this market and recovery is also going to be. Will this sustain? But 0.5% of gain coming in for the Nifty 50. Mid cap, I want to pull that up as well, because mid cap is now trading with gains of almost 1%. So yes, that's something interesting to watch out for. Day's highest point for the Nifty mid cap. Small cap too has moved to the green territory as of now, holding on to gains of almost 0.1% in today's trading session. Nifty Bank, let's look at that and where that is right now as well, because that was also seeing something of a sharper fall coming in. A recovery seems like a slight bit of a recovery that has come in for the Nifty Bank as well. And IT continues to do well, led by HCL Tech, Coforge, obviously leading the charts for the Nifty IT. But that's how the market setup is looking like. But this is a show where we solve all your stock-related queries. And to solve all those queries today, we have our experts joining in with us. Ruchit Jain, Vice President of Equity Technical Research and Wealth Management at Motilal Oswal Financial Services, as well as Sharad Awasthi, Research Head at SMIFS, to answer all your stock-related queries. Good afternoon, gentlemen. Thank you so much for joining in with us. Let's get started with the queries for today. This first query we have is coming in from Tony Cherian, who's writing to us from New Delhi. He's holding 35 shares, and this is of Tata Motors at a price of 904 rupees per share. And there's one more stock he's holding, that is 28 shares of Titagar Rail, and this is at a price of 1,535 rupees per share. Wants to know what he should be doing as a long-term investor. Continue to hold both these stocks or get out of the stock? He's making a loss on Tata Motors right now as well. So wants to know the strategy for Tata Motors as well as Titagar Rail. Let me take this on the fundamentals first. And Sharad, what are you watching out for right now? And both these stocks, how are you placing them?
For Tata Motors, I think it's a decent bet at these valuations now, with the major issue that was around, the Trump administration coming up with tariffs, etc. I think now that is settling down, that maybe it's very hard for them to go ahead with the tariff structures that they had initially announced. So I think it will not be very negative, particularly for the JLR part of the business. The major restructuring, etc., that they had to do at JLR, that's already been done. The cost savings are showing up in the free cash flow generation that the company is doing. And going ahead, I think there is one new launch that has a lot of air around it. So most probably it will receive a very good response. Considering all that, I think, and since the major driver for Tata Motors numbers right now is JLR. So I think the JLR numbers would not be affected so badly as we were expecting it to be earlier. And in that case, I think next year earnings could easily be, anything between 70 to 75 rupees. I don't think it would be very difficult for them to get around 15 times. And the domestic passenger vehicle business and commercial vehicle business is doing good. Even the electric part of it has been doing good. So I think he should continue to hold, 70, 75 into 15. So maybe 950,000 would be the fair value for the stock to start with. And how the numbers shape up and how the business shape up, we can take it on from here. Titagar, I do not track.
Okay. Your view coming in on both these stocks, Ruchit, Titagar as well as Tata Motors?
Yeah, hi, very good afternoon. Well, I think Tata Motors, these are not the prices where one should look to exit the stock from the portfolio, although maybe holding in losses, because we have already seen a good price-wise corrective phase over the last few months in Tata Motors. And on the long-term charts, it has almost retraced by more than 50% of the previous uptrend. So I think the price-wise downside seems to be very limited from here on. We may see some time-wise correction or consolidation in the short term, but if he's a long-term investor, then I think he can expect a move towards 770, where the 200 MA for the stock is placed. So my advice would be to hold on Tata Motors at current levels. When the stock comes towards 770, that would be a good time to take a review again on the stock. And similar advice of holding Titagar Wagons, also Titagar Rail System would also be there. The stock is consolidating in a range, but if you look at the longer term charts, then this entire range of around 650 to 750 is its weekly 200 EMA. So here also the momentum readings on the weekly charts are a bit oversold and the stock is around its support. So can expect a pullback move in the near term towards 930, 950 kind of range. So these are not the levels where both the stocks should be exited. So I would recommend to have some more patience and continue to hold on the positions.
Okay, have some more patience, continue to hold the stock is the view coming in for both the stocks, Tata Motors as well as Titagarh Rail. But let's move on to the next query for today. We have Siva Subramanian, who's writing to us from Chennai. He's holding 50 shares of Central Bank at a price of 63 rupees per share, making a loss on this one, and 50 shares of Canara Bank. This is at a price of 114 rupees per share. Wants to know whether he should continue to hold this for another 6 months. Sharad, what's your view coming in for both these banks, Canara Bank as well as Central Bank? AU Small Finance Bank just yesterday during its earnings call mentioned about, those MFI issues. Maybe now seems like the worst is behind and let's hope for better days. At least that's the indication coming in there. But for both these banks, what are the views?
Yeah, I think I concur with that view that most probably the MFI as well as, the MSME part of the business, which would be more impactful for these banks. Also the likes of IndusInd Bank. I think the microfinance business is not so much there into the banks, but the MSME business is certainly there. So I think that improvement should boil down into improvement for these banks also. Yeah, asset quality improvement should be visible. First, let us take Central Bank. I think they have done a lot of improvement in terms of asset quality from 4.5% kind of net NPAs to less than 0.6% kind of net NPAs. But when I look at comparatives, I think maybe it's better off switching even Central Bank to Canara Bank. Because for Central Bank, I can't see much upside from current levels. It's already trading at around one-time price to book. Next year, a 4 rupee kind of a crescent to the book value. And historically, there have been times when the net NPAs, gross NPAs have gone beyond a particular level. So this time around, they seem pretty well poised. But the upside seems very limited. While on Canara Bank, I think it is trading at around 0.9, 0.8 times. Next year, the crescent could be another, 20 rupees kind of. So based on that, I think Canara Bank is a better story to hold on for targets of around 130, 135, even assuming, one-time price to book, 1.1 time price to book.
Okay, let's get the technical check on this as well then. Ruchit, Canara Bank as well as Central Bank, what's your view coming in? Because both these, at least Central Bank is down almost 25 to 30% in the last 6 months. Canara Bank also similarly is not doing much. It's not seen that much of a decline. But what is your view coming in for both these stocks?
So if you look at the Nifty PSU Bank Index first, then the index made a low of around 5,530 in the first week of March. Since then, in the April, we did see many sectors in the market were forming a new lows, but PSU Bank Index did not went towards the previous swing lows, and rather a high top, high bottom structure has been continued. So we believe that PSU Bank downside seems to be limited from here on, and we should see a decent run-up going ahead in the PSU banking space. But it would be very stock-specific rather than a broad-based rally within the banking PSU space. Canara Bank is still looking better because on the charts there is a start of a high top, high bottom structure. So I would suggest to continue to hold on Canara Bank. But Central Bank relatively is not showing that kind of outperformance which it should have shown in this pullback move of last 1.5 months. Rather, I would suggest to shift to some of the larger names within the PSU banks, such as maybe SBI is another good option, where recently the stock has given a breakout from an inverted head and shoulders pattern, which technically indicates a bottoming form. So from Central Bank, I would advise to shift to larger names such as SBI, and Canara Bank could be held on.
Okay, Canara Bank could be held on. That's a view coming in from both our experts. And Ruchit has mentioned, maybe you can look at something like an SBI instead of a Central Bank of India. Let's move on to the next query for today. We have Shankar Das, who's writing to us from Hyderabad. He's holding 200 shares of M&M. This is at an average price of 2,647 rupees per share, making some bit of a profit on this right now. Wants to know if he should continue to hold or book out his profits at current levels. Sharad, your view coming in for M&M?
Yeah, I think though the electric launch, particularly 6E and 9E launch has been very successful, and there are a slew of launches around the corner on those platforms. But I think at these valuations, I think the rest of the other companies within the four-wheeler pack look like much better valued than M&M. And considering the type of growth that we expect next year, more or less a flattish kind of earnings. So I believe very little expectation is built in. And it's already trading at what, 24, 25 times next year earnings. So but I don't think there is too much upside left on M&M unless and until you elongate the view. But even then, I don't consider it as a good bet. So I think it's better you take your profits out of M&M. And as you discussed earlier regarding Tata Motors, I think that's a good bet. Even a Hero MotoCorp on the two-wheeler side could be a good bet. If you want to stay in the four-wheeler space, I think switching from M&M to Tata Motors might be a good idea.
Okay, switching from M&M to Tata Motors, that's a view coming in from Sharad. Your view coming in on M&M, Ruchit, what do you say?
So the short-term momentum seems a bit positive for M&M based on the price volume action. The stock did form a low between 2450 to 2500, where a positive divergence with the RSI was seen. And if we take as a retracement of the recent corrections, then I think in the near term, at least we can see the stock moving towards 3050, 3100 kind of level. So for now, I would advise to continue to hold from a near-term perspective around 3050, 3100. You can take a review whether you should book profits over there.
Okay, keep an eye out on those levels over there for M&M. Let's move on then to the next query for today. This one is on Jindal Stainless. We have Prasad, who's writing to us from Trivandrum. He's holding 1,000 shares of Jindal Stainless, and this is at an average price of 658 rupees per share. He's ready to hold it for the long term, but wants to know, should he continue to hold or book his losses now and maybe look at some other stock in the sector otherwise? Sharad, your view for Jindal Stainless?
The company is going through an aggressive capex. I think going ahead also, the numbers for the next 2 years could be very promising. They have done some acquisitions as well, some international acquisitions as well. Though in terms of absolute valuations, maybe FY26 numbers, 45-50 kind of earnings, you might be fairly too squarely valued. But considering the high growth, which is absent in most metal stocks, I think this and JSW Steel both would have high growth. So Jindal Stainless would continue to get high growth. And considering that, I think, and since the market mood would remain favorable, there is a high probability, that this could trade at around 15, 18 times forward. Considering that, I think since you're talking long term, I'm considering FY27 numbers. So I think it trades at 18 to 20 times. You are looking at what, maybe 900 to 1,000 rupees. So if you are a long term investor, I think stay put. 900 to 1,000 could be something, but you understand that it's a metal stock, so cyclicality is a risk because the HRC is the major product. So I think that remains a problem. But otherwise, the way they are looking at developing, metallurgy, research and development in tie-up with various organizations. They acquired a company in Spain also, and they are also looking at developing products for defense and new avenues also. So I think it's a very interesting space. They are doing a lot of work around with the railways also, as stainless steel is used for Vande Bharat, etc. So I think they are doing a lot of innovative work. So they might command a better premium. So hold for targets of around 1,000 in around 18 to 24 months.
Okay, that's a view coming in there. An interesting play as of now, and a lot that they're working on is what Sharad has highlighted. But on the technicals, Ruchit, what is Jindal Stainless indicating? Last year, nothing much of a return that's come in, right? And the viewer has averaged out because they're saying average price of 658. It's still lower than that. One, for the long term, what is your target? And should they look to average more at these levels? Is that also a suggestion that could come in?
Well, along with the broader markets, the stock has seen a decent correction over the last 8 to 10 months, where the stock made high of around 840 and is now corrected towards 500, 550 range. If you look at a bit longer term charts, then 500, around 500, there's a good strong support base for the stock, which was not breached, at least till now in this recent corrective phase. So I think the price-wise correction has already been done. There could be some near-term time-wise correction since the stock is also trading below its 200-day exponential moving average. So for a few months, we can expect some sideways movement in the stock. But yes, the downside seems to be very limited from here on price-wise. And once it shows a breakout above 650, which is this 200 MA, then one can expect a level towards 760, 770, which are the previous swing highs. So I would recommend to continue to hold on for a bit mid to long-term perspective for potential targets around 750 to 770.
Okay, just a quick check coming in for Shriram Properties as well. We have our ticker team who's flashing at the bottom of your screen. You can see it, that they've acquired a land parcel in North Bangalore, and this is at a gross development value of near 200 crores. So keep an eye out on that one. The stock is buzzing in trade. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. After the break, we'll come back and solve more of your stock-related queries, so stay tuned in. Welcome back. Thanks for staying tuned into your stocks on CNBC-TV18. We still have our experts with us, Rujit Jain as well as Sharad Awasthi, to solve all your stock-related queries and answer them for us. Let's keep it going with the query. Next query is coming from Nimish Seth, who's writing to us from Gujarat. He's holding 15 shares of Bank of Baroda, and this is at a price of 240 rupees per share. Wants to know if he should continue to hold this or look to sell. So one more of those banks coming in there. Sharad, your view coming in today. It seems like a lot of banking names there.
Yeah, they finally seem to have come back in favor, particularly with the PSU banks. Yeah, I think the valuations are attractive even here. Again, something which is trading at 0.91 times price to book. Next year's accretion and this quarter's accretion after adjusting for dividend should add around 40 rupees, 45 rupees roughly to the book value. The advances are finally expanding. This quarter number should be good. Next quarter also could be very promising based on the tax cuts translating into consumer durable or retail purchases. So I think all in all it should be a very good quarter. Treasury should also start contributing next quarter. Part of the contribution we have seen in Q4. Part of the contribution from treasury gains should be visible in Q1 also. And this time probably Q1 might also abruptly show you some advances growth, which could be very promising. Generally, Q1 is a very slow quarter. So we are considering, 1.1 time price to book easily available to Bank of Baroda to start with. Optimum side could be 1.5 price to book. But considering even 1.1, I think 310, 320 would be your fair value first up on Bank of Baroda. So continue to hold with that target in mind.
Okay. And Bank of Baroda for you on the charts and technicals, Ruchit, is this also one of those banks where you have to switch out of it or continue to hold this?
No, I think one can continue to hold on because we have already spoken in detail about the entire sectoral view, which is positive. So I think the stock has potential to rally towards 280, 290 kind of range, which were the previous swing highs. So Bank of Baroda, SBI, Canara Bank, these are certain names which should do well going ahead.
Okay, that's a view coming in there. Continue to hold Bank of Baroda. Let's move on and switch gears now. We have a query coming in on LIC. We have Prithvish who's writing to us from Kerala. He's holding 30 shares of LIC. This is at a price of 800 rupees per share. So right now the stock is just trading almost near their buy price, not much of an uptick. But wants to know if he should continue to hold this, look to sell this one. LIC, your view coming in, Sharad, on this one. The insurance space, what is your overall sector view as well as specifically LIC? Is it a good bet here?
For the sector, I think we hold a very promising view. I think India is still very underpenetrated in terms of insurance. Even after the tax reliefs not being given in the new regime, I think even then the way insurance penetration needs to grow along with urbanization and rising per capita, there is humongous space to grow and for all the participants. LIC being the largest player, I think they'll continue to benefit out of it. I believe on an embedded value valuation, this is the cheapest stock within the insurance space. The private guys are trading at 3.5 times embedded value, while LIC trades at less than 1 times embedded value. Our base case assumption is that after this listing and better corporate governance, etc., there is a high probability that LIC will start trading in the long term, at 1.5 times embedded value. That gives you a target of somewhere around 1500, 1600. So this is one insurance counter which I'm very bullish on. It is our top bet. And then on the private side, some insurance companies maybe. But in terms of upside, I think LIC presents a good opportunity to invest at these valuations. A largest player, obviously, size advantage plays out. I think once operational issues are streamlined and a better, shareholder investor friendly face is put forward, there is high probability that the embedded value multiple goes up. And I think high probability you get 1.5, 1.6 times. So 1500, which is a very decent upside from current level. So continue to go.
Continue to hold. That's a view coming in for LIC from Sharad on the fundamentals. On the technicals, Ruchit, what's your view coming in? Because I think mid somewhere last year, July, August, there was a high and then we've seen that fall coming in again for LIC. So are these attractive levels maybe that the viewer should look to add more or just continue to hold and wait for their investments to go up now?
So yes, the price wise, the stock has corrected significantly along with the broader markets, and on the longer term charts, whatever charts are available, 700 is a good support base for the stock, and the recent swing low also coincides around 700, 720. So I think here, the downside seems to be limited, and we can expect a slow and gradual move towards 950 to 1000 mark. So at current levels, if we want, then you can look to average out and buy some more quantity, maybe around 950,000. If the stock comes around 1000 levels, we can take a review again.
Okay, keep an eye out on LIC over there for those levels. But let's move on to the next query. This is a query coming in from Pranav Mandal, who's writing to us from Mumbai. He's holding 20 shares of HDFC Bank at a price of 1,900 rupees per share. Wants to know whether he should continue to hold or look to sell this one. Sharad, your view coming in on HDFC Bank. Now, we spoke a lot about those PSU sites. This is a private one.
I think the same story again. The merger synergy should start showing now. After a long time, HDFC, even after being such a large entity, is targeting very aggressive growth rates. Once that starts showing in the numbers, I think there is a high probability that the price to book multiples get re-rated to the highs that it used to command earlier. Maybe not as much, but 3.5 to 4 times is easily possible. But even if we don't consider that re-rating and we consider that at 3.3 times price to book is a decent value, next year 100 rupee accretion should happen, 110 rupee. So I think your fair value should be somewhere around 2150, 2200. So continue to hold. I think this is a bank which is showing a lot of promise. And after every quarterly numbers, you might see much improvement. And a large entity, going for aggressive growth could translate into much better premiums at the market and price to book. If that happens, another 30% upside opens for you. So I think continue holding initially for targets of around 2150, 2200, and then we will review there on.
Okay, keep an eye out on those levels over there. Ruchit, your view coming in on HDFC Bank as well. What are your levels you're keeping an eye out on?
So we've already seen a long consolidation phase. If we look at a bit longer term charts, then since the month of August 2021 till this late December 2024, we have not seen any returns from the stock. So it was more of a time-wise corrective phase within a longer term uptrend. And the stock has recently given a breakout from that entire 3.5 years of consolidation. So that high top, high bottom structure has resumed, which indicates a resumption of the broader uptrend. Yes, the short-term momentum readings are overbought, so we might see some near-term pullback moves, but the mid-term charts are definitely very positive. So on the lower side, 1850, 1820 is a good support range for the stock. Hold on existing positions, and in case if you get any dip towards those levels, those would be good levels to take some fresh entry as well.
Okay, Ruchit, as well as Sharad, thank you so much for joining in with us today, because that was the last query. So thank you so much for solving all the stock-related doubts that our viewers have sent. And thank you so much, viewers, for tuning in to CNBC TV18. Up next, you have Closing Bell, so don't go anywhere.
beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Japanese index, whether you look at the Nikkei, whether you're looking at the ASX 200, all are managing to hold on to gains of more than 1% in today's trading session.
It'll come down substantially, but it won't be zero. None whatsoever. Never did. The press runs away with things. No, I have no intention of firing him.
India would, of course, be working with some of its closest allies to map out the information necessary to zero in on the perpetrators.
The upside level, of course, remains the same. It's a 61.8% retracement with a full fall, 24,546.
Yesterday, we came off the high point of the day. So I'd like to see the Nifty, get past that resistance level of around 24,350 or thereabouts.
0.6% on the Nifty, 0.4% on the Nifty Bank.
Because I figured that for long-term investment, who's buying and who's selling is really the most useless piece of information.
Direction is very clear that how can we make the credit available on ground without much of cost.
And it's the banking stocks that led the index higher and now are leading the breather as well. The DGCA has appealed to airlines to increase the number of flights to Srinagar.
Significant buying emerging from the lower levels. We did see a sell-off in the morning, but that's been quickly bought into.
Good afternoon, hello and welcome. You are with us on Closing Bell. We are coming to you, of course, from the CNBC-TV18 Motilal Oswal studios. And it's been a good day. I'm Surbhi Upadhyay and Nigel with me right here in the studios this afternoon. Rima will join in just a bit. But why do I say it's a good day? Because after being quiet for most part of the session, now the market is picking up some momentum. It's seeing some buying, and this is despite the fact that banks are still negative. The Bank Nifty is still down, but other parts of the market, IT was always leading, but now other stocks are also seeing some buying. So look at that Nifty chart. It's looking very, very smart indeed at this point in time. That's IT. Let's get back to the Nifty chart. That recovery is looking very smart. Hi, Nigel. What do you think? We'll perhaps see higher levels before we close next 1 hour?
Well, since the IPL fever is underway, the way I'll term this is there was a batsman that was in top form. And today that batsman decided, well, I'll just hold one end up, which is the Nifty Bank. That's not doing much. But the one that was out of form said, let me hit my way out of form. And in fact, that's the IT index. Just take a look at the way those stocks are gaining. And we made this point right earlier today, that if I have to track one sector for today, it'll be the tech index, which is what I said in the morning chat. Nasdaq bounced back overnight. HCL Tech wasn't too bad. You don't want negatives, right? These stocks have pulled back so much. So any kind of in-line to mildly positive guidance, well, the street likes it. HCL Tech up close to around 8%. And the mid-cap names, whether you look at Persistence or the other names, all of them are rallying, and solid rallies is what we're seeing on very, very large volume. So you like the look of the screen, Surbhi. The Nifty Bank, I think that 56,000 odd mark, that's the next level that you'll want to track. If the Nifty Bank can get past that, that's what starts the next leg of the rally for the Nifty Bank. For the time being, the other heavyweights are doing the heavy lifting.
Absolutely. And some of these mid-cap IT plays are looking so smart now. KPIT Tech, 5.5%. Coforge is up 6%. Persistent, like we've been telling you, 5.5% as well. Anything, Nugent Software, smaller names, 6-7% up on mid-cap IT stocks as well. And those, of course, are large caps, having an excellent afternoon. But beyond IT, just to talk about the mid-cap market overall, look at the mid-cap index. Now let's pull up the mid-cap index, because there was a small point in time in the first half when the index had turned negative. Yeah, that's what I'm talking about, around 11:30 or so. And since then, the recovery has been absolutely dreamlike. So what's fueling it? A lot of independent sort of individual stocks. We'll talk about many of them. Wari, of course, is one of the stocks of the day. 14-15% on the higher side. We've named, of course, mid-cap IT already, which is up and about. But AU Small Finance Bank, for instance, on the results looking pretty good. Aurobindo, because of a US FDA clearance coming through. So earnings, individual news flow, enough to keep the market excited this afternoon.
Well, that's right. And Surbhi, though the broader markets is looking like it's even Stevens, but a lot of stocks that actually got slammed, they are pulling back. Just to pull out a few, we have DCS Systems. The stock had fallen, I think, from around 400 rupees all the way to around 200 rupees in that correction. They'd raised QIP money as well in excess, I think, of around 270 rupees. And now that stock in the last few trading sessions, the last 1 month, it's up close to around 20%. Just pulling it up because the kind of volume spike we've seen on that name as well at the high point of the day. Well, let's get in Mitesh Thakkar on the show. Mitesh, it's a good trading session. You buy the dip, you make money. What would you do right now? The Nifty Bank, I think, we're making this point yesterday as well. It went to 55,900. Today as well, it went closer to the 56,000 odd mark. There seems to be some resistance at those levels. How do you read it?
Yeah. So I think, what you're saying is correct. The Nifty Bank has hit all-time highs and extremely overbought because I think as you were rightly pointing out, it was batting on the front foot. It was leading and it was really outperforming the Nifty index. So I think next couple of days you might see Nifty Bank slightly subdued and the performances, gets back to normal levels and the Nifty could do well. But in both the indices, the trend is on the upside. And both the indices, in fact, Nifty Bank is slightly more on the overbought side in the hourly and 2 hourly chart. So you might see a couple of days of, these activities when you get those intraday dips to buy into. But overall, I think this market remains positively biased and therefore buy on declines is what I would suggest. On the stock side, it's the Nifty Healthcare and Pharma Index, which is looking good. So I have a buy on Lupin. I need to see the stock get past 2100. I think it made a high of 2104. So buy about 2100 here. Keep the stop at 2070. Look for targets of 2180. And the other one which I like is Torrent Pharma. Slightly, not the most of the liquid stocks in the F&O segment, but I think the stock pattern is quite positive. So buy here with the stop at about 3275 for targets of 400 plus.
Okay, all right. Mitesh, I wanted to ask you about Axis Bank. That's the one that comes out with a set of numbers tomorrow, I think. The stock pulled back a little bit, but from the lows, it's seen a bit of a bounce. Need to note that the stock is trading above all technical averages. What do you make of it at around this 1210 odd mark?
See, Axis Bank, is something which has slightly underperformed if you look at the charts of Axis Bank versus Kotak Bank, HDFC Bank, or even ICICI Bank. But the overall setup is and the structure is positive. Again, the stock has seen a rally from 1040 to about 1240. If you get an entry around 1170, 1160 zones, I think I would be an aggressive buyer over there. Keep a stop below 1135, and I think the stock should get past 1220 and head towards levels of around 1275.
Okay, all right, got that. Mitesh, thanks very much. Mitesh, just before we let you go, specifically on this huge IT surge that we are seeing, right? Large cap, mid cap, anything with IT is simply going on an uptrend today. Would you buy into this strength? Any trades specifically on maybe some of the mid cap names as well?
Disclaimer: we have some positions in IT, which is Tech Mahindra and Warsaw. And I think the entire IT pack looks like, if not starting a very strong uptrend, it's at least starting a move which is counter-trend to the big decline which the IT stocks have gone through. I have had buy calls on OFSS and other stocks as well. So I think the structure in the short term is positive. Next few days, few weeks, IT could do well.
Okay. All right. Got it, Mitesh. Thank you very much for that. We'll come back to you with some more questions in a bit. We have Prakash Diwan joining us on the show this afternoon. Prakash, great to have you on as always. So IT, I think trading in and out of IT stocks is almost like one of your Goa casinos, right? You have to guess first what the tweet will be, whether it's Scott Bessent or whether it's Donald Trump, and then you decide your positioning. But anyway, the momentum seems to be coming back. What would your sense be? What would you do? Buying anything?
Good afternoon, Surbhi. So I don't know whether, this is like very similar to the casino allegory that you had. But one thing is for sure, that the volatility in the market is giving ample opportunities in beaten down sectors or stocks, and the kind of revival that we've seen has been fairly sharp and rewarding. The news flow is responsible for it, whereas I don't think the numbers have given any kind of conviction that things will start looking up. It's just that, this expectation of the stress between US and China on the trade side getting a bit, mitigated. is probably giving some sort of a hope. But I think we are celebrating it a bit too early. There's nothing concrete yet on the table. It's just an intent that's been kind of articulated by certain quarters of the US administration. And on the basis of that, there's this hope that's coming through. And what happened to banks is probably happening to IT. They were under-owned. There's some of them have very good dividend yields attached to it. So, there's a lot of money that's finding its way in these beaten down names. But I haven't seen anything which gives you the conviction that fundamentally there is a change in their revenue or growth trajectory. So let's wait for that. Not buying anything as yet for sure. And if you want to participate in momentum, then of course you'll have to use more technical know-how and factors, not just fundamentals in this case.
Okay, all right, got that, Prakash. Well, let's focus on Lupin. It's trading higher. The company is set to launch a generic drug in the US market. Vinny's on top of this. She joins in to explain the news and its impact. Vinny?
Hi Nigel, good afternoon. So yes, what we're expecting from Lupin is today overnight in 23rd April in US timeline, Lupin is expected to get an approval that is coming in from US FDA on 23rd of April because the exclusivity of Otsuka, which is the innovator of the drug that is called Jynarque, is going to be happening tonight and today. So that is what we're keeping an eye out on. And with this, what will happen, Lupin will get an approval that comes in from the US FDA for the generic version of this drug, that is Tolvaptan, I beg your pardon, Tolvaptan. So this generic drug is what they will be expected to launch in the next few days. That's the announcement that analysts are expecting. So approval coming, and then there is an announcement that is expected for the launch as well. That could be likely soon coming in for the company. Now, once this launch happens, it's going to be a 180-day exclusivity which Lupin will get. So that is a benefit that they have over there versus other generic players. Other than that, FY26 analysts are anticipating a revenue opportunity of around $150 to $200 million. And this drug could contribute almost 25% plus for Lupin in FY26. So very big opportunity that comes in for Lupin after this approval. And do not forget, there's a tentative approval which they're already received somewhere around in October 2023. And launch now is something that everyone is keeping an eye out on after this final approval. And that is why Lupin will be a key focus area today, today as well as in tomorrow's trading session.
Got it. Okay, all right. Thanks a lot for that, Vinny. Prakash, another one. We don't know what Trump's going to announce tonight, but Lupin is clearly a stock in focus, as Vinny explained to us. Your view on the counter?
No, so it's quite positive for two reasons, Nigel. One is the entire pharma pack seems to have been experiencing some sort of a lid that's been capped on it, given this overhang on what potentially could come through. But remember, the way the US FDA has gone about in the last year and a half in terms of according approvals for important, very critical drugs that the US consumes. And then that includes a lot of these generics which have been going off patent. And there's a lot of rotation that's happening. So in the case of Lupin also, as you saw, the window shuts on one and the door opens to the other. So there's always a rotation that you see. But remember what happened to a company like Natco. And if something was against your expectations and against your favor, it drastically kind of impacts what you could gain in terms of revenues. Lupin is out of the woods for sure. We've seen it move from the 700 zones to 2,000 plus in the last, let's say, 18 months or so. It's done so well. I think it's at a far more better spot than what it used to be. And I would still back it up in terms of organic growth leading the way. And this 25-30% kind of revenue growth in the next 12-18 months could possibly happen because these are high margin businesses, products that they could benefit from. So quite positive on the space. But as I said last time, it's just a matter of a couple of days. You'll be getting some clarity. It's better to buy into these things with some clarity rather than get beaten down if something goes wrong and then kind of hope that it gets corrected. So that's my call on pharma, but otherwise quite positive that things will probably look up even for this space. It's not participated in this recovery in the last 45 days. You'll probably see that happen once the tariff issue is out of the way.
Prakash, hi, afternoon. You had a look at Ather's RHP. It will be the second pure play EV maker to get listed on the Lal Street. but investors sort of have burned their fingers in the ecosystem, whether it's with Blue Smart and the mess there, or Ola Electric, which is now down 67% from its 52-week high. Had a look at Ather, and what could be the kind of, what's the advice? Should one be looking at subscribing to this issue?
So, Rima, I would first and foremost be very clear that I would not compare it with Ola for two reasons. Ather has been into the market much earlier. They've been moving up the learning curve in a much more decisive, definitive way than what Ola did. Ola seemed to be in a hurry to come into the market, to kind of start launching and expanding. Ather's the product lines, and I've tried that out, is far more superior. It's priced differently in a band which is not meant for let's say the mass commute kind of a market. And the technology that they've kind of evolved, and they've rapidly changed their models also. They just have a couple of models that they actually sell, but then those have evolved in a very significant way, very superior way. My sense is, and Blue Smart was a different issue. It was more of the application of EVs in the public transportation side is a very complex business. It's going to be extremely difficult for people to make money given the dynamics. But owning a two-wheeler will continue to be making sense for a lot of Indians. And as the charging infrastructure becomes much more democratized, I don't see any reason why superior EV two-wheelers will do well. So will not do well. So from that perspective, if you look at this whole thing, and it's a fairly large float, this is probably an IPO where you could apply, subscribe to it, you'll get allotments, and you'll do well also organically the next couple of years. So I definitely like it. It's absolutely not to be seen in the same vein as Ola. That was a very different story, and I was very clear that I would not put money into the Ola IPO. But this is definitely high quality, and it comes with a lot of proven track record as compared to what you have available in other ways. I mean, it's probably the only tested, tried EV two-wheeler play that you'll probably be able to buy. So there will be a lot of money that will come in. I don't know about how it performs post-IPO and just for the listing pop that people would want. But this is not an environment for listing pops to be sought. I would believe if you want to buy and hold on to it for a longer period of time, it makes the cut.
Okay. All right. So don't paint it with the same brush as the Ola experience. Look at the fundamentals and then decide. And Prakash seems to have a favorable view on it, on Ather, that is. Prakash, just give us a second. I want to talk about Havells, actually. Let's pull up the stock. Havells has been sulking all day. It opened down. It's still down about 3% lower. And this despite the fact that if you look at it on the face of it, those numbers look really good. Top line growth 20%. Their margins did not fall. They were expected to dip, but they only fell about some 10 basis points or so. And the cable and wires division and Lloyds as well, all those divisions have done really well, but the stock is still down. We caught up with the management to get their sense on the business trajectory. Let's listen in and then ask Prakash what he thinks of Havells.
I would say, we are, you talked about the newer competition coming in. This industry is a very large part of the electrical industry, and I think it is still has fairly good share of the unorganized and the non-branded sector. So newer brands, better quality brands, hopefully should actually consolidate market shares from the unorganized sector. So overall, I think it might not be a bad thing for the industry. I think this was one quarter where we actually saw growth coming back in the rural and semi-urban sector as well. The urban had been doing better in the first half of the year. The rural was impacted. It's coming back. Maybe some impact of the budget changes as well as the RBI relaxations. Hopefully that should augur well for the coming times. I think if we see overall, there is a movement more towards the premium, and maybe that is also a strategy of the company. But that is there we see a movement more towards the premium products as well. If you take fans, it is more towards energy saving products. If you take switchgear segment, it is more towards automation and electronics. So there is a movement towards premium segment overall.
So no problems with respect to demand, not to worry about competition. That's the takeaway from Havells. Prakash, what do you think is affecting the stock? Is it valuations? Is it the slight pullback that we've seen? And what would your advice be on it?
So, first and foremost, remember the entire re-rating of this sector, given the new entrants and some of the large heavyweights throwing their towel in the ring in terms of wanting to expand the cables and wires business. This is definitely competitive intensity at its best. The second thing that's likely to happen is that all these, the market, what the market is more worried about, apart from the fact that everything else seemed nice. In fact, Lloyd's, which was a little bit of a issue, is seemingly digested and completely sorted. So, there's no more any impairment that would come through and, which would hit you with a surprise. And things look much better on the balance sheet as well. But what's probably worrying the market, in my view, is the fact that there could be a lot of dumping that some of these appliances and some of these FMEG, as they're called, could be faced. And Havells has invested a lot into brand building, distribution, and all of that. So if that were to happen, if China finds its way to kind of get these things into the market, and we yet don't have too much of ring fencing on anti-dumping duty and all of those types yet in this space, you could be facing some sort of a growth issue here. Though the market is growing, consumption is growing, you may not have market share growth for some of these larger players. And then the ROIC and ROCs start kind of getting to be a bit diluted. So that's the concern. But otherwise, I think the numbers tell you a very different story. Things have been good in the last quarter, which was otherwise not expected. But even post-festival season, they've managed to do it. And things could kind of normalize. But you'll have to live with that uncertainty or that risk of China dumping some of these goods into the Indian market, flooding the Indian market, for all you know, with low price points and, which start kind of becoming difficult to counter. So that's where the concern is. But otherwise, I don't see so much issue. The recommendation is to wait, of course, not to buy into it just because, it's down 20% today or whatever. But not 20%, sorry, it's down 3-4% today. But it's something which you'll have to, assess only after, the impact of tariffs is digested and felt in the market.
Okay, all right. Prakash, thanks a lot for stopping by, filling us in with your take on a lot of those counters. For the time being, we take a small break, come back. Rajesh Bhatia of ITI AMC is waiting for us on the other side.
Welcome back. You're with us on Closing Bell, and the market has managed to find some, buzz, interest, momentum, call it what you want, because the Nifty is looking much, much better now versus that intraday dip, the early morning dip that we had. Rajesh Bhatia is our next guest on the show. He is CIO at ITI AMC. Rajesh, always a pleasure to have you on. So it's been a rocket, right? I mean, a couple of months of consolidation and then all gloom and doom thanks to Mr. Trump. But once the recovery happened, it's just been a one-way up move. What do you expect ahead? I mean, do you expect more momentum, or do you think at some point we'll consolidate?
Yeah, so it'll be volatile times, isn't it? But, here's what I think has happened. One, I think the world has decided to move out of dollar assets. The world is moving out of US equities and fixed income. And you can see the pressure on the dollar as well. Now they're finding a home for all of this money that is kind of moving away from the United States. In their wisdom, the markets have decided India is a fairly good place to park that money, right? India has very good macros. We don't have a current account challenge. Capital account, well, the money from the foreigners is certainly helping. We have a very disciplined fiscal deficit. We have brought it down very responsibly from 9% post-COVID to 4.4% now. So again, that's a very stable macro, and that makes us our fragility much, much lower. The world thinks that India will definitely benefit from a bilateral trade agreement. A lot of the Asia, Far East Asia, will get clubbed with China as far as negotiations with Mr. Trump is concerned. So stable macro, good bilateral trade agreement, all of that means money finding exits from dollar to Indian assets. So FIs have really been kind of charging in and putting and deploying that money. For the moment, anyway, our local money, I know that from April, at least the mutual funds also have gotten inflows, which are strong. So from the supply side or demand side of equity, that equation holds very, very good. Now, what it does is the liquidity comes into the system. And of course, the first thing it helps is banks, because it'll help your deposit rate, it'll help your lending growth rate, because liquidity gets into the system. Clearly, banks have been a marked outperformer. And in fact, if you look at telecom and banking, if you take that away, a lot of the other sectors are still bleeding quite heavily, whether it is media, metals, IT, real estate, consumer, they're probably down anywhere between 12 to 25%. So it's only banking and telecom which are probably hitting new highs. And that is really what I think has happened.
Hi, Rajesh. Good afternoon. Good to see you, Ben. Let's talk about one of the sectors of the day. I don't know, what's your take on the renewable space? That space got a lot of interest. Then suddenly it was shunned away. Stocks fell, 30, 40, 50% as well. But a couple of them, like Vari Energies, the last few trading sessions, it's moved swiftly from 2,000 to 3,000 rupees. We need to keep in mind as well that the lock-in will open in the next 2 days, for those that were stuck in that 6-month lock-in. So we'll have to see how the price behaves after that. But for the time being, when they are guiding for EBITDA growth of close to 60% in the next year in comparison to this year, what do you think of the space? Some say that maybe the sun is still not, set on some of these solar companies. How are you all placed?
No, unfortunately, at least as far as I am concerned as a fund manager, I'm not playing these opportunities. On the power side, I'm more focused on the utilities business. So unfortunately, I don't have a very strong view on where this is. Of course, I can just give you some numbers. Globally, the demand for solar is about 500 gigawatt. The capacity with China alone is 1,000 plus gigawatt, which is going to go to 1,800 gigawatt. So let me put that in context again. The global demand for solar is 500 gigawatt. China alone will have a capacity of 1,800 gigawatt. So, but having said that, I don't have a strong view on the companies that you just mentioned.
What's played out for some of these companies is that yesterday there were those duties that the US has imposed on a lot of other countries. So the street believes that it could be a potential beneficiary could be India. We'll have to see how that plays out. And then Vari obviously delivered good set of numbers. Let's keep that aside.
Nigel, in that context, I would say the electronic manufacturing services is a much better, at least as far as I'm concerned, is a better play for that China plus one story.
The EMS plays, right?
Yeah.
In fact, we had the management this morning of Cyan DLM, and I asked them that What's the reaction to Trump's tariffs? Are the customers taking a lot of time, or is the phone ringing non-stop because a lot of those customers want to know who's the other alternate besides China? Let's see how that plays out. But you like that theme, so that's good to hear. Let's focus on tech as well. That's got slammed, right? Another sector of the day. HCL Tech, they gave a fairly decent guidance. A couple of sell-side notes believe that maybe they're going to find it difficult to achieve that. We'll see how that goes. But the stock is up close to 7%. The Nasdaq was up overnight. And some of these stocks have come to those valuations we've seen, say, on a 10-year average. Your take, good quality companies, some uncertainty in the near term. But the problem is there may not be too much growth, at least for this fiscal.
So my sense is that, this is a sector which has been really slammed. As you point out, now the large cap companies are quoting at 21 times earnings, 4 to 5% dividend yield. That's really, really juicy as far as these companies are concerned, because these are not very cyclical companies and they have very, very high free cash flow. So given that context, the valuations certainly appear quite attractive. Having said that, they have got slammed because there is really concern that US is going into some kind of a recession, if not a deep recession. So earnings are getting cut in the S&P, as you speak. And therefore, this sector has been really the sector which has borne the brunt. What has helped today is, apart from the results, I think it's more a macro play. The fact that the President of the United States has said that they will not bother with the Fed, etc., which would have been a very drastic, or I would say a suicidal move, has certainly helped sentiment. Dow has gone up, and that has also helped some of that rub off on the IT stocks in India. But I think as you move forward, it is still dependent on, so it's a good tactical trade. We don't know what the eventual outcome on the United States is. If there is a deep recession, eventually, then my sense is that these stocks will not necessarily do as well. But for the moment, my sense is, given what the change that the Scott Bessent and Trump has suggested, that these tariffs with China will not last long and they will not fire the Fed, etc., certainly has helped the momentum.
Rajesh, you spoke about how telecom is hitting fresh highs. The kind of rally that we've seen in Bharti Airtel, 40%, CAGR over the last 3 years. It's quite incredible, especially when you juxtapose it with what, say, Reliance Industries is doing. Reliance Industries is languishing. So explain to us, are some of these telecom stocks pricing in a blue sky kind of a scenario, or is there more upside to go after this kind of an up move in the large cap names?
So I don't know too many industries where you get such an oligopolistic structure, which is also a B2C business. There is an oligopolistic structure, which is two-player market in airlines, but airlines is a very cyclical business. Here is a oligopolistic structure where it's a B2C business and less cyclical. And I think the industry has been guiding that the 120 rupee ARPU will move to 200, then eventually move to 300. They have passed that journey from 120 seamlessly, right, to 200 rupees or plus ARPU. That incremental 200 to 300 rupee ARPU journey is yet to be made. And by the way, this is a very high operating and financial leverage business. 60 to 70% of the top line growth falls to the bottom line. And the 5G capital expenditure is also done. And I would say, if you are a premium player with sticky customers, that certainly helps. So my sense is, even as you move forward, the ARPU journey has yet to kind of happen. And like I said, it's a very high operating and financial leverage business, which means a lot of the top line growth will fall to the bottom line. So the story is still kind of intact as you move forward.
Okay, all right. Rajesh, we'll leave it on that note for today. Thank you very much for joining in. Great getting that perspective from you. Well, as we take a quick break, let's just quickly revisit the biggest and, of course, a very, very tragic national story that we are following. At least 26 civilians, including 2 foreigners, have been killed in a terror attack in Pahalgam in Jammu and Kashmir last evening. The Pakistan-based Resistance Front has claimed responsibility for this attack, which was the deadliest in the region since the 2019 Pulwama attacks. Following these attacks, Prime Minister Modi cut short his visit to Saudi Arabia to come back to India. The Cabinet Committee on Security is all set to meet this evening to decide on the next course of action. Meanwhile, Home Minister Amit Shah reached Srinagar after the attacks to take stock of the situation and paid respect to those who lost their lives. He also visited the site of the terror attack earlier today. Ishan Vani gets us more from Pahalgam.
This is the route to Baisaran, and this is actually no route at all. It's muddy, there are big boulders, and it's difficult to even walk on these. Even if I wore a normal shoes, it would be impossible to come here. It's muddy, look at the water that's flowing, and this is how difficult it would have been to bring down any injured or any survivors or those who were there at that time. You know, possibly the cells dropped by one of those tourists who came here. There are water bottles, there are shoes everywhere. Wherever you look, they have ran into panic because there were massive firing that took place, not less than a massacre. Whoever came in their way, they shot and killed them. Where is the road? Imagine how difficult. For at least 3-4 kilometers, they went up and down to go to that place. And beauty of this place might mesmerize you, but yesterday's visuals are scary. Scariest to understand that what happened here. Generally, tourists take pony and come here for leisure, but everywhere you look, there are marks and signs of the disaster that happened yesterday and something which was unexpected. Look how I have to walk through these steep and jump into certain places. There were rains that have further dampened the condition of this particular route. It's a trek generally taken by several tourists. They use ponies, as I said. It might be beautiful, but scariest of scenes were witnessed yesterday here on this difficult terrain to reach where the carnage took place yesterday, where 26 tourists were killed and more than a dozen injured when they opened indiscriminate fire at them. With Bashir Lone in Baisaran, Nishanwani for CNN News 18.
Well, that is the unfortunate and tragic news that's coming out. We need to slip into a break on that note. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you a few BTST calls.
Well, a bit of a surge is what we're seeing again in the last few minutes, and the Nifty now is moving back towards the high point of the day, the 24,350 mark. That's a bit of a resistance zone, but a couple of stocks actually have seen a good recovery. You have Ultratech, that's recovered from the low point of the day. ONGC as well, saw a sharp correction earlier when crude oil prices went down, but that's fighting back as we speak. And I think, Nestle as well has now moved to the high point of the day. So keep an eye out on a few of these names. But it's around 3 p.m. and before market closes, let's go across to Nimesh to tell us how is he reading today's market action. Nimesh, what are the flows like?
Hi, Nigel. Before the flows, a very impressive intraday recovery from the day's low. Largely, it's led by technology, but from a flow perspective, there was a selling in the first half that got absorbed, and now we have an MOC basket buying as well at a leading FI desk. The MOC flows are typically been executed in the last 30 minutes of trade. So maybe that explains that after 3 p.m. we're seeing a bit of a surge in many stocks in today's trade. So that's from a flow perspective. As I said, there is clear shift in today's trade, at least flows from banking to IT. So that's playing out. The IT index is up for more than 4%. A lot of individual stocks have gained between 3 to 8%, 10% as well. So clearly IT is a flavor of the day. But beyond IT, in a couple of sectors which deserves mention. One is real estate, and second is the export-oriented, export-facing stocks. Those are the ones who are seeing a bit of buying interest back. Remember, these stocks have underperformed in the recent past, and now you're seeing a bit of interest back from larger institutions. So clearly flows are shifting there, but I guess the big sectoral shift seems to be from banks to IT in today's market.
Got that. You can see that in the price action. The Nifty IT index is now up 1,500 points. Nimesh, what about individual stocks?
So in terms of individual names, the first stock on my list is Dixon Technologies. You've seen a bit of an up move in that stock in the last few days. But here at these levels, some bit of profit booking has crept in. I understand some domestic mutual funds and a leading AIF seems to be booking profit at these levels in Dixon Technologies. So that's the first stock. The second stock is ONGC. Again, a bit of an anti-consensus buy, so to speak. But I understand a leading family office and some large HNIs have been aggressively buying into ONGC in the last few days. So that's the second name. Third, couple of stocks where there is delivery-based buying, Adani Ports and Geo Finance. Both are seeing delivery-based buying today, so expect high delivery volumes. And for Geo Finance, I understand yesterday there was a large volumes. I guess there was a clean-out trade as well. And after that, you're seeing an up move in Geo Finance as well. So that's a couple of stocks. Last, where there is a bit of delivery-based selling in today's market, Yes Bank and Canara Bank. Canara Bank actually moved yesterday, but today there is delivery-based selling in both Yes Bank and Canara Bank within the banking name. So those stood out for me as far as delivery-based selling is concerned.
Okay. All right. Got it. Nimesh, thank you very much for that. So lots of buzz and chatter as always. By the way, guys, I was just looking at US futures. They're looking super, super strong at this point in time. Let's remember that our pullback and our recovery is in the global context because Asian markets have done very well today. The Hong Kong market is up about 2.5%. Europe is positive. And right now, the futures, S&P futures are up a whole 100 odd points. It's a 2% rally. NASDAQ futures are up 450 points right now. So let's see. Perhaps this is helping sentiment.
I think the market has to react right over there to what Mr. Trump said. He's not going to fire Powell.
Correct.
So I think that's
a relief
one.
rally.
Yeah, and I think Tesla's, the reaction to Tesla as well will be important. The stock was up, I think, 5-6% in post-market trade. So a couple of positives to look forward to.
Absolutely. That and on China as well. I mean, the fact that he's saying that it can't be 145% and, we have to make a deal, a good
I think that was during market hours. The other two were after market hours.
I think even the Powell comment had happened during which is why there was a bit of a cool off. Overall, there was a a recovery in risk appetite. He's saying he's not going to fire the Fed chief. All right. Well, let's bring Mitesh back in. Mitesh, so the setup is still looking very, very good. Nifty levels and any final trades that you'd advise?
See, on the Nifty, I maintain that I think, as long as you're not breaking 23,900, 950 zones, we should be good and we should be buyers around 24,100 broadly, give and take 30, 40 points, that kind of a zone. And the important thing here could be the Bank Nifty. I think the Bank Nifty, might go through one more day of consolidation and then we might see some kind of a pickup or a pullback happening. So if the Bank Nifty can sustain, 50,300 odd levels, then I think that's where the action will happen. On my BTST calls, I had earlier given a couple of tech names. Right now, I have a BTST on Tata LXI. I think, so disclaimer that we have some options positions, so there is vested interest over here. But I would suggest a BTST with a stop. I think there's some problem. Just give me a minute. Sorry. We'll take a target of around 5,800 over here. My pattern is hanging. I think give me a minute. I'll come back to you.
Yes, absolutely.
All right, let's, in the meanwhile, talk about Sona BLW because that stock is surging as commentary from Tesla's earnings call suggests that production rates of certain models are ramping back higher. Sudarshan is now here with more.
So today shares of Sona BLW has surged and currently it's up more than 6%, and it's not on the back of something company has announced, but it's on the back of the positive commentary coming in from Tesla. In its earning call, Tesla has announced that the production volume of Model Y is back to normal levels. In December quarter, Model 3 and Model Y, the production volumes had declined more than 16%. And contribution, if you talk about to Tesla's volumes, this Model 3 and Model Y contribute around 95%. And following that, Investec has come out with its sales note and it says normalization of Model Y production rate should subside the headwinds that Sona BLW has been facing for the last few months. And remember, company, basically Sona BLW, derives 18 to 20% of its revenue from Tesla. So this positive commentary from from Tesla is helping the stock gain today, and it's currently up more than 6%.
All right, that explains the move on Sona BLW. Interesting one. So thanks very much for that. Let's now also talk about Waaree Energies. That's really been one of the big headlines since the morning. Stock has done very well after posting Q4 numbers. Not just that, Waaree then held a call with analysts as well. Let's go across to Vivek for the latest. Vivek, so what were the takeaways?
Well, absolutely. What the key takeaway is that as far as FY26 is concerned, the company expects EBITDA to be in the range of 5,500 to 6,000 crore, which if you look at the growth over FY25, it implies a doubling of the EBITDA. Looking at the numbers themselves, top line very strong, over 36%, EBITDA, more than doubling, margins expanding almost 900 basis points, and profitability higher by 31%. Now, when you're looking at the order book of the company, there's been a moderation on a sequential basis. 50,000 crore is what they were sitting at the end of Q3. Now 25 gigawatt of capacity, or 25 gigawatt is the order book, where the opportunity size is close to 47,000 crore. Remember, Waaree mostly is in the short cycle order business, so you expect most of these orders to be executed over the next year and a half. As far as the other key development that's happened and transpired for solar cell manufacturing, solar module manufacturing companies, is that USA has gone ahead and imposed significant duties, from the range of 6% to as high as 3,500% across 4 Southeast Asian countries. And this, is expected to boost volumes as far as Indian companies are concerned, making them a lot more competitive as far as the very high US market is concerned. Bernstein analyst today told us that USA imports close to 50 gigawatt of solar modules each year.
Okay, all right. Thanks a lot for that, Vivek. Well, that one clearly is moving higher on very, very large volumes. Another one from the frontline stocks that I'll be looking out for is Tata Consumer. Pull up the intraday chart. As we speak now, the stock is at the high point of the day, up 1.5%. So we'll keep an eye out on that one. Tata Consumer should come up for you on the screen. But the other one is SBI Life. That one's going to come out with a set of numbers tomorrow. Yash joins us to tell us what do we expect this time around. Yash.
Well, Nigel, it's quite funny because, the March numbers, monthly numbers were yet to be released, and analysts were making an assumption on those March numbers and hence for the quarter. The numbers on the top line looked weak, but interestingly, the March numbers came out today. They've made the numbers weaker than what the analysts were anticipating. So now the numbers that we're looking at, of course, a very weak top line growth, that is AP and the new business premium growth. On the new business front, we are expecting a contraction of 24%. The number that we're looking at here is 9,321 crore rupees. On total AP, again, a contraction is expected of about 6%. The number here that we're looking at is 5,022 crore rupees. Retail AP is expected to gain by 8% at 4,801 crore rupees. Value of new business, again, a contraction expected of 8% at 1,384 crore rupees. Margins expected to contract by about 74 basis points at 27.56 versus 28.3%. Qualitatively, what to expect from the quarter? Sluggish growth in APE and VNB. This is because of certain reasons. Slow growth because of the strong base effect which the company is facing. transition away from ULIP products because of market volatility and transition away from the bancassurance channel. Margins could improve sequentially but decline on a year-on-year basis. Still, the company is expected to have the strongest margin in the industry. What could lead to a re-rating in the stock? One, clarity on bancassurance related transaction, whether it's over or it continues in FY26. Second, positive surprise on APE or margin front could also lead to a re-rating in the stock.
Thanks a lot for that, Yash. Well, before we talk more about the fundamentals, I think Mitesh has got a pick with us for us. Mitesh, tell us what's on your radar.
So I was talking about Tata LXI. With the list that we have positioned, I think, this can be a BTST with a stop just below levels of 56.20 for a target of 57.50 and maybe even 5800. The stock does look like going through a massive reversal over here. And the other one which I like is Nykaa. I recommended the stock earlier as well, which is quietly making newer highs. The pattern of higher highs and higher low continues. So BTST here with the stop at about 190, 125 and a target of 186 can.
Okay, all right, got it, Mitesh. Thank you very much for that. You have a good rest of the afternoon. We will see you again with the market tomorrow. Mayuresh Joshi, Head of Equity Research at William O'Neill, is with us. Mayuresh, thanks for joining in. I have to start by talking to you about this mega IT run that we're seeing. I mean, look at all the stocks, even the mid-caps, Coforge, Persistence, etc. And tomorrow, a lot of IT companies are reporting, including Tech Mahindra. There's, I think, Persistent itself is reporting, many others. What have you made of the up and down here? What are you buying in IT, if anything?
Again, I think the season started with the top-tier companies, TCS, Infosys, Wipro, giving a very weak set of numbers and a weak guidance as well, compared to what the street was probably presuming. Obviously, HCL Tech's numbers yesterday has created a lot of enthusiasm among the IT pack. And therefore, I think the large expectations now getting built in is that there is some hope or sanity that will prevail as far as tariffs are concerned. There is also some element of hope that there might be a rate easing cycle in the US if inflation probably stays in control, along with some expectations of a tax cut happening as far as the corporate and the individual world is concerned as well. And that might give an impetus as we head into the second half of this calendar year of order flows coming back, because that is where the entire dispute was. That orders might be sluggish, they might be back-ended, even if orders probably come in. The margins of these orders might be a little bit sticky. The pricing, again, might be a huge issue to comprehend for a large part of the IT pool. And therefore, I think in the past 2 days, with whatever announcements have happened, as far as tariffs are concerned, with tariffs being reduced in terms of expectations on China, negotiations happening with the rest of the globe, along with expectations of discretionary spending coming back for a whole host of these factors, these stocks probably remain in focus. But our take is that the ratings still look very, very soft. The recovery might be back-ended, which means that you might see a genuine recovery happening by the third quarter of this fiscal, where there will be absolute amount of clarity in terms of all these factors put together. Specific stocks like HCL Tech and the large cap names, decent set of numbers, guidance has been decent as well. And if they continue to execute well, I think the momentum can very well continue. Within the mid-cap names, again, I think we are not having any actionable so far, but I think we are having 3 stocks on our radar as far as results are concerned. One is obviously Coforge in terms of how numbers will probably come through. We are watching those numbers very, very carefully. One is Persistent Systems, where the expectation largely is that it should be a stable set of numbers. Some softness expected to come through, but generally the guidance should be relatively better. And Emphasis, where I think the entire generative AI argument in terms of the overall order book pool that Emphasis carries on its books as we speak might actually be a game changer over the next few quarters as this expands even further with more orders coming their way as far as Gen AI is concerned. But the management is very, very focused on key elements within this segment itself. So no key actionables would be to answer your question, but these 3 stocks within the mid-cap universe is definitely something that we've kept on.
Okay. All right. Mayuresh, stay with us. Want to ask you about a few more names. For the time being, let's slip into a short break. Come back. We'll continue our chat with Mayuresh. Welcome back. Well, today what's encouraging is the broader market gradually came to the party because at one point of time we had more number of stocks that were declining than the number of stocks that were advancing. But that's quickly turned around yet again. And you look at the screen, well, in terms of the Nifty stocks, more green than red. You like it. Well, Mayuresh, I wanted to ask you about two names. Jyoti Structures, this was a stock that saw a sharp correction. And then you had some stronger hands that did come in. The order book has spiked up as well, and they're bracing for better times. I'm just asking you if you track this company because the volumes today are nearly 5 times the average. More than 100 crores of value has changed hands in today's trade. Do you have any view on this one? And the other one I think you could have a view on is VIP Industries, another stock that's been a big underperformer. But in the last half an hour or so, we're seeing a volume spike out there. Any view on these two?
So Nigel, as far as Jyoti is concerned, I think the expectations of a burgeoning order book, and if you probably see the kind of capex spends and trends that are evolving as far as the entire infrastructure space is concerned, whether it's road, railways, highways, port development, as an example, I think Jyoti, Patel Engineering, all these stocks probably come back in focus. But our own sense is that we're a little bit more focused in this area. And therefore, I think in the pre-engineering buildings side, Pennar Industries is something that we probably kept our focus on. The entire market, Nigel, is expected to grow quite significantly over the next few years in terms of the PEV market itself. The segment that they're catering to, the new plant that they're probably opened, the margins at which they're expected to operate. Our own sense is that within infrastructure, I think this is one segment where our take is that earnings should largely go down. So Pennar Industries is something that we're liking. Jyoti, Patel, NCC can come back in focus as the market momentum has.
Mayuresh, just to confirm, the stock you're talking about is Pennar Industries. That's the one you like, right?
Yes.
You would rather prefer that name.
Yes,
Got it.
Yes.
So that's, yeah, go ahead.
Sorry. And as far as VIP is concerned, obviously I think it's a proxy to the entire travel and tourism team. Obviously you're entering the best quarter as we speak. And therefore I think a large part of the underperformance that probably came through for VIP might actually start reversing. So I think if you probably just have a comparison check between VIP, Safari, and what we track on the global scale, Samsonite as well. I think the peers have probably done better in terms of both the product designs, the SKUs, in terms of duffel bags, in terms of the carry-on bags as well. And VIP is probably getting there. So it's been an underperformance, but my own sense is that if it gets his mojo back, I think this underperformance might actually turn into an outperformance as we head into the best season. And travel and tourism, Nigel, is now a year-round theme. There is no specific quarter that probably goes to.
Yeah, the one we were comparing over there was supposed to be VIP with Safari. Safari has been the big outperformer, as Mayuresh said. But now the hope is that VIP will get its act together. If you compare it on a market cap to sales, well, now in fact Safari is way ahead, but the performance has been such. Our growth has outpaced VIP by a great deal. And also in terms of margins and profitability as well, it's been far better, Survi.
Okay, absolutely. By the way, I'm looking at some of the price and volume charts. L&T Finance, Ashok Leyland, interesting moves on these stocks. Up 3-4%, good volumes on both of them. So before we close out, Mayuresh, your thoughts? Ashok Leyland, I mean, this stock hasn't moved in a while because of the obvious CV cycle being in a slump. Do you see any turnaround?
Again, it might go through a sluggish phase. And therefore, I think, Surabhi, our take is that focus on areas which are showing strength. Consumption is expected to come back very, very strongly. And therefore, I think one stock where ratings and rankings are looking extremely strong, where the resilience of earnings might continue, something like Radico. So our own sense is that the premiumization as far as Radico is concerned might actually continue doing extremely well. The expectation in terms of the super premium products within the premium range is expected to cross 500 crores in FY26. Margins expected to be between 14.5%. Net debt should peak off as we speak. And therefore, I think in terms of volume growth, in terms of margins, in terms of the overall bottom line growth as well, EPS ratings, I think this stock, in our opinion, at Marcus India looks extremely well poised to probably post reasonable earning as well as good price action as well.
Okay. All right, Mayuresh. Thanks very much for that. Just allow us a couple of minutes. We'll get through the market close and then come back. So a good day is what we're talking about. 151 points higher. The global risk on taking the Indian market along with it. And bulls initially in the morning probably thought they'll take a bit of a breather. But then they said, no, let's join the party. Why not? The only exception is the Bank Nifty. The Bank Nifty is ending with a cut of about 0.5% after its stupendous run. But IT has more than made up for it. Look at the gainers on the IT side. HCL Tech is closing out the day with an 8% rally. Tech Mahindra ahead of numbers 5% higher. Wipro 4%. Infosys 4%. TCS 3%. Strong day. But even beyond IT, today there was a lot of buying in autos. Tata Motors, for instance, Mahindra & Mahindra 3.5% up. Tata Motors close to 4.5% up. Hero Moto, Maruti, Bajaj Auto, all of these stocks looking pretty good. L&T and Bharti were some of the other large cap names that did well. Lever ahead of numbers 1% higher. And even in ICICI Bank, by the end of it recovered. 0.4% up on ICICI Bank. The only losers actually were HDFC Bank down 2%. Kotak, SBI, Axis, they ended slightly weaker. And Grasim and ITC. But other than that, the Nifty is looking like a fine shade of green.
Well, that's right, Surbi. And towards the end of trade, a couple of stocks that did spike up. Jyoti Structures, which is the one that we just discussed, went home with gains of close to around 13%, close to around 100 crores worth of value changing hands today. Let's see whether or not there is any name out there. Well, on that note, though, we'll have to wrap up on this edition of Closing Bell. You don't go anywhere. Markets Forward comes up next.
Market extends its gaining streak for the 7th day in a row but fails to hold on to opening levels. Volatility index surges over 3% while other broader market indices make marginal gains. Nifty closes near 24,300. The Sensex ends near 80,000. Consumer durables and banks are among the laggards.
Nifty IT rallies in trade and gains over 4%. This on the back of HCL Tech's FY26 guidance and strong buying seen in Wall Street. HCL Tech, Coforge and Precision Systems are and were the top gainers.
Shares of Vari Energy surge over 14% after a strong performance in the fourth quarter. Meanwhile, AU Small Finance Bank gains almost 8% after reporting Q4 numbers. The management says it aims at trimming credit costs in FY26. Good afternoon, hello and welcome to a fresh new edition of Markets Forward, your go-to show where we aim to get you all the key data points and the highlights from the present trading day and of course gear you up for the next one. I'm Surabhi Upadhyay. With me on the show is Vinny Motiwala. And Vinny, what a good day. By the end of it, the bulls were prevailing again. And, it was an all-round green session.
Absolutely, an all-round green session. Midday, I really did think that, is this the tide chaining right now? Yeah. And, last 7 days of gain is what we saw. And that's what we sustained today. So it's a good day coming in, recovery coming in the broader end of the market as well.
Absolutely. And it was the global markets which, were helping us actually recover from those slight morning blues, so to speak. And that's because there was a nice risk on across Asia. Many of the markets are up 2.5% today in Asian trade. And that's thanks to some signs of a climb down coming in from Mr. Donald Trump on, the Fed chief. He's saying he has no intentions of firing him. And also on China, some comments coming in saying that these high tariffs of 145%, they're obviously not sustainable. So all that led to good global risk appetite. It translated into good gains for us. And therefore, you see the Nifty from that dip that, we were noticing around 10 o'clock. From there was a nice recovery and we moved higher. Today, there was a very interesting sort of divergence between two sectors. Banks decided to take a bit of a breather after the stellar, stupendous bank rally that we've seen. So the Nifty bank ended about 0.5% lower. But look at IT. IT more than made up for it. And the IT stocks were gaining across market capitalization, mid cap, small cap, all kinds of cap. IT stocks were ruling the roost. And Vinny, by the end of it, even the mid cap market, the mid cap index dipped into negative actually in the morning. But by the end of it, mid-caps were roaring along and days high on the mid-cap index.
Absolutely, days high on the mid-cap index and small-cap also, Surabhi, because at one point of time, small-cap was really underperforming throughout the day. And then the second half of the trading session, we saw the small-cap also coming back. So yes, the broader end of the market also has done well. Few names also that I would like to highlight. Sona BLW saw a good surge in today's trading session. A lot of auto names also were trading in the green. So we did have M&M, Tata Motors, as well as some of these other autos which were moving and buzzing in today's trading session. But on that note, let's get started with the show for today, and we'll start up with the top movers and shakers for the day. Hormaz is here to tell us about that.
Well, it was an interesting trading session, wasn't it? And it was because of the plenty of earnings reactions that we saw during the day that kept the broader markets on a firm footing. Vari Energies at one point was up almost 20%, but still ended 15% higher. HCL Tech, of course, was the star of today's session, at least for the Nifty names, with a 7.5% higher there. AU Small Finance Bank, after some positive management commentary, ending 8.5% higher. And Vardhman Special Steels, the surprise package of the day, 20% higher after the company announced a capex plan after a not so impressive earnings performance. But Havells, of course, was the underperformer today, ending 3% lower. Well, newsmakers aplenty. Niva Bupa, after a positive brokerage initiation, ended 8% higher today. Aurobindo Pharma, Lupin, some positive news flow there as well. Production in Tesla returning to normal led to Sona BLW surge, and of course Premier Energies carrying on from where it left off in yesterday's trading session, another 4% surge today. The results of HCL Tech rubbed off on other IT stocks as well, particularly in the mid-cap IT space. And take a look at this. Almost every stock ending anywhere between 4 to 6% higher. Of course, all of these names are yet to report results, so it'll be interesting to see how they fare after the numbers come out sooner or later. And lastly, some stocks that saw profit booking today. A lot of these consumer durable names were in this list, be it Blue Star, be it Voltas. Crompton also seeing some profit booking, as did JB Chemicals and Pharma. But overall, a green day, but some profit booking in select pockets as well.
Okay, all right, Hormaz, thanks very much for the detailed breakdown of the day. So let's get started. We have our guests joining in now, Mayuresh Joshi of William O'Neill, as well as Nagraj Shetty from HDFC Securities. Gentlemen, good afternoon. Good to have you on. Nagaraj, if I could come to you first. So the market is very clearly showing tremendous momentum. What would your advice be on the Nifty and even the Bank Nifty, where today perhaps it was just a pause after what has been a very strong rally?
Hi, good afternoon, Surabhi. Nifty has been in a spectacular no doubt, to 2,500 points of up move without showing any reasonable downward correction. Though Nifty placed at the higher levels, though showing some volatility at the higher levels, there is no confirmation of any reversal pattern building up or any tiredness building up at the higher levels. I think having moved up recent hurdle of around 24,200 levels, I'm expecting Nifty to move towards the 24,600 to 24,800 zone in the near term. At the same time, Bank Nifty has moved into a new all-time highs, showed some slight nervousness from the higher levels. Still, there is no confirmation of any bearish sign at the higher levels. I'm expecting more upside to come from here onwards after a small consolidation, and the next upside target will be around 57,000 in the near term.
Okay, surely keeping an eye out on those levels of there. Mayuresh, what is your view coming in as well? In the morning, Nigel was talking about that one level, 24,350, and we did see a recovery coming in from the day's lowest point for the Nifty, but we have not managed to sustain. So in overall the market scenario, what are you watching out for? Anything specific that we should keep an eye out on?
Afternoon, Vinny. No, I think two things. One, I think as far as earnings are concerned, our own sense is that Q4 might still be a little bit soft and patchy, but the expectation largely getting built out because markets are always forward-looking is that with tax cuts around the corner, expectations of a better monsoon, rural, semi-urban and urban consumption recovery might be seriously on a recovery path. And therefore, I think Q1, Q2 will lay base as far as earnings for India Inc. is concerned. And in the second half, you should see significant amount of recovery happening at that. With earnings coming through, my own sense is that government capex, which is expected to continue strongly, private capex can come back very, very strongly as well. And therefore, both from a macro perspective, where crude is expected to come lower and stay lower, trade deficit under control, collections specifically, both direct as well as indirect, expected to remain strong, will mean macros remain on a very, very strong footing. And therefore, outside US, if you probably look at any other market, the kind of euphoria that was built towards China, I think those might reverse a tad bit. And with macros and micros stabilizing for India Inc., our own sense is that the market should be in fine territory as we head into the next few months. So as we see the market, we're in a confirmed uptrend as per the methodology we know that the cancel methodology. And therefore, I think good relative strength stocks are holding up. Domestic sectors specifically should hold up in this earnings season. And that can be a whole host of sectors that we can probably talk about. Agrochemicals as a space, hospitals as a space. We are probably looking at banks, select NBFCs as well. And therefore, I think outside the domestic sector, I think the other sectors should also start making a comeback, which makes a fair case or an optimistic bull case for India. So I think we're being very, very optimistic on India.
Okay. All right, Mayuresh, got it. Let's talk about the sector of the day, and that really has to be IT. IT stocks were the top performers on the back of HCL Tech's FY26 guidance, 2 to 5%. And not just that, overall, I mean, like I said, the global environment was a risk-on environment, and US markets did really well, so that also rubbed off. We have Rima joining in with some of the big triggers now that a lot of the key big companies have reported Q4 numbers. Rima.
Thanks so much for that. So for one, there is the NASDAQ rub-off and all the comments about, things easing. But secondly, remember, just still last week, the Nifty IT index had fallen nearly 25%. So some believe maybe it was oversold and due for a bounce back. The second reason is the FY26 guidance was not as bad as what the street was fearing. Infi gave a guidance of 0 to 3%. HCL Tech is talking about 2 to 5%. So it's not the worst case scenario, and both the companies reiterated their margin guidance. The third reason is the Q4 deal wins were very strong across the board. HCL Tech, for instance, their total deal wins went up to $3 billion, a jump of 40% sequentially. And also remember, with the correction that took place over the last 3 months, valuations of IT companies also came to fairly attractive levels according to a few people. So for instance, Infi and TCS was trading at valuations of the long-term valuation multiple, the free cash flow yield, the fact that they give a buyback was, seemingly fairly attractive for a few people, and that's the reason why we are seeing this big bounce back and a rebound in IT over the last 3 days.
Okay, surely keeping an eye out on the IT pack going forward as well. Nagaraj, what's your view coming in for the IT pack as well? While we're seeing not much of an excitement in terms of earnings so far, but HCL Tech, given the commentary that we've seen, we saw the run-up coming in, and today the IT pack was buzzing, and Rima also mentioned a few more points. So your view on the IT, and what are you looking at now? Mid-cap IT names, are they more attractive?
Vinny, yes, certainly said the way it has declined over the last 4-5 months, and it has bounced back from the lower levels. Certainly, there was a saying that it has bounced back from the oversold level. The overall chart pattern is looking positive. I don't think this pullback rally of a bad market. I'm expecting some important bottom formation around 31,700, 800 levels for the IT sector. And today's upside bounce with the gap up opening and unfilled gap is indicating technically the strength is building up for the IT sector. And I'm expecting more upside is likely for the sector, as well as the main important participants of the sector, as well as mid-cap ITs.
Okay, all right, got that. Let's move to the next stock on our radar, and that's Waaree Energies. Waaree Energies had a good session today. Stock was up almost 13-14% after reporting its Q4 numbers. Vivek is joining in to tell us what the market made of it. Vivek, so what was behind this big move?
Well, 13% today you may call it, but it's on top of what was yesterday, almost 6% up move. So it's been a significant up move as far as Waaree is concerned. Quite a few triggers for the stock to move higher. First, number one, let's have a look at the results that came in post-market hours yesterday. Along with that, the company also had a conference call today where the guidance that the company has given has been quite strong. Looking at the numbers themselves, revenues this time around higher by 36% on a year-on-year basis, EBITDA more than doubling, margins expanding by over 900 basis points, and profitability higher by 34%. Order book moderated sequentially, so order book at for total 25 gigawatts at 47,000 crore. At the end of Q3, it was 50,000 crore. But what was the kicker was the fact that the company actually has given an EBITDA guidance in the range of 5,500 to 6,000 crore as far as FY26 is concerned, implying that there could be almost a doubling as far as EBITDA is concerned over the base of FY25. Along with that, significant capacity addition, both ingots, wafers, as well as modules is what the company has guided for. Now, one thing that we need to keep an eye out for is that both Waaree as well as Premier Energy, two players as the solar cell module ingots space is concerned, export a significant chunk. In fact, Waaree, almost 20% of total top line has come in from the export market. Day before yesterday, USA has announced significantly higher duties on imports from 4 Southeast Asian countries, including names like Cambodia, Vietnam, and over here, duties are in the range of 6% to as high as 3,500%. So analysts believe that this can act as a significant kicker as far as volumes are concerned, making Indian products a lot more competitive in what is essentially a higher margin export business in the US market. No wonder then Waaree Energy, one of the top movers in the session today.
Absolutely, got that point, Vivek. And yeah, I noticed in that conversation that you had earlier with an analyst, I think from Bernstein, that for Waaree, exports are 20% of their revenue. So can they really capitalize on this opportunity? Take that point. Thank you very much for that. Let's actually toss this to Mayuresh. Mayuresh, your thoughts when Waaree, obviously, and even Premier, they've had a couple of really good sessions. The numbers are very good, no doubt. The con call guidance is also looking rock solid. But what's your sense? I mean, is there more up move from a near term? Because there's also this other whole debate about overcapacity coming in the sector soon when it comes to solar power.
Oh, absolutely, I think. And those are the two risk factors, Surabhi. I think overcapacity is going to be one key element for the sector as a whole over the next few quarters, next few years. And therefore, how pricing will probably play out is going to be extremely critical for the industry as a whole. And therefore, our take is that we really need to watch out in terms of how capacity additions are happening, both in India and across the globe. And therefore, pricing at some point of time in the near future might be coming under the pump. The second element, which we also should not forget, is that China still controls a majority in terms of both cell manufacturing, PV manufacturing in excess of 80% odd. And therefore, I think both the raw material source that they probably have, as well as the manufacturing prowess, probably still remains with China to a large extent. How much of that can probably get consumed if there are higher tariffs on China, other Southeast Asian economies, as Vivek also mentioned, can also cripple growth to a certain extent, and therefore pricing can get pulled up, which can be inflationary for the end user industries as well. And therefore, how pricing will play out is going to be extremely critical. But again, I think outside these two risk factors, numbers have been fantastic. The guidance has been fantastic. The plant in Texas, 1.6 gigawatt already operational for Waaree, expected to expand that to around 3 gigawatts by 27 and 5 gigawatts as we head into 28. And therefore, I think the US-based manufacturing prowess also gives them an added advantage as far as local exports are concerned or supply is concerned, with raw material sourcing happening from the Indian parent as well. So the momentum can very well continue, but I think one must keep these two risk factors in mind.
Okay, surely keeping an eye out on Waaree Energies. But let's shift focus to two of the pharma names that were in focus today. We had Aurobindo Pharma as well as Lupin, both in focus. Now, firstly, Aurobindo Pharma, why? Its wholly owned subsidiary, that is Eugia Pharma, has received final approval from US FDA. This is for the drug Dastanib tablets. Now, they are expecting this launch in Q1 FY26. The market size of this is around $1.8 billion. And this is as of Feb 2025. The last 12 months data indicates a 1.8 billion market size for the company. Do not forget that there is already a lot of competition that has come in for this drug as well. It's actually the innovator is BMS, and post September 2024, we've seen a lot of launches as well as approvals for this drug. In the recent time, we've seen Zydus that had received the approval in India as well. Other than that, tentative approvals had come in for Biocon, Dr. Reddy's and others as well. But nonetheless, it's a big drug coming in for Aurobindo Pharma, and that is what we'll be keeping an eye out on in terms of what will be the amount of sales they actually have during the quarter. Tentatively seems like $10 million sales to $15 million sales for Aurobindo Pharma. Let's move on to the next one then, Lupin. That's in focus today. Why? Because actually 23rd April is the date when we'll see a drug that is mainly called generic Tolvap 10. Now, this is a drug where they are going to be launching and getting an approval for this drug. This drug is going ex-patent from today, 23rd of April. So we're expecting the approval to come in overnight for Lupin. This is a big drug for the company because then they'll have 180 days sole exclusivity for this drug. Means no competition on that front in the generic player. Revenue generated could be around $150 to $200 million in FY26. And in FY26, this could account to around 25% of Lupin's earnings is what analysts are highlighting. So very big drug coming in for Lupin as well, at least in the pipeline, and latest it could be by Q1 FY26 that we could see the launch coming in, though analysts are expecting much sooner in the next few weeks. So both these stocks, that's why we're buzzing in trade today. But Nagraj, I'm going to take this to you. In terms of stocks, what are you watching out for in the pharma pack? We've seen the turn coming in for the pharma pack in the recent times as well, though there's a bit of a volatility because of Trump tariff issues and not much of a certainty on that front. But anything you like from Aurobindo, Lupin or any other name?
Yeah, rightly said. Pharma has been in a limelight recently, and the Aurobindo as well. The recent upside bounces from the lower levels certainly has changed the sentiment for the Aurobindo Pharma. Now placed at the edge of moving above the consolidation, and the 200-day EMA has been surpassed in today's session. The overall chart pattern is looking positive. Today's upside breakout was accompanied with a rise in volume. So currently trading around 1253 levels. I'm expecting more upside in the near term, and 1350 is going to be the next resistance to be watched in the near term.
Okay, got that. So that's on a bunch of pharma names today. Mayuresh, just before we sort of wind out for the session, obviously it's going to be earnings season in full swing tomorrow. And we'll soon start hearing from a bunch of consumer companies as well. Tata Consumer, there's Lever reporting tomorrow. I think even Nestle is reporting tomorrow. Is there anything that you're advising to buy in this universe? Growth is missing, but then stocks have not rallied too much. So that's the advantage on the price side.
Yeah, absolutely, Surabhi. But again, I think a lot of these beverage makers, so I think Radico Khaitan is included in our global watch lists as well. Our own take is that the volume should be relatively better. Pricing should remain in their favor as well. The entire premiumization angle should continue very, very well for Radico going forward as well. Margins should get maintained between 14.5%. That most likely to have peaked off. And therefore, I think as improvements happen in cash flows, those debt levels should also start coming off. And therefore, the ratings, rankings, and the earnings pedigree that we see can very well continue with Radico. And similarly, it's the case with United Breweries as well. I think summer season, I think the beer market is full form as we speak. The expectations of pricing coming back in a few key states. And for both these players, I think the input costs will be, whether it's extra neutral alcohol, whether it's molasses, whether it's glass prices, are relatively stable, which provides the margin comfort and support. That is probably needed. So the price is expected to come through, expectation of volume growth and input cost stability. I think operating leverage should play out. So I think United Breweries and Radico is something like this.
Okay, all right, got it. Thanks very much, Mayuresh, as well as Nagaraj for joining in. Great to get your perspective on the market today. With that, we have to take a very quick break. Come back on the other side. We'll get you the top corporate voices along with the key events to watch tomorrow.
Welcome back to Markets Forward on CNBC-TV18. Now let's dive into some key corporate voices we had over the course of the day. Shares of AU Small Finance Bank, that rallied, and this was following the Q4 earnings. Now CEO Sanjay Agarwal believes the company will see reduction in credit costs this year, aiming to improve its ROA. Listen in to what he had to say.
From last 2 months, things have changed dramatically, in my opinion, and I would give credit to the regulator and, of course, the government itself, that the focus on growth is back. This year, our credit cost will help us more to build our ROA. So I expect a reduction in credit cost this year, and I'm saying because we are well prepared.
Okay, that's AU Small Finance Bank, and that stock was rallying close to 8% today. Let's also talk about Havells. We caught up with Mr. Anil Rai Gupta, the MD and CEO of the company, to talk about the Q4 performance. Performance seemed okay. The market had some concerns about the sustainability of that growth. Listen to what he had to say.
I think this was one quarter where we actually saw growth coming back in the rural and semi-urban sector as well. The urban had been doing better in the first half of the year. The rural was impacted. It's coming back. Maybe some impact of the budget changes as well as the RBI relaxations. Hopefully that should augur well for the coming times. I think if we see overall, there is a movement more towards the premium, and maybe that is also a strategy of the company. But that is there we see a movement more towards the premium products as well. If you take fans, it is more towards energy saving products. If you take switchgear segment, it is more towards automation and electronics. So there is a movement towards premium segment overall.
Okay, and before we wind down this edition of Market Forward, let's take a look at which are the key events to focus on in tomorrow's trading session. Upasana is here to give us all those details. Upasana?
First up, let us look at the global economic cues. US will be reporting its initial jobless claims. Europe, Philip R. Lane, which is the member of executive board of the ECB, is set to speak tomorrow. Now let us look at the key stocks that will be in focus on the back of corporate action. First up is Sterlite Technologies. The company has completed demerger of its global services business, and shareholders will receive 1 share of STL Network per share. Mind you, 24th April is set to be the record date for the spin-off. Next up is Devyani International. Even this stock will be in focus as board meeting is scheduled tomorrow for issuance of equity shares for the acquisition of controlling stake in Skygate Hospitality Private Limited under the brand Biryani by the Kilo. Now, let us look at the important results that we'll be closely watching out for. Axis Bank, Tech M, HUL, Nestle, SBI Life, ACC, and L&T Tech, all these companies will be in focus as they will be reporting their Q4 FY25 numbers tomorrow. So all in all, looks like quite an eventful day tomorrow.
Okay, all right, got it. Upasana, thank you very much for that. Indeed, it's a heavy day for earnings, plenty of large caps and mid caps. And of course, we're going to be there.
Expiry as well.
And there's expiry as well, yeah. So hectic Thursday coming up, and we'll be there to take you through all the action. But for now, from the entire team that puts this show together, thank you very much for watching. News and updates continue on the other side.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. 26 people killed in a terror attack targeted at tourists in Jammu and Kashmir's Pahalgam. Home Minister Amit Shah visits the site of the attack. An offshoot of terror outfit Lashkar-e-Toiba claims responsibility. Security agencies release sketches of the suspects and a manhunt is underway. Kashmir Valley observes a near total shutdown against a terror attack for the first time in 35 years. Schools, colleges, businesses and organizations from all walks of life support the Bandh call to protest the attack on tourists. Top global leaders including US President Donald Trump, Russian President Vladimir Putin condemned the Pahalgam terror attack. China and European Union express shock. Pakistan's defense minister denies Islamabad's involvement. Tourists scramble to leave the Kashmir Valley after the terror attack. Aviation regulator asked airlines to increase flights from Srinagar. Airlines waive off rescheduling charges and promise full refunds. US President Donald Trump says he has no intention to fire Federal Reserve Chair Jerome Powell even as he nudges him to cut rates. Trump also hints at a tariff cut on China, saying 145% is very high and it won't be that high. Stock markets rally across Asia and Europe amid hopes of a de-escalation in tensions between the US and China. Gold prices ease from record highs. Bitcoin shoots past $94,000. Sensex and Nifty gained for the 7th straight day. Nifty hits the highest level in 4 months. Sensex reclaims the 80,000 mark. IT stocks gain, with the Nifty IT index seeing the biggest rally in 9 months. Tesla's profits plunge over 70% amid heightened competition and a backlash over Elon Musk's role in the Trump administration. Musk says he will spend less time in his government role. Tesla CFO says company is carefully working on India entry and calls it a hard market. European Union imposes a $571 million penalty on Apple and $228 million penalty on Facebook's parent company Meta. Both companies penalized for breaching the digital competition laws. If Google is forced to sell the Chrome web browser, OpenAI is interested in buying. A top OpenAI executive testifies in Google's antitrust trial, where US regulators are seeking to break up the company. A judge has ruled Google enjoys a monopoly in the online search and related advertising. The top story this evening. 26 people have been killed in a terrorist attack targeted at tourists in Jammu and Kashmir's Pahalgam. The attack took place at a popular tourist hotspot known as Mini Switzerland. Suspected terrorists opened fire on the tourists, killing 26 of them. This marks the deadliest terror attack in India on civilians since the 26/11 Mumbai attacks. Home Minister Amit Shah arrived in the valley yesterday and he visited the attack site today. He reviewed the security situation and held meetings with Lieutenant Governor Manoj Sinha and Chief Minister Umar Abdullah. The Home Minister also met with the families of those injured and killed in the attack. Shah said that India will not bend to terror and the culprits of the attack will not be spared. Meanwhile, Prime Minister Narendra Modi cut short his Saudi Arabia visit and arrived in Delhi. Upon his arrival, an emergency meeting was convened at the airport with National Security Advisor Ajit Doval and External Affairs Minister S. Jaishankar. An offshoot of terror outfit Lashkar-e-Toiba has claimed responsibility of the attacks. Security agencies have released sketches of the suspects and a manhunt is underway. Kashmir Valley is now observing a near total shutdown against the terror attack for the first time in 35 years. Schools, colleges, businesses and organizations from all walks of life are supporting the Bandh call to protest the attack. My colleague Arunima is in Pahalgam and she has tried to deconstruct the events of this horrific terror attack that took place yesterday.
Asif Fauji, Suleiman Shah, Abu Talha. Are these people responsible for the mayhem that we have seen in Pahalgam? That's what the agencies suspect. The photos and the sketches of these three have been released. The photograph of these three was recovered from the phone of another slain terrorist, Junaid, who was, as per security agencies, responsible for a similar attack at the Sonmarg tunnel a few months ago. So these sketches and photographs, survivors have also described the three men who rounded them off and then resorted to indiscriminate firing. The sequence of event, as the survivors have narrated, and that's what investigating agencies are probing, is this. Around 2:30 on Tuesday, these gunmen dressed in military fatigue with helmet-mounted cameras reached the Baisaran area of Pahalgam. They first segregated the non-locals from the locals, and then within the non-locals they segregated the men from the women and then resorted to indiscriminate firing. There was not much security in this particular meadow. This was a non-motorable road. It took at least 40 minutes on horseback to reach this particular meadow, and therefore rescue and relief took a lot of time. Many of the people who were injured because of the indiscriminate firing bled to their deaths since medical attention took time to reach them. Now the security grid is carrying out a cordon and search operation. Foliage penetrating radars have been pressed into service to scan the entire forested areas around this meadow. Aerial surveys are also being carried out. A reward of about 20 lakh rupees have been announced by the Jammu and Kashmir police for information about the perpetrators, the co-conspirators or the overground workers who could have aided them. And the mood in the valley is of total despondency and frustration. The locals say that this will set them back economically by at least a decade, as the tourists will now think twice before visiting Kashmir.
Well, Baisaran Valley is a popular tourist spot which is accessible to tourists only on foot or on a pony ride. A 6-kilometer dirt track connects Pahalgam to Baisaran. Now, Ishan Vani visited the site of the attack and this is what he said.
This is the route to Baisaran, and this is actually no route at all. It's muddy, there are big boulders, and it's difficult to even walk on these. Even if I wore a normal shoes, it would be impossible to come here. Generally, tourists take pony and come here for leisure, but everywhere you look, there are marks and signs of the disaster that happened yesterday and something which was unexpected. Look how I have to walk through these steep and jump into certain places. There were rains that have further dampened the condition of this particular route. It's a trek generally taken by several tourists. They use ponies, as I said. It might be beautiful, but scariest of scenes were witnessed yesterday here on this difficult terrain to reach where the carnage took place yesterday.
Navy Lieutenant Vinay Narwal, who was on leave after getting married a week ago, is also among the victims. Navy Chief Admiral Dinesh K. Tripathi paid a mark of respect by laying a wreath at the memorial remains of Vinay. His wife was also seen bidding an emotional farewell to him. Vinay's wife is among many others who've lost their loved ones. Families and the friends of the victims recounted the harrowing details of the attack which led to this dastardly terror attack in Pahalgam.
जो ये वाक़ा हमारे मेहमानों के साथ हिंदुस्तान से आए हुए उन नौजवानों के साथ जो ये वाक़ा हुआ, उस खास करके हमारे इस रिश्ते में एक शरीफ नफ्स ये बच्चा जो घोड़े का काम करता था, जो इसको मार दिया गया, हम इसकी मजम्मत करते हैं.
Another person, Shomir Guho, and his family also went to Kashmir, and they were supposed to come back today, but they were Samir Guho was also killed. His wife and his also children is there. We are standing in front of his house. We have with us the local people who were friendly to Shomir Guho. ये बताइए दादा कि मतलब ये आप लोगों को पता था कि वो घूमने जा रहे हैं?
हाँ,
14 तारीख को हमसे बात हुआ है, वो बोले कि घूमने जा रहे हैं और ये हमारे नेबर है। ऐसा होने से हम लोग को क्या स्थिति होता है, हम लोग कहाँ है क्या कुछ नहीं पता चल रहा है कि हम लोग किस राज्य में बास कर रहे हैं, कहाँ बास कर रहे हैं।
My sister and her son are okay. They didn't had any injuries, but they were under shock. And meanwhile, my brother-in-law's status was not known, and he had to be airlifted because of his injuries. Later, after half an hour, I got the news, shocking news.
कोई अपील, कोई संदेश जनता से, सरकार से, कुछ भी आप कहना चाहेंगे?
मैं ये अकेला नहीं बोलूँगा, यहाँ पे पूरा महाराष्ट्र या पूरा इंडिया बोलेगा यहाँ पे कि उनको कड़ी से कड़ी सज़ा होनी चाहिए। ये 4-5 जन नहीं है, उनके पीछे बहुत बड़ी साजिश है ये चीज़ के लिए। तो उन सबको आज एक साथ में, जैसे 26/11 हुआ था, ये दूसरा आतंकी बड़ा हमला मैं ऐसा मानता हूँ।
Right, Defense Minister Rajnath Singh is addressing the media at the moment. Let's listen in.
समर्पण इनक्रेडिबल रहा है। वो अपने दौर के एक विजनरी मिलिट्री लीडर तो थे ही, उनका विजन आज भी उतना ही रेलेवेंट है और आज भी वह भारतीय वायुसेना के लिए और हमारे युवाओं के लिए किसी इंस्पिरेशन से कम नहीं है। उनकी जीवनी अपने आप में इतनी मोटिवेटिंग है जो आने वाली कई पीढ़ियों तक हम सभी को इंस्पायर करती रहेगी। मैं देख रहा था कि केवल 19 साल की उम्र में ही उनका सिलेक्शन प्रतिष्ठित रॉयल एयरफोर्स कॉलेज के लिए हुआ था और वहां उनका प्रदर्शन इतना उत्कृष्ट था कि उन्होंने अपनी कक्षा में शीर्ष स्थान प्राप्त किया था।
The terror attack in Kashmir has triggered panic across the region. Tourists were seen scrambling to leave the Kashmir Valley. The Srinagar-Jammu National Highway has remained blocked for 4 consecutive days due to landslides. A special train has been launched from Jammu's Katra to Delhi to address transportation challenges faced by stranded passengers. The Ministry of Civil Aviation has instructed airlines to temporarily operate more flights out of Srinagar. This in a bid to handle the rush of tourists who want to cancel their holiday and leave Jammu and Kashmir in the wake of yesterday's terror attacks. Madiha Mujawar is here with the action taken by the DGCA. Madiha.
Well, its peak summer and Jammu and Kashmir is a popular destination for tourists across the country around this time. Naturally, an attack on tourists is creating panic among the ones who are already there and the ones who were supposed to visit Kashmir. So obviously, the Srinagar airport is seeing a spike in passengers who have cut short their trip and are returning to their homes. We have pictures from the airport where tents have been set up with chairs and drinking water facilities to accommodate these passengers. And keeping the situation in mind, most airlines including Indigo, Air India Express, Akasa Air and SpiceJet have waived off ticket rescheduling charges for all flights to and from Kashmir, from Srinagar. Passengers also will receive full refunds if they choose to cancel their tickets. Initially, airfares from Srinagar to Delhi were soaring, and that prompted the Aviation Ministry to step in. Aviation Minister K. Ram Mohan Naidu had held an emergency meeting with airline executives. A strong warning was issued against surge pricing, and airlines were told to maintain regular fare levels, after which fares have relatively decreased. The Directorate General of Civil Aviation has issued an advisory to all airlines asking them to increase the number of flights out of Srinagar to various destinations across the country. There are 5 special flights scheduled from Srinagar, 3 to Delhi and 2 to Mumbai, with additional flights kept on standby. So we don't have a number yet on the flight and hotel cancellations, but we are speaking with hotels and tour operators to find out more, and we'll keep getting you regular updates.
Right, thank you, Madiha, for those updates. We will continue to track these developments coming from Pahalgam. On that note, we will slip into a short break, but coming up next, Tesla's profits plunge over 70% amid heightened competition and a backlash over Elon Musk's role in the Trump administration. More when we return. Welcome back. On to the latest on the tariff war. US President Donald Trump has said that the high tariffs imposed on Chinese goods will come down substantially but will not be zero. Trump added that he will be very nice to China despite the tariffs. Responding to this, China's foreign ministry said that the doors for trade talks with the United States are wide open. However, China added that it does not wish to fight, but it's also not afraid of fighting. Trump's comments came after US Treasury Secretary said that 145% tariffs on China are unsustainable and he expects a de-escalation in the trade war. Listen to what Trump had said.
145% is very high, and it won't be that high. It's not going to be that high. It got up to there. We were talking about fentanyl, where, various elements built it up to 145. No, it won't be anywhere near that high.
What level do you think it'll come down to if you have it?
It'll come down substantially, but it won't be zero. It used to be zero. We were just destroyed. China was taking us for a ride, and just not going to have. It's not going to happen. We're going to be very good to China. Have a great relationship with President Xi, but they would make billions and billions and billions of dollars a year, and they would build their military out of the United States and what they made, so that won't happen. But they're going to do very well, and I think they're going to be happy, and I think we're going to live together very happily and ideally work together.
And staying with the US President Donald Trump, he also indicated that he has no intention of firing Fed Chair Jerome Powell. However, he added that he would like Powell to be a little more active when it comes to cutting interest rates. These statements come at a time when the president has intensified his criticism of the Fed chief, calling him a major loser.
None whatsoever. Never did. The press runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No. It's not, but it would be good timing. It could have taken place earlier, but no, I have no intention to fire him.
Global markets rallied after President Trump's clarification on Fed Chair Powell and the indication that he may go easy on China, potentially de-escalating tensions with the country. Now, US stocks futures rose on this news, while European markets also traded higher. In Asia, benchmark indices of Hong Kong, Japan and South Korea gained around 1.5 to 2.3%. Back home, the Wall Street gained for the 7th straight day. The Nifty hit a 4-month high after it reclaimed the 24,300 mark, while the Sensex ended above 80,000 for the first time since December last year. The IT stocks took the baton from banks to lead the Nifty higher. Nifty Bank ended 0.5% in the red. Mid-caps outperformed the blue chips. Gold prices have fallen after US President Donald Trump retracted his threats to dismiss Federal Reserve Chair Jerome Powell. His optimism about a trade deal with China also dented bullion's safe haven appeal. On the other hand, oil prices rose, extending yesterday's gains. This as investors weighed the USA's fresh round of sanctions on Iran. A drop in US crude stocks also supported prices. Bitcoin prices are hovering just below the $95,000 mark after racing past the $90,000 mark for the first time since May. This owing to rising institutional demand and weakness in the US dollar. Well, India is considering to cut tariffs on high-end motorcycles to zero. According to a Bloomberg report, the government is mulling a proposal to scrap import duties on motorbikes with engine capacity of 750cc or more. Sudarshan Kumar is here with more. Sudarshan.
Today we had two different stories on one topic, that is tax on US auto imports. So first, talking about high-end bikes, as per Bloomberg reports, we understand that Indian government is mulling slashing import duties on high-end motorcycles, and duty can be brought down to zero for bikes with engine capacity of more than 750cc. And if this happens, it would be beneficial for someone like Harley Davidson, for which its products have been subject to very high tax if it sells in India. The second story is related to Tesla. Tesla today had earnings call post its quarterly earnings, and in that it has commented about Indian market. It says it has has been working on getting into India, but it's a very tough market. And about the tariff structure, it says, as per current structure, any car that it sells or sends to India is subject to 70% tariff and 30% tax, luxury tax. So total tax for any Tesla cars that are being sold in Indian market are subject to almost 100% tax. So going forward, both the stories will be watched very closely. And recently, PM Modi had a conversation with Elon Musk, and later in this year, he's going to visit India, and we'll have to see over next few days what steps that government takes on luxury cars as well as high-end bikes.
Right, thank you, Sudarshan, for that. In global earnings, American EV giant Tesla reported a weak set of numbers in its first quarter earnings. The company's net profit dropped a whopping 71%, while auto revenue plunged 20% on an annual basis. Tesla attributed the weak earnings to lower average selling prices and sales incentives. During the earnings call, company CFO Vaibhav Taneja said that Tesla has been working on entering the Indian market, and speaking on the same call, company CEO Elon Musk said that he plans to scale back from his role in the US government.
Shares jumped in after-hours trading Tuesday after CEO Elon Musk said he would scale back his government work in May and devote more time to the company.
So I think I'll continue to spend, a day or two per week on government matters, but starting next month, I'll be allocating far more of my time to Tesla.
This followed the release of quarterly results, which revealed revenue at the EV maker missed expectations. However, its auto business posted a gross margin that was slightly higher than the estimate of 21 analysts polled by Visible Alpha. That offered some relief for investors concerned about Tesla's shrinking profitability from automotive sales amid ongoing promotions to boost sales of its aging lineup and rising competition. The company did say uncertainty in the automotive and energy markets continues to increase as rapidly evolving trade policy adversely impacts the global supply chain and cost structure. Tesla has faced a troubling few months as deliveries of its EVs have nosedived, and CEO Elon Musk's political activities have drawn protests. Tesla showrooms have been vandalized, and sales in California, its largest U.S. market, have fallen sharply. Tesla scrapped plans for a brand new low-cost model last year, opting instead to produce cheaper variants using existing platforms and assembly lines. Musk promised driverless ride-hailing services to the public in Texas by June and in California for later this year.
And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Now, one of the key elements of a sound financial plan is having proper life cover. On the show today, we will discuss exactly how much term insurance, which is the purest form of life insurance, how much of it do you really need? The key factors to consider while buying that term policy and ways to ensure smooth claim settlement. To talk about all of this, we have with us on the show today Mr. Satishwar B, MD and CEO at Bandhan Life, and Sarbvir Singh, Joint Group CEO at PB Fintech. Gentlemen, thank you so much for joining in. It's good to have both of you in. Like I said, it's typically still April and we usually start with brass tacks, financial planning 101. And obviously, before we talk about investments and growing wealth, we need to ensure that we are adequately protected. So I want to start there. And Mr. Satishwar, if you could open for us. A lot of people feel that, and especially young people, right, that if I'm not married, if I don't have children, why do I need to bother with life insurance? Your opening thoughts.
As for me, insurance is actually a necessity. Okay? And to be very frankly or broadly put in, life insurance basically takes care of two specific needs, right? And in a very, very broad segment, it's basically called as either dying too young or living too long. Okay? These are the two broad spectrum which actually covers. Now, what do I mean by dying too young, right? So when you're pretty young and you just started your work, you have not yet created a corpus, right? Ideally, you should also parallelly start creating a corpus. And the initial years, you have not yet created a corpus. And in that scenario, if death occurs, right, and there are dependents on you, then there is a financial burden on the rest of the family members. Now, this is where exactly the life insurance component, the purely life insurance component comes in. But having said that, right, there are also a lot of living benefits which comes with life insurance, right? With the life term plan, you can actually add some riders in terms of, say, critical illness cover, those kind of things. That's one. Also, as I said, the other big component is towards your living too long. So you start building a corpus, especially the long-term products, right? That's where you start building the corpus. So life insurance, yes, a necessity for all. And there are these two specific aspects which gets covered in that.
Oh, absolutely. Let me bring in Sarbvir as well. Sarbvir, good to have you on the show. And Policy Bazaar recently did a survey called How India Buys Insurance. And I noticed there were some nuggets there on term insurance as well. So tell us, Sarbvir, is India buying more life insurance, more term insurance, yes or no? And what would your opening thoughts be? Does everyone need life insurance or only married people with children?
So thanks, Surabhi, for having us on your show. I think we just spoke to almost 4,000 Indians across, across cities and across states. And one of the things which is a bit frightening is that as much as half of the respondents were not even aware about term insurance. They were not clear as to what is the difference between term insurance and other forms of life insurance. And as you said in your opening remarks, that term insurance is the purest form of life insurance. And I think in a country like India, where, right now social security, etc., doesn't really extend to the middle class, I think having term insurance is a very essential thing. So I think this is something that we've been now, every year, we've been doing this research, and we find that while there is some improvement, so obviously more people buy term insurance than bought in the previous year, but unfortunately that rate is moving very slowly. And perhaps that is because of some of the misconceptions. So like you said, that yes, people with children or with dependents, I would argue, must buy term insurance. Actually, it's not just about dependents, it's about liabilities. So let's say that even if you are a married couple without children yet, or maybe you don't plan to have children, you still have liabilities. You may have some home loan, you may have other liabilities, and anybody who has those liabilities needs to cover for them. And the second point that we also must remember is that it's a moment in time. Maybe today you don't have dependents, but you are likely as you go forward. Now, in that case also, it is important to buy term insurance as early as possible, because this is a fixed rate plan. The price is going to remain the same, and the earlier you buy, the lower rate you lock in, and you are able to then cover yourself, when you need it. So I would say that it's broader than just having children, and one should look at the term insurance category in a more holistic manner.
Yeah, absolutely. I think that's a point well made, that whether it's investments or insurance, the earlier you start, the better. That's where you have the, you run the chances of getting the best returns or basically the best coverage. But, before we go on and talk about the quantum of insurance, etc., sir, I want to ask you, Sarbvir raised a very interesting point that even now, awareness about term insurance is pretty low across the country. Why is that? Because when it comes to health insurance, I think the message has gone home loud and clear that it's an expense. You pay that expense every year, hoping you don't have to make that claim, because if you want to be healthy, it's a necessary expense. वो खर्चा करना है to secure yourself. Why is that message not going through for term insurance?
So the term piece is basically, it's a very emotional subject, right? You're actually talking about death.
Yeah.
And nobody actually wants to kind of speak on those lines or actually even deliberate on those lines. So as for me, awareness, if you ask anybody what a life insurance is, I think they know that, right? But do you need life insurance, or do I have a life insurance? There you will find that 8 out of 10 people don't have it, right? And so awareness in terms of what it is, yes, but the urgency and necessity to have it, I think that's what is lacking.
Yeah.
And the reason why it is, it's a taboo kind of a subject, because I don't want to hear about my death. The very fact that I can die any moment is something which becomes a little difficult to register.
Yeah.
And that's one of the single most stumbling block or the challenge that we are also still trying to drive. And that's where I would like to actually, in a way, compliment Policy Bazaar on their messaging on those lines, right? They've actually brought on a very hard-hitting message in terms of why life insurance is specifically talking directly on the point. It's a very difficult message. So the messaging and people actually also starting thinking on those lines that it can happen to me, right? So that whole aspect of and the urgency associated with, that's what is lacking. So.
Okay, so let's get down to the basics. The whole idea of this conversation is to help you, the viewer, or the potential policy buyer, make the right decisions. First, a very clear definition. What is this business of term insurance that we're talking about? Term insurance, why do we call it the purest form of insurance? Because here you're not buying a policy expecting something to come back. This is not an investment product. It is, you're paying the insurance company purely to protect your loved ones, your dependents, in the case of your demise. So now the first question, how much term insurance do I need? How do we answer that?
You can have a very wonderful, complicated formula to it, but broadly, and very broadly, when I say this, you will not be, you will be right more than 99% of the time. Is basically one is take care of your immediate liabilities, if any. Suppose if you have borrowings on you, that needs to be covered, right? That's one. Over and above that, term plan is an income replacement product, right? So if when a breadwinner is not there, right? Naturally, you can't take care of the emotional aspect, but at least those whole financial thing, you naturally have working years, say, in a very broad sense, it's 60, right? So you will work till age 60, so you're going to basically generate income over those number of years, right? And that is what is covering. So suppose if something happens at age 40, for the balance 20 years, there is the income stream is stopped, right? That needs a replacement. Now, that's where term plan comes in. So the most simplest way, broadly we say 10 times, 20 times. But the way I define it is your working age, say 60. 60 minus your current age, right? That's the multiple. So suppose if you're 30, 30 times of your current income, very broadly put in.
30 times your current income.
It's basically
it just 60. Covers you till 60 years of retirement.
So whatever your balance working years, that's your multiple.
Okay.
Right? And you will actually see that even in life insurance companies, the younger you are, the multiples are higher.
Sure.
Right? So if you are a 40-plus person, then naturally the multiple will be a little lower. But if you start early, say 25, your multiple will be much higher. Very broadly, the current income into balance working years is a simplest form as per me.
Okay, fair enough. Sarvi, let me ask you, is that a rough formula that you would go by as well? And then maybe some examples. I mean, someone who is 30 to 35, typically, what's the quantum we're talking about? How many crores of this sum assured are we talking about, and how much will it cost?
Yeah, so I think, Surabhi, I completely agree with Satishwar that, one can complicate this subject very much. There's jargon like human life value calculator, etc. But I think more than that, I would say two things. One is, like he said, go with a multiple. I have an even simpler rule of thumb that if you are below 40 years, then you should have at least 15 to 20 times your income. And if you are above 40, then maybe it should be 10 to 15 times. And the second thing that I would also say is that we should start. See, one of the problems is that insurance is a category where, one can deliberate a lot. One can keep discussing, thinking about it. My suggestion to your viewers would be that term insurance is essential. Please start. Let's say that you are today earning 15 lakh rupees a year or 20 lakh rupees a year. You can even start with 1 crore, 1.5 crores, 2 crores of term insurance. Very relatively easy to get. There's not much problem. If you're 30 years old, if you want to get 1 crore, the cost will be in the range of 1,200 to 1,500 rupees a month. So very, very affordable premium as well. So I think the main thing is start. There are many plans which offer features like as your life stage changes, as you get married, as you have children, you can actually increase the life cover, and obviously you'll have to pay a little bit extra for that. So I think there are many ways of improving the life cover, but first thing hesitation that I feel is that we just don't start. So I think it's very affordable. Term insurance, interestingly, is at this moment is cheaper in India than in many developed countries. So it is surprising, actually, if you think about it, because sometimes one would expect that it would be cheaper in countries where the longevity is higher. But still, given the competition, given the I would say relative value that term insurance offers in India, I would actually say that it's a really good deal from a customer perspective, and it's something again every customer should have.
So in ballpark, I know this will vary greatly across companies and specific ailments, etc. But roughly, if you're talking about a healthy individual in their early to mid 30s, what would the annual payout be, premium payout, for a cover like you're saying, maybe a 2 CR or a 5 CR cover?
So it would roughly, for 1 crore for a 35-year-old, it would be in the range of 25,000 rupees a year, so 2,000 rupees a month. So for 2 crores, you can increase that. It won't double. It will be probably 3,000 to 3,500 rupees a year, a month. It's very, there's a wide variety of covers that are possible. So if you come to Policy Bazaar, you can see the range of options that are available to you. Different brands, different, companies have different prices. But generally speaking, as a rule of thumb, I would say that 1,000 to 1,500 rupees per month for 1 crore and maybe 2,500 to 3,000 rupees a month for 2 crores for a healthy 30 to 35-year-old person.
Oh, fair point. To add to that, what Sarabjit just mentioned, that maybe you realize that your insurance coverage needs are increasing with life. I mean, it was just you, and now you're married, and then maybe you're planning a family, and you realize that your current policy isn't enough. So what should one do? Should you look at adding on more policies, and then hopefully, if at all you need a claim, then you claim through multiple policies, or do you kind of add on in the existing one? What's the way?
So the ideal one is basically you buy a new policy. Add on to the existing one can also happen, but it basically goes through the same process.
Okay.
Even within the same life insurance company, it will be a new policy.
Oh,
right? Because if you know it's a standard premium, right? So you just can't add on to that, but the process becomes easier.
Okay.
Because naturally your KYC and all those things are done. It's more to do with the immediate evaluation and those things. But my take on this is a little different. So as I said, right, it's basically an income replacement, and it basically is supposed to take care of dying too young, right? So as an individual, one is of course it's a risk mitigation product, as you said, right? It's an expense.
Yeah.
So when you are young, you haven't not yet created a corpus.
True.
Right? And that's a reason in case of sudden demise, there's a huge burden in terms of those whole financial income being lost.
Yeah.
In parallel, you're actually supposed to create the corpus.
Yeah.
Right? So if you are at say age 45, 50 or even closer to that number, you have already created a corpus. So your life insurance need at that point in time should also take care of the corpus what you have, in the sense, rather than take care, while you evaluate, you should also consider the corpus that you have. And the
your
difference
existing
is what
investments and your existing corpus.
So buying early ideally takes care of it. If you have been parallelly creating a corpus.
Sure.
So the very fact that now you see everybody we have a specific thing called a special exit plan. Now that's what is in mind. If you have created a corpus for yourself, you don't need a life insurance.
Sure.
Right? In that case, you can actually take the money back. Right? The special exit value,
these exit plans, exit value plans, that's
the
what
special exit value is what we call it as, right? So that the intent is that you ideally should create a corpus in parallel, and that should take care of it, rather than continuously talking about my income is now growing
your policy
and those things.
And then therefore increasing your policy as well.
True. So that's a much more planned activity, rather than just ensuring that whatever is my earning, I should get.
I really compliment you, sir, for saying that. From a boss of a life insurance company, that's such honest, genuine advice. That as we grow older, our income streams grow, our wealth creation journey also grows. Typically, the wealth creation corpus should take care of a bulk of the life insurance needs as well, and instead of adding on more and more policies. That's a very, very logical point. We need to take a quick break on that note. Come back on the other side, and then the nuts and bolts. How do you ensure that your claim gets settled? What do you need to disclose? We'll talk about all those issues on the other side.
Let's talk money. Let's talk money.
Welcome back. You're with us on Let's Talk Money, and this week we are discussing the importance of buying a sound, comprehensive, solid life insurance policy which takes care of the needs of protecting your dependents in the event of your untimely death. So the question is, now we know why we need term insurance. We have an idea of how much term insurance we need. The question is how to get the right policy. And Sarabveer, help us out over here. I mean, typically, what is the kind of documentation? And if you're very healthy, great, then it's a green thumbs up all the way. But what if you have some ailments, some pre-existing illnesses? Where might you be rejected by an insurer? And what should you do? What should I do as a prospective policy buyer?
So I think, Surabhi, just like any other insurance policy, it always starts with full disclosure. I think the most important thing that we need to do, especially because we are buying a policy for a point of time when you may not be there, right? That's when the policy would pay off. So you need to ensure that everything that you have disclosed is absolutely correct. And the disclosures are in two broad categories. One is your health. So you need to explain, typically there may be a medical test. So you should explain very clearly if there are any ailments that you have, any medication that you are taking. Sometimes there may be a question around family history. So I think you should answer that truthfully. See, because answering it truthfully doesn't mean that you will get rejected. In fact, then the insurance company will do its work, will do their, tests, and they will work it out. And largely today, insurance companies have different types of options. So even if there is a challenge, they will, find a way to give you a policy. The second thing is that you must disclose what other policies that you have, again, very truthfully. Now, the insurance industry has ways of checking. There is a bureau and they can check from that. But it doesn't hurt to be very, very open and transparent about what policies you have, because again, that helps in calculating your total sum assured that you bought and making it easy for the insurance company to make a decision. Largely, there are just two things. One is your financial profile. Second is your health. And based on this, the insurance company will, obviously, you will get a standard quote and, you will be able to issue the policy. The more cooperative you are, the easier it is to get the policy. And it does take a little bit of time, especially if there's a medical test involved. But I think it's better for the customer to go through that medical test. It also acts as a check. Most of us don't go through regular medical checkups, so I think in that sense also it's helpful. But I think if you do these two things well, then there's absolutely no problem. The process is very smooth.
No, absolutely. It sounds, sounds absolutely logical. It might not be a one-click, buy at a click kind of product. So maybe I'm sure there's a lot of innovation, so maybe that's also there. But just come in on this, sir. In terms of buying a policy, obviously full health disclosure, family medical history. On this financial profile disclosure, does it really matter where I'm working, what I'm doing? I mean, to what extent does that weigh on my prospects of getting a life cover?
If you notice, term plan is an income replacement plan. As you initially said, it's an expense, the health insurance, similar is term, right? It's not an investment product. It's a risk mitigation product. And it is supposed to take care of replacing your income in your absence, right? Now, from that perspective is where this whole income assessment happens.
Okay.
Right? So that it's not a money-making tool, it's basically replacing your income. And it's also one of the biggest pieces is income and your education and your work profile. These are also an indicator of longevity.
Under what circumstances can a claim be rejected? And, once again, just to recap, what all can I do to ensure best, highest chances of a claim being honored?
So as Saravir also said this, right? So the only single reason why a claim can get rejected is non-disclosure.
Okay.
Okay. And again, I would like to kind of put it over here that whatever has been asked for, we are not expecting some to be declared which is not being asked for by the life insurance company, right? So there is an application form that you fill in and the process that you will follow in terms of identification or authenticating yourself and then also medical terms, right? So the application form in itself takes care of it. So let it be your occupation, let it be your income, let it be your health profile in terms of are you currently suffering or anything kind of any illness in current. So all those things is where you need to be very honest about it.
Sure.
Right?
Sure.
If this is there is no way a claim can be rejected or repudiated.
Okay.
Right? So the whole piece is the process itself.
Yeah.
If you thoroughly kind of follow the process,
disclose.
be very honest at that stage, and only those pieces which has been asked for.
Yeah.
There is no need for doing something over and above that.
Yeah.
It's a simple set of questions, and it's simple. It's pretty simple English over there.
Got it.
So,
got it. Okay, Saravir, coming down to some final thoughts on product innovation, because the industry keeps coming out with, though it's a very plain vanilla product, this term insurance, but now there are a lot of riders as well, right? So what all should someone consider before deciding on a term plan, and what are the additional toppings or riders that you might want to add to your policy?
So I think, Surabhi, the plan, as you said, is a very straightforward, I think, plan which, as we know, pays off demise. The riders that you have available, I think one that Satishwar also spoke about, which I would definitely want to talk about, which is the special exit value, or zero cost as it's popularly called, where you have now almost across plans, you have this feature where you can, at the age of 60, 65, depending on the plan, you have the right to stop paying for the policy and take back the premium that you have already paid. So this is, I think, a very useful feature, because once your corpus is built up, once you have financial assets and you don't want to continue with the plan, you are able to then get your money back. So effectively, it almost becomes like a free term insurance plan where all the money that you paid, except for the time value of money, is returned to you. So I think that's one feature that customers or consumers should definitely look for. The second, there are features around accidental death benefits. So there's, sometimes you can add a rider which will give you double the payment if something happens to you in an accident. There are plans which have, critical illness plans, which I think is an interesting and important addition that one can consider or should consider. Because when one is critically ill, what happens is that while you will not obviously have a payoff from the term plan, you will have certain expenses. You may not be able to work. You may, need expenses both for your medical treatment as well as, loss of income. So I think critical illness plans make a lot of coverage, makes a lot of sense. I would say that these are the 2 or 3 basic riders that you can add. The other is a form of payment, which is essentially that you can either pay every year for the term of your policy, or you can pay what is called in a limited format. So you can pay over 5 years or 10 years. Now, this could also be something you can consider, because this allows you to pay for term insurance in that limited period, and then ensures that even if, let's say, you don't have a job or there is any kind of income change for you over your lifetime, you don't have to worry about the term insurance premium. So I think I would say, like I said, there are 2 or 3 riders that you should think about, and then there is a form of payment where you could choose to pay in a faster way versus paying over a longer period of time.
And typically, Sarabveer, these riders would cost, what, a fraction of the premium of the policy itself? I mean, some ballpark numbers here?
Yeah, the accidental death benefit riders are relatively inexpensive. The zero cost or special exit value is now built into plans, so actually it doesn't cost anything extra. And the critical illness can cost, that can be 15 to 20% or more depending on the amount that you choose. So that can cost a little bit, but as I said, it's worth it because it covers cost of illness as well as the income that you may lose at that time.
Absolutely. All right. Very, very helpful advice. Thanks to both of you for joining us and helping us give some more clarity when it comes to our life insurance needs and why term insurance could be, of course, a very, very beneficial product to consider for people across age groups, across sort of life stages as well. Thank you very much, Mr. Satishwar and Sarabveer, for joining in. And with that, we're completely out of time on this edition of Let's Talk Money. So it's a wrap from the team that puts this show together. We will see you same time, same place next week.
Let's Talk Money.
You're watching News Centre with me, Parikshit Luthra. Our top story. 26 people have been killed in a terrorist attack targeted at tourists in Jammu and Kashmir's Pahalgam. The attack took place at Baisaran Valley, a popular tourist hotspot known as Mini Switzerland. Suspected terrorists opened fire, killing 26 people. This marks the deadliest terror attack in India on civilians since the 26/11 Mumbai attacks. Home Minister Amit Shah arrived in the valley yesterday and he visited the attack site. He reviewed the security situation and held a meeting with Lieutenant Governor Sinha and also Chief Minister Omar Abdullah. Meanwhile, Prime Minister Narendra Modi cut short his Saudi Arabia visit and arrived in Delhi. Upon his arrival, an emergency meeting was convened at the airport with National Security Advisor Ajit Doval and External Affairs Minister Subramaniam Jaishankar. The Resistance Front, an offshoot of terror outfit Lashkar-e-Toiba, has claimed responsibility for the attacks. Security agencies have released sketches of the suspects and a manhunt is underway. Kashmir Valley is now observing a near total shutdown against the terror attack for the first time in 35 years. Schools, colleges, businesses, organizations from all walks of life are supporting the Bandh call to protest the attack on tourists. Defence Minister Rajnath Singh promised a loud and clear response against the attack very soon.
आतंकवादियों द्वारा किए गए कायरतापूर्ण हमले में हमारे देश ने अनेक निर्दोष नागरिकों को खोया है। इस घोर अमानवीय कृत्य से हम सभी गहरे शोक और दर्द में हैं। टेररिज्म के खिलाफ हमारी जीरो टॉलरेंस की पॉलिसी है। ऐसी हरकतों का जिम्मेदार और इसके जिम्मेदार लोगों को आने वाले कुछ ही समय में जोरदार तरीके से नजर आएगा। मैं देशवासियों को आश्वस्त करना चाहता हूं।
Former Army Chief General VP Malik is joining us right now. Former Foreign Secretary Shashank is with us and Tilak Devashar, member of the National Security Advisory Board, also with us. Gentlemen, thank you very much for joining us on a very, very tragic day. Of course, General Malik, if I could begin with you, what does the modus operandi of those terrorists really indicate to you about the intentions and the affiliations?
Good evening, Parikshit. I don't think they have really changed their attitude, their strategy, or their tactics for a very long time. I think we sometimes close our eyes and don't face the truth. The truth is that we have a neighbor where you have a large number of jihadi elements. They have an anti-Indian attitude, and there is also the anti-Hindu atmosphere. And that has been prevailing for a long time. And now you have a situation which has got aggravated thanks to the military leadership that is there today. General Asim Munir, for example, you would have heard him just recently where he talked about two-nation theory and anti-Hindu attitude and about Kashmir. So we have sometimes been closing our eyes that this is continuing, and my own feeling is that this kind of isolated terrorist attacks, they will continue in future also, and we have to face them. Now, we have to handle them with all the instruments that are available in our hand to be able to deter them to the extent it is possible. And the modus operandi you asked me, that hasn't changed. Whether it was 26/11 or so many other incidents that we've had, the infiltration also, if they shift, sometimes it is in Punch area, sometimes it is in the valley area, and recently we have heard about in the Kathua international border in that area. So the modus operandi and the trying to cause damage to our morale in J&K, particularly our economy, all this has been going on, and I don't think it is going to stop soon.
Right. Very important points there, General Malik. I'm going to come back to you in just a bit. Let me get in Mr. Tilak Devashar also. Sir, if I were to ask you, if we look at some of the eyewitness accounts, they targeted the male members of the family. They did not spare them. To the women and children, young boys and girls, they said, go back to your Prime Minister and give him this message. What do you think was really the intention of these terrorists? How different was this attack from previous attacks you've seen in the valley for the last 35 years or so? Now, the resistance front is said to be behind this. What can you tell us about the organization? And if you were to join your dots and explain the message that is being sent out, what was that?
Thank you for having me on your show. The Resistance Front is another name of the Lashkar-e-Taiba, because the Lashkar was getting a lot of heat and flack, so they thought they could fool everybody by changing the name. So that's as far as the organization is concerned. Now, the very fact that they were asking people their religion, so we should not call the unfortunate victims tourists anymore. They were killed as Hindus. They were not killed as tourists. The question asked was not, are you a tourist or are you a local? The question asked was that, are you a Hindu? So either you call them Hindu terrorists, tourists, or call them Hindus. This is a targeted killing of Hindus meant to create a scare, which reminds you of what happened in 1990 when the Hindus were forced to migrate from the valley, to create a similar kind of fear and to deliver a message soon after what the General Asim Munir had talked about on 16th of April, the two-nation theory and Hindus and Muslims are different in every respect and so on and so forth. So the message was very chilling. And we have to interpret the message for what it was, a deliberate targeting of Hindus as Hindus and not as tourists. And in our response, whether it is on the media or whether it is on the ground, we must bear this fact in mind.
That's indeed an important point by you also, Mr. Devashar. Let me also get in former Foreign Secretary Shashank. Ambassador Shashank, the Prime Minister was in Saudi Arabia to elevate ties with the Gulf nation, and several key MOUs were on the table. J.D. Vance was visiting India, which was itself a very powerful message. What do you have to say, sir, about the timing of this attack?
Now, obviously, Pakistan has been very worried about all the demonstrations and protest marches which have been going on in POK against the Pakistan establishment. So they have been punishing them in various ways and trying to tell them that, look, they are much better off than people living in J&K. This has not been cutting much ice with the people in Pakistan. And so now they have started using, because the army, though it has been gradually getting more and more Islamized, the chiefs have been talking about not just the medals, but also the hoods who would be given to these soldiers if they fought for Islam and became jihadis. So that is now we find the chief of army staff himself talking about the jihadist tendencies which would be rewarded. So obviously this is a direct message to his people that if they are not getting any support from J&K, then they should carry out the attack on their own in the name of Islam. And I think what Mr. Tilak Deveshar has said, that obviously Hindus have been identified. So this is what Tulsi Gabbard had said, that Islamic terrorism is spreading its wings around India, and India and its friends must work together to control it. I think time has come that proper action is taken in order to ensure that these Islamic terrorists don't feel emboldened to come and attack people in Jammu and Kashmir. They don't go and attack in many other parts of India. But Jammu and Kashmir, they somehow feel more emboldened. So that's very important that there are no missing links in the administration and security apparatus of Jammu and Kashmir between the central government and the local provincial administration.
Right. Mr. Deveshar, if I were to ask you, does this have anything with the attack on Jafar Express? Is this Pakistan saying that we will retaliate?
See, let's be very clear on one thing. Pakistan has never accepted its own responsibility for whatever is happening inside Pakistan. They haven't been able to control the Baloch insurgency. Incidentally, it began in 1948. It petered out, began again in 58, petered out, began in 62, petered out, began in 72 or 73, petered out. This current insurgency has begun in 2004. Was India responsible for all the previous insurgency? How come they're talking about it now? Because the insurgency which started in 2004 has gathered momentum, and despite throwing everything against it, they have not been able to come to grips with it. Therefore, we externalize the problem. Afghanistan is responsible. The Taliban is helping them. India is responsible. India is helping them. I mean, if you just have to pick up the map, the geography, and look at where Balochistan is and where India is, you don't share a land border with them. And so how do they think that India is helping them? It's just externalizing it. The Baloch have become
It's
emboldened.
blaming India for their own problems.
Yeah, absolutely. Absolutely. Because they can't tackle it. They're blaming Afghanistan. And Afghanistan has told them in no uncertain terms to, stop blaming them and sort out their own problems. So I don't buy that at all, that this is a retaliation for the Jafar Express.
General Malik, if I were to ask you, what should be the military response? What are the options that India has on the table? We have carried out limited strikes, controlled strikes on Pakistani terror groups, terror launch pads in the past. What should we do at this stage, according to you?
Look, we should not just be isolating military response. I think we have now reached a stage where we should be looking at all the instruments available with the state, whether they are political, economic, and military also. So all those have to be considered when you take a decision at the level of the CCS, for example. Now, as far as response is concerned, my first take would be to investigate the functioning of the unified command in J&K. That is as far as the defensive side is concerned. What has gone wrong there? Why a lack of intelligence? Why we have not been able to check infiltration wherever it has taken place? Have we deployed our forces adequately in these tourist spots? Because during this period, that the tourists spread all over the place. So far, as I see it, we have been focusing either on Srinagar or on the Amarnath Yatra time when we deploy a large amount of forces, or when the VIPs visit. But we should have anticipated this with the kind of tourism that is taking place today. And as I said right in the beginning, isolated incidents of this nature will take place. They have taken place, and they will, in future also, they are likely to take place. Now, that is as far as the defensive side is concerned. But we also have to look at the proactive or the offensive this thing. And for that, we do have plans. And again, I would say that should not be looked at in isolation of the Army, Navy, or Air Force. We should be looking at all the instruments that are available to us, and then take a decision how we want to send a message, a strong message, an effective message to Pakistan. And there are many options available. We have a number of contingencies available, but they will all require CCS decision. And we also have to then consider the escalation that may take place, how to control the escalation when it takes place, whatever level that we want to, at the political as well as military level.
Right. Ambassador Shashank, if I can get you in at this stage, we do not have an ambassador serving in Pakistan. Diplomatic ties have been all-time low. We have a thin diplomatic presence in Pakistan, and vice versa. There have been news reports indicating that India may scrap the Indus Water Treaty or may pull out of it. Secondly, we may close down our mission in Pakistan, cut off diplomatic ties. None of this is confirmed. the government has said these are only speculative reports. We are awaiting a formal response from the government, but what kind of diplomatic response can we comfortably take, and what do you think are options before the government right now?
No, General Malik has said that it has to be a cohesive and all-inclusive response. We should take into account our interests in maintaining security in J&K and also making sure that these kind of dastardly acts are not repeated. You talked about Indus Water River Agreement. There, of course, what we have started doing already, that the water which is comes under our share directly, that we have started utilizing. In the past, we were allowing that all to go to Pakistan, and nothing very much was being done. And in fact, we were always short of water in Haryana, Delhi, and other places. So now that we have started using for the benefit of people in Kashmir, the benefit of people in Punjab and Haryana and Delhi. I think now the other thing which we need to do is to make sure that the bilateral treaties, generally they come to an end as soon as there is a war or any kind of conflict situation between two countries. We have never done it in the past. Therefore, there is always this hesitation that after all, we feel that Pakistani people are not to be blamed for this. And it's only the government which is directly or indirectly controlled by the army from behind the scene. Therefore, we have normally been very soft on that. But I think time has come for us to take hard decisions in this regard. Secondly, we should also tell all the neighbors of Pakistan that what they have done to us and what they might be doing in their countries also, so that there is a coordinated approach towards making Pakistan a civilized state and not to spread Islamic terrorism in the region. The third thing, of course, as regards the Indian mission, it is mainly to carry out basic operations of consular access, maybe whatever little bit of communications have to go on between two neighboring countries. So therefore, I do not know whether we can perhaps reduce it further, but to bring it down totally and then to request some third country to help us will not be very effective.
Right. Let me get in Mr. Tilak Deveshar once again. Mr. Deveshar, just to speak about fixing accountability, and perhaps this is what the Prime Minister and particularly Home Minister Amit Shah would be doing right now. You know, you had at least 6 agencies which would in different ways be responsible for the security of Jammu and Kashmir. At this point, would you say that this was a major intelligence failure on the part of the agencies involved in J&K?
You know, I think this is not the right time for this kind of an analysis or this kind of a post-mortem. There'll be time enough to do this later on. Right now, within 24 hours of the incident happened yesterday at about 2:30 or so in the afternoon, the whole focus would be in providing relief and succor to the families who have lost their loved ones, to decide what is the future course of action. And later on, certainly there has to be an accountability of what went wrong, as General Malik said, you know. But I think this time, just now, would be the wrong time to do that. It'll just demoralize all the agencies and the forces. Right now, we should all pool our resources and keep the focus on what needs to be done, which is, you know, to provide retribution on one hand and to provide succor to the families who have lost loved ones. We must not lose sight of that.
Mr. Deveshar?
But, yeah, go ahead.
Right. Mr. Deveshar, I would also like to ask you, the fact that these terrorists moved around and shot at civilians from point-blank range. Now, these civilians are very soft targets. Clearly, they must have done their recce's, knowing that the spot is 7 to 8 kilometers away from Pahalgam. They're just tourists hanging around, you know, riding ponies, sitting in snack or sitting in small restaurants. These are easy targets. Would you expect, or from your experience, do you believe that these people may have infiltrated Kashmir many months back, or they may have been part of sleeper cells which have been activated?
You see, I don't think these would be locals. You know, the manner in which this whole operation was launched and the timing, the recce, as you mentioned, the kind of intelligence that they had, I don't think so. This would be locals or, they would have had some local support. But these are highly trained people who have carried out this particular attack. So, yes, they would have infiltrated. I'm not sure if they came in months ago, because that would have been very much the winter, and it would be difficult when the passes are closed. They could have come recently, but we don't know. I mean, we'll come to know the real situation only when some of these fellows are caught, and I hope some of them are caught and interrogated. So we will come to know who was behind it, where did they come from. And I'm sure you'll find that some of them at least could be well be Lashkar, of course, but some of them could even be Pakistan Army or Frontier Corps personnel. So it's very difficult at this stage, with whatever little we know, when they actually came in. But I'm sure they are not locals.
Right. Let me also go back to General Malik at this stage. General Malik, as we speak about India's response, how can India, according to you, bring these terrorists to book? Could you give us a sense of how difficult would it be for us to catch these terrorists? We believe they must have escaped into forests nearby. How difficult is this terrain, according to you? And you've spoken about the military options that we have, but what is the kind of training these people would have got, considering their strong affiliations? And all indications are that they would have been well trained by the Pakistani army, mentored them, and some, as Tilak Deveshwar said, were perhaps members of the Pakistani armed forces as well.
Well, the exact identity of these terrorists at the moment is not known, and one would not like to speculate. But obviously, the training that has been carried out and the kind of weapon that they have carried, somebody said sniper rifles, somebody said AK-47s, and somebody said the American rifles. So these they are holding and they've been using, apparently they have been very well trained, and the manner in which they have come. Of course, they would have been helped by some ground workers also, which is, I have a feeling that they would be a mix of people who have come from across the border or LOC, and also a few who are probably overground workers or sleeping cells that they have got inside. So whatever time that they have spent, they have carried out recce. They know exactly what to do. And I tend to agree with Mr. Deveshwar that they are more likely to be outsiders. Otherwise, why would they ask somebody whether he's a Muslim or a Hindu? The fact is that they were trying to identify Hindus. That itself shows that they were not the local people of that area, And so some people have definitely come from across the border, and they have been very well trained, and they have sleeper cells which who would have given them help. And as far as training is concerned, they are more like commandos that we have in our forces. They would have been trained like that, not only under their own Lashkar-e-Taiba organization, but also under the ISI and the Pakistan Army.
Right. We've run out of time, but I'd like to thank all of you for joining us with those very important views. It's a very tragic day, of course, and India deliberating on the response that will come in. Thank you very much, Tilak Deveshwar, General Malik, and Ambassador Shashank for joining us on the program. As we wrap, it has been a traumatic last 24 hours for families of victims. Navy officer Vinay Narwal, one of the victims, was on leave after getting married just about 4 to 5 days ago. He was on his honeymoon when he was gunned down. Navy Chief Admiral Dinesh Tripathi paid a mark of respect by laying a wreath at the mortal remains of Vinay. His wife has also been seen bidding a very, very emotional farewell to him. Vinay's wife is among many others who have lost their loved ones. Families and friends of victims recounted the harrowing details of the attack, which led to a tragedy in Pahalgam.
जो ये वाक़ा हमारे मेहमानों के साथ हिंदुस्तान से आए हुए उन नौजवानों के साथ जो ये वाक़ा हुआ, उस खास करके हमारे इस रिश्ते में एक शरीफ नफ्स ये बच्चा जो घोड़े का काम करता था, जो इसको मार दिया गया, हम इसकी मजम्मत करते हैं।
Another person, Shomir Guho, and his family also went to Kashmir, and they were supposed to come back today, but they were. Samir Guho was also killed. His wife and his also children is there. We are standing in front of his house. We have with us the local people of who were friendly to Shomir Guho. ये बताइए दादा कि मतलब ये आप लोगों को पता था कि वो घूमने जा रहे हैं?
हाँ, 14 तारीख को हमसे बात हुआ है, वो बोले कि घूमने जा रहे हैं और ये हमारे नेबर है। ऐसा होने से हम लोग को क्या स्थिति होता है, हम लोग कहाँ है क्या कुछ नहीं पता चल रहा है कि हम लोग किस राज्य में बास कर रहे हैं, कहाँ बास कर रहे हैं।
My sister and her son are okay. They didn't had any injuries, but they were under shock. And meanwhile, my brother-in-law's status was not known, and he had to be airlifted because of his injuries. Later, after half an hour, I got the news, shocking news.
कोई अपील, कोई संदेश जनता से, सरकार से, कुछ भी आप कहना चाहेंगे?
मैं ये अकेला नहीं बोलूँगा, यहाँ पे पूरा महाराष्ट्र या पूरा इंडिया बोलेगा यहाँ पे कि उनको कड़ी से कड़ी सज़ा होनी चाहिए। ये 4-5 जन नहीं है, उनके पीछे बहुत बड़ी साजिश है ये चीज़ के लिए। तो उन सबको आज एक साथ में, जैसे 26/11 हुआ था, ये दूसरा आतंकी बड़ा हमला मैं ऐसा मानता हूँ।
The industry was always reaching out to RBI and was making a very appeal, significant appeal in terms of ensuring that the liquidity should not become a challenge. Particularly, I'm talking in the context of LCR, and I'm glad that the guidelines which have come in, it's actually a middle path. If at all you look at it as compared to what it was, and now what it will be from the 1st of April 26, it's more like a middle path. I would say that it has always been a collaborative approach, but I think as a regulator, they are very mindful in terms of the situations which are obtaining, and based upon that, whatever elbow room is available, I would say that they are willing to accommodate the banking system. Very mindful of the fact that growth is the need of the hour, and unless and until the banking sector is given the required support, growth may not really happen.
I think particularly when it comes to the LCR, rate cuts already were there, and therefore now if you want that the rate cuts should be transmitted, it was important that liquidity should be eased. Banks should not be looking over their shoulders in terms of what is going to be happening in 6 or 8 months' time. So I think while you are right in terms of the fact that there may be some signals to read, but these the changes that are there are perfectly understandable and justifiable in terms of the mandate of a central bank to ensure that there is growth, to make sure that there is counter-cyclicality in policy, and also make sure that the rate cuts actually get transmitted in a broader sense. When it comes to the runoff factor when it comes to digital deposits has been increased by 2.5%. But I think the stance of the RBI would seem to suggest
26 people have been killed in a terrorist attack targeted at tourists in Jammu and Kashmir's Pahalgam. The attack took place at Baisaran Valley, a popular tourist hotspot known as Mini Switzerland. Suspected terrorists opened fire, killing 26 people. This marks the deadliest terror attack in India on civilians since the 26/11 Mumbai attacks. Home Minister Amit Shah arrived in the valley yesterday and he visited the attack site today. He reviewed the security situation, held meetings with Lieutenant Governor Major Manoj Sinha, and Chief Minister Omar Abdullah. Meanwhile, Prime Minister Narendra Modi cut short his Saudi Arabia visit and arrived in Delhi. Upon his arrival, an emergency meeting was convened at the airport with National Security Advisor Ajit Doval and External Affairs Minister Subramaniam Jaishankar. The Resistance Front, an offshoot of terror outfit Lashkar-e-Toiba, has claimed responsibility for the attacks. Security agencies have released sketches of the suspects and a manhunt is underway. Kashmir Valley is now observing a near total shutdown against a terror attack for the first time in 35 years. Schools, colleges, businesses and organizations from all walks of life are supporting the Bandh call to protest the attack on tourists. Defence Minister Rajnath Singh promised a loud and clear response against the attack soon.
आतंकवादियों द्वारा किए गए कायरतापूर्ण हमले में हमारे देश ने अनेक निर्दोष नागरिकों को खोया है। इस घोर अमानवीय कृत्य से हम सभी गहरे शोक और दर्द में हैं। टेररिज्म के खिलाफ हमारी जीरो टॉलरेंस की पॉलिसी है। ऐसी हरकतों का जिम्मेदार और इसके जिम्मेदार लोगों को आने वाले कुछ ही समय में जोरदार तरीके से नजर आएगा। मैं देशवासियों को आश्वस्त करना चाहता हूं।
Baisaran Valley is a popular tourist hotspot which is accessible to tourists only on foot or on a pony ride. A 6-kilometer dirt track connects Pahalgam to Baisaran Valley. Ishan Vani visits the site of the attack.
This is the route to Baisaran, and this is actually no route at all. It's muddy, there are big boulders, and it's difficult to even walk on these. Even if I wore a normal shoes, it would be impossible to come here. Generally, tourists take pony and come here for leisure, but everywhere you look, there are marks and signs of the disaster that happened yesterday and something which was unexpected. Look how I have to walk through these steep and jump into certain places. There were rains that have further dampened the condition of this particular route. It's a trek generally taken by several tourists. They use ponies, as I said. It might be beautiful, but scariest of scenes were witnessed yesterday here on this difficult terrain to reach where the carnage took place yesterday.
I'm now joined by former Ambassador Ashok Sajjanar, security analyst Anju Gupta, Ahmed Ali Fayaz, a journalist based out of Jammu and Kashmir, with us as well. Ahmed Fayaz, I would like to ask you about the response of the people in the valley to this ghastly attack that we've seen near Pahalgam.
There have been attacks in the last 35 years. This kind of attacks have taken place in the 90s and up to the year 2003, March 2003, when a massacre of Kashmiri Pandits took place in Nadibarak. That was in March 2003. So every time there has been a response, but this response is different in the sense that this time people at many places came out openly. Not many of them did name Pakistan and militants, but it was directly against them, because on such occasions we did not see protest demonstrations or any sort of negative reactions against terrorists in the past. This is first time that the people have come out at many places, and this is for the first time that a complete shutdown is being observed across Kashmir Valley. In Jammu there have been in the past, but this is for the first time in Kashmir Valley that a shutdown is being observed against Pakistan and against the people who are believed to be Pakistan-sponsored terrorists who are responsible for this dastardly act. So people this time they have expressed it, they have come out on the roads. We have you must have seen some candlelight marches in the past, but they were limited to just 5, 10 or 20 people. But this time quite a large number of people. There are expressions from everybody, even the mainstream politicians who usually support and who usually demand the government should talk to Pakistan, and they call Afzal Guru and Maqbool Bhatt and other people as so-called heroes, and they subscribe to their ideology. They people have all gone. They have been muted this time, and this is for the first time again that a robust political and intellectual support structure which Pakistan enjoyed in Kashmir in the last 30 years, that has been completely muted, that's completely silent today. You must have seen when the Cheti Singhpura massacre took place that time, it did not take them even 10 hours or 12 hours to create an impression that this has been done by India, by themselves, because Bill Clinton, President of the United States, was in country, he was visiting. This time, the same would have been there. They would have created this kind of a narrative that J.D. Vance, the United States Vice President, is visiting here, and this has been done by India itself. But I did not hear anybody saying this kind of a thing. I did not see anybody trolling or criticizing the people who are critical of the terrorists openly this time. So this is a completely different reaction.
Okay, now let me also get in Anju Gupta at this point. Anju Gupta, how do you assess the involvement of Pakistan in this? How would you explain this to our viewers? You know, it is being said by many security analysts that the manner in which these terrorists acted, the fact that they were asking about the religious identity of each of the people they targeted, shows that they were not locals. How do you see a Pakistan hand and the correlation here?
Good evening, Parikshit. Thanks for having me on the show. You would recall on March 11, a passenger train between Quetta and Peshawar was hijacked in Pakistan, Balochistan area. And there were about hundreds of security personnel on that train. And the BLA, the Baloch Liberation Army, claimed that attack, and they segregated security personnel from civilian by checking their I-cards. It took all the might of Pakistan 36 hours to free that, to end that standoff. But interestingly, you know, when the army started briefing the press, even while the standoff was continuing, they started playing, the video clips of what was coming on Indian television, which was nothing but just reporting. And they started calling it an information warfare, thereby saying that this operation, this hijack had been done with the support of India and also Afghanistan. And the information warfare is playing out on Indian television and social media. They also talked about wiretrap with the set between, a handler in Afghanistan and a militant on board. So in what they were doing was they blamed India and they blamed Afghanistan for that attack on a passenger train recently on March 11. And that set the stage for a revenge attack. I think on this show, I'd say the same thing, that this is something that is going to probably show up in some manner. Now, a few days ago, Chief of Army Staff, General Asim Munir, made brazen statements about Kashmir, which I'm sure have been repeated on your show, that Kashmir is a jugular vein and that we haven't forgotten our brethren. It looked like a warning. When I heard this, it looked like a warning. Why should Chief of Army Staff be making this statement out of the blue? Third, the modus operandi definitely points to involvement of foreign terrorists. See, this is the area where there were tourists who would be carrying mobiles, they'll be taking pictures and videos, etc. Locals normally would not have the guts to kind of be, to be captured in photos and videos and all. And we've seen so many of them have come out, number one. Number two, it was a bold and brazen attack, which was carried out only for 20 minutes. And after 20 minutes, there was a professional getaway from that area because they knew help could come in 20 minutes. They could get away. They may have been local support. It is a subject of investigation, but all this points to I think the Pakistan's footprints signatures are there all over. So, but let's wait for the investigation to come out and, give us more details.
Right. Let me get in Ambassador Sajjanar at this point. Ambassador Sajjanar, what do you feel about the international response that we've seen since the attack took place, and the stories have been unfolding, tragic stories of civilians being targeted, young couples? The Navy officer was just married 4 to 5 days ago. He was on his honeymoon when this happened. They didn't really spare anybody. But the kind of condemnation that we've seen, where do you think that leaves India in terms of responding to Pakistan at this point?
Yeah, thank you very much, Parikshit. You're very right. You know, the stories that we've been seeing and the images that you are playing out on your screen, they are truly heart-wrenching. But, you know, the comments that have come from the global leadership, I don't think they have really been motivated by the personal stories, you know, you spoke about the naval officer, you know, Lieutenant Narwal, who's sort of, you know, just got married. I think the whole issue that, you know, the terrorists came in and butchered 26, 28, you know, the current number seems to be 28 people who have died, succumbed to their injuries. So the fact that it has been done and all of them have been killed in cold blood, I think that has really shaken the global community. And all these statements that we have received, whether it is from President Donald Trump or Vice President J.D. Vance, who's in India at the moment, or President Putin, or Prime Minister Giorgia Meloni, or the UK Prime Minister Keir Starmer. So I think all of them have shown full support as far as India is concerned. I think this has been evident. India has been speaking about its zero tolerance level as far as terrorism is concerned. And it finds whether, you know, it was the Mumbai attacks, 26/11, or Pathankot, or any of the other attacks, we've had the international community with us. And that is why you would see, Parikshit, that when we had the surgical strike in 2016, September, or we had the Balakot in February 2019, the whole world stood with us. No one really came out, you know, to have a critical word. So I think in this time also, the world stands with India. You know, India has issued these sketches again that you are showing on your screens. And out of them, you know, 4 sketches have been shown, have been shared with the public. And there it says that out of these 4, 3 of them are from Lashkar or TRF, and only 1 of them is a local, you know, accomplice. Now, of course, these sort of attacks cannot be completed without, you know, they cannot be carried out without local support.
Ambassador Sajjanar, I'm going to read out an important tweet that has come from the MEA spokesperson, Randir Jaiswal. And the question to you, Michael Kugelman, is this. Michael Kugelman, a well-known foreign policy analyst joining us from US, a close watcher of India-Pakistan relations as well. Michael, the MEA has tweeted, Vice President J.D. Vance called Prime Minister Narendra Modi strongly condemning the dastardly terror attack in J&K. He conveyed his deepest condolences on the loss of lives and reiterated that the US stands with the people of India in this difficult hour. He expressed that the US is ready to provide all assistance in the joint fight against terrorism. How do you see the US reacting to an attack of this kind when the Vice President of America was visiting India? He was giving a speech in the Rajasthan International Center when this attack happened in Jammu and Kashmir. How seriously do you expect this administration to take this?
Well, first of all, let me offer my condolences for this horrific attack. It's simply abhorrent. Clearly, the administration in Washington will take this very seriously. This is an administration that takes the issue of terrorism extremely seriously, and that's how the first Trump administration operated as well. And you'll recall when the Pulwama attack happened in 2019, the Trump administration back then was offering or was similarly responding very similarly with a very strong condemnation of the attack and pledges of solidarity with India, just like in this case. And you're right. The fact that the U.S. Vice President was in India when this attack happened, I think it'll bring it closer to home, so to speak, for the U.S. Administration. But I think that, in line with what one of your other panelists noted, this is how the world on the whole is reacting. I mean, we're seeing a unified response internationally to this attack. And what's particularly significant that even some countries like China, Turkey, Saudi Arabia that have close ties with Pakistan, they also have condemned it. So I think that the U.S. response has been very much in line with what we've seen from around the world. And indeed, I suspect that the U.S. in the coming days will be in close touch with India. It will offer support. It's unclear what exactly that means in practice. But I think the important thing to emphasize here is that the U.S. will certainly take this extremely seriously. And, just because of obviously the scale of the attack, as well as targeting the fact that these were civilians that were targeted, makes it particularly egregious. And it's something that will certainly be high on the priority list for, an administration that certainly has a lot on its plate in Washington. But this certainly will be a key priority for the administration to monitor in the coming days.
Right. And we do remember during the Galwan attack and the tensions between India and China, those who had served in the first Trump administration say US and India had coordinated responses and shared intelligence very closely during that period as well. We'd also like to tell our viewers that the Ministry of External Affairs is going to be addressing a press conference at 7 p.m. this evening. This will be the government's view after deliberations. Remember, the Cabinet Committee on Security is also taking place this evening. So the press conference will be held post that. Very important to watch out what the Indian government says there. Let me get in Anju Gupta at this point again. Ms. Gupta, one point that is coming up and people are asking is that considering that this was a tourist hotspot and there were so many people there, there were judges of the High Court who were also there for a picnic, so to say. How come there were no security personnel around? How could this be a intelligence failure, so to say? And clearly, the situation was one that the terrorists took advantage of. What do you think was the larger message here?
I think, Parikshit, you're asking me two things. One is about if there was an intelligence failure. I think it is not appropriate to comment on this right now, because I'm sure the government response will also be looking at this aspect, and they will take their time, and there's a methodology by which they would look at this aspect, and I'm sure they will say something. So this is not for me to comment on. The second is message. So to me, there are, this attack is Pakistan's message to four entities. First is to their own people, that this is the revenge for Jafar attack, something that, in which they had taken a public position that India and Afghanistan have done it and we are going to, settle so. So I think it's a message to them. It's a message to security personnel. There were about 100 casualties in that particular attack. Casualties, not fatalities. Second, it's a message also to the separatist elements in Jammu and Kashmir, if any, that look, we very much care for you. We are there, and you stay connected with Pakistan if you have these, thoughts. It's an opportunity for recruitment. See, the big ticket attacks in terrorism are also mounted for propaganda and for recruitment. It is to say that we stand by this cause. Anybody who feels about it, please connect to us. This is for recruitment too. Third is, I think it's a message for powers like the US and Saudi Arabia in this case. Vice President Vance was in India and our Prime Minister Modi was visiting Saudi Arabia. Now, these are two very important states, nations who are also friends with each other. What is the message? The message is that you may have very good relations with India, but Kashmir issue is not settled. Why I'm saying so is that for last couple of weeks, Pakistan has upped the ante on Palestine front. The clerics have been holding big meetings, rallies in Pakistan, including Grand Mufti, who've been issuing fatwa, calling for jihad in favor of Palestine. Something that they've suddenly started doing it. So they may be linking it to Kashmir as they have done earlier on. That's my assessment as of now on the basis of what has come out. Fourth, it is also a message for Taliban with whom they have, very hostile relationship. It is to actually project the strength and capability for counter cross-border operations of this kind far away from the border region. So to me, at this moment, I would say these four messages look pretty clear to me. But I'm sure there
Right.
is more to it. Yeah.
Oh, absolutely. Let me get in Ahmed Ali Fayaz once again. Ahmed Ali Fayaz, do you feel that considering that these terrorists hit tourists, this was a very important part of the Kashmir economy? A lot of revenue comes in from tourists. There were locals who also died. For example, there was a pony owner there who died. There were pony owners who rushed when they heard gunshots to help the people. Locals tried to help wherever they can. Do you feel that this shows that this time there was a lot of anger among people, that here you have Pakistani terrorists hitting our bread and butter, hitting our own people? Do you think this shows that there was a lot of anger with what has happened?
I think the objective is the same, which has been over the years, to separate fear and to tell the world and the people of Jammu and Kashmir and the whole country that militancy, the terrorism has not gone away. We are very much here. Abrogation of Article 370 has not changed the situation at the ground. These are the broader messages they wanted to convey. Yes, this is an attack on Kashmir's economy, because tourism is a mainstay of Kashmir economy. Over 2 million people are directly, indirectly related to tourism, and I have seen people across Jammu and Kashmir today who are completely perturbed and disturbed over this development. And also there have been condemnations from clergy, even the clerics who have usually been pro-separatist and pro-Pakistan. They also have been condemning it openly. Usually they used to be silent, or their condemnations in the past used to be equivocal. They didn't appear to be very clear-cut against the militants and against Pakistan. But this time it is different. Even the chairman of the Hurriyat Conference, Mirwais Umar Farooq, came out with a tweet against it. This incident, they have been condemning such incidents in the past also, but they have been creating suspicion, and they have been raising questions that whosoever has done it. This has been their phrase, whosoever has done it. So at most of the times, they, as I said previously, they have created impression that there are people within the security forces, within the Indian agencies. They have been committing these things, and they have been shielding militants for anything which the common people believe that these are the acts of terrorists. But this time it's one voice from the mainstream politicians to the separatist politicians, from clergy, from
right.
There's not an organized.
Ahmed Fayaz.
Yes.
Right. Ahmed Fayaz, I'm going to come back to you. Very important points there about the mood in the valley. But Ambassador Sajjanar, if I were to ask you about India's response, what do you think we can do in terms of internationally isolating Pakistan? We've done that previously when there have been terror attacks. Can India impose sanctions? What more can we do from a diplomatic point of view?
Yeah, I think there are many things that we can do from diplomatic point of view, and there are so many things that have been mentioned that are up in the air as to what are the possibilities, walking out of the Indus Waters Treaty, etc. So, I'll not go into any of those, but I think what the country wants is a more robust response, something that will make the pain go to, the perpetrators of this crime, not only to the 4 or 7 of the terrorists who were actively involved in this. So I think that is what the country wants. And I think that is going by the track record of this government, that, what happened after Uri, what happened after Pulwama. And also the fact, mind you, Parikshit, keep in mind that, this government has been very critical of the lack of action by, the government in 2008 after the 26/11 attacks, that no action was taken. And this government has sought to differentiate itself from that particular, or the inaction at that particular time when we lost 167 people. So I think definitely some sort of a kinetic response. Maybe there is also some diplomatic response also, but even if there's a kinetic response, which I think will definitely be coming, that is what Raksha Mantri Rajnath Singh has also said. But we'll find that the whole world stands by us as they have stood by us in earlier actions. Parikshit, if you permit, I will just like to make two brief comments on what Anju mentioned about what the objectives might have been as far as Pakistan is concerned. You know, the objectives might have been what they are, but let us also see how successful will they be in achieving that. So if it is in terms of, further, once again, internationalizing Kashmir, I think they are going to fail miserably. We've seen that, when G20, we had meetings in Srinagar, we had representatives from the United States, we had representatives from Saudi, from UAE. There is investment coming in from these countries into that region. So I think the people have really moved on as far as the Kashmir issue is concerned. The other, in terms of sort of, telling Saudi Arabia and the United States that Kashmir is alive, it's not settled. I don't think, you look at what Pakistan says at all the UN General Assembly meetings. There is not a single country, except maybe Turkey once in a while, that rises up to mention Kashmir in their statements. And on the Taliban issue, I think the Taliban has taken the measure of what Pakistan can do. So whether it is the Afghan Taliban or TTP or BLA, I think they know what they are doing, and actions like this, of course, will not really be able to send much of a message. They might have wanted to do all that, what Anju has said, but I think they're not going to be successful in that.
Okay, we've completely run out of time, but we'd like to thank Ambassador Sajjan Har, Ahmed Fayaz, Michael Kugelman and Ms. Anju Gupta for joining us on the program. As we wrap this show, it has been a traumatic last 24 hours for families of the victims. Navy officer Vinay Narwal, one of the victims, was on leave after getting married a week ago. He was on his honeymoon when he was gunned down. Navy Chief Admiral Dinesh K. Tripathi paid a mark of respect by laying a wreath at the mortal remains of Vinay. His wife was also seen bidding an emotional farewell to him. Vinay's wife is among many others who have lost their loved ones. Families and friends of victims recounted the harrowing details of the attack, which led to tragedy in Pahalgam.
जो ये वाक़ा हमारे मेहमानों के साथ हिंदुस्तान से आए हुए उन नौजवानों के साथ जो ये वाक़ा हुआ, उस खास करके हमारे इस रिश्ते में एक शरीफ नफ्स ये बच्चा जो घोड़े का काम करता था, जो इसको मार दिया गया, हम इसकी मजम्मत करते हैं.
Another person, Shomir Guho, and his family also went to Kashmir, and they were supposed to come back today, but they were. Samir Guho was also killed. His wife and his also children is there. We are standing in front of his house. We have with us the local people who were friendly to Shomir Guho. ये बताइए दादा कि मतलब ये आप लोगों को पता था कि वो घूमने जा रहे हैं?
हाँ, 14 तारीख को हमसे बात हुआ है, वो बोले कि घूमने जा रहे हैं और ये हमारे नेबर है. ऐसा होने से हम लोग को क्या स्थिति होता है, हम लोग कहाँ है, क्या कुछ नहीं पता चल रहा है कि हम लोग किस राज्य में बास कर रहे हैं, कहाँ बास कर रहे हैं.
My sister and her son are okay. They didn't had any injuries, but they were under shock. And meanwhile, my brother-in-law's status was not known, and he had to be airlifted because of his injuries. Later, after half an hour, I got the news, shocking news.
कोई अपील, कोई संदेश जनता से, सरकार से, कुछ भी आप कहना चाहेंगे?
मैं ये अकेला नहीं बोलूँगा, यहाँ पे पूरा महाराष्ट्र या पूरा इंडिया बोलेगा यहाँ पे कि उनको कड़ी से कड़ी सज़ा होनी चाहिए. ये 4-5 जन नहीं है, उनके पीछे बहुत बड़ी साजिश है ये चीज़ के लिए. तो उन सबको आज एक साथ में, जैसे 26/11 हुआ था, ये दूसरा आतंकी बड़ा हमला मैं ऐसा मानता हूँ.
Cognizance of prudential requirements, but they will make sure that banks get sufficient time to adjust so that any policy action of the RBI is non-disruptive as far as growth is concerned.
think the US-China trade deal, which is the second one, I think it's going to be very difficult. At least my sense is that some of the issues which US has with respect to China, these issues cannot be resolved quite quickly. And the longer these issues last and we don't see any sort of deal or some sort of a compromise between these two large
Welcome to this Monetary Policy Special. The Monetary Policy Committee of the Reserve Bank voted unanimously for a rate cut on April 9th and an accommodative stance, and the minutes of the policy, which are just out, indicate a strong dovish tone in the writings of practically all the members. Governor Sanjay Malhotra has summed up the arguments beautifully in his minutes by saying that with CPI inflation aligned to the MPC's target of 4% and growth moderating, it was logical for the MPC to cut rates and change the stance to accommodative. Strongly agreeing with him were the other members, including Mr. Nagesh Kumar, who has actually very strongly pointed to the hurdles to growth emanating from the global sphere thanks to the US tariffs. Joining me now to comment on the minutes and the state of the global economy and the Indian economy is Mr. Nagesh Kumar himself, external member of the MPC. In a bit, I will also be joined by Abhishek Upadhyay of ICICI Securities PD and Suvadeep Rakshit of Kotak Institutional Equities to give us the market impact and market reading of the minutes of the MPC. But first, let me welcome Mr. Nagesh Kumar to the conversation. Thank you very much, Mr. Kumar, for joining me. First, if you can parse the global environment, sir, the way you have written, it looks like a recessionary conditions are imminent. Can you tell us how bad this impact can be on Indian growth? Should we be prepared for something less than 6.5?
I mentioned in my statement that there are 2 or 3 things one should worry about, because the meeting happened during 7th to 9th,
Yes.
and that was just exactly 1 week after the 2nd April Liberation Day announcement of President Trump, where he slapped very high tariffs on every country. Now, some of our Indian economists and analysts are reading something positive in it because India was, sort of slapped with 26% tariffs vis-a-vis other countries, our peers, a much higher, percentage. So we were taking a bit of relief that we may be spared lightly, and we may actually be able to make more inroads in the United States market because our peers are facing higher tariffs. Now, but that is only part of the story. The second part of the story is that China, which is facing 145% or 245% kind of tariffs, and that means they will be really eased out of United States market, and the kind of excess capacity they are sitting with and the deep pockets, they will begin to dump that capacity in Indian market and in our other destinations of exports, EU, UK, and rest of the world. So we may be getting a hit in our exports and in our domestic market, domestic production as well. And the third thing I pointed out was that there is a serious risk of a world economy getting into a kind of a prolonged recession, which may impact Indian economy also like any other. So there is a compounded kind of thing, but that is all evolving situation. One has to see how the negotiations that different countries are having with the United States are able to bring them down, these tariffs. And then what else is done to support the growth and not allow it to go into recession globally. So all of these are open questions which we will find answers to in the next half a year, 5-6 months, are going to be very critical. As of now, I mean, there is some decline in the projections, like RBI projection for India for 2025 and 26 was 6.5% growth rate, but IMF has come down and has brought it down to 6.2 for 2025 and 6.3 for 2026 for India. So there is already some kind of a downward, pressure on the growth rates projected for India. But one has to see how the situation evolves.
Okay. No, Mr. Kumar, you're very strongly pointing out to instances of Chinese dumping in other countries. So do you foresee a very good possibility that inflation in our country may be actually even less than the 4% that Reserve Bank has now forecast for this year?
I think inflation-wise, we are now seeing not so much of an issue. First of all, the crude prices have come down below $75 to a barrel. And all other commodities are also heading downwards because Chinese economy will be slowing down. And that is a major source of consumption of these commodities. So that is one factor. Then the projections of our monsoon, our predictions of our monsoon are going to be that it is going to be the normal one, and that helps in keeping prices in India in check. So I think from every region or direction, you could feel very much convinced that inflation will remain range bound, so to say. And different surveys are also projecting the inflationary expectations remaining anchored.
But, the normal way in which we are made to think about monetary policy is that it should be inflation plus 1.5%, the real rate. So most people were arguing for 4% CPI forecast, add 1.5%, which is seen as the real rate, and 5.5% would be the, the end rate of this rate cutting cycle. Do you think it can be even more, like, 5/4 of 5%, considering that there are serious disinflationary pressures coming from the global environment?
This is something which one has to take a call. And, the frequency of MPC meetings is, I think, very sensible. Every other month we meet. And so we will take a call when the more up-to-date numbers are available. And it's hard to say at this stage, but all of us in MPC were very much concerned about what is happening in the world economy and how it would impact India. And if necessary, we take action accordingly. So right now, it would be very hard for anyone to say that it will go down to which level. But I think everyone is concerned and is watching and very cautiously. And, there would be, I'm sure, no, effort will be spared from either RBI or the government of India to sustain and protect or preserve growth rate.
Okay, but what is your own reading? I mean, your arguments are sounding very concerned about the global ambience in terms of a possible recession and possible Chinese dumping. So if you have to choose, do you think you are likely to see lower than forecast growth, as you say, 6.2 that the IMF has put out? What's your own reading? Do you think growth can be much lower than 6.5 and even inflation lower than 4?
At this stage, it is not wise to hazard because the actions can be taken to prevent that from happening. So it is possible that we are able to have a very good deal with the United States, which is very much possible. And it is also possible that other countries can also arrive at some kind of deal with the United States to prevent this global recession from happening in a very serious manner. So all of this is kind of something we need to watch, but not be concerned overly at this stage. So I think that's why I said next few months are going to be very sort of challenging in the sense that we need to be watchful and take action.
All right.
So, yeah.
I get your point, sir. You don't want to jump into any conclusion at this juncture. But I have to jump into a commercial break. Coming back in a jiffy, and we have more questions for you. And I will be inviting my other guests, Subhadeep and Abhishek as well, back in a jiffy.
It will also have impact on pretty much the global economy as well as global financial assets, I would say. I would just say that it's going to be choppy. It's going to be volatile. Incrementally, news flow, at least on the tariff front, might be positive, but that does not mean that we are out of the woods, because in the end, I think the market will very intensely scrutinize how the US data, hard data, will emerge in the months ahead. I would just say that I think India looks okay from a regional context. Look, I look at Asia, ex-Japan markets, and literally you go market by market. There are challenges in pretty much every market. North Asia is clearly more trade exposed. So whether it's China, Korea, Taiwan, those markets have problems. Southeast Asian markets are too small for some of these markets. It'll be very difficult to strike some of those trade deals. And then we have India, which has very less trade dependency with the US, as well as other North Asian markets. And then, of course, there's a possibility of a trade deal coming through as well. That's not to say that stocks are out of the woods. I think it's going to be choppy. I think the market might also consolidate because at the end of the day, if let's say US equities is under pressure, the issue with India still is that we are at like 21, 22 times. It's not a cheap market. So stocks are not out of the woods.
Welcome back to a Monetary Policy Special. We have just got the minutes of the Reserve Bank's Monetary Policy Committee's meeting. that ended on April 9th. And I have been speaking with the external member, Mr. Nagesh Kumar. Joining me now are two market experts. I have Abhishek Upadhyay, the senior economist at ICICI Securities PD, and Subhadeep Rakshi, chief economist at Kotak Institutional Equities. Subhadeep, Abhishek, welcome to the show. And Mr. Nagesh Kumar, thank you very much for staying on. Abhishek, you all have read the minutes and you had the advantage of listening to Mr. Nagesh Kumar himself. What are your key takeaways? Are you getting any sense of even more dovishness than you expected? Just what the key takeaways are?
Well, the broad message is very clear. The committee clearly has a very strong conviction about the inflation outlook. At the same time, clearly, compared to the last meeting, the downside risks to growth have increased, and that's why the committee downgraded the numbers also. With inflation expected to be a target and output gap, which is negative, likely to stay negative. Also, some of the worries on the external front, which were there, have persisted. But what has also happened is that dollar has actually weakened. There were worries that dollar may gain when if US were to impose high tariffs, but that has not happened. Also, crude prices have come down, other commodity prices have come down. So from overall, taking all these things together, it was quite clear that a rate cut was to be done. At the same time, more importantly, the committee is also guided for future easing by changing the stance to accommodative. There is some, it appears there is some difference in views, particularly in the external members, about whether immediate rate cut, is a done deal in the June meeting. One of the external members indicates that he's voting for the current stance only because rate hikes are off the table, not because immediate easing is imminent. Another member talks about upside risk to inflation, presumably from on account of currency weakness, etc.
Yes.
Our own view is there are downside risks to both inflation and growth based on information we have currently, and therefore we pencil in at least 50 basis points or more cuts from MPC.
Okay, thanks for that. Yes, I did notice Saugata Bhattacharya saying that, giving a sense that he's not game for a cut every time. At least that's the sense one got. Subhadeep, any key takeaways that wants you to change your mind in terms of how many rate cuts and when?
So, Lata, we were at 75 to 100 bips of rate cuts even going into the policy, right? So from that perspective, we were ahead in terms of what the consensus was expecting at around 50 bips. Look, it is in some sense derived from the fact that growth is on the weaker side. And especially after the tariffs have been imposed, of course, we have seen a lot of flux after that. There is a downside in terms of the growth, and we are looking at a range of around 5.8 to 6.2% kind of a growth with a point estimate of around 6%. With this kind of a growth and our inflation forecast being at around 4%, the growth inflation mix, the output gap opening up helps in our call in terms of the, let's say 75 to 100 bips. So when we read the minutes, I think it's important to note that even Dr. Ranjan is talking about the concerns on growth now being much more than the concerns on inflation. And to that extent, the accommodative stance, as well as, if you look at the global scenario, kind of indicates that the push should be towards further rate cuts. Of course, there will be divergence of opinion in terms of whether it's consecutive or whether you wait and do the rate cuts.
Subhadeep, 1 minute. My pointed question to both you and Abhishek is the dovishness more than what the market has factored in? For instance, Subhadeep, tomorrow should we see yields lower?
Good question, because see, I think it is, for me, my read was that it is a little more dovish than what the market was expecting.
Okay, that was my reading as well. So,
yes, I think that should warrant some kind of a reaction. Whether now the OIS or the markets kind of look at a further 25 bips from the 50 bips of consensus, I think that we'll figure out. But I think
fair enough.
It is.
No, I agree. It will be more dovish because we are mentally also we have become a little more worried about global growth. Abhishek, very quickly that question. Is it more than what the market has factored in? What may the minutes do to the markets tomorrow?
Difficult for a favorable surprise, Lata, with 10-year yield already close to 6.3 levels. End of March, we were closer to 6.6. Now we are closer to 6.3. Very difficult for, these minutes to, by itself lead to, further another, sharp leg down in yields. I don't see that happening.
Okay. Well, let me toss then, get the final word from Mr. Nagesh Kumar himself. So, there are a lot of people who share the grimness of the global environment that you have very nicely explained in your minutes. The US accounts for 4 trillion of exports, which is, almost the entire Indian GDP. That's the kind of exports they consume, and they were consuming it at 2.5% tariffs. Now you take all the average 20%, 25% on automobiles and steel and aluminium, and plus add the 10% on all goods, and plus add the extra tariffs on China. Clearly, the 2.5% has gone to 25%. Now, we are looking at a very serious situation. No matter what advantage we have over Vietnam or Bangladesh, that market is now going to come at a huge price. So do you think there will be a scope for a double cut at some point? What I mean is a 50 bips in one go.
Yeah. Well, Lata, as I said earlier, these are positioning, the tariffs which have been announced. They are kind of the starting point of a negotiation or discussion. So I do not think that at the end of the day they will hold. And so they will be in negotiations between different governments, different countries and all that. So the picture would become clear in, say, 6 months down the line. And then only you will be able to decide and, how much of a hit I'm taking in terms of my growth projections and what it means for our inflation, and then accordingly craft a response. Or it is very open at this stage whether there will be a further cut, whether they will, and how many of them, and whether double or single. So I think we have to keep watching and reacting as we go along.
Okay. And is your sense on inflation that we are going to be positively surprised because so many countries will not be able to push their goods to the US and will be looking for a home? See, the Asian output gap is really large. Whatever be the global output gap, there is no doubt that Asia was the production house of the world, and now that output will look for a home. So should we bet on much more serious disinflation?
Possibility, but again, it depends on what action government of India will take to prevent this dumping from coming to Indian shores, for instance. And if it is prevented, then it is not going to be that serious.
Okay.
But if it is allowed to come to our shores, then yes, it would be affecting the prices in the economy.
That's a very fair point, sir. There are people who are complaining already that the anti-dumping on non-ferrous metals is more expensive than the imported prices, and therefore it can actually be a bit inflationary. But thank you very much for giving us a many-sided insight into what is the thinking of the Monetary Policy Committee. And thank you, Abhishek and Suvadeep, for giving me an idea of how the market may interpret. As you all point out, already a lot of dovishness is baked into the yields. At 6.3%, how much more can the yields react? That's a good question. Thank you very much for joining me on this special monetary policy issue.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18, weeknights at 7 p.m.
Hello and welcome to Startup Street. I'm Ritu Singh and with me is Shruti Mishra and Arundhati Ramanan. Here are the key headlines from the startup space. Ampivo AI, a multimodal AI solutions provider, acquires a 51% stake in Commerce Forever Solutions, a B2B e-commerce operations firm. Ampivo AI will be deploying advanced predictive AI technology in Commerce Forever Solutions to enable long-term cost optimization.
Skill-based training and higher education platform Mversity secures $5 million in pre-Series A round led by Z47 and Lightspeed with participation from Ulterior Capital and Innovin Capital. The company is on track to end the current financial year with 75-plus campuses.
Tesla's profits plunge over 70% amid heightened competition and a backlash over Elon Musk's role in Trump administration. Musk says he will spend less time in his government role. The Tesla CFO says the company is carefully working on an India entry and calls it a hard market.
European Union imposes a $571 million penalty on Apple and a $228 million penalty on Facebook's parent company, Meta. Both companies penalized for breaching the digital competition laws.
If Google is forced to sell the Chrome web browser, OpenAI is interested in buying. A top OpenAI executive testifies in Google's antitrust trial where US regulators are seeking to break up the company. A judge has ruled Google enjoys a monopoly in online search and related advertising.
Electric cab service Blue Smart appoints Grant Thornton for a forensic audit as per Reuters. This move comes after regulatory investigation found its co-founder allegedly diverted and misused funds which were meant to buy cars.
Well, those were the headlines we've been tracking for you this evening. CXO-driven angel investment platform Inflection Point Ventures has announced the launch of the IPV Gift City Fund, a $110 million Category 1 angel fund registered under Gift City's IFSCA framework. The fund includes a $6 million green shoe option and is targeting its first close by June this year. Following the first close, the fund will open for broader investor participation and begin deploying capital into curated early-stage opportunities. To tell us more, I'm joined by the founder of Inflection Point Ventures, Vinay Bansal. Vinay, many congratulations on the launch of the IPV Gift City Fund. To begin with, tell us what inspired the decision to launch this fund under the Gift City framework, and how does this fund align with the broader vision you have for Inflection Point Ventures?
No, sure. Thank you. I think the vision always has been to help startups in a manner that their success rate is 10x. And then it also then helps the country grow. India has been a great investment destination. And I think Gift City allows for a very smooth process for our investors based outside India to be able to invest in Indian startups. The second advantage that it provides is for our Indian investors to also be able to use their LRS limits to invest in some unlisted startups outside India as well. But most of this money will be coming from outside India into India for investment in Indian startups. In terms of alignment to vision, I think we are very clear we want to democratize and make this asset class available to CXOs, which was earlier available to only high net worth individuals. These CXOs can bring their knowledge and their expertise to help startups grow and make India more innovative while making it far better for the founders to be far more successful.
Sure. Vinay, if you could break down the structure of the fund for us. You have announced a $110 million corpus with a $6 million green shoe option. How do you plan to deploy this capital?
Sure. So our earlier fund, which was an India-registered fund, is also a similar size, which is $110 million kind of a size. So we want to just replicate a very similar structure in the Gift City domain as well. So this money will not be deployed in just 1 year, right? This will be deployed over the next 2 to 3 years. And therefore, will be a mix. 80% of this will be our international investors investing into India.
Okay. You said it will be deployed in the next 2 to 3 years, but I believe you're aiming to build a portfolio of 60 startups a year. How do you plan to evaluate and support this volume of deals, and what will be the ticket size of the investments you make?
Sure. So IPV already has one of the largest teams in India. We are about 200 plus people. Those work on looking at about 10,000 deals in a year, out of which we look at about 50 to 60 to finally deploy. Since the money is going to be flowing into India for Indian startups, it becomes an additional support system within IPV, wherein we anyway are looking at all of these startups in India. Now foreigners will also have an opportunity to deploy within these startups in India. So about 50 to 55 startups will be Indian startups, where we are already looking at it and already evaluating it, enabling it for foreign investors. And another 5 to 6 startups to begin with will be the international startups where Indians can also deploy money in.
All right. You know, the fund remains sector agnostic, but are there any particular sectors or themes that you're excited about for this fund cycle?
Sure. I think we are always focused on the problems and great founders looking to solve big problems in innovative manners. That's how we'll continue to focus on. I think if you look around today's problems lie around healthcare, around climate, Delhi's pollution and pollution everywhere else that's coming up. So these two sectors remain hot. AI remains the third sector, which continues to invite investments, and Indian talent is great on the AI side. Drones and space are other two upcoming sectors where we see huge opportunity. So these five will remain. Consumer will continue to drive India's economy as we are the largest population on earth and a young population, and our income levels are rising. So consumer will remain a constant theme over the next couple of years as well.
Okay, you know, one of the compelling aspects of the IPV Gift City Fund is its ability to tap into global markets, and you touched upon this earlier, but what kind of cross-border opportunities are you looking to explore now?
I think we'll be early to say because we are very sharp about where we invest. Typically, you know, we look at about 200 companies before we pick one to invest in, right? So if it is cross-border, we'll have to be very sharp about what problems are they solving internationally, and even if they are based internationally, can they help India to advance in some manner? So those are the kind of things we look at, but we'll be too early to say for now. We are just focused on doing our first close next month.
Sure. But, you know, how does the Gift City framework help you and your investors navigate some of the traditional hurdles of international investing? Also, Vinay, if you could, throw some light on operating under IFSCA brings a different regulatory environment as compared to SEBI. What has your experience been like working with the IFSCA so far? And how do you see Gift City becoming a global investment gateway for Indian funds and startups?
No, I definitely see this as a great initiative, I think, which has been executed very well. I think international investors or foreigners don't really need a PAN or a demat account, to be able to invest in India. That really opens up a lot of opportunities for international investors to invest in a hot investment, target, which is India today, right? So as we are, talking to many of these international investors, they have generally been routing their money through, let's say, tax-free zones, whether it is Dubai or Singapore or Mauritius. I think with this option being available, I think it was a no-brainer for us to be able to set it up within Indian borders, within Gift City, and not set up any of our funds outside. So we are proud that we are working for India and helping India becoming more sustainable, more innovative, while helping also with the forex reserves.
All right, Vinay, on that note, I'll have to wrap up our conversation. Yes, go ahead.
The experience working with IFSCA was great. I think very high quality people, very, very progressive thinking, and very, very quick decisions.
All right, on that note, we'll have to wrap up our conversation. But Vinay, many thanks for joining us on Startup Street. Thank you so much.
Thanks a lot. Appreciate it. Have a good day ahead.
Moving on the hot seat, Elo has bagged 114.3 crore rupees in its Series B funding to expand into new markets and accelerate its monetization efforts. The round was led by Singapore-based venture capital firm Play Ventures, with participation from new and existing investors such as Kalari Capital, Mixi Investments, Gamescraft Technologies, Griffin Gaming Partners, and others. With this investment, Elo has raised over $50 million in funding to date. Joining me now to discuss this further is its founder and CEO, Saurabh Pandey. Saurabh, thank you so much for taking time out and being here with us on Startup Street, and congratulations on raising these funds. We spoke last year when you had raised funds as well at that time. So what has been the most successful, monetization levers for you so far, and how do you plan to scale your $60 million run rate goal?
Excellent. The way we've been building this, it's very interesting because it's been monetizing in a manner which traditional consumer platforms don't monetize. Traditionally, you would see a lot of people running ads or doing subscriptions. Elo is essentially an opt-in based platform, where as a consumer, you can continue to choose to use it for free. But if you like it, or if you're really enjoying the platform, you could buy our virtual currencies and you could gift creators, you could engage with creators on interactive live streams, which basically helps creators make a lot of income directly from their fans. So think of the meta thought as enabling creators to break the wall and directly monetize from their super fans, as opposed to relying on brands or intermediaries to give them some gigs and make money. The whole thought has been that from 0 to 200 crore run rate, what has got us here is our platform engagement, our localization. The platform is very popular in Bengali, Tamil, Telugu, now launched in Malayalam, Kannada, Marathi, Punjabi, so multiple languages. And now we continue to double down on each of those languages, launch more and more use cases so creators can now do their own battles. Sometimes it's about newer types of creators. We have astrologers, singers, performers who come live, host their own shows on Iloilo and are able to monetize at massive scale. So the journey from 23 million to 60 million would be about doubling down a lot on what we already do, along with launching more languages, as well as hopefully taking Iloilo international. We are looking at the Middle East. We are looking at other emerging economies and countries where the product is especially popular. Of course, starts with the Indian diaspora and then other use cases. And while doing this, we want to ensure creator growth. So, yeah.
All right, so ensuring creator growth, more avenues for monetization. You know, if we could look at your numbers, you reported a revenue of 4.8 crore rupees in FY24, but your losses also widened to 99.1 crore rupees. But obviously, this was before you monetized and had all of these monetization levers, right? So what's the target for this year and how do you plan to reduce the losses?
You know, all I would say is wait for our official report, official filings. Our losses would have come down. Our revenue has scaled massively from May 24 to March of this year, March 25. And for this year, where we are at, April 25 onwards, we hope to exit at a 500 crore, 600 crore kind of an annual run rate when we reach March 26. And we hope to achieve unit economic profitability. That is at least CM2, CM3 level profitability. That is what we are currently targeting. And then scale it from there. One thing I'm very proud of is the way creators are able to earn a share and monetize at scale. So if we can continue enabling that while still being profitable, it would be great.
So looking at some level of profitability there, you've also raised this $13.5 million, right? How do you plan to spend these funds? What's on the agenda?
So to be honest, we already had quite a few funds parked from our previous 22 million raise. So with that and with this, we feel we are adequately well capitalized. The usage of funds would predominantly be in three areas. One would be doubling down on technology. We have multiple use cases on creator tools on the AI side, right from AI and AR filters to interactions, etc., for them to monetize and create even better sort of live shows. Number two would be our international expansion and the way we are looking at more countries, doubling down on user growth, etc. And number three would be allied use cases. We are looking at possibly more apps in future within the same space. The whole ethos would continue that wherever we can empower creators to monetize and grow at scale, we would want to play in those areas. So these three use cases of monetization predominantly.
Right. And, you know, you also spoke a little bit about international expansion, right? So could you talk to us about the kind of diaspora markets that you're targeting? And how do you sort of plan to localize the product for these audiences?
So at this point of time, the first thing we would want to look at is Indian diaspora. So we have so many folks who are living in the Middle East, in Latam, North Africa, other sorts of Asian regions as well, who speak our languages. Like I said, very, very popular in Southern languages, Eastern languages, other languages. The first use case would be to go to those users and establish that community. Iloilo is extremely popular on local language speakers who love to form their digital communities here. So I think that would be the first thing. And once we see a lot of success there is where we could double down on other languages, which would be typically languages in those countries that are predominantly spoken. But the first step is that help our Indian creators get a broader audience. For that, we would be using AI around transcription, speech-to-speech translation, and many other use cases. So think of it as somebody who was passionate to become a streamer or a creator. They should not be bound by a geography that I can only talk to people in this area. And they should be able to talk to people globally, provided we are able to solve for reach as well as translation, transcription, and other use cases.
Right. And also, what are your key metrics around daily engagement and retention? And how are you continuing to build habit loops, especially around, you know, live content, games, as well as gifting?
It's an excellent point. And let me double down on that in two sort of aspects. Number one around this has been, we focus a lot on essentially establishing activation. What that would mean is that because this is a new category creation approach, a lot of users need to get the app, need to get the flows, and need to do the bare activities for them to be constituted as an activated retained user. There's no point just acquiring users and having a leaky funnel. So really sort of being very tight around activation metrics, ensuring that there are multiple live rooms entered. The real number there is around engagement, and how do we get users to spend close to about 30 minutes a day on the platform? That becomes number one that we want to solve. And from then on, it is the paid user journey. How do we sort of convert users from free to paid and then trade up into various cohorts? Over there, our number one sort of use case why we are able to do that so successfully right now is the fact that we are an extremely localized platform. Now imagine, right, like if you speak Bengali or if you speak Punjabi and if you like singers, there is a content creator on Ilo who's singing in your live language. You happen to tune in at 8 p.m., which is typically television viewing hours. But because you are typically mobile first, you would see that live stream, you would enjoy that live stream, and you would want to maybe send a virtual gift to express yourself. So we are working on the virtual gifts as well. How do they become a means of expression? How does the language use case deep down even further? Can we go hyper local there? And how do we sort of create more interactive communities? That helps activation, that helps retention, and that helps free to paid conversion. And gradually our ARPU and other metrics sort of go up. So that's the gamut.
All right. Before I let you go, then the big milestones that you're focused on in the next 12 to 15 months?
The biggest business milestone for us would be hitting a 500 crore annual run rate, along with unit economics profitability. That's the number one thing.
All right, Saurabh, big growth plans there. Thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best on this journey going forward.
Well, on that note, it's time for us to head into a short break, but coming up, Noto Ice Creams and Desserts closes a pre-series round of 21 crore rupees. How does the firm plan to use the funds to scale the business? We put the firm's co-founder on the hot seat to find out more.
Welcome back. You're watching Startup Street. Now, Noto Ice Creams and Dessert has announced the close of its 21 crore rupees pre-Series A funding round that was led by Equentis Angel Fund. Now, this marks Noto's largest funding round to date and will support the company's plans to scale production, expand distribution, launch offline stores, and forge strategic partnerships. Now, company is also looking at new product lines and the launch of its own ice cream parlors. For more on these plans, joining me now is Varun Sheth, who is the co-founder and CEO of Noto. Varun, welcome to Startup Street. Thanks very much for your time here. Before we get to that funding, what gap did you really see in the market that made you start Noto? And take us through how the journey has been since you started this in 2019.
Thanks so much for having me here. I think the biggest opportunities that we saw why we got into this space was consumers today are definitely becoming more mindful of what they can eat, the calories they intake, the amount of sugar they consume. I think we're all very mindful of that today, right? We want to make smarter choices, better choices, and we want to eliminate certain bad habits that we have. But at the same time, we don't want to compromise on taste. Taste always comes first when it comes to eating anything, right? Otherwise, you just will never buy it the second time. So I think talking to the millennial Gen Z consumer, we realize that there's a big opportunity in ice creams where the legacy brands, the incumbent brands, no one is solving for health in a smart, sexy, fun way. That's where we felt there's an opportunity to come in. We also think data says that India has a very large population of obesity and diabetes, and consuming alternate sweeteners, consuming sugar-free substitutes is on the rise. It's necessary to control this, right? So we felt there's two cohorts of customers, a diabetic customer as well as a younger Indian who's trying to make smarter health choices.
But Varun, a whole lot of companies have that same thinking. They're coming up in this guilt-free ice cream space. How do you plan to capture a larger market? And give us a sense of what your current sales and growth has been like so far.
I mean, I think for us, we've always focused on product first. I think any food brand that you love, you will always have one or two favorite picks that you go there for. And you go back time and time again for consistency. And we believe in giving a great product with repeated consistency helps retaining customers. I think the second aspect is it's a very supply chain, distribution-led business. And over the last 5 years, we've managed to understand frozen cold chain logistics and supply chain far better. And those early inroads have, I think, helped us probably be the top 2 or 3 brands within this realm of guilt-free indulgence. I think those are some of the key factors for us probably being successful. And we closed last year at about a 40 crore revenue, and we're looking at about 100 crore over the next 2 years. Okay. Those are the revenue short-term revenue milestones for us.
All right. Okay, and now that you've got this 21 crores, it is your largest funding round to date. How will you deploy it when you talk about scaling, when you talk about distribution and new product lines? Where will you be utilizing the money?
I mean, I would say it's a good amount of capital, but not a huge amount of capital. So I think we got to be smart about realistically how many things we can do with it. For us, digital first has worked so far. And I think quick commerce over the last couple of years has enabled and democratized distribution. We're in the same freezers and in the same dark stores where Amul and Quality Walls are being sold, being a guilt-free indulgent brand, a healthy proposition. So it's pretty amazing to see that we're in 16 cities using quick commerce. I think we need to double down on ensuring customers can try Noto for the first and second time. That enables them to make a swap from whatever their favorite brand today is to saying, okay, I'm going to buy Noto for my daily consumption, and then maybe my other favorite brand for my weekend cheat day consumption.
All right. And when you talk about this expansion, you're also looking at opening your own ice cream parlors. Just give us a sense as to, why you arrived at that decision. What are the kind of sales you expect from physical versus what you're doing through digital? And currently you're in these 13 cities. Do you plan to double down on these, or will you be looking at further, other newer cities to go into?
So I think primarily we double down on existing markets. We have 5 or 6 cities where we're very strong. Some of the other 13 cities, 6 or 7 of them are relatively new for us. I think sampling, product tasting leads to adoption. of and long-term behavioral change from a consumer POV. So being involved at ground level in these markets, for us, relevant places are gyms, pickleball courts, running clubs, biking. We try and engage with such communities and kind of sponsor those events. And hopefully that leads to long-term buying behavioral change and customers recognizing Auto as a brand to go to.
All right, so you're looking to target the fitness enthusiasts across these cities, but
yeah,
go ahead.
No, I was just to answer your question on why we would probably have some of our own company branded stores. I think it's honestly being only digital. There are bottlenecks to discovery. There are roadblocks to visibility. It's typically whoever spends the most, whoever bids the highest has the maximum visibility, right? And it's an expensive proposition to only build digitally. So at some point, you do need to have 1 or 2 experience centers, company brand stores where people really know what you're doing, what you're building, and can actually experience it firsthand. And ice cream, I think, is a very social activity to some extent. You don't only buy online for what you keep in your freezer, but you also go out with friends, family to enjoy something nice, right? So that's where the storefront comes in.
All right, Varun, on that thought, we're going to leave it at that, and we look forward to seeing your stores and wish you the best in this venture. Thanks very much for your time.
Thank you so much.
All right, on that note, we're going to wrap up this edition of Startup Street. Thanks very much for watching, but stay with us. More news and updates will continue on the other side.
ये जो हुआ है ये सही नहीं हुआ है क्योंकि हमारे रोज़गार इससे जुड़ा है पूरे कश्मीर वैली का, तो हम इसको पूरा कंडम करते हैं। ऐसा नहीं होना चाहिए, मतलब इंसानियत के खिलाफ है ये चीज़, नहीं होना चाहिए।
बड़ा नुकसान हुआ सर, बहुत परेशानी है, काम भी हमारा चला गया पूरा, हमारी बर्बादी हो चुकी है सर इसकी वजह से।
परेशानी की
Hello and welcome to this special show. No, you're not fine the way you are. That's how the latest book by Dutch historian Rutger Bregman urges people to think outside their comfort zone. The book, titled Moral Ambition, shows you a path to make a difference to the world rather than just watch from the sidelines. The author argues that a 40-year full-time career consists of around 80,000 hours, 10,000 work days or 2,000 work weeks. But how you spend that time is the most important moral decision of your life. What should be the main ingredients of moral ambition? Where to start in terms of identifying the world's problems, and do money and idealism go together? Those are some questions that the book addresses. Joining us right now is the author, Rutger Bregman himself. Bregman had made headlines in 2019 in Davos for calling out billionaires for tax avoidance and flying in private jets to talk about climate change.
This is my first time at Davos, and I find it quite a bewildering experience, to be honest. I mean, 1,500 private jets have flown in here to hear Sir David Attenborough speak about, how we're wrecking the planet. And I hear people talk in the language of participation and justice and equality and transparency. But then, almost no one raises the real issue of tax avoidance, right? And of the rich just not paying their fair share. It feels like I'm at a firefighters conference and no one's allowed to speak about water, right? there was only one panel, actually.
Well, we've had two. You're the second of our panelists.
There was only one panel.
Let's go there.
One panel hidden away in the media center that was actually about tax avoidance. Yeah. I was one of the 15 participants. So something needs to change here.
Rutger, thank you so much for joining us on the program today to speak about your latest book, Moral Ambition. One of the lines that the book begins with is no, you're not fine just the way you are. people may spend their whole lives climbing up the ladder of success only to find, once they reach the top, that the ladder is leaning against the wrong wall. Why did you feel it is important to shake up your readers and their thinking and their approach towards work and professional life?
Yeah, well, my reasoning is pretty simple. In the first place, we have a lot of very big global problems. So 15,000 kids die from easily preventable diseases every day. 85% of the world population is below the poverty line of the country in which I live, the Netherlands. We have the threat of the next pandemic that may be just around the corner. There's war, there's democratic backsliding. You know, there are a lot of things we got to do something about. But then the second thing is that a lot of people are currently stuck in jobs that don't really add all that much value. And I'm not talking about teachers or nurses or care workers. No, I'm talking about people who often went to great universities, who have beautiful resumes, who may be a marketeer or a banker or a corporate lawyer or whatever. And still, at the end of the day, they have the feeling that they don't really contribute all that much. There's one big study that showed that around 25% of people in developed economies even think that their own job is socially meaningless. So there's a huge waste of talent going on. And my book is basically a call to arms. It says that if you are very talented, if you have a little bit of ambition, then you should use that to make the world a wildly better place. And I call that moral ambition. It's the combination of the activism or the idealism of an activist and the ambition of an entrepreneur. When those two things come together, something really magical starts to happen.
Right. But at what stage and at what point should people start thinking about this? Because the common line that we hear when someone talks about changing the world or launching a political party or working towards a social cause is that you can't change the world, or it's better to stick to the beaten path, you know, have a work life balance, earn a good enough amount of money for your family, for your holidays, so that you can retire well and early. Nothing wrong with it, but perhaps, according to your book, one wouldn't be very satisfied with this way of living. But how does one come to the conclusion that you're cut out for making a difference to the world, for leaving an impact? And where do you really start off?
Well, history is littered with examples of small groups of really thoughtful, committed citizens who made a massive difference in the fight against some of the greatest problems we face as a species. In the book, I talk, for example, about the abolitionists, those who took up the fight against the slave trade and against slavery. And you got to remember that in the 18th century, in a country like the United Kingdom, for example, this was really, really unpopular. The United Kingdom was making an enormous amount of money on the slave trade and on slavery and on having this whole system of colonies. But then there was a small group of mostly entrepreneurs and businessmen who said, this is the greatest moral atrocity of our time. We should kickstart a movement against this. So it is really small groups of really committed people that can make a difference. History shows us this. And I've tried to write sort of a self-help book, a guide that people can use if they also want to follow that path. Now, I got to say, if you want to read a book that will make you more relaxed or more mindful or happy or whatever, then you should probably not read my book. There are thousands of self-help books that will teach you, how to do less. But this is a book about how you can do much more and how you can really leave your mark on history.
Right. Now, speaking about leaving your mark on history, you speak about what startup founders, young entrepreneurs can also do. You know, your book also argues, and you've said this, that a lot of times we are launching companies or launching solutions to the problems we never really know we had, or it's probably too simplistic. So what is the kind of mindset or moral ambition that young entrepreneurs need to have?
Yeah. So we got to realize that ambition, it's just raw energy. You know, it can fuel a rocket that goes to Mars, but it can also fuel a bulldozer that, waltzes over a rainforest. So it's just energy. And what really matters is how you use it. What I currently see is that there are a lot of young entrepreneurs starting new companies that, create these products that are perhaps in the best scenario, okay, but in the worst scenario are actively harmful. So there's a famous quote from someone who worked at Facebook a long time, and who said that the best minds of my generation are thinking about how to make people click on ads. And that is pretty sad, isn't it? That you have all these really smart people who could technically do an enormous amount of good. You know, in a country like India in particular, if you would take up the fight against some of the greatest health problems, just imagine how many lives you could save. It's honestly extraordinary. So it's always a little bit sad to me when those very, very talented people, spend so many hours on something that doesn't actually matter all that much. Maybe you can make a lot of money with it, but in the end, what are you going to think about when you lie on your deathbed? About all the PowerPoints from colleagues that you didn't see, about all the long meetings that you didn't attend, or about the actual impact you made. That's I think what really counts in the end.
Right. How would you define moral ambition today? Of course, when you hear the term, you immediately think about doing something good for society. But according to you, what would be the 4 main ingredients of moral ambition that youngsters, that entrepreneurs, industry veterans, CEOs can keep in mind?
So I co-founded an organization called the School for Moral Ambition that helps as many talented people as possible to pivot their career and to use their resources, whether it's their talent or their capital or their network, to make the biggest possible difference. And we use a simple framework to help people focus on those biggest problems. It's called the SSS framework. So we focus on problems that are really sizable, they're very big, they're solvable. You got to have some plan of, what to do about them. And most importantly, they're also sorely neglected. If you go and work on the issues that everyone else is already working on, then you're not going to make the biggest impact. So, for example, I'm someone who grew up in a rich country, in the Netherlands, in Northern Europe. If I want to, help as many people as possible and to improve their health, then, probably focusing just on the Netherlands, where we already spend a huge amount of healthcare, is not going to make the biggest possible difference. If I would shift my focus and focus on something like malaria, for example, 600,000 people die from malaria every single year, mostly kids under 5. Well, then I can suddenly do much more good, right? Because it is so neglected. So if you're really morally ambitious, you gotta dare to go where others don't go. You gotta be able and be willing to do the unpopular or the unsexy things.
Right. And does this mean, because when we hear about working for a social cause, working for the betterment of society or world, you often hear that you need to lead an austere life. Can one have a day job where you're working as somebody in the corporate sector, have the ambition of rising up the corporate ladder, yet be an idealist? Can money-making, idealism all go hand in hand together?
Well, I think that money is pretty important if you want to make a big difference. The former UK Prime Minister, Margaret Thatcher, she once said that the Good Samaritan, from the Bible, he didn't just have good intentions, he also had money. So yeah, if you want to make a biggest possible difference, you got to find some way to attract capital. And here, I think philanthropists or brave philanthropists can make an important difference. If you study these great movements of the past, I already mentioned the abolitionists. They weren't financed by governments. Government was not giving subsidies to these people who fought the slave trade because the government was making an enormous amount of money facilitating the slave trade. The same was true for businesses. They were certainly not giving money. So there you need very brave individuals who are willing to go against what is fashionable, against what is popular. And look, I also realize that there are a lot of young people who are like, well, how am I going to buy my own house? How can I make my own career if I don't climb this corporate ladder? And I do understand that. I just think that there's more to life, probably. And for a lot of these talented, privileged people, my message is, look, you can only drive one car at a time, right? At some point, it's okay. And then other things become much more important. And it would be a shame if you lie on your deathbed and you're like, oh, as you said, I've been climbing the wrong ladder my whole life.
Right. You've spoken about how awareness is the best starting point, while for many it has become the end goal. What do you think we need to do in order to become a more satisfied individual, make a difference? And what is the problem, according to you, with the kind of activism that we see?
The reason I wanted to write this book is that, honestly, I became a little bit fed up with myself. I'm a writer. I spent 10 years of my career providing my opinions from the sidelines. Indeed, as you mentioned, shouting things like taxes, taxes, taxes when I was invited to Davos. And that can be very satisfying, but it's also quite easy. Here I was, on the sidelines, watching the people who are doing the real work, who are in the arena, with the sweat on their faces. And I started experiencing this emotion that I like to describe as moral envy. I was just jealous of the people who have some skin in the game, who do the real work. And I indeed realized that awareness is vastly overrated. I had spent 10 years in the awareness industry, providing my opinions. But very often, people don't do much with what they know. To give you one simple example, most people know that billions of animals are terribly tortured in what we call factory farms. Or we can know about that at least, but most of us just choose to ignore that. So the real challenge is in bridging the gap from awareness to action, to actually do something. And so I wanted to write a book that would be a big kick in the butt for myself, that would force myself to make a difference. And hopefully it's helpful for others as well. I've, as I said, I've co-founded this organization now, completely changed my life, turned into a social entrepreneur. And that has taught me many lessons, and also, caused me to believe that it might be possible for others as well.
All right, just stay with that thought, Rutger. We have to take a short break, but don't go anywhere. When we return, this conversation with Rutger Bregman, the Dutch historian, will continue on his book, Moral Ambition. We'll get you much more after this break. Welcome back. You're watching CNBC-TV18, and we are in conversation with the Dutch historian Rutger Bregman on his latest book, Moral Ambition. I just want to go back to that Davos moment of 2019 when you called out billionaires for tax avoidance, for using, for burning aviation fuel to fly down to Davos in private jets as well. How was that moment in your career as a historian, as an author? Were you invited to Davos again after that incident? And what was the kind of feedback you received?
So for some reason, they never invited me back. I guess it was something I said that they didn't particularly like. But I have been wondering, obviously, after those years, like, how can we make more progress in the fight against tax avoidance and tax evasion? Because wherever you go, whether it's the United Kingdom or India, the United States or the Netherlands, everywhere billionaires have lower effective tax rates than working class people. And that seems to me utterly unreasonable and utterly unfair. Now, you can just shout that and say that and go viral for it, but wouldn't it be much more effective to build a SWAT team, a very dedicated cohort of people who want to dedicate their career to fighting for tax avoidance and tax justice? So that's what we're doing right now. We are starting a campaign on Wall Street in New York. We are recruiting the best wealth managers, the best bankers, the best fiscal lawyers, and we are convincing them to pivot their career, basically saying, look, you're now working on the wrong side. You can leave your job and work for us. It's only going to be for the best of the best. So it's very hard to get into one of our fellowships, as we call them. But that's what we're going to do. We've already been doing it for other cause areas. So, for example, in Europe, we've recruited a bunch of marketeers and corporate lawyers who quit their job in order to fight the tobacco industry, big tobacco. And in this way, we want to make doing good more fashionable. We think that we should move towards a world where the best and brightest work on the most important global problems. It's as simple as that.
Right. You've also said that when you start off with your thinking process about what kind of change you want to bring about, you should really try and understand what does the world need right now, and whether your approach or what you're working towards can go wrong maybe 10 years down the line and cause more harm to society. Keeping that in mind, which are some of the biggest, if you had to say, top 3 world problems that entrepreneurs can start thinking of working towards right now and maybe have a cult to work around with?
Yeah. So I'm not sure how famous the Lord of the Rings trilogy is in India, but that's always the comparison I like to make. Gandalf, the wise wizard, he never asked Frodo, hey, Frodo, what's your passion? Right? He said, look, if you want to save the world, this is what you need to do. You need to throw the ring into the fiery mountain, right? And that's also how we like to work. So we work with so-called prioritization research. It's a whole branch of social science, people who spend a lot of time thinking about, indeed, the question you just asked. What are the biggest problems we face as a species right now? It's difficult to make a definitive ranking, but there are a couple of obvious examples that come to mind. Think, for example, the threat of the next pandemic. We've just gone through a pretty bad one, COVID, that cost us 20 million lives across the globe. And still we know that the next one could be much, much worse. Then you wonder how many people are currently working on preventing that next pandemic. And it's really outrageous. So currently, the whole world spends only $1 billion on researching emerging infectious diseases. That's about as much as Americans spend bleaching their teeth every year. You've got the Convention Against Bioweapons, a very important organization, and it has the budget of an average McDonald's franchise. So it's super, super neglected. We need way more smart doctors, inventors, entrepreneurs, lobbyists to fight for global health and for pandemic prevention. There are also so many innovations that need to be done here. So that's one example. Now I can go on for a long time. Another one that I think is really, really important is the fight against factory farming. I think if the historians will look back on our age and will think about, okay, what are some of the most immoral things people did back then? I think the way we treat animals is very high up on that list. We're talking about 80 billion animals slaughtered every year. And every week, scientists come in with new evidence about how sensitive and how sentient these animals are, even though we lock them up in these horrible prisons where they don't see the daylight, only if they go to the slaughterhouse, perhaps. So that, for me, is one of those examples where historians will look back on us and say, oh, my God, that is like similar to the people who practiced slavery or the people who, did all kinds of other horrible things in the past.
Right. You've spoken about the need for lowering your threshold to act. You said that at different points in history, every individual has their own threshold to act, a tipping point to taking action. How do we lower that threshold? If you were explaining that to someone in college, or maybe a young student who's finishing school and going to college, how would you explain that?
So when I was a young boy, I was fascinated by the history of the Second World War in my own country of the Netherlands. As you probably know, the Nazis invaded the Netherlands and started abducting many, many Jews. And many of them, millions of them, were murdered in concentration camps. And there was just a small percentage of the population that resisted the Nazis at the time. And already as a young boy, I was fascinated by the question, what made these people different? Why were some people so brave that they would risk their own lives to help persecuted people? And I've done a lot of research into that question for this book. And I discovered that there actually isn't such a thing as the altruistic personality type. There have been lots of studies, hundreds of interviews done, but researchers really couldn't find anything. These very brave people, they could be men or women, rich or poor, young, old. It's really a cross-section of the population. But what they did discover was that this resistance was very contagious.
So there was one factor in particular that predicted very well whether people would join the resistance, yes or no. And it was the question, were you asked to join the resistance, right? In 96% of cases, when people were asked to join the resistance, people said yes. So that creates a very different perspective on how we can actually make a difference and indeed lower our threshold to act. It's by surrounding ourselves with other brave people, with other morally ambitious people, because then it can become infectious. And that's exactly what you saw during the Second World War, is that resistance wasn't evenly spread out over the country. No, there were like pockets, local pockets of resistance, where people started infecting each other, and they saw other people doing brave things, and then they were like, hey, maybe I can do that as well. And got to remember, it often starts small, right? You take a first step and then another step, and then it escalates, and you become someone who you never thought you could become. And I think that's the way we lower our threshold to act.
Okay, you've spoken about how you once saw a school which said Hogwarts for do-gooders. Would you say we need more Hogwarts for do-gooders around the world?
Absolutely. We need many, many more of them. This is an extraordinary school based in London. It's a little bit like a startup incubator, but it doesn't help people to start their own for-profit to make as much money as possible. No, it helps you to build a non-profit that helps as many people as possible. So it's incredibly hard to get into. It's only for the best of the best. If you've gone to Harvard, well, that's very nice, but it's not nearly enough. And then they incubate all these kind of non-profits. Quite a few of them work in India, by the way, because they're really looking to maximize their impact, to save as many lives as possible, for example, and help as many people as possible. And it's just a beautiful example of how we can redefine success. I think that throughout history, we've often seen that societal renewal starts with a redefinition of what it means to be successful. And currently around the world, we are sadly ruled by, the most immoral elites. I currently live in New York in the United States, and it's a pretty clear example where you have, a whole establishment that is becoming more and more immoral by the day. But we've been here before, and I think there can be a counter-revolution. We've seen that in the UK in the late 18th century. We've seen it in the United States in the 19th and the early 20th century, when people of privilege stepped forward and said, okay, now it is enough. And now we're going to make a difference, not by pointing at others, not by blaming others and using the finger. No, it is by doing better ourselves, by giving a better example ourselves. And that's what we desperately need today.
Okay, my final question would be, in the India context, how do you think individuals, citizens can raise their moral ambition? Today, there is great power competition in the world, to put it very simply. It's about who is going to lead the AI revolution, who's going to lead the economic race, who's going to be the strongest player in the manufacturing supply chain. So when you have this great power competition between India and China, China and the United States, fight for supremacy at the top, what kind of moral ambition do you feel that someone in the Indian context needs to have?
Well, at the heart of being morally ambitious, there's the recognition that we humans all have equal dignity, all have equal worth. So it is absolutely fine to care deeply about your own country. But I think that we should move towards a world where all countries can flourish, where all nations can flourish. And if anyone, in India is watching this and, maybe went to one of those top universities, I think the message of this book and my message today is use your privilege, not just check your privilege, but use your privilege to make the world a wildly better place. And obviously it makes a lot of sense to start in your own country because there are still so many big challenges to solve in India. If I only think about, the health aspects, one of the most cost-effective interventions, for example, is just to make sure a bigger percentage of the population is vaccinated. You can do an insane amount of good in that way. Just think about your life in a bigger way. Think about how you want to be remembered. I think that's the main message of the book.
All right, Rutger, thank you so much for your views on your book, Moral Ambition. That's all we had time for on this broadcast. Thank you for watching. Goodbye. Hello, welcome to our special broadcast here from Jaipur in Rajasthan. I'm Parikshit Luthra. US Vice President J.D. Vance, his wife Usha Vance and 3 children visited Jaipur today. They visited the Amer Fort, the Hawa Mahal. You can see pictures of them going all across these forts, having a good time with their family. The big message from J.D. Vance here in Jaipur was that India needs to buy more US defense equipment, allow American companies greater access to India, support Donald Trump's clarion call for drill, baby, drill. Also laying out the wish list that US has for India. He urged India to buy more defense equipment, as we said earlier, especially F-35 fighter jets. He called for strengthening the energy partnership and said that US can be a long-term, reliable supplier of cheap energy to India, and the kind of energy that India needs for its development needs, for its manufacturing needs, and for having data centers and AI technology as well. Last night, Prime Minister Modi hosted J.D. Vance and his family at 7 Lok Kalyan Mark for dinner. Following that, the US Trade Representative issued a statement that he welcomed the finalization of terms of reference for the bilateral trade negotiations. Now, this is an important aspect of the negotiation as it lays out the contours, the boundaries, and also the ambition of every chapter of the trade negotiation. The US also said that they appreciate the constructive approach that India has followed when it comes to this trade negotiation. They have acknowledged the kind of tariff reductions that that India has done for the United States, but there is more that the US wants. The USTR even said that they are looking for more robust, long-term commitments that are beneficial to the US economy and US businesses. So what does this visit of J.D. Vance really imply for India-US ties? Joining us right now to break all of this down is Meera Shankar, former Indian ambassador to the United States. Air Vice Marshal Manmohan Bahadur. Also on the show with us is Raymond Vikri, Senior Associate and Chair on India and Emerging Economies at CSIS. Prabhash Ranjan, Professor and Vice Dean, Research at Jindal Global Law School. Ladies and gentlemen, thank you very much for joining us today. Air Marshal Bahadur, if I could begin with the F-35 question. First time we heard this was in the White House when Donald Trump said that we want India to buy more defense equipment and maybe even F-35s eventually. Today you had J.D. Vance again signaling, saying that we want you to be a big buyer of defense equipment from the US and we want to offer F-35s, stealth fighters. Give us a sense whether this really fits into the Air Force scheme of things. Is this the kind of platform that we really want? And despite the pressure, will India go ahead for it?
Thank you for getting me in. And F-35 is a carrot that has been dangled for quite some time now in front of India. We've got to manage our interests just the way the Americans are doing for their trade and for their strategic interests. So we need to remember that our Air Force is still 36% Russian, and so are the other two services. So when we are getting an equipment, and incidentally, we've never bought a fighter aircraft from the United States, ever. Transport, helicopters, yes. So to get that into our scheme of things, vis-a-vis our radars, which are Russians, basically, the latest being the S-400. If you remember, Turkey was moved out of the F-35 program because they went in for S-400s, or they were wanting to go in for S-400s. So we have to keep the broader picture in mind and then take a call. Having said that, if I may just add, there is a lot of trumpet blowing that happens everywhere with every country. We had in 2012 the Defense Technology Trade Initiative, DTTI, and a lot of brouhaha was there on this. What happened to that? I mean, you cannot change our interests, or the American interests can't change just because a new person comes in the White House every 4 years. And this time when it has happened, it has upset the whole apple cart. I mean, if Ukraine can be thrown out like a fly in a teacup, we need to be careful. Because tomorrow another person comes as the President of the United States. Where is the history of continuity vis-a-vis military ties with India and the United States? The United States was the first country that imposed sanctions in Pokhran 2 when it happened. So I'm sure our negotiators will demand their pound of flesh, just as the Americans will. We need to take a broad view, keeping our strategic interests in mind.
Right, so you're saying we need to take a broad view and also look at continuity of supply. You said that 36% of our defense equipment is Russian. We need to keep our strategic needs in mind. We've never bought a fighter aircraft from the United States. And if we do, we need to make sure we get a pound of flesh in terms of long-term contracts and long-term maintenance contracts. Is this what you're saying, Air Marshal Bahadur?
That is absolutely correct. And what is it that they are going to offer? Are they going to offer the latest avionics with the F-35 when they come in? I doubt it, because they know that we will have to synchronize everything electronic and avionic with our ground defense, air defense systems. And that's where the Russian equipment comes in. So will we get what we want? That has to be studied.
Right. Let me get in Ambassador Meera Shankar at this point. Ambassador Shankar, how did you see J.D. Vance's speech here at the Rajasthan International Center? I was here in the hall. The speech was very, very strong. He began his speech by speaking about Prime Minister Modi, thanking him about how his children loved India and how the only people, the two leaders that their children really like are Prime Minister Modi and Donald Trump. So he made all the right noises, but he made some very strong demands. In fact, rather than how the trade could be mutually beneficial, it was more like buy more defense equipment, buy more fighters, buy more energy. So what was your sense from J.D. Vance's speech and the message he delivered?
Well, he delivered Trump's message. He's amplifying it. And the message has been that this is something which the US wants, and it's not looking really, talks about reciprocal trade, but it's not looking at reciprocity in terms of trade. It's looking at pushing unilateral advantage. And that is something that India will have to consider very carefully, because in the process of trying to manage the Trump administration's shift in trade policy, I think India cannot open up sectors which are problematic, like agriculture across the board, nor should it take defense equipment if it feels it does not need it, or if the terms and conditions don't meet our requirements of localization of production, of continuity of supply, and if it's too expensive, because your whole strategy at the moment is to try to indigenize your defense production. You are looking at the Tejas Mark I aircraft, which are still being rolled out. You are looking at the Tejas Mark II aircraft, for which we are buying the GE engine, upgrade. And that agreement, I don't think, has been finalized as yet. That is India's priority. And we are also keen to buy maritime patrol aircraft. We are keen, perhaps, also looking at Stryker carriers, vehicles. So there are areas where we certainly want to work with the US and get technology, but it's not something which the US can and should dictate to us. It is something we have to decide on the basis of our requirements. And there are areas where there is synergy between the US and India in the field of energy, in the field of defense technology, in the field of, high technology. And we should see where we can work in all these areas. At the moment, from what I understand, we are looking at opening up sectors of the Indian economy in return for the US not putting punitive tariffs. So no additional benefit to India from the framework that the US is pushing. I think we need to be very clear that it has to work for both countries. It's a synergy in relationships means that there has to be a win-win situation for both countries. And if it is at the cost of one country, it can't be sustained. The relationship will go sour.
Very important point, ma'am. You're saying that when you speak about a synergy in partnership, it has to be a win-win for both, not at the cost of one country. Currently, we're not getting any additional benefits from the framework that US is pushing. It seems that India is wanting to give concessions to avoid reciprocal tariffs. Let me get in Prabhash Ranjan at this point. Prabhash Ranjan, one of the points that the Coalition of Service Industries, which represents the likes of Google, also Amazon in the US, is the fact that India must support a continued moratorium on e-commerce duties. We must reduce tariffs to zero for ICT products under the WTO framework. How do you think India will fare if we give in to concessions on the terms of the United States? What will happen to our obligations with other countries? What are some of the challenges that we could possibly land ourselves in?
Thank you, Parikshit, for having me. I think that's a very important question, and I completely agree with Ambassador Shankar that any deal that we strike with the US has to be beneficial for India. Now, what is important for us to understand is that the Trump administration has launched an offensive against the global rule-based multilateral system. And India, which has always championed a rule-based multilateral system, has to express its concern about this. So, if you look at countries like China, or if you look at many other developing countries, they have taken, or they have at least publicly announced much more stronger terms in terms of what the US is doing to the international trading system. India's response has largely been that it has been silent on this. And I think that's where the problem lies, that we should not look at this only from the point of view of striking a deal with the US, but we should also look at it from the point of view of the larger multilateral trading system and where we stand in it. So let's take the example of the bilateral trade agreement that is being negotiated currently. Now, if this bilateral trade agreement will not be applicable on an MFN basis, which means that whatever tariffs India reduces for products coming from America without extending them to European Union or UK or other countries, then other countries will have a problem with this. Now, maybe US will be able to deal with it, but how will we deal with it? Now, if it is to be done on MFN basis, which means that you reduce tariff rates for everyone, then perhaps you don't need to have a separate negotiation for a bilateral trade agreement. So how do you get around this is going to be a major legal and economic challenge for India. And since India and the US both are members of the WTO, and US has still not pulled out, not yet, from the WTO, it is important for India to keep reminding the US, not just privately, which I'm sure they must be doing, but also publicly, as Brazil has done, as several other countries have done, that you need to respect international law contained in the WTO, and we have to work with each other within the WTO framework, because that's a framework that exists, that has existed for 3 decades. If we take GATT, it goes back to 1948. The principles are well established, and you can't suddenly throw those principles out and say that we are going to negotiate based on a completely different set of rules. That's going to be complete chaos, certainly for developing countries like India. So I think India has to be careful, has to keep reminding US, both publicly and privately, to respect WTO law and to work within the framework of the WTO.
Let me also bring in Raymond Vickery. Raymond Vickery, a very authoritative voice when it comes to American politics, American trade policies as well. Raymond, what I would like to understand from you, it seems that Donald Trump is not really interested in any sort of trade deal. If there is a president who can pull out of trade agreements, who can change his mind on a country like China overnight, then how do you take the US administration at face value when they're saying that we want a mutually beneficial trade agreement? All it seems to be boiling down to is that the US wants us to buy more energy, buy more defense, and have very long-term contracts with the US, and somehow US wants to be our biggest supplier of energy in future. So keeping these different messages in mind, how does India navigate the new White House?
Well, thanks very much for having me. I think you're absolutely right. India and the United States have worked together to build peace and prosperity in the world, and each president, whether it be Republican or Democrat, has advanced that. But these are not normal times in the United States, and I wouldn't want your viewers to think so. There are attacks on the rule of law, on the media, on higher education that Vice President Vance has led the charge on, and he is a chief isolationist. In spite of what is being said today in India. It is very important, it seems to me, to heed what the law professor has just said. The approach of the Trump administration is that of a real estate developer. It's transactional. It's what can you do for me today? Don't worry about the longer run, but what do I get out of this? And the basic problem is in regard to tariffs that the Trump administration has a view that we can completely wall off the rest of the world in essence, except on our terms, that we'll bring all manufacturing back to the United States. We won't have extended international supply chains. And what is going on now in the U.S.-India relationships, we would hope would lessen barriers to trade, but that runs completely contrary to the Trump approach that manufacturing ought to all be reshored to the United States. So it remains to be seen how this will turn out. In regard to energy particularly, I think it's important to recognize that the United States and India have a great interest in being able to have responsible energy rather than just drill, baby, drill. I helped get the civil nuclear deal through Congress. One hopes that there would be progress in that clean energy source. And across the board, it's going to be necessary to take into account the environmental impacts of these. India has been a leader. The United States is stepping out of it. So in sum, I would say that, yes, the U.S.-India relationship is strong, but simply abandoning the multilateral system in favor of a transactional approach is not in the interest of the United States or India. The rule of law, a rules-based approach, should apply across the board, not just in regard to tariffs and the economic relationship, but respect for human rights, respect for democracy, respect for rule of law, for science. And unfortunately, this administration in the United States is headed in exactly the opposite direction.
Right. We may have a early trade deal with the US as well. Raymond, it could come in the next 3 months or so. But do you also feel that there is no guarantee that even if we have a trade deal, Trump would respect it? Tomorrow he may just go ahead and may want something more in 2026?
Well, that's been his history, that he makes deals and then walks away from them. went bankrupt 9 times in the private sector, and yet portrays himself as the greatest deal maker of all times. So India has to follow its self-interest, and the way in which to do that, it seems to me, harking back, is to try to put this in the framework of something which is broader than just who's there today and what the deal is today, but to institutionalize it. So we have some rules-based approach. Or, as you say, tomorrow it can be turned around if President Trump does not like the way India is proceeding on matters which are very extraneous in some sense to trade, on China, on what he wants to have done in real estate development. He has Trump Towers, which are at construction stage in India. He has allies in Elon Musk who have interest in Starlink and Tesla. Suppose he doesn't get what he wants, or his associates don't get what they want, then what happens? So it's very important to look at this relationship.
Very important points. And institutionalize it, put safeguards and guardrails in place so that India does not get harmed. Meera Shankar, if I could come to you. Over the last few months, we've made a lot of overtures to the Trump administration. In the union budget, we reduced tariffs on high-end cars to 70%. High-end motorcycle tariffs were also reduced. We've done away with the equalization levy, or Google tax as it was called. Just yesterday, the Competition Commission of India accepted the settlement proposal of Google in an antitrust case for 20 crore rupees. There are also reports that we are willing to put the digital competition law, which has drawn from the EU digital markets law, which the US has been very concerned about. It seems that we put that law on the back burner. Do you think we're giving too many concessions too soon without putting it in pen and paper in the BTA?
Yes, I think with the US, you have to dot the I's and cross the T's as part of a official formal agreement. Any concessions given in advance are pocketed and the goalpost is moved. So I do think that you need to be a bit more conscious of